हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल अगर चेकआउट करोगे सो कल मॉर्निंग पे एक फ्लैट ओपनिंग, परसों सेलिंग थी, फ्लैट ओपनिंग हुई थी, फिर सेल ऑफ कंटिन्यू हुआ, वहां से एक बाइंग आई, फिर एक सेलिंग का जोन था, वहां से थोड़ी बहुत सेलिंग आई थी, मार्केट साइडवेज चला गया था सेकेंड हाफ में। लेट्स सी फिर मार्केट अगर आता है वापस से सेम लेवल पे। रिफ्रेश कर देता हूँ एक बार लेवल्स को। नथिंग चेंज, इंडियन मार्केट जस्ट ओपन ही होने वाला है। क्रूड ऑयल की बात करें तो क्रूड ऑयल में लेवल कल की है, कुछ चेंज नहीं हुआ है। आ, नीचे सपोर्ट था, मल्टीपल टाइम आ गया था, लग रहा था ब्रेक डाउन करेगा लेकिन किया नहीं, होल्ड कर गया। और उसके बाद फिर आज न्यूज आई थी कि यूएस ने सेकेंड स्टेट डे अटैक किया है ईरान को, जिसकी वजह से क्रूड ऑयल आज हल्का सा एक फॉरेक्स में तो वैसे ऑलरेडी ऊपर जाके नीचे आया है, तो एक अपसाइड मूव करके वापस सेलिंग में दिखा था। लेट्स सी वापस अगर थोड़ा मोमेंटम करता है कंटिन्यूएशन में। कल सीपीआई का डेटा भी आया था। अभी आज की डेटा की बात करें, अभी 12:30 लंदन सेशन ओपन होगा, देन इवनिंग पे 5:30 न्यूयॉर्क सेशन, 6 पीएम पे पीपीआई का डेटा है, अनएम्प्लॉयमेंट क्लेम्स यूएस में कितना आया है, एंड देन 7 बजे यूएस मार्केट ओपन, 8 बजे नेचुरल गैस की इन्वेंट्री है। आज सेंसेक्स की एक्सपायरी भी है, तो ध्यान रखना जो लोग सेंसेक्स में ट्रेड करते हैं। ठीक है, बाकी क्रूड ऑयल में अब बीच में कुछ नहीं कर सकते। लेट्स सी अगर ये रेजिस्टेंस तक जाता है, इस एरिया के आसपास ही कुछ इसमें ट्रेड कर पाएंगे वापस से। नथिंग न्यू इन दिस क्रूड ऑयल। बुलिश है फिलहाल कल न्यूज़ के बाद। ठीक है, अगर ये कल ब्रेक करता 8130 तो मुझे लग रहा है नीचे भी जा सकता था, बट ब्रेक नहीं किया है। ऊपर का ये लेवल अब है, देखो ये लेवल भी मल्टीपल टाइम टेस्ट हो गया है, तो पता नहीं अभी कितने देर होल्ड करेगा। बट यार नेक्स्ट रेजिस्टेंस आपका 9100 से 9300 की रेंज के बीच में स्टार्ट हो जाएगा, तो ध्यान रखना, इट विल बी देयर। ठीक है, एक बार ये लेवल रिफ्रेश कर देते हैं। नेचुरल गैस में भी ये रेजिस्टेंस कल का अभी भी इंटैक्ट ही है नेचुरल गैस में, तो कंफ्यूज मत होना। थोड़ा सा शायद और नीचे आ सकता था इसमें, जितना मुझे दिख रहा था कल इस एरिया पे पॉसिबिलिटी थोड़ा सा और डाउन जाने की थी, बट कल न्यूज़ की वजह से, न्यूज़ इन द सेंस ऑफ जो यूएस ईरान के बीच में आ रहा था, ट्रम्प का जो स्टेटमेंट था, उसकी वजह से थोड़ा सा मुझे लग रहा है ज़्यादा ही बुलिश हो गया ये भी। लेवल कल के ही है, नथिंग चेंज आइदर इन क्रूड ऑयल और नेचुरल गैस, कुछ भी चेंज नहीं हुआ है दोनों में ही। बाकी इंटरेस्टिंग रहेगा अगर ये मैं अगर न्यूयॉर्क मर्सल्टाइज एक्सचेंज में देखूं तो 3.260 के ऊपर अगर नेचुरल गैस निकलता है एमसीएक्स में, अप्रॉक्सीमेटली 312 313 का लेवल है शायद ये। एग्जैक्टली अभी देखना पड़ेगा जब लेवल पे आएगा। इसके ऊपर अगर प्राइस विल गो, सो वी कैन एक्सपेक्ट प्राइस कैन गो टुवर्ड्स $3.400 एज वेल। $3.400 के आसपास वापस जा सकता है उस केस में। सो देखना पड़ेगा एसएल हिट करने जाएगा या फिर स्टिल होल्डिंग। ठीक है, कल जिस तरह की रेंज बुलिस मोमेंटम स्टार्ट हुआ था उस हिसाब से तो बुलिस ही है। ठीक है, मैं एक्सपेक्ट कर रहा था इस रेंज का लगभग मार्केट एक गोल्डन रेशियो तक रिट्रेसमेंट देता तो बेटर था। गोल्डन रेशियो तक तो आया नहीं है, मैं अभी भी एक्सपेक्ट कर रहा हूँ कि ये इस लेवल तक आए थोड़ा सा। सो लेट्स सी, फिर से एक सॉर्टी बनाएंगे यहाँ पर। कल का ही ट्रेड आप कह सकते हो रनिंग है, अगर ले रखा है ऑलरेडी, नहीं लिया है तो फिर कल के ट्रेड का ही प्लान करना, इतना ही टारगेट है। इसमें नीचे कोई सपोर्ट नहीं है बीच में जहाँ पे मैं टारगेट रख रहा हूँ, बट इससे कम भी कुछ कर नहीं सकते फिलहाल के लिए। रेजिस्टेंस विल स्टार्ट फ्रॉम $3.210, रिमेंबर। ठीक है, गोल्डन रेशियो का टारगेट रखा है इसमें, और मैंने कोई टारगेट नहीं रखा है नीचे तक का। अगर उसके नीचे ब्रेक हुआ तब कल का ही रख देंगे टारगेट, बट अभी के लिए विल एक्सपेक्ट 299.7 अप्रोक्सीमेटली। कोई और लॉजिकल टारगेट इसमें दिखता नहीं है, ये पूरा गोल्डन रेशियो ही है, तो एक्सपेक्ट करेंगे 0.618 लेवल को हिट कर जाए। इसके नीचे गया तो फिर निकल का लो ही सपोर्ट है, फिर थोड़ा बेरिश हो जाएगा, ध्यान रखना अगर ये इस लाइन के नीचे सस्टेन करता है। आप कह सकते हो 300 टू 299 के नीचे अगर ये सस्टेन किया तो फिर ये थोड़ा बेरिश हो जाएगा, नीचे सपोर्ट बहुत रिस्क में आ जाएंगे। ऊपर 312-13 के ऊपर अगर सस्टेन करता है ब्रेकआउट के लिए तो फिर सिमिलरली विल एक्सपेक्ट नेक्स्ट रेजिस्टेंस 225-26 अप्रोक्सीमेटली। ठीक है, फ्रेश एंट्री करोगे तो आज थोड़ा क्वांटिटी कम रखना, आज नेचुरल गैस में सेलिंग में। इंडियन मार्केट ओपन। बाकी क्रूड ऑयल में भी अगर कैरी किया हुआ है तो यही है टारगेट नेक्स्ट। बीच में कुछ अगर नया फ्रेश रेजिस्टेंस बनाएगा तो विल सी, अभी बीच में और कुछ खास यहाँ पर कर नहीं सकते। ठीक है, वैसे टारगेट इतना ही था कल का, ये तो बस आप कह सकते हो कंटिन्यूएशन में जा रहा है। बीच में यहाँ कोई रेजिस्टेंस था नहीं तो कहीं पर सेलिंग करने का लॉजिक बनता नहीं है, तो किया भी नहीं। एक छोटा सा पॉइंट ऑफ इंटरेस्ट था जहाँ पर प्राइस रुकने की कोशिश कर रहा था, ये 8600 के आसपास, वो भी निकाल दिया है। तो अब देखते हैं, या तो कोई नया रेजिस्टेंस बनाएगा या फिर डायरेक्टली नेक्स्ट रेजिस्टेंस तक जाएगा, विल सी एंड सेल फ्रॉम देयर एज वेल। बाकी और कोई डेटा तो अभी है नहीं है यहाँ, तो मुझे दिख रहा है नहीं है ना। हाँ ठीक है, इंपॉर्टेंट आज ये अनएम्प्लॉयमेंट क्लेम्स का डेटा रहेगा। इस अनएम्प्लॉयमेंट क्लेम्स डेटा पे सी कितना मोमेंटम और करता है। अब सेंसेक्स में देख लेते हैं एक बार, लेट्स सी द सेंसेक्स। बाकी गोल्ड में थोड़ा सा मुझे ज़्यादा ही बेरिस लग रहा है अब गोल्ड। कल डेली टाइम फ्रेम की कैंडल जो लेवल एक्सपेक्ट किया था उसके नीचे क्लोजिंग आ गई है, तो नाउ इट इज़ बेरिस। आज का एक कैंडल और क्लोजिंग का वेट करेंगे, देखते हैं कहाँ आती है क्लोजिंग। कल एक्सपेक्ट कर रहे थे क्लोजिंग आएगी 4240 के नीचे, आ गई डेली टाइम फ्रेम पे। आज की कैंडल कल के लो के अगर नीचे आ गई, 4089 का लेवल ऐसा है, उसके नीचे अगर आज की क्लोजिंग आती है तो फिर ये लेवल ब्रेकडाउन ही माना जाएगा 4240। वैसे तो हो गया है, कंफर्मेशन का वेट करेंगे। नेक्स्ट टारगेट नीचे आता है तो फिर 3800, या तो डायरेक्टली आ सकता है या फिर हो सकता है प्राइस पुल बैक के लिए जाए वापस 4400 एंड देन गिरे। बोथ द थिंग्स आर पॉसिबल। एक स्ट्रॉन्ग सपोर्ट था 4240, दैट इज ऑलरेडी ब्रोकन। नाउ नेक्स्ट एक्सपेक्टेड टारगेट विल बी 3800, रिमेंबर। हो सकता है डायरेक्टली जाए, हो सकता है थोड़ा पुल बैक में जाए। ठीक है, नेचुरल गैस में नीचे यही गोल्डन रेशियो का ही सपोर्ट है, इसमें और कोई सपोर्ट नहीं है। इंडियन मार्केट फॉल, कल मार्केट मूव अच्छा किया था, सेकेंड हाफ में सेलिंग आ गई थी। गिफ्ट निफ्टी ने काफ़ी अच्छा, अगर इंडियन मार्केट को देखते हो तो कुछ ज़्यादा ही वॉलेटाइल हो गया था गिफ्ट निफ्टी कल। हमारा मार्केट क्लोज हुआ था, उसके बाद वापस रिकवरी आई थी। रिकवरी के बाद मार्केट ऑलमोस्ट 128 पॉइंट ऊपर गया था, यूएस मार्केट ओपन हुआ, वापस सेलिंग आई। फिर हमारे मार्केट क्लोजिंग से 172 पॉइंट गैप डाउन दिखा रहा था। अभी फ़िलहाल के लिए 100 पॉइंट का गैप डाउन था, रिकवरी आ चुकी है ऑलरेडी, थोड़ा बहुत 83-70 पॉइंट गैप डाउन फ्यूचर नाउ। इतना मार्केट नहीं गिर रहा है अपना जितना बाकी मार्केट्स गिरे हैं एशिया के। फॉल कर रहा है बट नॉट दैट मच। परसों आई थिंक जेपी मॉर्गन की नई रिसर्च आई थी, उसके अकॉर्डिंग इंडियन मार्केट निफ्टी 50 स्पेशली, टारगेट उन्होंने दिए थे अपसाइड का 27,000, लोअर साइड का आई थिंक 20,000। तो इनमें से कुछ भी आ सकते हैं, क्या कहा है उन्होंने आने वाले टाइम में। इंडियन मार्केट के लिए टर्निंग पॉइंट रहेगा यूएस इंडिया ट्रेड डील। जिस दिन भी ये साइन होगी, याद होगा लास्ट टाइम जब ये साइन हुई थी बड़ा गैप अप हुआ था अगले दिन। तो मुझे लग रहा है जिस दिन भी ये साइन होगी अगले दिन बड़ा मोमेंटम आएगा इंडियन मार्केट में। और तो मुझे कोई ट्रिगर पॉइंट लग नहीं रहा इंडियन मार्केट के लिए होने वाला है फिलहाल। सेंसेक्स भी देखोगे 290 पॉइंट गैप डाउन है, रिकवरी आई है ऑलरेडी थोड़ा बहुत 73,600 के अराउंड।
We will be hitting CENTCOM, Central Command will be busy tonight because President Trump said we will be hitting Iran hard, and we will be. Because Iran has a chance to make a good deal, a great deal, to codify what they said they've been willing to do, and they haven't been willing to do it. So, as President Trump said, they've been tapping. You can see when someone's trying to tap on a deal. Instead, they're going to have tap bombs dropping on key facilities in Iran from the United States of America. And that's not because we want to restart anything we don't have to restart. It's because the War Department is prepared to set the terms to ensure that we get the kind of deal President Trump expects.
For a second day in a row. Central Command says multiple locations were targeted, including military surveillance capabilities, communication systems, and air defense sites. That is after President Donald Trump accused Tehran of dragging out talks on an interim peace deal.
We hit them hard yesterday, and we're going to hit them again hard today, in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers because, you know what? They dealt with some very stupid presidents.
Let's discuss further with William Roebuck, Executive Vice President at the Arab Gulf States Institute and former U.S. Ambassador to Bahrain. Ambassador, thank you for joining us this evening, your time. Look, the latest escalations that we've been monitoring over the morning, are we entering a temporary phase of escalations, or is it a fundamentally more dangerous phase in this war that we're heading into?
It's a bit of both. I mean, it is. It appears so far as another phase in the current messy ceasefire. The way that President Trump has framed the attacks, the way that CENTCOM described them as completed, the fact that they are focused on military targets, indicating they're looking for, diplomatic off-ramp. They're not. There's nothing in the language so far that indicates they are planning a long-term planned escalation. So I think what we're talking about is a spike in tensions, probably provoked by the shoot down of the helicopter yesterday. And unless there's something unpredictable that happens, I expect it to revert back maybe to the messy ceasefire that we've been seeing, no war, no peace, of the last couple of months.
But look, I mean, Iran has sort of calibrated its response. It is retaliating by attacking countries in the region, not what we've been seeing over the start of this conflict. But do you think that the guardrails may start to break down from the Iranian side if these attacks by the United States continue to happen?
I mean, it's always possible. So far, despite the absolute significant pressure, military pressure that that Iranian regime has been under for months. They have demonstrated a certain level of coherence, including strategic coherence, the ability to pull together decision-making under difficult circumstances and structure targeting efforts in ways that seem to indicate there are guardrails and that they are trying to make sure that they act in ways that don't create escalation that could be uncontrolled.
And look, I'm also mindful of Israel's part in this. Now, over the past 2 days, Israel has been relatively quiet with the incursion in Lebanon continues. And this whole thing started with Israel really attacking Iran. How do you view the relationship between President Trump and Prime Minister Netanyahu at this point, with all the friction that has been reportedly the case between them over the past couple of months?
I think they have a close relationship, but it's a contentious relationship, and there are moments when it becomes tense, and I think President Trump has indicated most recently one of those moments where he, according to the readouts we got from the White House and the media, there were acrimonious exchanges. The president demanded that Prime Minister Netanyahu and Israel pull back from the escalation that they were conducting and planning towards Iran. And this was replicated really with some of the type of actions they were planning in Lebanon before that. So it's a difficult relationship, but I would still say that overall, fundamentally, President Trump has been a great friend of Israel, and the president and Netanyahu still have a pretty productive professional working relationship.
Yeah. But look, he's also facing a lot of pressure domestically, more recently from Republicans as well as Democrats. How do you think he balances between those inflationary surges that we've been seeing, but also managing to get his concessions down the line with the Iran truce?
He's in a difficult situation. I mean, he's clearly in a fix. He can't find a deal that is acceptable to either to him. He has his own sort of internal, I think, psychological needs. He wants a deal that's better than what President Obama got or what Biden looked. And making the type of concessions that are probably going to be necessary.
Well, look, I mean, 1 month from now, theoretically, will we... Rajiv, a pleasure to talk to you always. Look, the market's reaction has been relatively muted to the CPI print we saw yesterday, long awaited, although 3-year high at the headline number. What do you make of it?
I think the market had gotten concerned about the CPI print after the non-farm payrolls last Friday. And so we already had the market reaction. And when we got the CPI print, even though the headline was quite high, the pass-through to core has not been as much as perhaps some people feared. And core was quite benign. And sequentially, core was much softer than it had been last month. And so I think that gave a level of comfort to market participants that we have a counterweight to that strong non-farm payrolls print ahead of the Fed meeting next week.
Well, when it comes to asset allocation, there's so much at play here, whether it's geopolitics, the AI trade. But what matters more when it comes to the CPI print? Is it core or is it the headline number?
So I'm an economist, so I'm going to say core. I think some people, depending on what assets they invest in, might look at headline. Headline affects consumption in the United States, disposable income. High headline CPI eats into disposable income and depletes savings in the U.S. But we as economists view that as temporary if it doesn't pass into core. And our general view is that it's not going to be a material impact on core in, call it, 1 year's time. And so as a result of that, we think about it a little bit more at the core level and focus on how the Fed will think about it, which is at core.
Okay. And speaking of the Fed, does the print from yesterday solidify those prospects of a rate hike, or does it keep things pretty much the same, of hold for now? Is it higher for longer? What are we looking at?
Yes, I think we're kind of holding for the time being. The central bank will look at the non-farm payrolls and look at the threat of inflation potentially surprising to the upside in the future. That core was relatively benign is something that they'll view as positive because you're not getting that pass-through from headline into core. And the other thing I think that a lot of market participants have forgotten about is that tariffs are still there. And tariffs have started the trajectory lower, which we saw in the print yesterday as well. And so these are mixed signals for the Fed, and so we think they'll be on hold for the time being.
Well, look, I mean, am I wrong to assume that markets have been quite comfortable that these resurgences in inflation are driven by the energy crisis and that it is temporary? Is the market getting it wrong?
No, I think what happened is that in the last meeting, we had 3 dissents from the Fed, and that is unique and unusual. And so the market is sitting there saying, even if inflation were to move lower, we can't do that until the dissents go away and until we have a clear indication that inflation is moving lower. And that inflation lower path probably starts deeper into Q3 in probably 2 or 3 months. And you won't have a clear signal until then because, as you highlighted, we're dealing with the top-heavy effects of oil pass-through right now. So I think it's a matter of patience and waiting.
And we'll get back to that. But the next Fed meeting, what are we looking forward to? The 3 dissents from last time, does that continue into more?
I don't think we'll have 3 dissents again. I think it'll be a little bit more balanced. I think we've argued that the statement will get changed a little bit more neutrally, that the easing bias, whatever easing bias may have been in the verbiage, will go away. And I think the thing that the markets need to be focused on and that they will be focused on is this is Kevin Warsh's first meeting. It's going to be a new communication style. Every time we have a Fed chair transition, the market has to learn the style of the new Fed chair. And so I think we'll be hanging on every word. That's what we'll be paying attention to.
And in the midst of all of this, equities remained relatively resilient in the United States. We're still seeing year-to-date gains in the S&P 500. The SOX, my favorite gauge, is up more than 90%. Semiconductors are a strong game. What challenges the market perspective, do you think? Is it more geopolitics? Is it further pauses in the AI trade?
Yes, I think, we've pulled back a little bit, but to your point, we're still very strong year to date. And the escalation in the Middle East would be something that could cause concern. From our perspective, it's anything that disturbs growth. Right now, the equity markets can perform because growth has been resilient, and there's no clear indication that growth is going to falter in the next 1 or 2 quarters in the U.S. Now, if oil were to move past $130, $140, $150 because of an escalation in the conflict, that would be a growth scare. Alternatively, if there were to be some sort of pullback in AI capex, that could be a growth scare. None of that is our base case, but we need something that creates a little bit of uncertainty on growth, I think, to add more questions in the trading markets.
Okay, I will add one more question about the geopolitics. We haven't discussed that yet. With everything that's happening in the region, the latest from this morning, how do you position keeping that in mind?
So we are really focused on how that transmits to the oil price. We have created scenarios, if you will. We recently published our Morgan Stanley mid-year outlook, and in that outlook, we look at what happens if oil moves to different levels. And ultimately, if oil moves materially higher, we actually think that's a growth risk more than an inflation risk. Right. If you are in a permanent oil premium where oil sits at, call it $110, $120 for 6 more months, that's a world in which you could have disruption into supply chains. And not quite COVID-like, but you could have a little bit broader effect of oil because transportation is disrupted, moving into core inflation. And so the persistence becomes a problem. So persistence versus level and the time horizon becomes what we are focused on. And so far it's been okay and benign, but if this were to last many more months or the oil price were to move much higher, we would have to reassess.
Well, the latest update in the Iran story was that Iran was saying that it has completely shut down the Strait of Hormuz. The U.S. rebutted that this morning, so we'll have to wait and see what oil does. Rajiv, thank you so much for your time this morning. That was Rajiv Sibal, Senior Global Economist at Morgan Stanley. Now, coming up, Gulf sovereign wealth funds are pouring billions into the SpaceX IPO. We'll have that story next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It will be interesting to see how they get priced. You need to let 1 or 2 or 3 or 4 quarterly earnings come through on these companies and really see where they are. But are they going to be priced as secular growth, or are they going to end up being priced more as cyclical companies? But right now it's hype and it's just excitement, and I want to buy it because I want to flip it and sell it tomorrow for someone else. It's a gambling trade at this point. It's not an investment, but it's fun.
That was Jeffrey Sexton, CEO of Demeter Tactical Investments, speaking about the SpaceX IPO and other mega IPOs in the United States on horizons yesterday. Meanwhile, Gulf wealth funds have put in orders for shares worth several billions of dollars into SpaceX's IPO. Bloomberg News has learned that Saudi Arabia's PIF and the Kuwait Investment Authority have each placed orders for shares worth $1 to $5 billion. For more, we're joined now by Balazs Pens, Bloomberg Asia Equities Deputy Managing Editor. Balazs, what is the latest we know on the demand for this massive IPO?
Well, it's a massive IPO, and the demand has been massive as well. Every day we've been reporting more and more evidence of companies, investors, retail and institutional investors just piling into this IPO. As you said, we have reporting to show that some really large sovereign wealth funds in the Middle East, the Saudis, the Kuwaiti wealth fund, Qatar, have put in large bids for this IPO. And to zoom out, that's just part of the demand. Earlier this week, we were able to report that there are several orders worth $10 billion or more into this IPO. Now, obviously, nobody's going to get a $10 billion allocation, but that just shows the amount of interest. Overall, subscriptions are more than 4 times the shares available for this IPO. And just to reiterate, we are talking about a $75 billion IPO here. So the numbers are huge. Every time we report it, there is incredible interest both on the institutional and the retail side for this IPO.
And look, Jim Chanos sounded a note of skepticism, essentially, about the valuation of SpaceX. What was his criticism there?
Well, he said that, look, we're talking about a company that has about $19 billion of revenue and is valued at $1.75 trillion. So that's what, 95% over revenue. That's a huge multiple. And his point is that the valuation is not based on the numbers that we see currently. The valuation is based on the idea that this is a space company. And when you sell space, you can sell what he said, hopes and dreams. You can talk about developments that we cannot even imagine. You can talk about data centers in space. You can talk about asteroid mining. You can talk about colonies on Mars. Those are very difficult to price, and that's what people are being caught up in right now. While the other part of the investors who look at the numbers, who look at the actual books of the company, may not be convinced by those valuations.
And look, for most investors here, the appeal is Elon Musk and his business empire. How does the broader Musk world with other companies like Tesla X affect this deal?
Well, Elon Musk is front and center of this IPO, and consistently, as we've been talking about investors, be it institutional investors or retail investors, about this IPO, about their plans, about how they think about it, a lot of them come back saying, look, this is Elon Musk. He has the vision. He is driving this company, so we believe him. We trust in him. But for a lot of people, they look at the way his companies are intertwined, whether you talk about Tesla, XAI, SpaceX, all the other Musk companies, and they think, well, there might be some synergies and there might be some advantages of these companies working together, but for others that creates a little bit more of an opaque structure, which makes them think a little bit slowing down their enthusiasm for this company. So it will be very interesting to see after the initial hype dies down a little bit, where people end up on valuations for SpaceX.
Yeah. Balazs Penz, Bloomberg's Asia Equities Deputy Managing Editor, with the latest on SpaceX. Now, coming up, we will look ahead into the ECB meeting chaired by Christine Lagarde, as the bank is widely expected to raise rates. This is Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Oracle shares fell in extended trading after fourth quarter capital expenses came in higher than estimated, overshadowing AI growth. Oracle has refashioned itself as a provider of AI computing power, embarking on a massive build-out of data centers for OpenAI and other customers. It plans to raise up to $40 billion in equity and debt by fiscal year 2027 to fund further expansion. And OpenAI says China-linked accounts use ChatGPT to stir opposition to U.S. data centers. It says the accounts generated English-language posts raising concerns about rising electricity costs and were probably tied to a private Chinese tech firm that they did not name. OpenAI says the postings did not have a wide reach, but should raise concerns about foreign attempts to undercut a strategic industry. And KKR says markets may be underestimating AI's power demands. The firm's head of real assets says there are signs of frothiness in digital infrastructure, warning that too much may be built relative to current demand. KKR says it's not taking a view on AI growth, but is instead focused on positioning for the opportunity. While equity futures in the United States are turning higher, Asian equities lower, oil prices higher after escalations this morning. And coming up, fears of stagflation are starting to ripple through global credit markets. We'll discuss that with Victoria Harling next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil is rising as the U.S. completes a fresh set of strikes in Iran for a second day in a row after President Trump accuses Tehran of dragging out peace talks. Global equities hit a one-month low as the tech-led sell-off deepens and the war in Iran shows little sign of ending. Plus, investors gear up for SpaceX to go public, with the order book believed to be more than 4 times oversubscribed. That includes Gulf sovereign wealth funds ordering shares worth several billions of dollars. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Now, we're seeing what geopolitical events are happening in the Middle East today. That's slightly reflected in the equities picture this morning in Asia, particularly U.S. futures, not so much, 0.4% higher this morning. Now, this follows a 1.6% close on the lower side for the S&P 500. Investors really not factoring in the CPI CPI report that came in yesterday as danger signs come in. It is the highest headline number in 3 years, but lower than expected generally. So you're seeing a little bit of positivity in the U.S. futures picture there with underlying risks overall. Asian equities, however, 0.5 lower this morning, not as much as a massive move compared to yesterday. The Kospi was trimming losses in the session earlier on. And then oil prices is really where the story is today. Fresh escalations in the Middle East, a second day of escalations really, with the U.S. hitting Iran and Iran retaliating across some countries in the region. The yield on the 10-year notes not doing very much this morning. But for what markets in Asia are doing, we have Winnie Su in our Hong Kong studio. Winnie?
Good morning, Abir. Actually, we had a pretty volatile day here in Asia. As you can see on the board, this is the intraday move of MSCI Asia. At one point, we did pair losses and, in fact, was in the green when that headline dropped that the U.S. has completed the latest attacks on Iran. But you can see that that ended up becoming quite a brief relief, and that the downward pressure still is pretty much on in Asia because of the uncertainty around that real resolution. And also oil prices remain quite elevated, and also ahead of that SpaceX IPO that everybody is watching out for. Now you flip the board, we take a closer look at some of the moves in the key benchmarks, because we have Kospi, in fact, as you mentioned, reversed losses of as much as 4% earlier today, and now in the green, driven by some of the rebounds in the chip makers like Samsung and SK Hynix. But worth flagging today that the MSCI China down more than 1%, and it's now just about 1% away from entering the bear territory. So in fact, Chinese stocks, Hong Kong stocks have been doing pretty badly so far this year, and that is partly dragged by today Alibaba down about 5%, and some concerns around their pricing for the AI tokens after Wall Street Journal in fact reported that OpenAI is considering massive price cuts. Now when it comes to Japan, the Japanese yen still holding right about that 160.5 level against the dollar. Unfortunately, we did hear that BOJ's Governor Ueda is hospitalized and won't be able to attend the central bank decision meeting next week. But for now, market is still expecting one rate hike to come, but we'll be closely watching out for the speech from Deputy Governor when during the presser. Back to you, Abir.
Winnie Su in Hong Kong with those market details. Now, fears of a stagflation shock are starting to ripple through global credit markets as higher energy prices and inflation put pressure on corporate borrowers. Joining us now to discuss is Victoria Harling, Middle East CIO and co-head of emerging market corporate debt at 91. Victoria, thank you for joining us this morning. Now, look, the narrative has changed very quickly from an imminent resolution in the Middle East to more prolonged fighting. We were thinking by June this would be over, but it doesn't look like that would be the case. So what does this prolonged fighting mean for risk premiums and for the outlook on credit generally in EM?
Look, I think the markets have had to deal with a number of black swan events over the last 5 years. So much more akin to taking risk events in their stride. Clearly, the biggest impact that we're seeing is on global inflation dynamics. And actually, you could argue that looking at the jobs data that we saw in the US is encouraging that actually growth is holding up okay. And I think realistically, from a risk perspective, what we've seen of spreads compress to compensate for the inflationary dynamics of underlying interest rates, which is exactly what we would expect to happen. And going forward, we continue to expect overall yield to be a determinant.
Well, look, I mean, a lot of sovereigns and corporates in emerging markets have spent the past few years sort of extending maturities and working on their balance sheets. Do you think that leaves them better positioned than peers in developed markets if rates stay higher for longer?
100%. I mean, I think what we've seen so far in the last 12 months has been a very careful response from central banks to control the level of rates, balancing growth risks with inflationary risks. And they've done a very good job. And in fact, I think since the tariff of last year were implemented, what we've seen is much more rational response to inflows into emerging markets that continue to be very positive, by the way. We've seen more recently equity market outflows, but fixed income inflows have been strong. And I think that this pairs back to more rebalancing of domestic flows back into home markets, for example, which is helping central banks. But yes, in terms of government balance sheets, etc., you can still see that emerging market growth looks reasonably robust even under this scenario.
And within emerging markets, Gulf countries, for example, are benefiting from higher prices of crude despite the delays in shipments and the physical lack of ability to get those shipments across. But do you think that the equation going forward starts to become a comparison between emerging markets rather than the traditional distinction between developed and emerging markets?
Well, I think we've seen AI being the real distinction, and you've seen and reported this morning, continue to report on the flows going in and out of Asia, whether it's Korea, Taiwan. But I will say with the Middle East, what's quite striking from a corporate perspective, clearly a lot of the companies here are very robust. We've actually seen the lowest default rates of any region here in the Middle East, showing the corporate resilience. And I do think even when you look at growth, actually growth in the Middle East, despite the fact that the conflict is happening here, outshines that of many regions because the backdrop of government spending to diversify the economies continues to hold up very, very strongly. So, you would expect the Middle East to be suffering the most, but actually it isn't.
It's an interesting take. And look, I mean, this might be a little bit of an obvious question, but I keep thinking about 6 to 12 months from now, the biggest risk to EM sovereigns and corporates, what is it, in your opinion? Is it tighter monetary policy? Is it the weighing down that we're seeing on global growth, or the prospects of a weighing down on a global growth?
For sure, it will be global growth sentiment. Clearly, as we start to come into new trade discussions, whether more tariffs are coming on, developments on USMCA and what happens there. But I think what you're seeing is a strategic move to a multipolar world where emerging markets are very keen to make sure that they do business together. So you will continue to see this strategic push away from just the West. But for sure, more tariffs, more inflation, more pressures on global growth will weigh on the global economy. It's still reasonably well linked.
Well, Victoria, thank you for that take. Victoria Harling, Middle East CIO and co-head of EM Corporate Debt at 91. Now, the U.S. military has launched strikes against multiple targets in Iran for the second straight day. This is after President Trump accused the country's leaders of dragging out talks for an interim peace deal. Let's bring in our Asia energy reporter, Stephen Stupczynski, for more details. Now, Stephen, officially, we're still in a ceasefire, no matter how fragile it may seem today. But military action continues by both the United States and Iran, really. How is the market reacting to the latest strikes overnight?
Well, when you look at Brent and WTI, prices have gone up a little bit. We're not seeing a surge. Brent is still below $100 and far from the highs that we saw back in March in the early days of the war. But I think the main thing to focus on, though, for the market is, does this spiral into a wider conflict? And so far, these limited attacks you've not seen that. You've seen this mostly between Iran and the United States and Israel to an extent. And while there have been limited attacks, it seems that there will be this spate of missile fires or drone strikes, and then you would see an announcement on one side, either Iranian or the U.S. saying this operation has ended. So clearly both sides want to show that this isn't spiraling into a larger war. This isn't threatening the ceasefire in place. And I think that's what the market is closely looking at, that this is, obviously not good, which is why prices are up, but it's not a worst case scenario where you see Iran potentially targeting oil infrastructure across the region like we saw in March.
And look, President Trump has said that the U.S. supported more than 200 tankers through the Strait of Hormuz. How are traders really viewing the chances of a resolution and full traffic finally resuming to the waterway?
This is a really interesting topic because for a long time we've been looking at ships with AIS on, which indicates, they're sending their signal, and we were tracking which ships were going in and out. And if you just look at those signals, there are essentially no ships going through at all. But what's happened over the last few months is that more vessels have been turning their AIS off. This is the transponder that sends their signal for ship tracking, and they're going through dark, essentially. And according to Bloomberg reporting, not only are they going through dark figuratively, they're also doing it literally. They're turning off their lights and going through in the night to hide their location. And what's interesting here is we have known, there are banks saying, and there have been estimates by trading houses about how much oil has been going through. Trump's claim of 100 million barrels, if you look at that since the ceasefire started, let's just take 50 days. That equates to 2 million barrels a day. That's still a tenth of where we were pre-war. Plus, if you look at what he said, 22 vessels going through, that's still far below the pre-war level of 135 plus vessels. So while there is some oil going through, and that is correct, whether it's 100 million barrels, whether the U.S. is assisting with it, if they're actually providing safety support and security for these shipments, that's still a bit unclear. But either way, it is still a far lower level than the pre-war times, and that does result in ultimately a tighter market.
Bloomberg's Asia energy reporter Steven Stupczynski, thank you. Now, for a look at some of the other stories that we're following, the Qatar Investment Authority's deal-making push may be hampered by Iran's attacks on the country's energy infrastructure. The conflict is expected to cost Qatar about $20 billion in lost revenue after Iran attacked its key LNG plant in March. A spokesperson for the QIA says it is continuing to pursue deals across sectors and geographies. And Russia has sent an additional consignment of military equipment to Madagascar. The shipment includes mobile power plants and vehicles and will help re-equip the island nation's military engineering troops following a coup last year. The support from Russia comes as it challenges France, Madagascar's former colonial power, as a major foreign partner. And coming up, all eyes are on Europe as the ECB decides whether to raise rates. Details on that next. This is Bloomberg.
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome back to Horizon's Middle East and Africa. I'm Abir Abomar in Dubai. Bloomberg Economics is expecting the ECB to raise interest rates by 25 basis points when it meets later today. Many traders are expecting 2 further hikes over the course of the year. For more on that story, we have Bloomberg's Oliver Klook in Frankfurt for us. Ollie, is it fair to say that the increase in today's ECB meeting is confidently predicted by markets?
I think it would be a shock to everybody if the ECB didn't raise interest rates today by 25 basis points. It's been very well advertised from the governing council members speaking up into the sort of quiet period ahead of this rate decision. Everybody in the market has basically said this is locked and loaded and this is a done deal. But I think for the markets, the big question is going to be, what does the outlook going forward? What is the ECB's appraisal of inflation, of growth in the coming months? And we will get new projections from the ECB a little bit later today. We'll also get that press conference from Christine Lagarde where she will be grilled about, again, what she sees in terms of that stagflationary dynamic that we've been talking a lot about in Europe, which is basically inflation rising, which we've seen in May go up to 3.2%. Core is rising as well. Core actually accelerated at a much faster pace than the headline number, which is what's worrying the ECB. And of course, then the concerns about what that will mean for growth going forward. We had a contraction, a surprise contraction in the euro area in the first quarter of this year. That was a sort of massive reduction downward. That was down to an anomaly, though, from the sort of Irish economy, which contracted about 12%. That was really sort of, if you strip that out, growth has been a bit resilient. But the real question is, what does growth look like going forward? And that is going to be one of the questions that are going to be put to the ECB a little bit later today.
Well, there's the consensus, as you mentioned, that the ECB will hike. But is there a consensus that it's a good idea?
I mean, definitely not. I think that is what you hear. You hear some market commentary from a lot of the people, a lot of the economists, a lot of people saying that really this is not the moment to hike, that actually they're sort of traumatized by what happened in 2022 when there was this sort of idea that the ECB moved a little bit too slowly to act on inflation. But there are a lot of other economists that speak and say that actually what you're more likely to repeat is not the error of 2022, but the error of 2011, where you hiked interest rates prematurely and then had to capitulate and start cutting interest rates very, very aggressively. I mean, we spoke to Jeff Yu a little bit earlier this week, who said that basically if you get a hike this week, you're going to get the ECB cutting again in the fourth quarter and turning around. So not necessarily consensus there, though expected widely to get that 25 basis point increase from the ECB later today.
Bloomberg's Oliver Crook with those details. Now, coming up, South Africa's plan to split Eskom is drawing scrutiny from investors and ratings agencies. That is next. This is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. South Africa's plan to break up Eskom is raising fresh concerns among investors who warn that separating the utility's most profitable assets could weaken its financial position. The debate centers on Eskom's transmission business, a key earnings driver that the government wants to turn into an independent system operator. For more, we're now joined by Paul Burkhardt, Bloomberg Africa energy reporter. Paul, walk us through this. Why is South Africa splitting Eskom into separate units?
Good morning. So South Africa, Eskom is about 100 years old. It's been the monopoly power utility in South Africa. The whole time it helped it to industrialize, and it runs mostly on coal. A few years ago, there were severe power cuts that curbed economic growth here, and so the government came up with a plan to split Eskom into 3 separate units, generation, transmission, distribution, and that would help liberalize the grid, bring in private producers and bring in renewables and really make a major change in the system. And so the issue that we're at right now is spinning out the transmission unit, which is the most valuable asset for Eskom.
Yeah. And look, what are the obstacles when it comes to completing the spin-off, and how does it really raise credit concerns?
Sure. So the reason that Moody's and the bondholders that we've spoken to, the issues that they've raised around this is that transmission is the most profitable part of Eskom. It's responsible for it brings in about $2 billion of earnings in the last financial year. And so what would happen after that spun out completely to create a transmission system operator that's fully independent, that means it's not under the group of Eskom anymore. And that impacts Eskom's ability to pay back debt, to expand. It wants to expand it to renewables. And so those are the issues they're raising. Also with the existing creditors to get paid back, they also want to know how this is going to work.
And how is Eskom reacting to this plan?
Eskom's kind of taking the official line of, the president is the last in February said that it would fully be spun off. It's kind of gone back and forth in terms of within the government about what they're going to do, whether they're going to spin off all the transmission assets now or they're going to do it later. When the president said that in February that they're going to do it fully right now, of course, Eskom said, sure, we'll go along with that, but they have gone to court over trading licenses, electricity trading licenses, and other things. They're going to remain competitive, or they're going to take action to remain competitive, and so it's a little of both, I think.
Yeah. All right. Well, Paul Burkhardt, Bloomberg Africa energy reporter. Now, for sports stories, the FIFA Men's World Cup kicks off today, with Mexico, one of the home teams, playing against South Africa. The 48-team, 104-game tournament is being hosted across the United States, Canada, and Mexico. But the world's most famous football competition is being overshadowed by political tensions, affordability concerns, and worries about the United States' aggressive immigration policies. A Somali referee has been denied entry at the border, while an Iraqi player was detained and questioned for 7 hours on arrival at an American airport. For FIFA, the event promises to earn $13 billion, but with dynamic ticket pricing being used for the first time, many Americans are finding matches unaffordable. Attendance is also expected to be impacted by the threat of aggressive immigration enforcement hanging over visitors to the United States, as well as its minority residents. Now, before we head out to the end of our show, let's take a quick look at where markets are today. S&P futures turning higher by the second 0.5 higher now. Nasdaq futures, after a drop yesterday, are about 0.8 higher, and Dow Jones is also rising. Euro Stoxx 50 future probably feeling the pain from the Middle East, 0.4 lower. Now, oil prices are ticking higher this morning because of the escalations that we're seeing out of the Middle East, something to keep an eye on. Well, that's it for Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from Frankfurt, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. Oil rises and global stocks fall to a 1-month low as the United States launches new strikes in Iran for a second straight day. Markets ask, when is a ceasefire no longer a ceasefire? And tech drama, Oracle slumps after hours as concerns over data center spending overshadow AI growth. And decision day here in Frankfurt, the ECB set to deliver its first rate increase since 2023, the first major central bank to do so in response to the Iran inflation shock. All that coming up a little bit later today. Let's check in on the markets as we go into the session today. You look at the MSCI Asia Pacific Index down by about 0.33%, off some of the session lows we saw a little bit earlier in the day, following the sort of very negative session we saw in the United States yesterday. NASDAQ selling off about 2%, 1.6% off the S&P yesterday. European stock futures this morning, as you can see, down by about 0.5% there. And then in the United States, S&P futures gaining a little bit after that sort of big sell-off across American equities all of yesterday across all the major indexes. S&P futures up by 0.4%. If we move it on to Brent and the oil complex this morning, we see that oil climbing as we see those strikes in Iran. Still fairly modest, though. We've only broken just there through $94 a barrel, up by 1%. So there's still some confidence that this ceasefire may still be in effect, despite the strikes we've been seeing on either side. Bloomberg Dollar Index basically flat this morning. And, of course, the U.S. 10-year in focus, borrowing costs in the United States ahead of that Fed decision next week, trying to make sense of all of the inflation data we got this week and yesterday, PPI a little later today, and of course that labor market report last week. As for the risk events, what we're watching a little bit later today, the main event here in Europe, here in Frankfurt, is the ECB rate decision at 1:15 UK time. That will be followed by a press conference from Christine Lagarde about 30 minutes later. But between those two events, we get May PPI from the United States. Producer prices will be in focus. How much of that will be traded down to the consumer, causing inflation? Of course, the big corporate event of the day, the IPO, the pricing of SpaceX, coming a little bit later today. Well, oil rising this morning as the United States carried out strikes against Iran for a second straight day. That's after President Trump accused Tehran of dragging out negotiations.
We hit them hard yesterday, and we're going to hit them again hard today, in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers because, you know what? They dealt with some very stupid presidents.
To make sense of some of this, let's bring in Bloomberg Horizons anchor Abir Abu Omar. Abir, listen, we're hearing some sort of more encouraging rhetoric from both Iran and the United States, both saying that the strikes are sort of concluded. But at what point is a ceasefire no longer a ceasefire?
I would say at this point, this morning, Ollie, that they both have come up with encouraging statements, you're right. But we are seeing these hostilities really pick up pace over the past week or so. Now, the hostilities that we saw overnight and into this morning follow hostilities from yesterday, with the U.S. attacking areas in central Tehran, some water storage tankers in Tehran as well. Iran accusing the United States of not just hitting military targets, but also civilian targets. And this all follows the attack that the U.S. accuses Iran of downing an American helicopter prior in the week. And so yesterday we did assume that it would be a tit-for-tat sort of hostility pickup, but then we saw today happen. And then the Iranian retaliation was carried across countries in the region, including Jordan, including Kuwait as well. And this also happened yesterday. So what we're seeing is, again, this pickup in hostilities. At this point, we thought that the ceasefire negotiations would actually materialize. President Trump has claimed that ceasefire negotiations are underway multiple times over the past couple of months. He actually still maintains that they're imminent, but there are still some sticking points there, Ollie, right? I mean, Lebanon is a big part for Iran, and Israel has continued its incursion in Lebanon. Iran saying that it will not come back to the negotiating table unless the attacks against the southern part of Lebanon cease. That is not the case. But when we talk about the ceasefire in general, it's been fragile over the past couple of months, to say the least. But this past week or so brings up those prospects of whether it actually will lead to a ceasefire extension for 60 days and the opening of the Strait of Hormuz. It doesn't look like it, but for now, we're right to assume that the hostilities are over for the day. We don't know if they'll pick up. We'll have to wait to see what President Trump wakes up with and whether Iran comes back to the negotiating table.
Well, Abir, thank you very much for keeping up across that. That's Bloomberg's Abir Abu Omar in Dubai. Now let's see how the Asian markets are interpreting everything we've seen overnight with Winnie Su in Hong Kong. Hey, Winnie.
Yeah, good morning, Oliver. It has been a very volatile day in Asia. In fact, we opened actually lower, but then saw that very sharp rebound into the green when that headline of U.S. completing the latest strikes of Iran dropped. And however, that really didn't last for long. The optimism was pretty short-lived. As you can see, that downward momentum soon followed. And that is coming as these uncertainties around the real resolution and also elevated oil prices. Now, we are also very closely watching out for that SpaceX IPO to come. So a bit of a jittery when it comes to the overall market. Now, you flip the board, we take a closer look at some of the key moves in the different benchmarks. We have South Korea's Kospi index here fluctuating, but in fact, it was down as much as 4% earlier today. Now, the rebound is being led by some of these key chip makers, Samsung and SK Hynix. However, when it comes to the Japanese market, still closely watching out for the Japanese yen, which is now hovering around that 160 level against the dollar. Unfortunately, we did hear that Governor Ueda is now hospitalized and will not be able to attend the central bank's decision meeting next week. For now, market is still expecting one rate hike to come. However, they will be very closely monitoring that tone from the deputy governors. Flip aboard, we take a look at the Chinese markets. We haven't been talking about it as much just because so much is being dominated by the AI darlings of Taiwan and also South Korea. However, worth flagging some of the milestones for you today. We have MSCI China down 1.5% and just about 1% away from entering the bear territory. And also looking quite grim is the HSCEI here, in fact, is one of the worst performing stock gauges so far this year. We have HSI, in fact, at a 11-month low. Now, today, a lot is being dragged by the downside of Alibaba that we are seeing with these concerns around the AI token pricing after Wall Street Journal reported that OpenAI is considering drastic price cuts. However, that overall underperformance of Hong Kong and China shares really come as they have this lack of AI exposure and also weak earnings. Back to you, Oliver.
Thanks very much, Winnie Su in Hong Kong, for all the market action overnight in Asia. U.S. futures, on the other hand, are pointing higher despite the latest escalation in the Middle East, rebounding from an initial drop in the wake of the U.S. strikes on Iran. Let's bring in Ven Ram, Bloomberg MLive strategist. So listen, Ven, we've got more selling over in the United States, Wall Street. Of course, a lot of that was tech-driven. We're getting that coming up a little bit today, and a turnaround in U.S. equities. What's driving sentiment this morning? I don't think that Ven can hear us, judging from the hand gesture that we've seen there from our MLive strategist, Ven Ram. So we'll come back to him in a moment once we reestablish communications. But still ahead, as markets ready for what looks to be a hike from the ECB, we'll discuss the outlook with Carson Bresky over at ING. But first, we'll also be talking about Iran announcing the closure of the Strait of Hormuz after the United States attacks. We'll talk to the logistics with the CEO of DHL, Global Forwarding and Freight. That will be next, and this is Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Key
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. U.S. futures are pointing higher this morning despite a latest escalation in the Middle East and that sort of aggressive sell-off we saw yesterday and we've really seen across the tech complex over the last week or so. We'll bring back Ven Ram now, who we've reconnected with, our Bloomberg M Live strategist. So listen, Ven, trying to get an idea of what is really sort of driving market sentiment at this point. Obviously, we've had a lot of stories idiosyncratic in the tech sector. What do you think is driving sentiment this morning?
Morning, Oliver. I think that, the markets are still looking forward to, even though they fell big last night, the markets are still looking forward to the SpaceX IPO, which has been 4 times subscribed. Massive enthusiasm towards that. But you've got to keep in mind that these are coming at stratospheric valuations. So I don't know how sustainable that is. And the markets have come getting to realize that, look, this is not going to go up in a straight line, and this is a market that is prone to pitfalls, and especially in terms of valuations, the markets are beginning to realize that we are in frothy territory. I think we got an adequate warning of that last week with Broadcom's disappointing earnings, and I think that was a big turning point for the markets. The markets will stumble through this in fits and starts. We have got the SpaceX IPO. We've got Anthropic and OpenAI also in the pipeline. So until these 3 IPOs are done and dusted, the markets will be go through this phase where they're exuberant 1 minute, the next minute depressed. But I think that, after that, I think the markets will settle into their own orbit. And I think that these overvaluations will eventually correct themselves. So I think that last week was a big turning point for the markets. The markets are realizing that, look, we are now close to the Minsky moment, where valuations have stretched beyond repair, really.
Yeah, and we saw that sort of with the sell-off in the NASDAQ down, I think, 6 or 7% from the peak that we got last week. Something else we're watching very closely, Ven, today is, of course, the ECB rate decision, expecting that first rate hike since in almost 3 years from the European Central Bank. There is total consensus that it's going to happen. Is there total consensus, Ven, that it's actually a good idea for these rates to come up here in Europe?
Well, I think that the markets are priced for, more than 2 hikes. Really, they're zeroing in on 3 rate hikes. One interesting part of the equation, Ollie, is if you look at the euro has tumbled since the war, and that is basically reflecting the terms of trade shock. And I think that the ECB is going to revise down the growth estimate for this year for the Eurozone. And I think that will impinge adversely on the euro's fortunes. But I think that they are doing a good job in terms of controlling inflation, because they are projecting inflation under the adverse scenario to come in at 3.6%. This is a central bank, unlike many others, Ollie, which means when it says 2% inflation, they mean 2% inflation. They don't mean 3% or 3.5% tolerance that we have seen probably with the Fed and the Europeans and the Bank of England as well. So I think that inflation is going to be under control. That should send a message of confidence to the bondholders in Germany.
Yes, indeed. But the question is there going to be too much of an impact on growth? And I think that'll be the very lively debate for the weeks and the months to come. Ven Ram, the MLive strategist, joining us there this morning. Thank you very much. And Iran has halted the Strait of Hormuz shipping in response to fresh U.S. strikes, while the U.S. military disputes the full closure of the waterway. The World Container Index rates for 40-foot containers jumped 23% last week, surpassing the $3,000 mark for the first time in a year. Joining us more to shed a bit of insight from Amsterdam is the CEO of DHL Global Forwarding, Oscar de Bach. Oscar, thank you so much for joining this morning. I'd like to begin just by getting your assessment of where we are, where shipping rates are going, and your assessment of this war now that we have been in for a very, well, I think longer than most people would have liked.
Yeah, I think as we've seen, this uncertainty will stay on for longer, and also what you've seen that what recently now happened again with the Strait of Hormuz and the whole Red Sea road will continue to have its impact on capacity overall in ocean freight, as you showed earlier. That's why you see the impact on rates over there. So we have to continue to help our customers to use the alternative route, which has been used now for quite a while already, and I think that situation will continue.
And how is that bearing on demand more broadly? Obviously, you're finding alternatives. How do you see the demand picture holding up globally?
Well, demand is actually holding up, absolutely. So the volumes are there, both on ocean and on air side. So the key thing is to make sure that we find for our customers the most convenient routes that still meets their customer requirements. On the one hand, keeps the cost within control, but also takes in consideration what's there to come. Because I think we have to continuously stay prepared and be agile on what's there for the next day to come. So that is the alternative routes, the direct routes, both on air, on ocean, the going around there, making sure that we also help our customers when we take alternative routes that we stay in line with regulations, customs clearance, all of those, all the trade compliance elements that there are at the moment. So we sort of describe it that we have to be the lighthouse for our customers in the continuous storm that we're in, and there's no sight of a weather forecast that this storm will end near soon.
Well, I wanted to try to get a sort of forecast from you because obviously this is very dependent on the sort of political developments, but I suspect there's also a lot going on in the background in your world that maybe even if after a resolution there are going to be some enduring effect on freight rates. What do you think the enduring effect on freight rates will be, sort of irrespective of the politics here?
Yeah, but the effect on, I mean, the element of, so when you look at air, the element of scarcity is there at the moment, and that will take some time for itself to recover and to normalize again. And you'll see a similar thing on ocean freight. I don't think it will be a one-day solution. This will gradually have to resolve itself. Even if one day the Suez Canal will be fully used again. Also, that will be something that will phase in, because let's not forget that will save about 10 days of the total route. You can't suddenly bump that into all the various ports, because then you get port congestion, and then you get a problem there as well. So that has to phase itself as well. So just as it operationally will have to phase, I think you'll see a similar thing on the rates.
And thinking also about the sort of different scenarios that you're considering, and again, there must be a very vast sort of array of them that you're considering. For the Strait of Hormuz, obviously there's the full closure, there's the full reopening, there's something in between, a toll system. What are the kinds of scenarios that you're sort of anticipating or even playing with in terms of trying to assess what this is going to look like in the future?
Yeah, I think you said it really right, is that we have to work with scenario planning, right? That's the only way to manage this through. Actually, we do the scenario planning per customer to see what's relevant for them. For many, it's more the stability around the Red Sea, around the Suez Canal, which is the bigger impact when we talk about the real flow of goods. But obviously, when we talk about the availability of fuel, that's another story, right? Then we talk more about the Strait of Hormuz and then how that will evolve. We make sure that because we got our own airlines, so we got our own control of how we manage fuel. So we got that pretty much under control together with our suppliers, because that's going to be crucial. When you talk about scenario planning, that scenario, of course, you want to make sure that's well under control. And then the other scenarios, indeed, is about how do you phase phase in whenever the situation stabilizes? When do you start to indeed have the route through the Suez Canal again? What does that do to overall supply chain planning? And what does that do to availability of goods? So when we talk about scenario planning, honestly, the political part I leave to others, but the supply chain element and the overall planning we do together with our customers, where we look at different scenarios and always make sure that we have alternative routes for whatever is there to come. Because I think one thing that we all learned together over the past, I would say by now 5 years, is that there's always something unexpected around the corner. And that means that the way we do the planning with our customers, you have a base scenario and you have a second and a third, so that we can fast act when things happen together with our customers.
And another sort of important forecasting that the markets are trying to get around is, of course, the ECB raising rates. Do you have any concerns about rates rising in Europe and what that is going to do to demand and what the outlook is going to look like as a consequence of that?
We see at the moment, volumes are actually holding up, as I mentioned earlier. What that's going to do at the future, I think that's probably more the question you should ask to the previous guest than to me. I can tell you what the impact would be then on the overall supply chain of that. But overall, from what I see at the moment and the interactions with our global customers, is actually pretty confident.
Well, you run obviously a German company. You are yourself, of course, Dutch. I'm going to put you on the spot here. The World Cup kicks off today. What are you expecting?
Yeah, I'm originally Dutch, so my hopes are obviously on the Dutch team. But I think France, Spain is probably where we have to bet up.
Well, there you go. Getting all the forecasts from the CEO of DHL Global Forwarding, Oscar de Bach, joining us today from Amsterdam. Thank you very much for your time. Coming up, Oracle slumps after hours on worries about soaring capital expenditure. Details next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Oracle slumping over 10% in after-hours trading after the tech company reported quarterly capital expenses higher than anticipated, largely related to data center build-out. The spending is raising investor concern over the profitability of AI infrastructure. And I'm joined now by Bloomberg senior strategist Neil Campling. Talk us through these numbers. Is this something that we're expecting to see more widely across some of these tech names? A little bit of skepticism coming into that tech trade.
Yeah, it's a kind of microcosm of the AI debate actually within these earnings. On the one hand, you had very strong revenue growth coming through in the results, But on the other hand, you've got this acceleration of spend that they pointed to. A ratio that's often talked about is capex to sales, and they are suggesting it could get to as high as 100% in the next fiscal year, which is a very, very high number. And it's not really coming through in the top line growth yet, because they forecast sales for the following year pretty much in line with where the street were expecting. So the stock had rallied 50% from recent lows in April into this print. So a 10% kind of rebalancing reaction is not really a big surprise to see in the aftermarket hours. But that debate is definitely going to continue from here.
Yeah, and of course, technology in focus, not just because of the sell-off we've seen over the last couple of days. You know, NASDAQ down, I think, 6 or 7% from the highs from last week. But of course, the IPO pipeline, which has got a huge amount of investor interest. We've got SpaceX pricing a little bit later today, Anthropic, OpenAI. Connect all of these stories for us. This is an interesting time to be sort of selling into this. And of course, the euphoria does not seem to be diminishing, particularly for SpaceX.
Yeah, SpaceX, as we reported last night, obviously, there's more than 4 times oversubscribed. And we have to put in context, this is the largest IPO deal ever, so it's a big number in terms of the absolute pipeline of that for sure. So we're coming to the market now. Some people, like veterans like Jim Chanos, is saying that it's really the retail appetite for this trade that's creating much of the hype around this in the short term. But as you mentioned, coming further down the pipe as well, we're going to see some interest in terms of Anthropic and OpenAI as that battle for the leadership really in the next generation AI infrastructure comes to the market.
Yeah, and thinking sort of also about some of the other inputs in these tech names. Of course, a lot of these models have not been fully tested in terms of the long-term business model. Now getting some reports from the Wall Street Journal overnight that OpenAI adjusting some of its pricing. Take us through that very quickly.
Yeah, this is a fascinating thing. We heard from Uber last week they were capping the use of certain AI tools because it becomes so expensive. OpenAI, by suggesting they might lower the cost of the tools, is reflective of, one, because the costs are so high, secondly, trying to get usage higher up, and third, because they're facing massive competition from Anthropic, who have really come for massive acceleration where they are today to probably lead OpenAI in terms of growth and positioning right now.
Yeah, well, thank you very much, Neil Campling, for your perspective on all those important stories. Watching, obviously, very closely the pricing of the SpaceX IPO a little bit later today. Well, coming up on this program, the ECB set to raise interest rates for the first time since 2023. We'll discuss the European outlook with Carsten Bresky of ING. That will be next. Of course, we're watching the markets going into the session today, selling off a little bit in European equity futures. That follows a very down day over in the United States, where stocks sold off in the NASDAQ by about 2%, about 1.5%. Over in the S&P, rebounding in the United States a little bit, but of course, watching all the asset classes going into that all-important rate decision from the ECB at 2:15 Frankfurt time, followed by that press conference from Christine Lagarde. Where does she see the stagflationary risk in Europe? That will be the big question, and we'll get it a little bit later. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Live from Frankfurt, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. Oil rises and global stocks fall to a one-month low as the U.S. launches new strikes in Iran for a second straight day. Markets ask, when is a ceasefire no longer a ceasefire? And tech trauma, Oracle slumps after hours as concerns over data spending overshadow the AI growth story. And decision day here in Frankfurt, the ECB set to deliver its first rate increase since 2023, the first major central bank to do so in response to the Iran inflation shock. Looking at the markets this morning, MSCI Asia Pacific Index this morning trading lower by about 0.6%. You can see it there. 26.3 is what we're looking at in the trade intraday session. European stocks following the lead over in Asia, down by 0.5%. And of course, S&P rebounding a little bit after what we saw, that pretty big sell-off across American equities yesterday, up this morning about 0.4%. Looking elsewhere in the market, looking at the oil market, we have seen a bid for oil this morning, Brent rising by about 1%, breaking through $93 a barrel. The U.S. dollar index, Bloomberg dollar index, basically dead flat this morning. Of course, the U.S. 10-year yield more or less flat, down by about 1 basis point, really trying to assess all of that data we're getting out of the United States, whether it's that CPI data we got yesterday, that strong labor report, and obviously a lot of anticipation ahead of that rate decision next week from Kevin Warsh, the new Fed chair, which we'll be following very closely next week. Let's get now to the front page news across the world this morning. The Financial Times leads with the latest U.S. strike on Iran, describing them as an attempt from President Trump to force Tehran into a deal. The president, of course, been very objecting to the pace of negotiations. The Wall Street Journal reports that ChatGPT maker OpenAI is considering drastic price cuts as it looks to win customers from rival Anthropic, with IPOs expected for both of those companies a little bit later this year. And here in Germany, Handelsblatt describes concerns from companies and experts who say that the biggest wave of cost pressures from the Iran war could still be to come for the country. That is a conversation we'll get into very, very shortly. And you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers go to DAYB Go. Well, here in Frankfurt, the ECB is set to raise interest rates for the first time since 2023 as the upswing in inflation caused by the Iran war becomes impossible to ignore. The hike, if it happens, will make the ECB the first major central bank to increase rates in response to the conflict. I'm very pleased to be joined now by Carsten Bresky, head of research, macro research over at ING from Frankfurt. So thank you so much for joining us on set this morning. Obviously, the market is very confident about what we're going to get for the ECB. Do you think that that is the correct thing? Is that what the ECB should be doing?
Well, given the past of the ECB and clearly the fact that in 2022 they were far too late to react, yes, it's the best thing they can do. But call this an insurance rate hike. An insurance rate hike to ensure the credibility, the inflation fighter reputation of the ECB. And I think that's what they're going to do. Does the economy really need a rate hike? Now, we know this story. A rate hike will not end the war in the Middle East. A rate hike will not bring down oil prices. So not necessarily, but the ECB burned their fingers in 2022 by calling an inflation shock transitory for too long.
Right. But then, of course, there was the other sort of concern, the other sort of great trauma of the ECB, which is 2011, which was prematurely hiking, bringing down sort of growth and then having to sort of capitulate. We were speaking to some guests, for example, Jeff Yu at BNYD, saying that basically, if they raise this week, they're going to have to cut again in the fourth quarter. What do you think the impact is going to be on growth, and do you think that that might put them in an uncomfortable spot?
Yeah, well, I think 25 basis point won't make a difference between strong growth and a recession. If they go beyond today's rate hike, that's obviously putting more pressure. And indeed, I'm fully with you. I think the comparison with 2011 is much more justified than with 2022, because we're not seeing really a big inflationary wave. So there is a first wave this year, but we won't get the second and third round effects. So indeed, if they go beyond the first rate hike, then there is a high risk that they would have to cut again towards the end of this year or early next year.
So is your base case one and done, that this is not really a cycle, this is just about sending a message, and hopefully they're doing it early so they don't have to worry about it later?
Well, you know, if I was in the chair of Christine Lagarde, it would be my base case, but I'm supposed to predict what they're going to do, and I'm a bit afraid that they want to do a second rate hike as well, so maybe even a meeting by meeting, so already going a second time in the July meeting, and then they would have to correct it towards the end of the year, early in 2027.
As you say, 25 basis points is not very dramatic. I think we get very excited because it's the first rate hike in quite a while, but you know, this obviously will have a huge effect. I mean, you know, a wide effect, let's say. And I think that one of the things that's sort of interesting to me is we have not talked about debt levels in Europe in a little bit of a while. This is sort of in the back burner. When does debt become a sort of more serious conversation, particularly when you see the cost of servicing that debt rising?
Well, it should become a discussion, because some countries already are moving in a direction where they will have to pay like 5% of GDP just on interest rate payments. So that is an enormous pressure, a bit like in the US. And of course, we already had now the European Commission try of relaxing the rules again for fiscal stimulus, tackling the energy crisis. So clearly, we are in a high debt environment. Bond markets have priced in quite a lot already in terms of ECB rate hikes. So I think they priced in 3 rate hikes. And indeed, so the pressure on governments with these ECB rate hikes will be an important factor. Also meaning, Oliver, that in the end, the ECB will not be able to hike as aggressively as markets think they will, because it would be adverse for growth, and it would also be clearly adverse for public finances.
Yeah, and I guess there's also an argument that it keeps a little bit of dry powder, because there's a lot of other things in the market, and I think that it's very easy to sort of establish quite a bearish case. Obviously, there's the very bullish case on AI. There's questions, though, about interest rates increasing, the fact that there's not really the fiscal space there in a lot of European governments, and that if you get a sort of unwind of that AI trade with all of the things that we've seen across the world, and we see inflation rising, high energy costs, that something quite untidy could happen quite quickly. Do you think we're prepared for that? And do you think, where does that go on sort of your risk radar of that possibility?
I think we've heard a lot of warnings against it, also coming from the ECB, IMF, OECD, so the warnings are clearly there. But are we really prepared for it? No. But are we ever prepared really for a kind of unwarranted, turbulent correction in markets? No, we're never. But I think that is a good point. So that is actually the reason why the ECB should not hike aggressively, because the comparison with 2011 holds. In 2011, there was an exogenous shock that the ECB underestimated, and the same could happen right now.
Yeah, and I just have another question for you, because we did hear from PIPCO overnight saying that we might be entering a credit loss cycle, that effectively the default cycle is reasserting itself, where they expect significantly higher losses and lower quality credit. Still, spreads are still very tight in terms of the credit complex, particularly with sovereigns. Is that something that considers? Is that something we need to be paying attention to in Europe?
We should, but at the same time, we also have so much need for private investments in Europe to get this economy going. So it's not only the public sector, so that there is also these investment needs should actually mean that I don't think that the spreads will really widen significantly.
All right. Well, Carson Bresky, stay there, because we're going to come back to you. But ahead of next week's G7 Leaders Summit, Bloomberg has been speaking to policymakers and investors around Europe and its path ahead. This is new Bloomberg's economics analysis underlines why major change is needed. Bloomberg radio anchor Stephen Carroll joins us now for more on this, having done a lot of research and a lot of digging on this. Stephen, is there finally cause for optimism within Europe now?
There is. There are small but significant changes happening that are pushing towards deeper Europe integration, and that is part of the conversations that we've been having with those policymakers and investors ahead of next week's G7 Leaders Summit. If you look at things like the defence loan programme SAFE, the move towards more joint procurement in the defence space, we've got 6 countries, the 6 largest economies in the EU, are finally agreeing to move forward with the Capital Markets Union, a long-running project that many really had run out of patience with the implementation on as well. And then if you look at things like competition rules, the EU revising those rules, and we're seeing businesses already already noticing those signals coming from Brussels as well. Look at the raft of announcements we've had in the M&A space in telecoms from France and from Italy in just the past week on that front too. So individually, we are seeing these changes being made, these moves towards greater integration, some of the way towards the recommendations that were made almost 2 years ago in that report from Mario Draghi, who said that it was existential for the EU to be able to do more together and massively invest. So they might look like small steps, but something the former EU Commissioner Margrethe Vestager told me for part of the reporting for this project is that it is signs that Europe could be ready to take a leap of faith.
I think it's really important for Europe to realize this is not a race to be more Chinese or more American. This is a race for Europe to be a much better version of herself, and being that, also being more competitive, more focused.
Something that Margrethe Vestager mentioned in that conversation as well is the new impetus that came from Donald Trump's comments about annexing Greenland earlier this year as well, seeing that as a moment again where Europe's deciding to stop appeasing Donald Trump's whims and move towards perhaps adapting to some of their own underlying issues around things like competitiveness. And that new Bloomberg economics analysis acknowledges the size of this problem as well, saying that without reforms, the EU's output gap with the US could double by 2040 to 7 trillion euros. But the flip case is, if they were to go further and adopt more of what's in Mario Draghi's reports, we could see the paths of the European and American economies converge, and at least to stop that decline or that widening gap between them.
Yeah, and Stephen, you know, when we're usually sort of there sitting in Brussels and talking to people, I think everybody seems to have the sort of same analysis of the problems. Of course, getting the things done is the great complication, the great difficulty. What additional hurdles are still lying in the path ahead?
Look, you need to look at some upcoming events to see where the problems may lie. The EU's 7-year budget negotiation going to be heating up in the coming months as well. A key question in that is about whether or not there could be an agreement on more joint debt. That's something that Mario Draghi recommends as part of his report to ramp up investment as well. The politics, as we know, across the European Union can be messy. You've got 27 member countries. You'll be thinking about the idea of how those national interests are going to play into the global or the more European picture as well. And there's the question of the French presidential election next year, for example, could see a change of leadership in one of the largest economies in the euro area, and that could scupper some of those efforts to move ahead in a smaller group too. So that's a potential risk out there as well. Then there's the question of artificial intelligence. Bloomberg Economics weren't able to parse, I suppose, what effect AI could have on this trajectory, because we don't fully know what it's going to look like down the line for economies as well. So that's another risk factor that could see, depending on how it's adopted, the US move further away, or perhaps those two paths move closer together between the European Union and the United States.
Well, Bloomberg's Stephen Carroll joining us from Brussels. Thank you very much for your time this morning. Want to get another comment from Carson Bresky here from ING. So listen, we've talked about it for a very long time, European integration, capital markets union. Do you think that this is now, is there actually a reason to believe that this will have a material step forward and an effect, and a material effect on the economy, or is this more of the same, do you think?
It is moving. I think that's the positive thing. The irony, of course, is this is now almost 2 years after the Draghi report, and we still celebrate as if finally Europe is getting going. So yes, the direction is correct. It's moving a little bit. We're still far from really having then tangible outcomes. Let's not forget that. But this is Europe. And then just to throw in
not for long.
a famous statement by Jean-Claude Juncker, I think during the Euro crisis, when he said everyone in Europe knows what to do. Only European leaders don't know how they will be re-elected if they did what has to be done. And this is the ever reoccurring theme in Europe. So yes, we're moving. We're still looking for this real new business model. Yeah. We're still falling behind AI. We still need to find how will the European industry actually survive in competition with China. All these issues, but we're moving.
So then there's the question of doing the thing, and then there's the question of the thing itself. So let's talk, for example, about the capital markets union, right? And so this is sort of being treated as quite low-hanging fruit, as almost a kind of silver bullet that is going to unleash potentially trillions of euros of investment. I mean, I'd like to just sort of attack that thesis for a moment. Do you really think that that is the kind of investment, that is the kind of consequence you would get from a capital markets union? It's not as if it's impossible to invest across borders in Europe at the moment.
Now, that is the whole thing. So I think this has become such a huge castle castle and a dream castle that even if it's going to be implemented, it's not going to have this huge impact on the economy, because you're fully right. So it is this idea of getting the savings. So the idea is good. We have a lot of savings in Europe that we don't get at work, but they are looking for yield elsewhere. Yeah. So, but Europe also needs to offer actually the investment opportunities. If Europe has those, then of course all the savings can be used in a more efficient way also to invest in the real economy.
And Carson, we have to get probably your most important forecast of the day, and it's nothing to do with the ECB or Europe, but it has to do with the World Cup, obviously kicking off today. What are you anticipating? What do you think the final is going to be?
Well, of course, as a German, I hope that Germany will make it into the final, hoping that this will bring some distraction from the lack of economic reforms in the country. I'm a bit afraid that it's not going to happen, and this will be the last illusion, the last dream that Germany also will have to put aside, and then focus all the energy on getting finally these economic reforms done.
Okay, so potentially there, the silver lining from Germany losing in the World Cup, it will finally have to get its act together economically and policy-wise. Carson Bresky, thank you so much, Global Head of Macro Research at ING, joining us this morning in Frankfurt. And we'll have full coverage of the ECB policy decision at 1:15 London time, 2:15 here in Frankfurt, followed by a press conference about 30 minutes after that. And coming up on this program, the closure of the Strait of Hormuz and some of the issues that are disrupting oil flows is sending jet fuel prices soaring. We'll preview earnings from the European airline Wizz Air next, and that this is Bloomberg.
Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
We're now forecasting lower growth, principally as a result of the negative impact in the Gulf.
We start to see futures in jet fuel go down, right? It's going to take longer. It's not going to be quick, right? But things are coming back on track.
Supply will get very tight because it's been impacted by the crude supply and then by refining capacity.
If the fuel significantly spikes, we're going to have to raise ticket prices to compensate for that.
Time will tell. It depends on what's happening with the economy, what happens with oil prices.
Those are the airline executives speaking to us at the sidelines of the IATA annual general meeting, warning that the Gulf conflict is tightening jet fuel supply and dampening growth forecasts. And that is, of course, the backdrop that sets us up for the budget airline Wizz Air, which reports full-year earning in about 12 minutes' time. Let's bring in Conroy Gaynor from Bloomberg Intelligence. So set us up, Conroy. Tell us, what are we expecting this morning from Wizz Air?
Yep, thanks for having me on the show. So, look, we know that Wizz Air was in a difficult spot
even before the war in dealing with some of the cost inflation elements, mainly from grounded planes, but also some of the areas such as maintenance was very inflationary for Wizz. Now, we have had a couple of updates from Wizz since the Iran war began. Essentially, we know that they had a higher fuel cost to deal with in March, which is when their fiscal year ends. We know that there was some costs associated with stopping services in the Middle East. But we also heard that maybe the yields came in a little bit stronger as well. So we're kind of as we were. We always felt that Wizz Air may struggle to make a profit in fiscal 2026. And I think maybe they'll end up around the break-even mark as per their guidance. Now, I would caveat that by saying that Wizz Air has been doing significant sale and leasebacks and booking the profit of that on their books now. So, you may want to strip that out, and if you strip that out operationally, it still looks like they're loss-making. Now, that brings us to the outlook for fiscal 2027, the year ending March 2027. I would expect those losses to worsen because, as we know, the cost of jet fuel remains high. Those hedges are going to begin to about 70% hedged for the summer. Those will roll off beyond the summer. I think about 55% for the year as a whole. And with 20% capacity growth, it may be hard to actually pass on some of those extra fuel costs.
And of course, Wizz Air is dealing with this, but they're not the only airline dealing with this. Everybody in the industry is dealing with these issues of jet fuel. How are the other airlines counteracting some of these surging prices? And of course, as you mentioned, that hedging, if that runs out at a certain point, is that going to cause, a severe problem across the industry?
Yeah, well, look, Wizz's closest peer, Ryanair, has a better hedging position up until March 2027 than Wizz. So there's some advantage there. But you're right. As we go beyond the summer, I would say most airlines are around about the 70% mark in terms of hedging for summer in Europe. As we go beyond the summer, look, those fuel prices, it looks like they're going to remain elevated. We don't know what will happen beyond 4Q, but it's very hard to see a situation now where fuel prices aren't going to remain elevated versus pre-war prices for the remainder of this calendar year. So there'll be more and more pressure to pass on costs as we go further into the year, into that winter period where there's less demand anyway.
Well, Conroy Gaynor, thank you so much from Bloomberg Intelligence there, setting us up for those Wizz Air earnings out in just a few minutes. And also don't miss our conversation with the CEO of Wizz Air. That'll be at 7:10 UK time, 8:10 Frankfurt time on the opening trade. And of course, the other main event of the day is the World Cup. It kicks off later today with Mexico hosting South Africa in the opening match. But beyond sport, travel, and hospitality, it is, of course, also a major competition for the sports retailers, including Nike. Bloomberg Originals takes a look at the company's turnaround strategy that has been struggling ahead of the tournament despite the return of CEO Elliott Hill.
For decades, Nike had the simplest advice in sports: just do it. But the company that turned confidence into a slogan is now stuck explaining why its comeback is taking so long.
Nike hired this new CEO, Elliott Hill, who had been an executive at Nike for decades, and he was completely beloved by employees. But even under Hill, who has had so much expertise with the company, Nike is still really struggling. Before Elliott Hill took over Nike, Nike was being run by John Donahoe. Nike prioritized its direct-to-consumer channels, so it pulled out of a lot of those retailers. It really strained some of those relationships. Shelf space opened up in those retailers, and newcomers like On and Hoka filled those shelf spaces and really took over some of that running market share. Under Hill, Nike has really focused on regaining its dominance in sports, rebuilt relationships with a lot of the retailers. The running business has seen growth again. Nike is getting back on track in North America, but other parts of the business are still really struggling. Nike's China business continues to show decline. Its Converse business has reached a decade low.
With arguably the world's biggest sporting event on the horizon, Nike will have another chance to prove itself. Though its first attempts have been wide of the goal.
Nike released their World Cup jerseys. People started to notice that these jerseys had a major flaw. The shoulder of the jersey kind of puckered up, both on players and with fans. June is going to be a huge month for Nike. The World Cup begins in North America and the company shares its next quarter results.
For more on that and to watch the full piece, you can watch it on Bloomberg.com/video for many more, also other content from Bloomberg Originals across the network, and of course across a vast many different topics. Plenty more coming up on the show. This is Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
In a competitive news day for all the things we're watching today, the SpaceX IPO, the ECB rate decision, we've got to end on the Knicks, really the biggest comeback in NBA Finals history. Now the Knicks leading the Spurs 3-1. It has had an impact on Madison Garden shares. You can see it there on the chart. Shares of Madison Square Garden are up 50% so far this year as it's setting up the stocks for the venue for the best annual performance ever. Of course, we'll be watching that and many things ahead. Of course, the ECB decision a little later today.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Thursday the 11th, good morning. So U.S. forces have hit Iran again. Oil has climbed again. The ECB is expected to hike today. President Lagarde is expected to say there's more to come. We're going to be live in Frankfurt to talk about all of that. Plus, Oracle predicts it will spend even more on data centers. Investors are not impressed. That said, SpaceX is said to be 4 times oversubscribed. Go figure, Anna.
A lot of evolving stories to keep an eye on and a lot of evolving market moves to watch as well, Guy. Let's start with the Brent price then. Given what we've seen overnight between the US and Iran, Brent crude up 0.5% right now with a 93 handle. We've been above 95 though overnight, so we are off at those earlier highs. The story evolving around stocks as well. Nasdaq futures actually up by at least 0.6%. So the thinking around stocks is evolving, but we did see selling in the latter part of the US session yesterday, so maybe European stocks need to catch up with that first. And the Eurodollar certainly in focus as we have the ECB meeting coming up today, as Guy, you were mentioning. The countdown to the opening trade starts right now.
So it is Thursday morning. Let's just say the news agenda is fairly competitive this morning. There are a lot of big stories out there that you need to focus on. Clearly, what happens with the Spurs versus the Knicks is going to be one feature of the landscape today. I think a lot of people are going to be talking about that. But away from sport, oh yes, and the World Cup starts today, we have some fairly serious stories out there. Oil is up again. Anna was pointing that out. You've got the US hitting Iran once again. You've got an ECB meeting coming up. We're going to talk about that in just a second. And there is so much tech news out there. It's going to take a little while to work our way through exactly what is happening here and what the bottom line ultimately is. But let's start with oil. The US has hit Iran once again. Trump is clearly frustrated. The oil price has risen once again. This on the back of, obviously, what we saw yesterday with US inflation continuing to climb, and we get PPI data out a little bit later on today.
Yeah, absolutely. So that keeps the inflation effects of that higher oil price firmly on the agenda with the ECB meeting, which we'll come to in a moment. But sticking with the developments in the Middle East then, Guy, this is the second night in a row that we've seen the US and Iran firing at each other. From the US perspective, they say they've hit surveillance systems, air defense and communication within Iran. The Iranians, according to reports, have been targeting the Fifth Fleet in Bahrain. That's according to Iranian news sources, though. And President Trump has said, so they've stopped for the night, but he has said that they will bomb again if they don't get an agreement signed with the Iranians. I mean, this is adding up to an extremely strange definition of a ceasefire right now.
Can we assume that's over?
Well, I mean, we do have oil prices responding, but not as much as they used to. I'm not sure if that's linked to your question, but it is interesting that we went up above 95, but given we have seen 2 nights in a row of military action resuming, a reopening of the strait looking further away, not closer, it is interesting that we didn't go higher on oil, perhaps.
What is interesting about that strait being closed is that we are seeing increasing reports of this kind of dark exit, let's call it that, from through the straits of a series of tankers. So you are getting some oil out. Clearly, tankers are probably not going to go back in again, which is another factor. And things like fertilizer, there's not a lot of activity there in terms of movement on that front. So bear that in mind as well. So kind of the situation is evolving. I wonder whether the oil market is not responding because maybe that oil is coming out. Yes, we're getting more military action, but there are signs that oil is coming out of the Gulf. Does one offset the other?
We talked about this a little bit yesterday, the fact that Korea for the first time is offering oil that's come out of the Gulf. Sorry, Kuwait is offering to Asia oil that has come out of the Gulf for the first time since the war began. So that is certainly something we are watching. This, of course, puts inflation once again, as if it ever left the agenda, but firmly in focus for us. So let's talk about what we're going to get from the ECB, because we are expecting an interest rate hike. The inflation rate in the Eurozone running at 3.2% in May. They had to balance that with the sluggish growth agenda, which does raise questions about whether this would be defined as a policy mistake, maybe impossible to say that right now. The market is assuming that we get another hike, at least one more, maybe even two more from the ECB this year, and then some cuts in 2027. We're going to hear a lot about scenarios today, but a lot of focus perhaps will be on anything that looks like forward guidance from Christine Lagarde and how the market reassesses the forecast coming through from the ECB around inflation and growth.
It's the latter I'm quite interested to see, because the expectation is that inflation, they're going to ratchet that higher in terms of their expectations. But what does that mean for growth? What do rate hikes mean for growth? What are the latest PMI data signal on that front as well? How much of a growth slowdown are we going to see? Is the ECB, if it hikes today, still neutral? Where is restrictive? Do we need to go one, to your point, two more times before we get into that restrictive territory? Do they have a little bit of room to play around that kind of neutral level? Yes, I know
Neutral, notoriously difficult to identify, but I know that in our reporting this morning, talking about, maybe if we get one more hike, that takes us up, quote unquote, to the top of what might be deemed the neutral range. So are we toying with at least the top of that neutral range? And what, as you say, does that mean for growth? Jeffrey, you telling us earlier this week on this programme that it will be a mistake if the ECB hikes today, but that is what the market is expecting to see. And others underscoring the very different position we find ourselves in with the US and the Eurozone right now. I mean, amazing that US inflation has a 4 handle. So we're talking about the ECB hiking 2 or 3 times this year with a 3 handle. The US has a 4 handle, but the story very different there. The growth story added on top of the inflation story, for some people, might give more suggestion of a hike being reasonable in the United States, but that doesn't seem to be imminently where we are, even if the conversation around December is evolving.
The market's certainly pushing the Fed. We'll come back to that. I suspect that's going to be a topic we need to discuss. What else is also pushing the US economy right now is the AI data center build-out. You've got a huge deficit in the United States, plus you've got a data center build-out. Both of those two things propelling the economy. Oracle overnight, fascinating. The numbers actually looked okay. On a kind of nominal basis, I guess kind of talk about it maybe in those sort of terms. So the revenue line looks pretty good. The problem is that they've basically boosted their 27 guidance in terms of the data center build-out story. Now, part of that's because they've got a lot of capacity they need to build because there is demand for that compute. The other reason is that the inflation rate within the build-out story is epic right now. So the cost of building this stuff is getting more and more expensive. But the market was not happy, therefore, to see that coming through. I'm surprised that anybody was surprised, but maybe the number was just bigger than what we thought. So the question, therefore, is how sustainable is this? Neil Campbell is going to join us shortly. Apparently, there's a big Goldman Sachs note out talking about huge numbers in terms of the 2027 build-out. It's not just going to be Oracle. But then you pair that with the Wall Street Journal story on OpenAI and the fact that they're thinking about having to cut token prices in order to drive demand. Now, you'd want to do that before an IPO, but nevertheless, that speaks to this whole idea of can you generate enough revenue to justify the expenditure? And
do both of those stories add to this sense of nervousness around the AI trade at a time when we're going to see SpaceX coming to market, basically, which is enormous and has to be, room has to be made for it. And so that adds up to a lot of things to be concerned about. In terms of the near-term trade in AI, maybe it doesn't tell us anything about the longer-term rationale. And we'll talk a lot about SpaceX through the morning, but I'll just go to what my favourite quote came from Sebastian Boyd on the Markets Live blog, channeling Jim Chanos, I think, who's been talking about this. He defines SpaceX as a profitable little satellite Wi-Fi business wrapped in a lot of loss-making hopes and dreams. And that, for some people, is going to be what is at play here, what is being tested by this giant IPO.
It's 4 times oversubscribed, though.
Which isn't, well, yes, although, is that good or bad? I don't know.
Normally I'd say 4 times isn't very big, but then you think about the scale
it is so enormous,
of kind of what 4 times actually means.
4 times a big number.
Yeah, precisely. It's a very big number. OK, what have we got coming up on the show? Just over there is Joseph Riley. He's the Wizz Air CEO. The company's just published numbers. They are ahead of expectations. We're going to talk about what is happening with the winter, and we're going to figure out exactly what that's going to look like. Antonio Garcia Pascual, Santander CIB Economics Global Head, is going to be joining us very shortly as well. We'll get a preview on the ECB and figure out what is happening there. Paul Markham, GAM Investments Investment Director and Global Equities Head, joining us as well. And Egert Fremane, Norsken, VC General Partners. I think we're talking to Tom it is the Founders Forum, isn't it? That's where Tom is, basically.
Yes.
That's what he's doing today, and that'll be the conversation he'll be having.
Yes, absolutely. So some of those conversations, no doubt, Oracle, SpaceX, all in the tapestry, the backdrop to the tech events taking place in the UK this week. Let's tell you about some of the potentially market-moving data points we're watching for and events. Euro area finance ministers meeting in Luxembourg for a Eurogroup meeting. We have an OPEC monthly oil report, clearly garnering quite a lot of attention given the backdrop. 1:15 ECB rate decision press conference follows that with Christine Lagarde, of course, giving her take on where we are on that trade-off between inflation and growth for the Eurozone. 1:30 p.m. UK time, we get US PPI jobless claims. And, of course, lest we forget, the FIFA World Cup kicks off in Mexico with the host nation, that is Mexico in this case, in the first match, taking on South Africa. We will get to the earnings story out of Wizz Air and perhaps ask Joseph Ferrari at some point what he's expecting from the World Cup.
Who does he think is going to win? I'm sure that's top of mind this morning. OK, let's deal with the Wizz numbers. Full-year income beating expectations. The EBITDA line is ahead of expectations. The market expected a loss. That's not what we've seen delivered. Full-year net income, 2.2 million. The estimated loss, 34.9. So we're ahead there. Probably could have been even better if we didn't have a war in Iran and higher fuel prices. Full-year revenue, 5.69 versus an estimate of 5.8. So a little light maybe on the revenue line at the top. But as you work your way down, things get better and better. Joseph's here. Joseph Ferrari, nice to see you. Good morning.
Good morning.
How much better would these numbers have been if you didn't face a high oil price?
Well, we think probably we could have done 50, 60 million better on net profit if the war didn't happen. But that's very hypothetical. Of course, it happened, and you have to deal with it. But we are in good position because, given the circumstances, I believe that airlines need to have liquidity on hand. We have one of the highest liquidity ratios in the world of any airlines. You need to fly a good fleet of aircraft that doesn't drink too much fuel, and we do it. We are flying one of the newest fleet of any aircraft carriers, and you have to be hedged. And we are 84% hedged. Which I think is a very good coverage. So we are much protected from the fuel spike what the industry is facing.
OK, I just go back from my answer. Let me just give you the sense that I got there. Summer's all right. Probably got enough fuel. Yes, prices are higher in terms of fuel, and some of that is being passed on to the consumer. But nobody wants to talk about the winter, because the winter's going to be brutal. These numbers in some way don't tell the forward story of what comes next.
You probably can expect 2 halves of a year. So in the current half, we are into fuel supply secured, firmly secured. I don't think we are seeing anything coming. So people should be very relaxed to book, and they will travel, and there will be no hiccups with that regard. Yes, fuel is more expensive than what it used to be, but it has not been put across into fares. So if you look at the fare environment in Europe at this point in time, actually fares are holding, even declining because of competition in the industry. Now, you come to winter when the cash flow cycle changes in the industry, you're going to be starting changes. You will see capacity going out, you will see prices going up as a result of that, especially by the weaker airlines that are not protected by hedges, that they don't have enough liquidity on hand to continue to compete and continue to fight. They will have to rationalize what they are doing. But this is for the winter period. You know, whenever input cost rises, there is a realignment of supply and demand, and that adjustment basically pushes the fares up. But it happens the other way around as well. When input costs come down, so let's assume that fuel starts falling at one point, you're going to be seeing capacity coming back up and taking prices down.
Yeah. Good morning, Joseph. Have you seen consumers changing their booking patterns, either changing where they go or booking more short-term, closer to departure date? How are things evolving in terms of consumer behaviour, given all the nervousness around the summer, even if that was misplaced?
Yes, I would say that overall consumer demand is intact, but people behave slightly differently. They book a lot more short-term, so they are postponing their booking decisions. They book in the end, but they want to wait until they can, and off they go. There is a lot more preference for Europe. I mean, you see that Spain, for example, just recently reported record high numbers in terms of tourism in the country. But this is the shift, from Asia, Middle East towards European destinations. So we are seeing these trends happening.
And what can you do as self-help measures, as mitigation? You've mentioned the fleet, but that's a longer-term sort of planning. What can you do in the short term to make this easier on yourselves, apart from hedge?
What you will see in a few months down the line is that a lot of capacity will be taken out of the market, especially by weaker airlines, and the stronger carriers with good liquidity on hand will take benefits of that.
Are you going to take capacity out?
Yes. I think we are looking at accelerating our growth. You go back 6 years coming out of COVID, we went counter-cyclical. So the whole industry was on its back foot. We were pushing forward and we were taking market opportunities. This is exactly the same what we are planning on going into this winter.
So no deferrals? You're not going to defer any aircraft?
No.
You're not going to cut headcount? You're not going to do anything like that?
No. Actually, we are looking at the next phase of growth, how we deliver it. We are expecting 25% or so capacity growth to be delivered in the next few months for the remainder of the year.
In terms of the other thing that came out of IATA to my mind was talk of consolidation this winter. You going to see that?
Possibly. I mean,
who's going to be on the block? You talk about weaker airlines. I'm assuming you don't think you're one of those.
No, definitely not. But that doesn't mean that we necessarily have to be a consolidating force by mergers and acquisitions. They may happen, but I don't think that we are prone to that kind of a concept. We have always been consolidating the markets through organic growth. Simply, airlines are weakening, they are taking capacity out, we backfill that capacity, or we acquire assets like slots here and there, and that's kind of our way of growing. We will stick to that. This is what I think we are good at. We understand it. It doesn't create complexity. It changes the dynamics of the market without really getting into very complicated transactions and very complicated complexities.
So does that mean you wouldn't be interested in buying other airlines?
This is not the way we are doing business. I mean, I personally have been looking at probably 50 different airline acquisition opportunities. We haven't concluded.
That sounds a bit interested.
Intellectually,
how many? 50?
Probably 50 intellectually.
In Europe?
Well, in Europe or elsewhere.
Where elsewhere?
Well, in the Middle East or in Asia, etc. But every single time we concluded not to get involved, simply just because of the complexities. We are an organic growth company. We're going to be sticking to that.
There's talk of a consortium perhaps bidding for EasyJet, though. Could you see a role that doesn't add complexity as part of a consortium?
We are not busy with that concept. We are focused on our own growth, and this is what we try to deliver.
You haven't had any conversations with Castlelake?
No.
OK. If it was broken up, the organic, could you buy slots? Could you buy aircraft delivery slots? Is that the way you think breakups might happen?
As I said, we look at everything happening. I mean, this is prudent business conduct and kind of intellectual investment. And you will position yourself against the very events happening around you. But I'm just saying that any complexities are bad for our business. We need to simplify this business. We are a low-cost carrier. Simplicity drives costs down. Complexity drives costs up. So we have to stick to the principles. We have to stick to the model. But of course, if things are happening, we will observe those events and we're going to take a position. But we are not involved into any of this. We are not looking at it.
Well, what's pricing power like right now, Joseph? Because obviously you're dealing with a higher cost base with the dynamics in the oil market, but at the same time, customers are booking kind of late. And maybe, is pricing power stronger on certain routes than others? Are you concerned about that at all?
If you look at our revenue performance, actually our revenue, our unit revenue is holding flat versus last year. So we are not pricing up. We are holding the prices. Even in certain places, prices are coming down. We are an actor of the market. We are not determining the market. We are just one of the players in the market. We think our advantage is not around the pricing power. Our advantage is around the cost base, but we can deliver this business. But we are a large airline now. We're going to be delivering 80 million passengers in the current year. I mean, that gives size, that gives some presence in the market, some power in the market, but we think it's a cost game. It's not necessarily a pricing game.
Joseph, always great to see you. Thanks for stopping by to see us this morning and bring us the numbers. We really appreciate it. And the insight. Wizz Air's CEO, Joseph Varadi.
Coming up on the programme, can Europe finally get its act together. We're talking about growth here ahead of next week's G7 Leaders Summit. Bloomberg talks to key players about how the bloc can compete globally and protect its economy. Plus, we speak to the CEO of Radisson Hotel Group about navigating the energy crisis and what's in store for this summer travel season. So the focus on travel dynamics across Europe, that continues this morning. Up next, preparing for liftoff, SpaceX attracts strong demand for its imminent IPO, 4 times oversubscribed. We understand. We will break down many more of the numbers involved. If you want to get involved, please get in touch. IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Thursday morning, good morning. How are you doing? 38 minutes to go until the start of equity trading here in Europe. Our futures over here look pretty red this morning. We're kind of reacting maybe a little bit to yesterday. What is interesting is that oil is up this morning and US futures are up quite a lot as well. The Nasdaq futures are up by 0.8%. S&P's up by 0.5%. So quite a different position being predicted on that side of the Atlantic to ours. I wonder how long it'll take us to kind of catch up to what that narrative is.
Yes, and that is despite the fact that we had, after hours, some pretty disappointing numbers out of Oracle, or at least the market took it that way. Oracle dropped over 10% in after-hours trading after the tech company reported quarterly capital expenses higher than estimates. The expenditures, largely related to data center spending, have raised investor concerns over the profitability of AI infrastructure. We're joined now by Bloomberg senior strategist Neil Campling to talk us through these earnings numbers. It's interesting that this story is not going to set the pace for the Nasdaq then today. We have other bigger things to come to, which we will do in a moment, around SpaceX and the broader sentiment. But what was it about Oracle that disappointed? I mean, CapEx is getting a lot of attention.
As it should.
Firstly, the stock had run 50% into the numbers from the April lows. So you had big expectations into the print. The numbers themselves came in pretty good in terms of the top line growth, 20%. The problem is, as you mentioned, the CapEx numbers. And what we're getting to now is we are being forecast for next fiscal year. They're going to get to a mind-boggling 100% CapEx to sales ratio. This is a company that's burning through a huge amount of cash. There's actually a Goldman's note out this morning that's suggesting that the AI hyperscaler CapEx next year could be $1.1 trillion. Consensus is around about $900 billion. Their upside scenario is $1.4 trillion. These numbers are...
Everything comes in trillions these days.
It does feel that way, doesn't it?
It's called inflation.
Talking of trillions.
Talking of trillions. So we've got another basketball game on Sunday. Got some football to watch over the next few days.
Does the basketball cost trillions? I think it probably does.
It probably does feel like it.
Yeah.
World Cup definitely does.
The World Cup definitely feels like it. And we've got the SpaceX IPO. The viewing over the next few days is going to be amazing. SpaceX tomorrow. So when are we going to get to kind of a number? When do we? What is it going to take to kind of get this stock out there and onto the market?
Okay, so we've had the headlines. The deal is like over 4 times oversubscribed, which is a big number given this is the biggest deal in history. There are very sort of different opinions on this deal. Jim Chanos overnight saying can't value this thing. Others are saying actually because it's a $28 trillion TAM, then maybe there's a huge opportunity. It's going to come to the market, obviously pricing tonight, trading tomorrow, but it's because of the size of the deal, it's going to take a long time, even tomorrow's trading, until it actually starts getting prints in the market. I suspect we in Europe will be on our way home to go and watch the World Cup before we actually see this trading, probably at lunchtime, US time, New York time.
Well, no doubt we'll pick this up tomorrow and then once again then on Monday. Neil, thank you very much. Bloomberg senior market strategist Neil Campling, thinking about all things SpaceX and total addressable market. Guy.
TAM. OK. What else do you need to know this morning? Anthropic CEO says governments should have the power to block releases of advanced AI models if they pose unacceptable risks. In an essay, Dario Modae called for mandatory third-party testing of AI systems, including assessments of their potential to enable cyber attacks or help developments or develop biological weapons. He says authorities should be able to stop deployment if a model is judged too dangerous. Frasers Group has offered to buy the rest of Hugo Boss for around €2 billion. Frasers, which is owned by the British billionaire Mike Ashley, already controls roughly a 26% stake in the German label. Hugo Boss later confirmed the unsolicited takeover offer, saying it would, quote, thoroughly examine the offer. And the US Treasury has refunded nearly $22 billion in tariff revenue collected from importers in May. It's the first batch of such repayments since the Supreme Court struck down a major component of President Trump's trade policy. According to a Treasury Department statement, the amount was roughly equal to tariffs taken during the month.
Coming up on the programme, we will get an update on the ECB, what to expect from the European Central Bank today. It's expected to hike, of course. Attention turns to its outlook for the rest of the year. That's the outlook for inflation, the outlook, crucially, for growth. We will discuss with Santander's CEO.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Minutes to go until we start trading here in Europe. European futures actually look fairly negative right now, as we're about to show you, and we have a picture pretty much across the board of a, let's call it circa 0.3, 0.4, actually in some cases 0.5, half of 1%. What is interesting here is the US futures are quite positive. The Nasdaq's up by circa 0.7 of 1%. So a different picture over there.
Yeah, absolutely. A different picture on US futures then for sure. Let's have a look at the bond market story. And here again, we've been on a bit of a wild ride when it comes to oil prices. If $2 up and down constitutes a wild ride these days, but we've been up to $95 on Brent, now back at 93 as the handle, so 93.30. So as a result of that, European bond markets opening with yields just edging a touch higher, a little bit of nervousness perhaps ongoing really around the inflation story as, Guy, we wait for what's going to happen at the ECB.
OK, let's talk about what we are expecting from the ECB. A hike is expected. That seems to be the narrative around lunchtime today, as we maybe start to think less about what we are seeing on the inflation front and the effects of the Iran war as being transitory. Core inflation, remember, rose unexpectedly last month. PMI data has also signalled a significant slowdown in activity. How do you balance these two? Let's find out. Oliver Crook, Bloomberg's chief Europe correspondent, is in Frankfurt at the ECB. Ollie, we're going to get a hike. That seems to be the consensus. The feeling around that, though, more mixed. A good idea, bad idea. Hard to tell at this stage.
Yeah, absolutely, Guy. And I think that's the kind of debate we're going to want to drill down into the sort of governing council, the conversation around the table. I mean, they even had a debate at the last meeting about, what would a hike look like in this meeting? So I think they're really considering all kinds of scenarios. We're also going to get some new projections from them, economic projections. So obviously their outlook for what they're seeing on the growth front, on the inflation front will be all important. But as you say, 25 basis points effectively baked in. There is not really any question around that. That's really been confirmed by many of the statements and the commentary we've heard from governing council officials in the weeks leading up to the quiet period. But as you say, Guy, there's a debate about, there's consensus that this is going to happen. There's a bit of a debate as to whether or not it's a good idea. We heard from Jeff Yu a little bit earlier this week saying that basically if you raise rates this week, you're going to be cutting again in the fourth quarter. I spoke to Carson Bresky over at ING this morning. He says it's not really a policy error to raise rates right now, but really only one hike is appropriate, should be a one and done. So another thing we're going to pay very close attention to in this press conference is the signaling around this hike. What kind of hike is this? Is this the beginning of a tightening cycle? I suspect they want to keep all options on the table, but don't want to really give that impression, but also don't want to say necessarily that this is just a sort of one and done. So again, I think that in the big narrative here, we're thinking about the European economy, stagflation. Stag is less worrying than inflation right now for the ECB, and that's what we're expecting to hear from President Lagarde a little bit later today.
Ollie, great stuff. Thank you very much indeed. Inside at the ECB, Oliver Crook, Bloomberg's chief Europe correspondent. We will, of course, bring you full and extensive coverage of that ECB policy meeting at 1:15 London time, and then we get President Lagarde's news conference. That, of course, starts at 1:45 London time.
Let's get some more analysis on this subject. We're joined now by Antonio Garcia Pascal, who is Global Head of Economics at Santander CIB. Antonio, very nice to have you on the programme. Thank you for being with us. So we were just hearing there about the expectation is we get a hike from the ECB today, and then there are more expectations of hikes later on this year from the ECB. How many do you expect?
Yes, I think today is very clearly nicely signaled across the entire Governing Council. As for the next, look, I think the important signal the ECB has to convey, and they need to walk a very fine line because of growth and inflation, and they working across purposes, is that this is not the beginning of a tightening cycle. It's a recalibration, and therefore they will need to do one today, and then they will have to do probably a second one. And then it comes to the decision when they deliver a second one. Will that be immediately after, in July, or will they want to take a pause, reassess, recalibrate their expectations, and do it in September? I think more likely the latter, do it in September. It's obviously not 100% versus 0%, but I think it has more merits waiting, so they do not convey that this is the beginning of a tightening cycle.
OK, so they frame it not as the start of a hiking cycle, as you say there, Antonio. That's your expectation. Does that have a bearing on whether you think it's a good idea to hike or not? We were speaking to a guest earlier on this week who said he believed this would be a policy mistake. Do you think it's possible to say right now whether this hike today, if we get it, will be a mistake?
I think the closure of Hormuz will have the answer to that question, whether it's a mistake or not, right? If all of a sudden in June, the Hormuz Strait clears and all the traveling through the Strait of Hormuz resumes, then probably it's one and done, and they should have not done it. It doesn't look like it's going to be like that. It's probably going to take more than a few weeks to wrap up. But more to your question, look, this is a supply side shock, and of course, theory will suggest you look through. The problem it has happened for a long time, and you start seeing already direct and indirect effects. And what the ECB is worried about is inflation expectations. The front end is increasing, longer term, they're well anchored. But they need to make sure that they keep that well anchored, right? And that's the issue of credibility. And that's why they need to do a rate hike today and probably a second one. It's a recalibration, not a tightening cycle.
Antonio, how much slack is there in the Eurozone economy right now?
How much? Say it again, please.
How much slack, economic slack?
Yeah, look, I think when you're looking at Q2 currently, probably we are tracking growth close to 0%. I mean, right now it's based on stock indicators. For the next quarter, for the third quarter, probably that number is going to be, again, very close to zero, right? So look at growth for this year, something which is going to be in the neighborhood of 0.5%. We were coming pre-war with growth that looked more like 1.3. So there is substantial, right? And this is the damage that the conflict is doing. So we definitely are in a situation in which the ECB has to deliver a hike, but it cannot be too aggressive for this reason, for the reason of growth, right?
So, OK, so let's take that a little bit further. If we get 25 today and we get another 25 later on this year, that gives us 50. Does that take us restrictive? Are we going to see what do you think a restrictive rate at the ECB would look like?
That's a good question, right? We don't observe the natural rate, but we have range estimates. I think probably if they bring it to 2.5%, that's probably in the upper bound of neutral, or at least very mildly restrictive. Okay, that's probably where they want to be, given how inflation is increasing. Look, if the war gets resolved, let's say by the end of the summer, think of inflation probably will be around 4% by the end of the year, right? And I think they need to recalibrate to deal with that inflation and to keep inflation expectations well anchored. So I think 2.5%, that's probably in the upper range of where neutral is.
And Antonio, how would you expect this to be playing out in bond markets? Have we seen sufficient factoring in of rate hike expectations at the short end? What is the longer end telling you?
Yes, so definitely the market, I think they have been reading fairly well, the ECB. If move clearly into 2 hikes, also the ECB, remember, they told us that they bake in 2 hikes into the base scenario. So they provide quite a good guidance into that. So the market is debating whether it's going to be 2 or 3. And I think probably that's about right. 3 may be a little bit more aggressive, but it's not far off the mark, I think. As I said, they don't want to over-tight because growth is going to be disappointing this year, right? And about the long end of the curve, there are other factors there as well, right? And it's not just inflation expectation, but in the longer term, it's growth, right? Which is, for Europe, it's not going to be great. And then there'll be other issues related to fiscal problems, right? We need to look at the bond markets of the different European countries, right? And next year, there are important elections, including in France, that could bring some potential, risk premium back to the equation.
Can I ask you about the complexity of what's going on at the Fed, Antonio, and how that might or might not factor into the ECB's thinking? I'm sure it has no direct relevance and won't get much reference today. But how do you think the backdrop around the Fed, uncertainty around the reaction function, perhaps, under a new Fed chair, how does that complicate things at the ECB at all?
Well, I think, the Fed obviously leads, and whatever happens there spills over to the rest of the world. I think next meeting is going to be critical. We'll be hearing, first time chairing the FOMC. The FOMC members, or some members, have been really moving more from the accommodative stance into neutral, and that's been very clear, the move, and the move has been recognized by the markets. So now what we're left to hear is Chair Walsh and see what his views are. We know he's been signaling as somebody that's probably from the center towards the dovish side, but he's going to be somebody that's going to appreciate what the inflation outlook is, which is going to be considerably above target. And also they pay potentially a bit less attention to the labor market. So I think that is key, because if the Fed were to move fast and this year, that's not what I think at this point, but we need to recalibrate after that meeting. My view on the Fed, our view on the Fed, is that between 26 and 27, probably they need to deliver 50 basis points of hike, because this inflation is going to be more persistent than some think in the Fed, right? And then whether they're too aggressive and they go, or they start this year, that probably can put pressure on other central banks.
Antonio, great to get some insight ahead of the meeting and what we're going to see maybe after it. Antonio Garcia Pascual, Global Head of Economics at Santander CIB. 18 minutes to go until the market open. Coming up, big questions on AI pricing and the build-out. We are going to discuss that with our great guest coming from the founders.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is the opening trade. Now, we've seen negative investor reaction overnight in the Oracle share price and after hours trading after the tech company reported quarterly capex higher than estimates. The focus there on the cost of the AI build-out, how much of those fears shared across the sector. This in a week of UK tech gatherings. Today, it's Founders Forum, where CEOs and investors focus on the future of tech. Tom McKenzie is there, and I wonder how the cost of the AI build-out is factoring into their conversations. Good morning, Tom.
Good morning, Anna. That is certainly part of the conversation from a cold and windy Soho farmhouse close to Oxfordshire. And very pleased to say I'm joined now by Jeremy Frankel, who is the founder, the co-founder and the CEO of Fundamental. They recently, earlier this year, came out of stealth. They've raised $275 million US. You're valued well north of $1 billion, about $1.5 billion. And you're focused on building solutions for the enterprise using enterprise data around forecasting. You're backed by the likes of Salesforce. Anna was asking about the cost, and we are hearing a bit of pushback around the cost of compute and the cost of tokens and the cost of actually using and adopting AI and not necessarily getting the return on investment, the ROI. Are you facing any of that pushback with your corporate clients?
So first, it's very different because we're focusing on giving companies actual ROI and revenue by using our solution. So we're not focusing on enabling companies to become more efficient. We're really focusing on delivering a real ROI for our users, which is very different than what you see in the broader market.
Talk to us about what it is exactly that you do that Anthropic, OpenAI and Gemini are not doing for the enterprise client.
So we've built a foundation model for tabular data. So when you look at the AI space in general, people are thinking about language models such as Claude or ChatGPT. But what we realize is that the largest amount of enterprise data actually sits in tables. Think about databases, spreadsheets, CRMs, ERPs, all of those are tabular data sets. And that part of the enterprise world never really had a ChatGPT moment, so to say, and we're really focusing on enabling companies to make better predictions out of their data.
Where are you seeing the strongest demand in terms of industries, across sectors? Where is that demand strongest?
So we've built a generalized model to work across every industry and every use case. But what we've seen, where we've seen a lot of interest from, has been from companies, for example, in the media space, where they're trying to use it to predict viewership or ad placement, or energy companies that are trying to use it for demand forecasting of natural gas. And so across industries and use cases, there is a need to use tabular models to enable you to make better predictions on your data.
When you go in and you're pitching, you're meeting with the CFO or the CIO of these big companies, do they raise the question of cost? Do they raise the question of ROI? Is there a little bit more cynicism now when you have these conversations?
They're skeptical about whether our models can actually deliver what they can. And so what I always tell every one of my clients, like, don't trust anything I say, don't trust any of the numbers I show you, try for yourself on your own data. And when they see the results on their own data, that's when the conversation turns from like skepticism to excitement.
What stops an Anthropic doing what you are doing?
It's a very different focus. Like, language models are based on text, and you can train all your language models on all of the text on the internet. Like, Wikipedia has as much text as you want. But if you look at tables, the proprietary data sets sit behind closed doors. They sit with all those big Fortune 100 companies. And so getting access to that data is extremely difficult in order to allow you to make better predictions. And the second thing is the architecture itself is also different. As opposed to training a model on the next token, you have to train a model on messy data. And tables, have a lot of complexities. They have, they're incomplete. They are relational, and those things don't apply to language model to language itself. And so you need a different architecture to handle that type of data.
What are your biggest constraints right now? Is it talent? Is it the cost to compute? Is it data center access? Is it training these models?
I think it's all of those. It's compute, it's talent, it's data, because we need to get very different types of data than those language models need to.
This is a huge moment, obviously, in terms of the public markets. SpaceX pricing today, listing and trading tomorrow. OpenAI, potentially Anthropic as well by the end of the year. What is that doing? You're based in SF. I know you have an office in Barcelona as well. What is the mood on the ground in San Francisco? What is this doing? How is it changing the dynamic there?
I think there's a lot of excitement. I think I read that roughly 10,000 people are going to make over $20 million. I think that's definitely going to affect the real estate market in San Francisco as well, which is already high. But yeah, no, I think there's a lot of excitement, and I think that there will be a lot more capital, both with VCs and LPs, which I assume will be deployed.
So more capital. Look, you were at JP Morgan, you were at Bridgewater, you're a repeat founder. Do these valuations make sense to you? The OpenAIs, the Anthropics, SpaceX's valuation, does it add up?
I mean, the valuations are definitely high, but the pace of the growth of revenue has been something we've never experienced before. Seeing a company like Anthropic going from several $1 billion in the beginning of the year to now, I don't know, close to $50 billion in revenue in a span of like 4 or 5 months, that's amazing. So, yeah.
Okay, Jeremy, thank you very much indeed. We'll watch and see what the response is, of course, in the public markets to these IPOs. Jeremy Frankel, who is the CEO and co-founder of Fundamental. Back to you, Anna, Guy.
Tom, thank you. Tom McKenzie, of course, at Founders Forum. Now, tech could be an important factor in the trading day ahead. So let's turn now to today's markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. Mark, good morning from London. What is setting the mood in the markets right now? Because if you look at European futures, they look a bit negative. The oil price is a little higher. But US futures, despite the Oracle numbers overnight, actually US futures looking pretty buoyant. So what's the mood?
Yeah, the price action in Asia was very impressive. You need to put the US futures in context of the sell-off that we saw yesterday. But, we had a US session where tech stocks got hurt. And then we had the US-Iran flare-up. The Asia session started very negatively. It looked like it was going to be quite a bleak day. We saw precious metals break lower. We saw Hong Kong stocks break lower. We saw, Korean stocks trading very heavily. It looked like a really negative day. And, in the second half of the kind of Asia session, we really improved quite a bit. Now, I know things are generally trading a little bit negative, but I find that impressive given that the US-Iran conflict has probably seen the largest amount of strikes for a number of weeks. So it's the most tense moment. And given that the tech news flow has been a little bit more negative with the expenses out of Oracle, with the fact that the SpaceX IPO is withdrawing liquidity from the system. So I actually think the price action is quite impressive in the short term. But I'm not sure that the pain of the sell-off we've seen in the last week or so is quite over yet. I think we have a pop in stock markets after the SpaceX IPO, but I think we have to get through that first.
Mark, I am definitely going to watch Christine Lagarde, the press conference, a little bit later on today. I'm assuming you will be too.
Guy, you know that I absolutely will not be. Look, I always think ECB is a little bit anticlimactic. And I'm not expecting any major surprise today. I think, you know, I do think it's funny that the ECB are obviously going to be the first to hike, and everyone wonders whether they've got the least inflation problem of some of the major central banks out there. But I'm not expecting the ECB to provide much fireworks, and I think we'll move beyond it quite quickly. I am much more concerned about the US PPI figure today. I know CPI figure yesterday was a bit mixed, but I think PPI is where we'll see a headline number which is really going to upset people again.
Yes. So the headline number could upset people on the PPI story. What is that going to do to inflation expectations in the States, to Fed expectations in the States? Because given all the hype and the drama, the market wasn't enormously shaken by the CPI print yesterday.
No, they took it very well, but I think people have started to realize that the number is probably looking less good for stocks, I think, on what it means for the consumer. And I think, again, we're going to see this in a really high PPI number today, that the idea that, hey, that maybe margins are getting squeezed for US stocks. So I think that the inflation dynamic is still pretty negative for the stock market. I think that people think the disinflationary trend in shelter has largely run its course. And the fact is we've still got this supply shock from the Middle East not resolved. So we've still got a worsening inflationary outlook. We don't know how much worse, but we do know it's continuing to deteriorate. So I think inflation is going to continue to be a negative dynamic. And in the very short term, I think we might get another pop-up in yields to squeeze the stock market lower.
OK. Plenty of things to watch this afternoon, even if Mr. Cudmore's not watching the ECB. OK. Bloomberg Markets Live Executive Editor Mark Cudmore. You can get up to date with all the great insights and analysis from Mark and the rest of the team. MLIV Go is the function on your Bloomberg terminal.
They've been on a roll on the SpaceX IPO. There's lots of good stuff on the SpaceX IPO on the Markets Live blog, so I recommend that. Ahead of the open, though, should mention any stocks that might be on the move. Not a huge day for corporate earnings, but Wizz Air, of course, in focus. We spoke to Joseph Ferrari earlier on. Hugo Boss also in focus after Mark Ashley's Frasers Group going for the part of that business that they don't already own.
Absolutely. So a bit of M&A in the market this morning. It's interesting what the airline story tells us about what's happening with the consumer. Still seeing quite a buoyant summer. Going into the winter, we're going to see a few capacity cuts. Anyway.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Okay, a couple of minutes ago until we start trading here in Europe. When you think about the difference in US futures and European futures this morning, you've got to think about the sequencing and what happened yesterday and what is happening today. So this was yesterday's S&P session. Europe went out here, but the rest of the US session was fairly negative, which is why our futures this morning are also negative, because we've got to price that in, despite the fact the US finished down there and is going to bounce this morning to fill some of that up, that gap up this morning. So that's why you're seeing positive US futures and negative European futures. We're going to play a little bit of catch up, but there's an awful lot of ground to cover between now and the end of the European Thursday session. So here we go. Down by 0.2% for the 50. FTSE's down by 0.3%. DAX is down by 0.1%. We've improved a little bit as we start to glance sideways at what is happening with the US picture, Anna.
Yes, absolutely. And a sideways glance tells a much more positive story out of the United States. Nasdaq futures up by 0.8%. With that in mind, let's have a look at where we're expecting to see some movement at the start of trade. I'll start at the bottom of that board then with that thought. Tech stocks could be in focus. Oracle earnings seemingly disappointing. That stock went down after hours on the back of ongoing concerns about CapEx, the cost of the build out for AI. And that has been a perennial theme of this week as we've seen tech under pressure. So how does that translate into Europe? But as I say, futures in the States looking pretty buoyant. Hugo Boss could be in focus. Frasers Group making an offer for that one, but it's at a premium of only 4% to the closing price of yesterday. The British retail group Frasers already owns 26% of Hugo Boss, so we'll see if we get much movement on that particular share price from the German clothing company at the start of trade. And Wizz Air in focus. We've got numbers there looking better at the sort of bottom line guide than we were anticipating, but they admit to give an outlook, of course, say they're not particularly interested in the M&A wave that is being at least discussed in the aviation sector.
Yeah, tough winter coming. Seems to be the narrative as well there. OK, let's get some markets open for you. Let's show you what is going on. We are, as we've already indicated, expecting a little bit of red on the screen this morning. That's what we're getting early on from the FTSE 100. We're, to a certain extent, just pricing what we saw towards the back end of the US session yesterday. But we're starting to see things ticking up in the States, so things are maybe starting to improve as we come through into the open. So I think it's going to be kind of touch and go. And maybe we're seeing that already in terms of kind of how negative we actually are. It could only be sort of 0.2%. Half an hour ago, it was kind of 0.4%. So we've improved a little bit in terms of what we're seeing. And actually, we're starting to get quite a positive open here. So we are maybe pointing forward rather than backwards in terms of the way we're thinking about this market. The CAC's down by 0.1%, but all these other markets are now up by 0.3%. The AEX is up 0.3%. Asia Tech was strong. That, I think, again, maybe feeds back into the narrative around why we're seeing maybe US futures improving. And with the Nasdaq up 0.8%, maybe it's tech that is driving the Amsterdam market. But the Stock 600 absolutely flat, balancing that kind of negative session back end US yesterday with a forward-looking narrative which maybe looks a little bit more positive, Anna.
Yes, and it's that forward-looking narrative that seems to be driving things, isn't it, guys? So as you've been pointing out, the futures picture was quite misleading then for this morning because we are seeing most of these markets go higher. The DAX not yet open. The CAC 40 is an outlier to the downside, but most of these European markets are then going higher. The AEX, as you rightly point out, getting some decent gains, and technology is one of the best performing sectors this morning. So BE Semiconductor up by more than 3%, ASM International up by just shy of 3%, ASML up by 1.7%, ST Micro up by 2.7%. So we've got some movement to the upside in technology, so perhaps taking the lead not from the dynamics around Oracle specifically, which did look as if it was a negative story, but Nasdaq futures just gaining and gaining right now. We're now up by 0.9% on Nasdaq futures, and so technology jumping into top spot here on the European session, and energy stocks also not doing too badly. That's the second best performing sector, which no surprise given we've seen the potential for a return to hostilities in the Middle East, really, haven't we, overnight? 2 days of attacks by the US and Iran.
What I think is slightly, SAP is down, so it's the hardware companies that are up this morning. In terms of what we're seeing within the tech, in terms of the individual bourses around Europe, a maybe slightly more mixed picture.
Yeah.
Europe basically is balancing out the session we saw yesterday in the States and the session we're about to get in the States, and basically saying, kind of, we'll leave it as is.
Yes. Let's talk about some of these dynamics in the session ahead. Paul Markham is with us, Investment Director and Head of Global Equities over at GAM Investments. Paul, nice to have you with us. So tech stocks not doing too badly this morning, although the market overall here in Europe pretty flat. US futures pointing higher, looking to bounce back from some of the losses in tech yesterday, it would seem. Does the tech sector in the States, in the Asian session, even here in Europe, does it feel usual to you, or does it feel as if it is dealing with the big liquidity repositioning event that is the SpaceX IPO? It feels a little unpredictable at this point.
Yes, it does, Anna, and good morning. I think there is a sense of suspended animation, which we're sort of seeing in the market at the moment ahead of that SpaceX IPO. The cash call on some of those stocks which have already performed exceptionally well into this new issue. If you think going back to the beginning of the Iranian conflict, tech has really outperformed very, very significantly. There's also a bifurcation, as Guy's quite rightly just mentioned, around hardware and software. And that is, to some extent, a continuation of the concerns which we've already seen, but also the fact that the CapEx number from Oracle came in very high, I think is what's driving the equipment manufacturers in particular. So you've mentioned ASM, etc. this morning, which are benefiting from that. And I think the big question for those names is when the music stops. And that is when the amount of compute power that needs to come in starts to become a concern for the market.
Yeah, so this can be good for the suppliers, even if it sent the Oracle share price down overnight. More broadly then, where do you rate your nervousness around the level of CapEx and the AI build-out, and whether it's running just too fast, running ahead of itself, if you like? I mean, where are we in the AI build-out story, and what it does to our appetite for tech stocks?
Well, there are two sides to this, really, Anna. I think on the one side, there's the fact that the adoption of AI is very real, and that's why I would prefer to characterise what we're seeing as a gold rush and not a bubble. I think a bubble has connotations of being completely unjustified, and if you look at some of the business models in 1999, when some of us were lucky enough to be involved, that was the case then. In this case, there is something real which is just being chased very aggressively. So that's the first point. The second would be, I think, that there is a question as to whether or not the anticipation of there being very significant AI compute is justified at the current pace of adoption and the current pace of CapEx. And I think that is the big question. And from that point of view, I think that there is very much a justification for buying this, what is clearly a secular growth situation, but it's just how quickly it's pricing things in, which was potentially the source of nervousness.
Don't gold rushes and bubbles ultimately end in the same way?
They do end in the same way, but the anatomy of how they burst, I think, is different. And also the fundamental justification or otherwise for them is slightly different as well. But what you can end up with is far too many dollars chasing far too few assets.
You said the music's going to stop. Is that what that looks like?
I think that that looks like, Guy, is a situation where something relating to agentic AI comes into play. And what I mean by that is there will be an occasion when an agentic decision is made by AI in an industrial process, a health process, something which is going to cause either damage to human life or a very significant financial event. And when that happens, I think that changes the regulatory outlook and it changes the attitudes that society takes.
Regulation bursts the bubble.
I think, yeah.
Or ends the gold rush.
Ends the gold rush. And I think that we've already had very significant comments from the EU for some time now, implying that they wish to regulate further. But the US and the Chinese have been quite relaxed about that and allowed AI to kind of develop. I think if that goes into reverse, then investors really will question valuations.
The Anthropic founder, though, even he's talking about regulation of AI models being a good thing. So, yeah, it's an interesting thought, isn't it, where the regulation...
He has mentioned that, though, in the context, I think, of saying, well, we've got stuff which is so powerful we can't release it yet. And I think there's a certain PR benefit to that.
That has been said, certainly. But, yes, so interesting to watch that one. So we have all of this capital raising taking place in the market. Do you see portfolio effects, then, from people making space for SpaceX right now, but then Anthropic and OpenAI and all of the rest? And do we just have to work our way through all of that? And what lies on the other side of it, Paul, do you think?
Well, there's an unprecedented move apparently being made by the major index providers, which is to include these IPOs were, in the first instance, SpaceX, very quickly.
Not immediately in the case of the S&P, is that
No,
right?
exactly. But some of the others
Yeah.
are including it quite rapidly, and that has flow impacts for ETFs in particular. There's also the fact that there will be a natural level at which portfolio managers on active funds will not want to take their overweights or their positions in tech any further. So they'll want to sort of keep maybe a sort of one-in, one-out approach, or they'll want to sell some existing holdings to make space for SpaceX in particular in the near term. And of course, as we go through the year, we're going to get Anthropic and OpenAI, I think, probably in the fourth quarter. So yes, I think that is an ongoing issue. And if you are forced as a PM to look through your portfolio and say, what would I be selling to make space for? And you look at your valuations, you look at performance, it's difficult to ignore taking profit in some of those names.
Is Europe going to protect me when the gold rush ends in the United States?
I think the big question there, guys, is to what extent the rotation benefits the sector mix in Europe.
Yeah.
Because I think that there is firstly, on the underlying tech side, is the EU going to protect you around, the whole AI situation? I don't know. I think they're starting to sort of backtrack from that. But in terms of portfolio and market sort of positioning, I would say that if you have a rotation into those spaces which Europe is sort of much more highly weighted in, and that will probably prove to be a value rotation, then that would be a benefit. If the rotation is into certain other areas of the market, it could be, healthcare, could be consumer, maybe.
But if I'm looking to hedge my AI risk, you talk about taking profits, but if I'm trying to hedge my kind of tech risk, is Europe a hedge against that or not?
On an index basis, I would say yes, because the weightings explicitly in tech are so low, and the weightings in more the value, the lower multiple areas. Absolute trade? It's a relative one. I think if tech comes off sharply, I think in the first instance you rotate into non-tech for a period. You may even rotate from hardware to software. That could happen. Then you rotate more into the broader market. But overall, there's going to be outflows, particularly from retail. And when that happens, I think that pulls everything down. And that would be healthy, by the way, as long as it doesn't become a rout. And if it's accompanied by something else, and that could be something like military action, could be another further price shock in energy, for example. But I think, ceteris paribus, that rotation in and of itself isn't too damaging.
OK, so we might see that be quite widespread in terms of its effect. Do you get a sense that the conversations around all of these big listings over the summer and the AI trade more generally, is it just drowning out a whole load of other probably quite good ideas, Paul, that we're not talking about because we're talking so much about this? I mean, are there things that we should be focusing on that maybe aren't getting the attention? I
think the fact that, when we look at the economic numbers recently out of the US, I mean, the job number last week was pretty impressive. Clearly, the inflation that comes with that is starting to build in a way that is concerning. And I think what not many people are talking about that frequently is the fact that if you look at the difference, for example, in food production, fresh food is already starting to tick up. But what starts to come through and becomes very damaging is when packaged food starts to show those inflationary impacts. And that typically takes a few months to start working its way through. And when inflation finds its way into an economy, it starts to become quite difficult to remove it. And then you start getting potentially controversial political developments, such as the UK proposals around price caps, for example. So I think that all of that could be something which we should be looking at. But having said that, it's incredibly impressive to see how much the US continues to create jobs.
Is it better to raise rates then? Just kind of stamp that out?
In the States?
In the States and here in Europe.
I get a sense that particularly in the States that it's going to be something that's going to have to happen, and I think it's going to go against the narrative of the presidency. The danger of not doing that is you lose control of a growing inflationary situation, and you lose credibility as a sovereign power, and I think that's really important. And the institutional confidence, I think, particularly in the Treasury market, which is, on the end of a very large budget deficit, I think is important.
Very large. OK, Paul, nice to see you. Thanks indeed for stopping by to see us. Paul Markham, Investment Director and Global Equities Head, joining us from GAM Investments. Quick look at the Core 6, just to figure out what is happening there. You are seeing a little bit of divergence within the tech sector, which is interesting, I think, this morning. Defence stocks are up quite interestingly as well, given the backdrop to what we're seeing in the Gulf. Tech, ASML doing well. It's interesting that Novo, actually some of the pharma stocks this morning are doing less well. But let's get back to that tech story. Alex is here with more.
Yeah, good morning, Guy. You're mentioning that divergence in the tech sector. Let's start then in the green, and it's the chip makers, those with exposure, of course, to AI chips, the semiconductors. In the green, you've got ASM, ST Micro, ASML, all in the green. ASML up approaching 2% this morning. Turning the board over, though, and looking at those European names linked to software. Of course, out of the US, Oracle saying that legacy software sales for them were down, potentially a read-through here into Europe. SAP, Sage, Nemetschek, all in the red this morning. SAP approaching 4% down. So that mixed picture, Guy, that you were talking about there in tech. Let's turn then to a different sector altogether. Let's talk about Hugo Boss. That's in the green this morning after that approach from Fraser's Group, Mike Ashley's Fraser's Group, valuing the company around $2 billion. Fraser's down about 2%, Boss up about 6%. So that's playing out there. And just finally turning over to Wizz Air. Now, they beat estimates. They were predicted to make a loss. Of course, they have omitted to give a forward outlook, citing the situation in the Middle East. Up this morning, though, around 3%. So that news that they did not make a loss. They beat those predictions, putting them in the green out of the gate.
Alex, thank you. Alex Morgan with a rundown of some of those stocks that are moving this morning. Coming up on the programme then, President Trump says he will continue attacking Iran unless Tehran signs a peace deal. More details.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Wednesday, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back to the opening trade. 17 minutes into a European session that's a little bit more positive than advertised. Perhaps the US futures picture is dragging expectations higher here in Europe. We see European stocks are on the front foot. The DAX, not so much, but other markets around Europe putting in a modestly positive performance, perhaps you'd say, Guy.
And that's against the backdrop of rising oil prices, which is a factor we need to fold into the narrative this morning. Oil has been moving up. This comes after the United States carried out more strikes against Iran. That's the second day we've seen that. President Trump has accused Iran of dragging out negotiations. Let's get a take on what is happening here. Abir Abu Omar joining us from Dubai. So the ceasefire, is it still in place? Is it not in place? What are we looking at?
Good morning, Guy. That is definitely a question we were asking ourselves this morning after a second day of hostilities between the U.S. and Iran. So, look, this happened yesterday when the U.S. retaliated against what it said was Iran downing a U.S. military helicopter yesterday. Iran retaliated by hitting countries in the region, including Jordan, Kuwait, and Bahrain. The hostilities happened again today after President Trump told reporters that he will hit Iran again because he is disappointed with the way they have been negotiating towards this MOU that we've been talking about over the past couple of months. So to break this stalemate, we assume the U.S. hit targets in Iran today that ended overnight. Iran retaliated again by hitting the U.S. Fifth Fleet in Bahrain. Kuwait closed its airspace momentarily as a precautionary measure. And then Jordan reported 20 missiles or so in its airspace. So we're seeing this tit for tat happening quite a bit more than it has been over the past 2 months or since the April 8th ceasefire was achieved, Guy. And so the uptick that we're seeing in the aggression is definitely a sign of concern. The ceasefire has been fragile since the very start of it coming to the table. But over the past week or so, especially with Israel hitting Iran and its incursion in Lebanon as well, we're again questioning just whether the broader talks will lead to a more permanent ceasefire and an extension of the one that is existing and an opening of the Strait of Hormuz.
Yeah, and asking questions about whether those talks are currently still taking place then, Abir. And with that said, what is the status of the Strait of Hormuz right now? Effectively closed has been the phrasing we've been using for a long time, but we do see trickles of vessels perhaps leaving via the strait with their transponders off. What do we know?
Yeah, absolutely. Look, I mean, also this morning, Iran said that it was completely closed after the hostilities overnight. CENTCOM from the U.S. side said, no, that is not the case and that some ships are going through. So what we know is that some ships and tankers from Gulf countries, including the United Arab Emirates, including Qatar, have been slipping through with their LNG and crude shipments through the Strait of Hormuz. Our own reporting from our energy teams suggests that ships are not only blocking their transmitters, but actually going fully dark, shutting down their lights to go at nighttime in order to get those ships much needed tankers and much needed shipments through the Strait of Hormuz. But the case remains that the shipments through the waterway are a trickle of what they were pre-wartime. So again, something to keep in mind. And it is the main concession that both sides want to get through the line. The opening of the Strait of Hormuz is the key concession that both Iran and the United States want to achieve, but it still remains to be seen, Anna.
Abir, thank you very much. Bloomberg's Abir Abu Omar joining us there from Dubai. Now, the European Central Bank is widely expected to raise interest rates today for the first time since 2023, partly, of course, or very much because of what's happening in the Middle East and the impact that's having on pricing. This as policymakers globally grapple with inflation resurgence driven by the Iran war and higher energy prices. That decision comes at a pivotal moment for the wider European landscape as leaders weigh fundamental changes to preserve Europe's wealth and its influence. Bloomberg's Stephen Carroll joins us now from Brussels. He's been taking a weeks-long deep dive into the prospects for Europe right now and the appetite for change. So is there optimism that change in policy can deliver for Europe, Stephen, or are we sceptical and have heard these lines before?
We're always sceptical, Anna, but there are signs of change, which is why this reporting is bringing us, I suppose, an indication of the momentum that may now be behind some of those much needed changes. And really the risk for Europe is also a key factor in this too. The new Bloomberg economics analysis produced alongside our reporting shows that without change, if Europe continues on its current path, its output gap with the United States could double by 2040 to 7 trillion euros between the EU's output and the United States. The EU's already fallen behind both the US and China, and that gap for the moment is diverging. There is a plan to address this. It's the Draghi report, nearly 2 years old at this stage. And the question we've been looking at is what changes or what signs of change are there that perhaps some of those reforms might finally be adopted. And they are there. We've got the 6 largest European economies agreeing to move forward on the long-delayed Capital Markets Union. That is a key sign of momentum, that we will actually see some movement there. The EU's already cooperating more deeply on defence. We've got the Safe Loan programme that's rolling out in efforts to streamline access to European funds for individual countries that want to carry out joint or separate investments into defence. And then there's a question around competition rules. The EU said that it's revising its merger rules, and we're already seeing an uptick in some of the big merger announcements. Look at what's been happening in the announcements in the French telecom sector, the future of SFR there, perhaps a deal that wouldn't necessarily have been announced without an indication that things are changing from a Brussels point of view, and also what's been happening with Italian banks as well. Even the long-running UniCredit takeover bid for Commerzbank as well, which we know the German government is opposed to. The question is that does it look like that takeover could go ahead even if the German government is opposed to it? And that is the sort of change that we're starting to see in this momentum towards perhaps achieving some of the goals the Mario Draghi report set out.
We have momentum, but we've got hurdles ahead, and there are many more still to cross. What are the big ones we're watching out for next, Stephen?
Joint debt is going to be one of them. This issue, which we know is very politically divisive, was something that was considered completely off the table until it was agreed during the pandemic. That discussion is returning in the debate in the coming months over the EU's next 7-year budget that will start from 2028. We're entering into the key negotiation period between now and the end of the year. Can the EU agree to find the money that's needed? Because Mario Draghi says it's 1.2 trillion euros a year that would be needed to boost Europe's growth rate and bring it back towards the path that the United States is on. There's no sign of white smoke on that particular issue yet, but it is a very present debate, and the choices that are going to have to be made by leaders in those budget debates are going to be very difficult. So that's one to keep an eye on too. There's the messy politics involved here as well. You've got a French election happening next year. If there's going to be initiatives from those big European economies, usually the engine of change within the EU, that may have to happen in the window before those elections if there's a change of leadership in France. So there's a timeline issue around this as well. And then there's the question of AI. You know, when Bloomberg Economics looked at this modelling, they weren't able to count what the effect of AI could be because it's simply too uncertain. This could be a point of divergence or convergence between the EU and the US, depending on how the European Union chooses to integrate it, how businesses in Europe choose to integrate it as well. The productivity gains, we're told, are possible, but of course it will take some time to find out exactly what those effects will look like.
Stephen, thank you very much. Bloomberg's Stephen Carroll joining us there from Brussels with that deep dive into what Europe is and is not doing to try and shore up its future and its influence. And thinking about the hurdles ahead, as Stephen was just giving us a run through there, joint debt was one of them he mentioned. Well, we were looking at pictures of Friedrich Merz, the German Chancellor, speaking in Berlin. He's talking about the US and saying that the EU expects stability and reliability on trade. I mean, this just underscores the need for Europe to come together to try and shore up its position because of the unreliable international backdrop when you think about US relations in particular.
Yes, they've been quite volatile and are likely to continue to be quite volatile. All of this, though, against the backdrop of an ECB that's about to hike rates today and potentially could signal that further rate hikes are still coming. So is that a good thing? Can Europe stabilise its inflation, or is it just going to damage growth and make it more imperative that all of this structural reform actually comes to pass?
Yeah, that inflation growth trade-off certainly front and centre, and something we'll be looking to get commentary on from Christine Lagarde later on today.
We will be watching the press conference. I'm sure all of us will, apart from Mark Cudmore. Coming up, the energy price spike is fueling fears about hospitality. We'll talk about that next. We're going to be joined by the CEO of Radisson. This is Bloomberg.
anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
This is the opening trade Thursday morning, 30 minutes into today's session. And actually things are more positive than we perhaps had anticipated. The futures picture was looking a little negative. We thought we were going to have to catch down with the United States yesterday. That tech sell-off continued into their afternoon. But something through the Asia session turned a bit more positive. And NASDAQ futures, crucially, S&P futures also, but in particular NASDAQ futures turning much more positive. And so maybe that's had something of a lifting effect across Europe. Certainly we saw some of the technology names moving higher earlier on. Actually, some of the luxury names over in the Paris market, I noticed, have been doing pretty well. So we're up by around 0.6% on some of these markets, 0.5% then, Guy, overall. What do you see?
Let's talk about the internals. So actually, if you look at the internals, it's a much more balanced picture that is emerging. 318 stocks up, 273 down. So there is a slight bias on the upside, but I wouldn't say it's exactly enormous. Volume's kind of okay-ish. Let's talk about where we are seeing some of the upside. We've talked about Hugo Boss this morning. Frasers Group looking at that business, maybe looking to buy the remainder of it that it doesn't already own. Remember, it's already got 26%. Hugo Boss is up by 6.2% on that. Wizz Air, Joseph Ferrari, the CEO of Wizz, was here a little bit earlier on. This was a business that was expected at the full-year level to post a loss. It didn't. It posted a profit. And he told us, actually, without the impact of higher fuel prices, the war, it would have been significantly higher. But there is that. And as a result of which you don't get guidance for the winter, which is interesting. But actually, the numbers this morning are enough to lift the stock. We're up by 2.5% on that business this morning. BE Semi's up quite strongly. Tech is definitely leading the narrative. Hardware tech is definitely leading the narrative. I'll tell you what software is doing in just a moment. The hardware tech is definitely up. BE Semi's up by nearly 4% this morning. Let's talk about where we are seeing some negativity. How is basically, think about this as a kind of safety conglomerate. It does all kinds of different things around fire safety and issues around safety more broadly, but it's kind of a conglomerate structure. It's got lots of kind of portfolio companies. It is down 10% on the back of its numbers this morning. But I mentioned the fact that we are getting this divergence between hardware and software. Look at what is happening with SAP this morning, down by nearly 4%. Capgemini down by nearly 4%. So you're getting quite a different picture emerging from the hardware and the software sector, Anna.
Let's get up to date on some of the other news flow that we're covering this morning then, Guy. The US Treasury refunded nearly $22 billion in tariff revenue that was collected from imports in the month of May. It's the first batch of such repayments since the Supreme Court struck down a major component of President Trump's trade policy. The amount was roughly equal to tariffs taken in during that month. That's according to the Treasury Department statement. Frasers Group, as Guy was just saying, has offered to buy the rest of Hugo Boss for about €2 billion. Frasers, which is owned by the British billionaire Mike Ashley, already controls a roughly 20% against, quote, multiple targets in Iran for the second straight day after President Donald Trump accused the country of dragging out talks on an interim peace deal. The attacks followed strikes on Tuesday in retaliation for the downing of a US Apache helicopter. Guy.
Let's get back to some of the corporate news that we've been watching this morning. Wizz Air says the Iran conflict shaved close to 50 million euros from its fiscal full-year profit. The carrier did not provide an outlook for the rest of the year. This, as alongside so many airlines at the moment, it grapples with higher fuel costs and continued economic uncertainty. The Strait of Hormuz is obviously the big factor here. Fuel prices a massive input into the airline story.
Fuel is more expensive than what it used to be, but it has not been put across into fares. You come to winter when the cash flow cycle changes in the industry, you're going to be starting changes. You will see capacity going out, you will see prices going up as a result of that, especially by the weaker airlines that are not protected by hedges, that they don't have enough liquidity on hand to continue to compete and continue to fight. They will have to rationalize what they are doing.
Joseph Varadi speaking to us a little bit earlier. Let's talk to Benedict Camel, Bloomberg's managing editor for space and aviation. Benny, good morning. The Iran war certainly having a visible impact on Wizz. It is obviously doing better than maybe we thought it kind of would have done at this point, but nevertheless, huge challenge coming in terms of the winter.
Yes, I mean, right now we're in the summer period where things are looking good for everyone, really, depending, no matter whether you're in good shape or not, because people are flying at the moment. But as Varadi said in his interview with you, he's a little bit more, should we say, dubious about the back end of the year. At the same time, I thought he sounded fairly sort of upbeat and said we can actually be net beneficiaries of this. We can absorb some of the capacity that will be given up by others. We are in a growth trajectory, and they have the fleet, they have the fuel-efficient aircraft that will help them. So overall, a fairly sort of, as I thought, upbeat sort of CEO. And you see it in the stock. It's up a fair bit this morning, partly also because, as Anna said, we had expected the company to report a loss for the quarter. They scraped through for the year. They scraped through with just barely a profit, but nevertheless a profit. So all in all, for a company that has been considered as one of the great losers of the crisis, not a bad set of numbers.
Yes, and he sounded, as you say, pretty defiant, talked about this as almost a growth opportunity. But more broadly, looking at the sector, looking at the European sector, how much pressure are higher fuel prices then putting on European carriers as they try to do what they can, like fuel hedging?
I mean, it's still something that's very considerable, and we heard just a couple of days ago in Rio at the IATA annual general meeting that fuel will take a massive bite out of the industry's profitability globally, but also over here in Europe. Europe is maybe a little bit different because the airlines here are more hedged. You can see it there in the graphic. And Varadi said this morning that into next year, they are also solidly hedged. So there is a bit of an advantage on that side. Another advantage for a lot of European carriers is that people are sort of reorienting towards shorter trips, staying at home, staying closer here. Varadi said in his interview that Spain is a big market for them. So in some ways, if you're looking at Europe, if that's your market, if you're running fuel efficient aircraft, and if you're hedged, then you're actually not in a bad place. And that's sort of the pitch that Varadi is giving to the market.
For now. We'll see what happens as we work our way through the winter. Benny, thanks very much indeed. An update from Berlin. So summer's kind of almost underway. We've been hearing from the airline sector. The summer looks okay. Big focus on kind of areas like Spain, but we're going to work our way through the summer and then into winter. So what is the overlap between what we are seeing in terms of what we're getting out of the airline sector and the message we're getting there and what we're getting out of the hospitality sector more broadly? Let's try and answer that question right now. We have the perfect person to do that. Federico Gonzalez, Radisson Hotel Group CEO, joining us around the table.
Good morning. Good morning. How are you?
So I'm very well. Nice to see you. So the Wizz Air CEO was sitting there kind of an hour ago, and he was painting a picture of actually a fairly solid summer. Markets like Spain doing very well.
Yes.
Is that a similar picture to what you're seeing?
Yes, I think when you look to the summer, actually it looks as, I would say, a healthy summer, okay, in terms of trends, but with significant differences by region, okay, and by market. If you look first continent-wise, the US and Americas is soft, 1-2% growth. If you look to Asia, there are good trends. China is growing 3-4%. That was ahead of what used to grow in the last 2 years. Indonesia, for example, is doing extremely well, around 6-7% growth. India keeps doing phenomenally well, so growing 4-5%, not only from overseas, but actually the internal demand is growing, not only in the key cities, but also in secondary towns. And when you look to Europe, you see very different trends. Okay, Italy has been doing very well, will keep doing very well, but driven more by events like the Winter Olympics and Milan in particular with Rome. Spain is doing phenomenally well, and what we consider a structural growth is not a given concrete event, but actually the last winter was very strong, summer is doing well, and it's doing well both in urban destinations like Madrid or Barcelona, but also Malaga, the summer destinations. So I think Spain is possibly the one that is benefiting the most. France, for example, is growing around 3-4%, but it's driven by demand in Paris and the upper upscale segment. Meanwhile, mid-scale and economy is not doing well. And then you have more country-related trends, like, for example, Netherlands, that has been one of the growth countries in the past, is not doing very well because of a VAT increase that has been significant, and there has been a significant impact in demand. So very, very different by countries. Quite mixed, yes.
So, okay, that's the picture for the summer. Airline CEOs have been telling me they don't know what happens this winter.
Yes.
They're expected to pull capacity out of the market globally, is the message I got at IATA. If airlines are pulling capacity out of the market, does that trickle down to what you see?
It does, but it does more, I would say, in the overseas. And in the trips between Middle East and Asia, between India and the UK. But I think when you look to domestic demand, there is less impact on those kind of shifts or trade-offs between of the different airlines and airlines capacity. But I think, as you say, we are now used to, in hospitality, the same with airlines. You know, you need to be extremely prudent, and you need to manage. You need to get benefit of what you know is going to happen, that is the summer. And on the winter, you need to get ready to, be living and coping with any potential scenario. I think everything is going to depend on if the Iran situation gets solved during the coming months. Okay, we were planning first March, then we said possibly it's not before June. Now we are in June, so we are hoping that maybe it's by September. And I think the winter period, October to December, will have a significant potential impact if the event continues.
Yeah, Federico, good morning. You don't own your brand of hotel in the US anymore. You sold that business a few years ago. But does the World Cup act as a sort of distraction from your business? Does it take demand away? Do Americans stay at home a little bit? Do Europeans go there a little bit? But they're pretty high spending Europeans, I imagine.
Right.
So do you see any negatives around the World Cup?
Not really. I think when you look even to the impact of the World Cup or even the Olympics, okay, in every market, it is a very concrete segment of the population that would travel for that occasion. And I think it's good that it's not the majority of the population. I think when you look to the demand drivers in most of the locations, I would say 90% of the business in our case is domestic. So obviously you have a 5 to 10% that is ready to travel overseas to the US if there is a World Cup. But this, I think, has a little impact.
Yeah. We talked a bit about how patterns of travel have shifted because of the Middle East and the war that has been taking place there. I wonder more structurally with climate effects, whether we're also seeing a sort of elongation of the European summer from a travel perspective. Slightly ironically perhaps, but are Europeans maybe travelling more in the pre-summer and the early autumn instead of in the height of summer? Is it spreading out demand a little bit? What kind of patterns do you see there?
I think we haven't seen kind of a change. There is no longer one pattern. Okay, where I mean there was a given moment where everybody would have holidays in July or in August. Okay, I think it's true what you say that there has been a change where consumers are adapting themselves. Not only because of the different pricing levels that you may have, but actually also because of their home, their own personal situation. Okay, as population has grown up, okay, or there is more elderly population, they have more free time, so they are ready to have more flexibility versus the working population that actually had to go when they would have holidays. So I think it's more driven by the demographics and the personal situation than by one or other impacts.
I'm really looking forward to not having to pay to go during school holidays, I have to say. How are you managing costs? The ECB is going to be meeting today. It's going to raise rates. Inflation is a factor that is kind of ripping through pretty much every industry. How's it affecting you? How are you dealing with the higher energy costs?
Yes.
A lot of industries are trying to take the energy cost out by becoming more renewable. What are you doing on costs, and what are you seeing in terms of inflation?
Yes, I think you have different impacts. Okay, but that obviously for us is very important. Number one is the labor cost. Okay, I mean in hospitality, labor is one critical component that has nothing to do with the current situation, but actually as immigration or has been more complicated, source availability of resources has been more difficult in many of the countries where we operate. So I think we are trying to become more efficient, and then obviously it's energy. Okay, energy is around, depending on the hotels, but it's between 7 to 10% of the total cost structure. Yeah. We are, I would say, in most of the countries where we operate, we are still protected by the hedges we had or the deals we had for 12, 18, 24 months. Now, obviously, the situation may change for 27 and 28. Okay, so we need to plan. But I think at the same time, we and I think many of the actors in the industry, we are trying to make efforts to be more efficient at the same time that we still deliver our commitments to reduce our carbon footprint. Okay, because it's not only energy and the cost, but actually how do we make all these changes while being respectful to the commitments we have with the environment and with our goals. In that sense, for example, we introduced what we call carbon zero, neutral carbon hotels. We launched one in Manchester, another one in Oslo, where we are trying to invest. So it requires an investment, but actually it has an impact in the carbon footprint of the hotel and in the going cost, moving to electricity, to sustainable energy, and that helps. Okay, the cost structure.
And that helps. These are the self-help measures. Federico, thank you very much. Thanks for joining us. Federico Gonzalez, the Radisson Hotel Group CEO. Coming up on the programme, we were just hearing about AI and the difference it makes. We will be returning to Founders Forum, that tech gathering. Tom McKenzie is there. He'll have more on the state of the tech investment landscape. That's next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back. This is the opening trade. Let's talk about technology some more. It's a big week for it this year. We're set to see no fewer than 3 blockbuster IPOs, with SpaceX launching tomorrow, the Anthropic and OpenAI IPOs. They are racing to be next, of course. That's all happening stateside. So what about Europe? Let's get back to Tom McKenzie. He's at Founders Forum, and he's been trying to find out, Tom.
Anna, thank you very much indeed. Yeah, very pleased to say I'm joined now by Agatha Freymana, who is general partner at VC Norsken, which is based in Stockholm. Portfolio of about 60 different companies, largely across Europe. Look, there's a big focus on SpaceX and that IPO. Is SpaceX and that entry into the public markets just a reminder of US dominance, not just in space, in AI, but also in scale and capital?
It is. It's definitely US is leading the way and showing us in what's possible, but I don't think this is US versus the rest of the world. For me, we're all watching it very, very closely to see what happens, because it's a complete paradigm. It's a start of a paradigm shift. When I started in venture, the dream come true scenario was a $1 billion outcome. Then it sort of evolved into a $10 billion outcome. And now SpaceX is showing is that actually, no, we should be aiming for $1 trillion outcomes as early stage investors.
Is that a healthy paradigm? And does Europe really have an opportunity to kind of match that level at some point?
It certainly gives us the sense of urgency, and it puts a chip on our shoulders as Europeans to aim higher and strive for bigger outcomes.
You're very much focused on the renewables space, electrification. It's fallen out of favor in recent years. Has the momentum shifted around renewables, and has the focus on AI pulled liquidity there and away from what you're focused on?
I completely disagree with that. I think there has been a complete mismatch between the top-line narrative that came with the election of Trump, where it's anti-climate, anti-renewables. But when we look at what's actually happened, this has been the best years ever for renewable energy. And it just clearly shows that to win the AI race, we also need to win the energy race. Whoever wins the energy race will win the AI race.
Has the Iran war been a catalyst?
It has been one of the many catalysts. I mean, the crazy thing that what we have experienced in the last couple of years, that us Europeans have been through 3 energy crises in 4 years. And we're paying a huge price tag for that. If you just take the Iran conflict alone, in the first 30 days, we as Europeans had to pay $14 billion in extra fuel subsidies and imports.
Yeah.
So we as Europeans, we run our economy on energy that we don't own, fuel that we don't own, through waters that we don't control. So we need to make bold statements. And actually, one of the recent news from our side is that we've launched quite a bold campaign called Electro Union, together with 100 other organizations, where we're putting pressure on European Union to make bolder targets. We want to see Europe electrify up to 50% by 2040.
Our former Prime Minister here in the UK, Tony Blair, says we should be drilling and tapping the oil reserves in the North Sea to power data centres to underpin AI. Is that the right solution?
again, it's just completely the wrong misconception, because today, clear as a fact is that renewable energy is the cheapest source of energy. The price of it has dropped by 90% over the last decade. There is no cheaper source of energy than renewable energy.
But are there real returns for investors? Are your LPs, are your investors seeing returns on these investments in renewables?
Absolutely, and if we just look back at the last couple of months, we have some of the best IPOs that clean tech and climate space has seen. Fervo Energy, Solve Energy, X Energy, and also Einride, one of our portfolio companies, IPOing yesterday. So the momentum is there and the investor demand is there, and investors can see that if we take on hard problems and apply those to big challenges, we can see that that builds big, sustainable, defensible business opportunities.
Where within the energy stack are you finding the greatest opportunities right now then?
We're playing across the entire energy stack. More than half of the investments that we have done have been across the energy stack, from energy production to grid balancing to energy storage. There is so much to be done because the whole energy infrastructure is outdated and we're up against the clock.
What do you think the demand around data center, compute use, energy, what is the correct solution around that in terms of powering that, and who are the players who can benefit from that? To what extent is Europe going to have a role in terms of our startup ecosystem empowering and providing the energy for those data centers?
Yeah, and coming back to, again, like why we need to rush towards renewable energy, because from pure cost economic basis, it is the cheaper source of energy. That's also we as Europe need to hurry up to accelerate the movement to renewable energy. So again, like sometimes the misconception is that AI has killed the climate goals because, again, the energy demand at the moment is infinite. But I would argue that it's actually accelerating our progress towards renewable energy.
Okay, so AI can be that catalyst around renewables. Agata, thank you very much indeed for your perspective. Agata Freimana, who is General Partner at Norskun VC. Anna, back to you.
Tom, thank you very much. Tom McKenzie, of course, at Founders Forum, braving the weather. See umbrellas in the background. It's got that feel to it today.
It's got a jumper on, sweater on.
Sensible.
Looking a little bit chilly. OK, let's turn our attention to what the rest of the day is going to look like away from the weather. And maybe the weather starts to change today from a monetary point of view here in Europe. Let's figure out exactly how this is going to work. Bloomberg M&I strategist Scarlett Montgomery-Koenig joining us around the table. Good morning. Mark thinks that Mark Cudmore, I'm talking about here, Mr. Cudmore, thinks that maybe the ECB is going to be a non-event today. Is that because everybody just expects a hike, and as a result, the bar kind of is quite high to shock?
I'd say two things. The first is generally when you look at European asset markets, they're pretty driven by what's happening in the US and elsewhere. There's not a lot of like home impetus behind them, particularly when you think about FX. And then I think it's right on, there's a pretty high hawkish bar right now. They expected to hike. There's 70 basis points priced in for the hiking cycle. That seems very high, but there's also no reason for them to say, well, we're not going to do that. So there's no backpedaling. We'll get the hike, and maybe we'll get some guidance in the forecast in terms of how much weight is put on growth versus inflation. More weight put on inflation is more hawkish. But again, you know, you have a 2-year yield trading at 270. That's in line with your expectations for monetary policy on the hawkish end of the scale.
We should get more details about just how exactly SpaceX is coming to market over the next 24 hours. And then, of course, it comes to market tomorrow. Skylar, is this going to be more of a tailwind or a headwind for the sector? Tailwind because it focuses us on AI and the potential, perhaps, but headwind because of portfolio effects. What are you watching right now?
I think right now the concern is kind of churn under the hood of the market in terms of you have so much issuance coming from IPOs. It could be a record year if you get Anthropic as well as OpenAI. And so you need to sell something to fund that. But what I would also say is that in the near term, IPOs tend to be quite beneficial for tech in particular and for the stock that's IPOing. So first day returns for stocks that IPO over the past 40 years is 19%. And in the dot-com years, which, you know, a bit of a scary example, but you had like 70% on average. So I think certainly, you know, those kinds of IPOs are designed to do well. You have things like lockups and et cetera.
Okay, it's all in that detail. Thank you very much, Bloomberg Market Science strategist Scarlett Montgomery-Koenig. Of course, that is it for the opening trade today. We'll be back.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The U.S. completes strikes against Iran for the second straight day. The fragile ceasefire all but collapses. The SpaceX IPO is said to be more than 4 times oversubscribed, ahead of what's said to be the biggest IPO in history. Plus, the ECB is set to raise rates for the first time in almost 3 years as the Iran war pushes inflation out of the comfort zone. So there is a lot going on in the markets. If you look at what they're worried about, look, stocks are recovering somewhat after the U.S. ended these strikes on Iran. Against there's still expectations that talks could reopen the Strait of Hormuz, and that will mean that the two sides are back on track. And then it's all about SpaceX. Of course, this is a play on tech, on space, on AI at the margins. SpaceX's IPO is attracting demand more than 4 times the available shares. That's according to people familiar with the matter, but we need to see exactly what that means if you put it into context of other IPOs. Let's also take a look. So Brent crude, for example, 92.69, euro dollar 115.44. Let's also take a look at the European markets map, and you can see we're seeing a little bit of green. Again, nothing huge. The DAX is actually flatlining, and the FTSE is gaining some 0.5%. Oracle slumping in pre-market trading after the tech company reported quarterly capital expenses higher than estimated. Pre-market 10% lower for Oracle. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the U.S. military has carried out strikes against Iran for a second straight day. That's after President Trump accused Tehran of dragging out peace negotiations. Well, let's get straight to Abir Abu Omar. Abir, so is it fair to say that the ceasefire has now collapsed?
Good morning, Francine. It's all but collapsed now. This is the second day of hostilities between the United States and Iran. We saw these attacks happening yesterday. President Trump saying yesterday that he will attack Iran for a second straight day because they've essentially been dragging their feet to reach this MOU that we've been talking about over the past couple of months. So the ceasefire itself has been fragile since it was reached on April 8th, but this uptick in aggression in the region leads us to think that the fragility continues. Now, both sides, including the United States, maintain that truce negotiations are underway, with Qatar emerging as a key mediator alongside with Pakistan. So we'll have to wait and see, but effectively, as of things stand right now, the Strait of Hormuz remains shut. Iran saying this morning it was completely shut. The U.S. rebutting, saying no, as a matter of fact, there is a trickle of shipments there, and the concessions remain as they were a month or two ago, Francine. But hostilities in the region are a sign that dangerous escalations are emerging.
Abir, thanks so much. Abir Abu Omar there in Dubai for us. Now to the other big story that we're following today, and SpaceX's record-breaking IPO debut is said to have attracted demand of more than 4 times the available shares. Now the Elon Musk-led rocket, satellite and AI firm is set to price later today and will begin trading tomorrow. Well, I'm joined by Matt Bloxham, Bloomberg intelligence analyst. Matt, we've been talking about this for the last couple of weeks. I mean, there's just a lot of buzz around it, but how's demand really doing?
Yeah, I mean, I think if it's 4 or 5 times oversubscribed, I would classify that as good and kind of what you'd expect. I mean, I worked on more IPOs than I can remember back in my days on the sell side, and that would be about where you'd expect it to be. I think if it's, if you would classify it as a hot deal, probably at least 10 times, if not more. So, I'd say that it's kind of on the lower end of what you'd be looking for, but it is a massive deal, so you have to take that into context when you're looking at things. And I imagine there's probably quite a difference between retail oversubscription and institutional. I imagine probably the retail is massively more oversubscribed than the institutional one. So, we heard earlier in the week that there's maybe some bids in there of $10 billion or more, and I wonder whether some people will be sweating they maybe get a little bit more than they wanted in the allocation that will come later today.
Matt, I mean, the other big story is Oracle, because it's getting slammed pre-market. What exactly is going on? Yeah,
so 2 things going on here. One, revenue's growing great, but not really any faster than the market expected. If you look at the kind of forward guide for their fiscal 2027, talking about $90 billion of revenue, the market's at 88, 89, so, pretty much in line. And at the same time, you've got investment going up. So they spent $56 billion in the year just finished rather than 50, and they're now talking about 70 plus for the forward year. Now, the market was probably not far off 70, but I think that the direction of travel is they're spending more rather than less. And so I think people are kind of a little bit worried that, okay, the shares have gone up a lot. To keep that momentum, we need to see a better revenue picture on the back of this investment. No. That's not happening just yet.
There's just a lot of news out there in the tech world. I know we had this great interview with Dario Amodei. I mean, what's your main standout from actually what we're living through in the tech? Is it the kill switch from the government that we need to look out for, or is it just these new language models and the IPOs?
I think it's the IPOs, it's the enterprise momentum, it's that kind of pivot from enterprises still to a degree playing around with AI and really kind of going full in on it. And I think over the next 12 months, that's going to be the kind of real sense check on whether all of this investment going into AI infrastructure is going to ultimately lead to a stronger return.
Matt, as always, thank you so much for joining us. Matthew Bloxham there from Bloomberg Intelligence. Now, Bosch is stepping up its push into humanoid robots. It's betting that machines built to work alongside people can actually drive revenue. Now, the German company is one of the largest suppliers also of automotive parts. And with the car industry under strain, robotics really offer a new potential growth opportunity. So I'm delighted now to be joined exclusively by the chief executive of Bosch, Stefan Hartung. Mr. Hartung, thank you so much for joining us today. Now, you're investing in robotics, you're investing in AI and automation. What kind of company do you want Bosch to become in 10 years from now?
No, in 10 years, definitely, we will be a very innovative company as today, very much focused on AI, application of AI, because in the end, AI has to become physical. We have now AI, which is greatly talking to us, writing code for us, but the next wave will be that it has products for us, which are working for us nicely in our lives, that may be in our homes, that may be in our factories, that may be in our vehicles, and Bosch is the company that has to bring the AI to people.
But Bosch is still mainly an auto supplier. So, what will the transition into, I guess, a broader technology group really look like concretely?
Now, we are already now in 4 sectors. So we are in the home appliance business. So that's clear that obviously robots at some point in time will also play a role in the households. which obviously is a very steep step forward, right? You need to bring a lot of quality, a lot of functionality before a robot can really function in a house. But it's definitely a vision which should be in our minds. Same time, we're in the industrial sector. That's there we build automation equipment and also use that equipment for ourselves. That for sure also will have be impacted by humanoids or other types of industrial robots. The robots of today are more like controlled machines, right? The robots of the future will behave way more like human beings because they are controlled by complete AI modules. That's a different kind of programming than robots have today, and I think that will change also manufacturing by a big scale.
What are you seeing exactly in robotics? So if robotics is this new big push for Bosch, is it, you know, the software, the motors for the robots, is it basically their brains, or what do you see yourself building in 4 or 5 years?
Yeah, the fascinating thing right now is that the biggest business case for humanoid robots seems to be dancing shows right now. But that's going to change very quickly over the next years. Right now, it's a startup industry. And for Bosch, it's very important now to be there, work with the startups, look for the opportunities, because we can supply software elements like artificial intelligence. We can supply drive systems. We can supply tactile sensors. We're a micro sensor company. We do most of the sensors we produce for mobile phones and mobile devices. But definitely, if you think about humanoid robots, if they want to be a bit like humans, they need to have sensors like humans. And we have a lot of sensors, right? A human being is full of sensors. And the humanoid robots of the future will also hopefully be full of Bosch MEMS sensors.
Yeah, and you think this is a meaningful business?
Absolutely. Microsensors are a semiconductor business. If you think about how many sensors a robot will finally employ, if you want to have a humanoid robot which has the embodiment like a human being, so it's fully integrated and knows, like we actually move, we move with our body and learn with our body, a humanoid robot will have a similar capability, by far not the same, but similar. That means lots of sensors will be necessary in such a system. And the MEMS sensor business for us is a strategic business. We run it now for many years. We're market leader. And I think in a robot you will have way more sensors than you have on a mobile phone.
China has made robotics a strategic industry. Do you worry about oversupply, a little bit like what happened to EVs because of China's big push in the space?
Yeah, right now I would say China is really in a great push on the startup ecosphere in China. There's a lot of activity, a lot of money is flowing into it, but similar, a lot of money is flowing into this industry in the US and also in Europe. The question will be, where is the quickest application area happening, right? And I see a lot of activity also in China that we bring robot systems of humanoid style into factories. But the supply is by far not yet any issue. We are not in the situation like we're in the automotive industry that maybe there's a capacity imbalance. No, in the robots and the humanoid robots, that's more a startup, that's an investigating industry. There has to be a visionary future for it, and we have to all evaluate what's the best opportunity for us to go forward and bring these machines into application for humans, invented for life.
I mean, yeah, China for the moment, I mean, China's car market is definitely in a very brutal price war. What does that mean for Bosch?
Well, obviously, the intensity of the economy in China is unbelievable, because there's a lot of supply. There's a fantastic near consumer work. So there's a hefty, intense fighting between the different OEMs, but also between the component suppliers. That makes companies quite competitive on the one hand. On the other hand, that makes companies quite desperate to make some money. And a lot of that push is reasoning for, obviously, also the export activity. But that's a natural move. We have to see that in the recent years before, European companies had a lot of exports towards China. So obviously also now you will see much more Chinese companies having exports into the rest of the world. So that move will happen. What we have to watch out, obviously, all of us, that we have to be competitive globally on a Chinese scale. And that is very important also for Bosch.
Can you give me a sense of how the Iran conflict is actually having an impact on your supply chain, on your business, I guess on inflationary pressures?
Well, it's now already for quite some months going on. So the risk is obviously increasing. We have less oil and less gas in the market. But that's not only the problem with the conflict. The conflict has also impacts on helium and other supply chain elements like sulfur. So these effects will only be visible, I think, in some months. But they are unavoidable if the conflict goes on and the logistics are not catching up. So it's quite important for us to monitor what the results of the negotiations are if the supply chains are reopening, and then we will see the impact on supply chains. So far, supply chains have not been dramatically affected, but you see already impacts on pricing on many goods. And obviously the first eye we have on supply chains coming from Thailand, Malaysia, Vietnam and the ASEAN states, because those are much more prominent depending on shipments of energy from the Middle East. So we have to monitor that tightly. So far, no dramatic impact, but we are cautious.
Okay, you need to come back also in the studio with me to talk about AI, because I need to ask about the World Cup, Mr. Hartung. I don't know if you're a fan, but who's your team? Who do you think will win? Who's your team, and who do you think will lift the trophy in the end?
Yeah, that's a great thing on soccer. There's always an opportunity. You never know. The Germans will have a great chance, but you know what? There's lots of people in the game, and we'll all watch it. I think it will be a great tournament, and I hope that many people enjoy it, because there is always opportunity in every single ball that's played.
Yeah, and it does give us a little bit of joy. There you go. We've just hit football fever with the World Cup. But thank you so much for a great interview. That was the Bosch Chief Executive, Stefan Hartung. Now, coming up, markets are ready for what looks set to be a hike from the ECB, the first since 2023. We'll have your preview next, and this is Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Well, the European Central Bank is widely expected to raise interest rates today as the impact of the Iran war ripples through the economy. Core inflation rose unexpectedly last month. PMI data has signaled a significant slowdown in activity. Well, Oliver Krokor, Chief Europe Correspondent, is at the ECB in Frankfurt today. Lucky you, Ollie, because there's going to be action. We're looking to see a hike. So could this just be the beginning of a tightening cycle?
Yeah, Francine, right? It's been a while since we've been talking about hiking rates or even lowering rates here at the ECB, but it's been almost 3 years since we had an interest rate hike from the ECB back in September of 2023, and that's exactly what we're anticipating here today, 25 basis point hike. It's been widely telegraphed to the markets by many of the ECB speakers and governing council members in the lead up to this decision. The market has priced it basically to a total certainty. There is certainly consensus that this is going to happen. There is some question, though, as to whether or not it should happen. There is some debate among economists economists and some of the people that we've been speaking to, for example, Jeff Yu of BNY speaking a little bit earlier this week, saying that basically if you do raise interest rates this week, you're going to actually have to be cutting by the fourth quarter of this year. I spoke to Carson Bresky a little bit earlier from ING. He says it is reasonable for the ECB to raise interest rates, but really a one and done. This is not supposed to be, in his mind, a real tightening cycle. This is sort of an insurance hike to make sure that inflation expectations stayed anchored. But of course, as ever, Francine, the concern is not just about inflation. It is about growth going forward, that stagflationary dynamic. What the ECB has been very clear about is that they're less concerned about the stag, more concerned about the deflation side of things. And we're going to get their analysis a little bit later when we get that rate decision. But what they will also be giving are some economic forecasts very critically, both for inflation and for growth. And of course, the key question is, well, how is growth going to be doing, but also inflation? Is it just going to be segregated to the energy sector? We've sort of seen it drift into core. How concerned are they? We'll get that analysis from them a little bit later today.
Ollie, thanks so much. Oliver Crook there at the European Central Bank in Frankfurt. Now, we'll have, of course, full coverage of the ECB policy decision at 1:15 p.m. London time, followed by President Lagarde's news conference, and that's at 1:45 p.m. London time. Now, for more on all the markets, the IPOs, everything that's happening in the Middle East, and, of course, central banks, we're joined by Grace Peters, Global Investment Strategy Co-Head at JP Morgan Private Bank. Grace, there's a lot. There's been a lot, but actually this week I feel like all the confluences comes together as we were about inflation. We're not quite sure what happens with the Middle East. And then you have SpaceX tomorrow.
Indeed. So, look, I think there's a lot going on, and we're certainly getting the question from clients more. We're going to see more equity volatility over the summer. And I can see, investors layering up the wall of worry, as you say, with many of the facets that you've mentioned, from how is the market going to absorb various IPOs through the course of this year, after a hot labour market print on Friday, what are the implications for the Fed and bond yields in particular, and, of course, geopolitics and the fact that we feel like we're in a bit of a stalemate when it comes to the Iran situation. But for each of those arguments, I think there is a strong counter-argument, and I often find that the market quite likes to climb that wall of worry. So we're spending time with clients talking about, in the short term, what to do over the next 3 months. Like, how can you stay invested, but perhaps with, lower risk exposures. But I don't want people to lose sight of the longer term game, which I think that we're in an earnings super cycle, and that we are in also an infrastructure super cycle when it comes to some of these capital expenditures.
Okay, but is this a longer term? So is a shorter term worry just that interest rates need to go higher? And if you just look at the treasuries or the bond market in general, that's exactly what they're telling us.
It is. So you've got around 40 basis points of hikes priced into the treasury curve, around 70 for the ECB. And our view is that is sufficient to say we think there's some value there, particularly at the front end. That 2-year part of the treasury curve has moved up some 75 basis points since the start of the Iran conflict. And so we think that there's quite a good asymmetry of risk at the front end of the curve, particularly in investment grade credit, because, if growth does slow, then, you've captured a higher yield and potential for price appreciation. But actually, if you do get to that situation where the oil price stays higher for longer, you start to see second round impacts, then, if yields push significantly higher, you've got a cushion at the front end of the curve, and that also could protect against equity volatility that I think would ensue if you got additional rate hikes priced in. So that's one strategy that we think is really sensible to employ in terms of an entry point today. For the longer term picture, we see entry points into gold, which is down some 20% from the peak as well, and also into other themes that aren't just AI related. And to us, that's security. A key facet of the outlook to us is this notion that governments as well as corporates are really focused on issues of national security, supply chain security, energy security, and that is a very investable theme that brings good diversification to the portfolio.
Grace, what is gold exactly right now? Because we were told that it was maybe a play against like U.S. assets or American capitalism in some shape or form, but it has had quite a significant pullback.
It's had a decent pullback, and it's definitely on a pause at the moment. And I think that this really is, again, linked to the situation with Iran, where you started to see more inflation concerns come through, that steeper hiking of the Fed's path from here, which is putting gold as a non-yielding asset on pause. But the big picture, I think, are many of the facets that you mentioned, that we think that there's still big fiscal concerns out there, and I think gold is a good asset to have in that regard. And I still think that you're going to have central banks wanting to diversify away from dollar exposures, and we've continued to see many EM central banks continuing to buy in Q1, even more recently as well. And so we think that is a longer-term trend. So a pause for gold, but we have a price target that still gives double-digit upside.
Grace, I mean, there's a lot of excitement. SpaceX, starts to trade tomorrow. Again, it's 4 times oversubscribed, we understand at the moment. I guess you have to see the breakdown also if it's institutional investors or retail investors. But overall, how much does it actually change indices and risks for equity investors?
Yes, I think focusing on the risk part, this is where a lot of our clients are concerned that, is this so much liquidity that the market's going to struggle to absorb it? And certainly when you look at the headline numbers around the various IPOs, then they're big numbers. But when you start to look at that relative to market cap, the picture starts to be, sort of more manageable. And when you look at it relative to overall net equity issuance that one might expect when you also consider stock that's retired and share buybacks, actually then it feels something that's going to be pretty digestible. So we obviously need to see what happens, not just in the first few days of trading, but also around lockups. You tend to get volatility. But I think we've heard, sort of even overnight with companies that reported the strong AI demand, the healthy backlogs. And for us, AI, you must invest in a diversified way. But we have been and we remain very strong proponents of this as an investable theme.
I mean, I just spoke to the Bosch chief executive, and for me it was quite a striking interview because he talked, they have 4 parts, but really they make automotive, and he wants to be almost an AI adjacent company on robotics. I mean, does that play into your earnings super cycle theory?
Yes, it does. So the earnings super cycle theory is that if you look historically, S&P earnings growth has been around 8% per annum. And when we look forward, we've delivered already for a couple of years, and we think it's sustainable to have double-digit earnings growth. And so what's changed? And what's changed is a CapEx super cycle that we're seeing. Now, part of that is the AI build-out.
Isn't it all AI?
No, I don't think it is all AI, actually, Francine, because when you look even just at the first quarter, we take the most recent data point, CapEx for the S&P, excluding, the AI-related names, was still up 12%. So to me, this feeds back into that other theme, security, which is investing in supply chains and other forms of, we've obviously got physical defense as well as cyber in there when we think about the security theme. So there's other sources of CapEx growth, and I think that is what the market's going to reward, not just in public markets, but also in private markets too. Power being a big one, whether that be renewable or more traditional parts of power. So the earnings super cycle and the infrastructure super cycle are linked to that CapEx theme, which goes back in part to AI, but also to global fragmentation and security issues.
What are your main concerns about AI? I mean, they still need to make money on the back of all of this spending.
Yes, and I think that whilst we're getting pretty reassuring data that's coming through to say that the demand is there, the backlogs are there, the market is still today, and I think still for a long period of time, going to have this question about but at what cost. And so really seeing companies come through and demonstrate revenue growth, not just the margin piece. We've seen the margin piece for a while. Companies that are AI adopters over the last 18 months, we've seen a steady increase in margin. But I think what the market really wants to see is the sales opportunity. So as an example, we're monitoring very closely sales per employee, and we can actually, again, in the more recent, we start to see that improve as a sign that you can actually use AI to grow the top line as well as improving operating leverage.
Is there a danger? And we had a story last week actually of a company saying AI is so expensive at the moment, they're paring it back. I mean, I don't know if it's a danger of the timeline or if it actually coming out of reach.
I think the bigger danger for many corporates is the FOMO, is the fear of missing out, that actually saying we have to invest. And this is why we need to watch for second round impacts of inflation, which we're not seeing at the moment. The inflation print, whilst hot last week, was headline, not core. So we're watching core goods inflation to look for some of those second round impacts, obviously watching margins at the bottom up level as well. But I still think that, we've got a long way to go on enterprise adoption as well as consumer adoption of AI. So still in the earlier innings.
Grace, we have like 20 seconds left. The ECB, so they hike today, and then what happens?
I think that they're still going to take a month-by-month data-driven approach. I don't think it's the start of a full hiking cycle, and I think the market would take some confidence if some of that came through. Yeah. Europe's obviously underperformed. Yeah. Economic divergence, US to Europe is at the wides. So I think the contrarian idea would be Europe, but I don't think we're there yet.
Grace, thank you so much, as always, for joining us. Grace Peters, Global Investment Strategy Co-Head at JP Morgan Private Bank. Coming up, senior executives are divided over challenges in private equity, from AI to the Iran war. We'll be live at the world's biggest private markets event. That's in Berlin. That's next. And this is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Now, the U.S. completes strikes against Iran for the second straight day. The fragile ceasefire all but collapses. The SpaceX IPO is said to be more than 4 times oversubscribed ahead of what's said to be the biggest IPO in history. Plus, the ECB is set to raise rates for the first time in almost 3 years as the Iran war pushes inflation out of the comfort zone. Well, private markets are facing several major challenges as industry leaders gather at the world's biggest private markets event in Berlin. Well, fears about the impact of AI on the software sector, uncertainty around the Iran war, and the prospect of higher interest rates are all taking a toll. Let's head to Super Return, where Danny Berger has a great guest for us. Hi, Danny.
Hi, Francine. Thank you for that fantastic setup. That's exactly the environment we're in, and we have a great guest to discuss it. It is Joanna Rocha-Scaff. She is the head of European private equity at Neuberger Berman. Joanna, great to see you this morning.
Great to see you again, Dani.
And
thanks for having me.
It's definitely this moment where it feels like there's a lot of angst in this market, from AI to what's happening on the macro side. And starting with that specifically, because we have an ECB decision expecting the first hike since 2023, energy costs are a problem, inflation is higher, it feels like American exceptionalism is back at the behest of Europe. How are you feeling about being an investor in European markets at this moment?
It's a much more complex underlying environment in which to be an investor. Let's just be honest and start there. We have had hopes for a stabilization of the macro for every year over the past 4, and I think investors start the year always very optimistic, and then there's quite a level of disruption early in the year that takes that away. This year, everybody's talking about the war in the Middle East. Obviously, the implications for energy prices have been quite dramatic. Supply chains as well, and that has disrupted the macro environment. And Europe, in particular, parts of Asia that are more energy dependent, are suffering more. So that is also, to your question about exceptionalism, also a factor. I mean, it just impacts European activity and more. Last year were the tariffs, and then you probably have all forgotten, but there was SVB the year before, and then the war in Ukraine.
But see, the thing, it feels like deja vu every single year.
It's been
and you
deja
get this hope that you'll have exits and robust activity, and then you don't get that because of it. What do you need? Do you need a period of no volatility, or should we just accept this?
You need stability to underwrite an investment case, and the environment keeps changing, and so it's very difficult to assign probabilities to investment outcomes when the underlying variables keep moving and moving. So yes, absolutely, distributions continue to be very low in our industry. Just to put a number to that, they're running at roughly 16% of beginning of period NAV for the last 4 years. That's as bad as it was during the 2008 global financial crisis. And if you shut a part of the system, so the private equity industry needs to fundraise, to invest, to harvest and realize the investments, to continue that cycle. If you shut one of these valves, so to say, the system doesn't really flow as well. Now, we are not sitting on our hands just watching this instability play out. So from an investment point of view, I'll cover in a bit, maybe a minute, what is it that we're doing, but also from a realization point of view, we've become materially more hands-on on how to do things in this environment. And we invest in funds, and we invest directly with GPs on co-investments and co-underwrites. You'd be surprised perhaps to say, but about 30% of our exits have now been driven by ourselves, as opposed to just sitting around organically waiting for GPs to sell their assets, to tag along and to send distributions.
Do you think at some point the industry as a whole starts to adopt that model and starts to be more aggressive? Because maybe
I think investors, I mean, the more sophisticated investors have approached the secondaries market directly in order to try to take a bit more control over that liquidity, because organically they're not getting it, just waiting for the checks around.
But do you think it's a people have decided this volatility is here to stay and we're just going to get on with it, or are they still waiting for that lull?
I mean, it's been 40 years, so by this point in time, if you're taking no action and continue to be like just hopeful that the check will come in the mail, so to say, you may be in a difficult spot. So it gets to a point where you just have to adapt to the new reality and be more proactive at managing your book. And more sophisticated investors are becoming much more proactive at managing their book.
So you mentioned the exit side, but you also mentioned some of the opportunities you're looking at investing in. Where are those right now?
I mean, the opportunities on the investing side, clearly secondaries market is booming. You saw that, more than 250 billion of transaction activity last year. We're very actively working with private equity firms offering capital solutions midlife through the life of their deals, and what I call midlife also co-investment solutions, where we'll provide liquidity that allows them to sell a minority stake, but still re-underwrite the asset, potentially reinvest out of a new fund, generate some liquidity, demonstrate the valuation, because investors are also asking, what about the valuation you have ascribed for this asset? Where's the proof that this is fair?
How big of a problem is that, and this idea that marks aren't honest at this moment, or they're just not willing to mark down?
So it's a very interesting question. We've just seen a massive recalibration, for example, of software multiples on the back of this SaaS apocalypse. Multiples adjust in private markets, but people often, I mean, the assets don't trade. So they will have to use valuation methodologies like public comparables, precedent transactions, discounted cash flows, and so on, in order to triangulate and ascribe a valuation to the asset. But in the current environment, I actually see a lot of disparity in valuation approaches. So not all unrealized value is created equally. And investors have to be super careful at understanding the valuation methodology, frankly, and approach of their underlying GPs. It's actually quite an interesting point to make because the dispersion is significant. There's
really
very little consistency.
Is that specifically a software AI disruption problem where you're seeing that discrepancy?
It certainly is a problem on software because the public markets have really had a quite significant correction. They've recovered a little bit, but I think a lot is still wait and see what the impact really is on some of the assets. So it does impact software a bit more, I would say currently, but it's not just a software situation. I do see a big disparity in that regard. And frankly, when we are evaluating funds for new investments, we revalue the unrealized holdings.
Have you had any really tough conversations to talk to these funds and say, listen, we don't agree with any of these marks? Is it ever that bad?
I mean, we don't go back and try to challenge them and make it very confrontational, but we'll just recast the track record based on our own assessment, and then you can be first quartile, or maybe you can be third, right? And then we may invest, or maybe we don't invest. But it's not that we go there and try to change their valuation policy per se. We'll provide transparency that our conclusions are different, and we certainly will not invest before we actually re-underwrite the unrealized book. Cash is king. You kind of know what the assets were sold for. But whatever has not been sold for, you need to really assess carefully how much you think it's worth.
Right, Joanna, we're just about out of time. Thank you so much for joining. Really wonderful to see you this morning.
Thank you, Danny, for having me. Pleasure always.
Of course, and Francine, that was Joanna Rocha-Scaff, the head of European private equity at Neuberger Berman.
Thank you, Danny. Danny Berger there, of course, with another great conversation from Super Return. Now, ahead of next week's G7 Leaders Summit, Bloomberg has been speaking to policymakers and investors about Europe's path ahead. Now, this is as Bloomberg Economics Analysis underlines why major structural change is needed for the continent. Well, Bloomberg's Stephen Carroll joins us now with the latest. Hi, Stephen. So is there cause for optimism within Europe now?
There is, and part of it is from that urgency, which is underlined by the new Bloomberg Economics Analysis you just mentioned, which shows that without major reforms, Europe's output gap with the United States risks doubling by 2040, leaving the euro area economy 7 trillion euros behind the United States, widening a gap that really has been growing since the mid-1990s. EU economic output has also fallen behind China. And I suppose what we've been looking for is signs that there is movement on those recommendations, now nearly 2 years old, in Mario Draghi's report on European competitiveness. And the signs are out there if you look for them. You've got the 6 biggest euro area economies moving towards the long-awaited Capital Markets Union. This is something that, we are seeing an initiative of smaller group of countries moving ahead, I suppose, running out of patience, as Margrethe Vestager, the former European Commissioner, told me, with a long-running project that wasn't seeing progress at a 27-country level. The EU's changing its merger rules, revising the guidelines around those, and already we've had big M&A announcements in the past week. Look at what's the French telecom sector and the future of SFR, or what's happening with Italian banks at the moment as well. So businesses are taking notice of the signals that are coming from Brussels. You've got defence cooperation in there as well. That's another area where deeper integration, the key recommendation of Mario Draghi's report, is really gaining some momentum. The prescription is quite clear for what European leaders need to do. We are starting to see the signs that perhaps some of this might be actually going into place now, but of course still a very long way to go to get all of those reforms in place. Bloomberg Economics says that if the European leaders were to adopt all of the recommendations in the Draghi report, it would start to close that gap with the US and could actually potentially see convergence if they went even further with deepening integration and ramping up investment massively.
So, Stephen, what are the next key hurdles to watch?
Well, we've got the European budget negotiations that are happening at the moment. This is the 7-year spending plan for the EU. We're heading into the crunch 6 months of negotiations to try and get a deal on that by the end of this year. And central to that is the question of how to pay for this massive investment that the EU needs. Will it need to raise its own resources, European level taxation, for example, or will it agree to more joint debt, an issue that's been politically divisive for as long as any of us can remember in the EU, but they have done it once before during COVID. So could an agreement be found on that front? That's going to be something that's important to watch next. Also, the question of the messy politics of 27 member countries. Getting them on the same page on something is difficult. We have the election in France next year, which could see a change of leadership at one of Europe's biggest economies. That might change the conversation, or perhaps give leaders some motivation to act now. Then there's the question we're all talking about, which is AI and how that's going to transform the economy. These models can't factor in the changes that AI could mean for Europe and the US. If it's adopted in a productive way, that could really help to close the gap with the United States and to boost European growth. But of course, that's a debate that we're continuing to see play out in many parts of the world as well.
Stephen, as always, thank you so much for the great analysis. Stephen Carroll there with the very latest on Europe. Now, coming up, our interview with the chief executive of space and defense firm Voyager Technologies. We discuss the SpaceX IPO and, of course, plans for habitation of the moon. Yes, you heard that correctly. That's coming up next. And this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Well, let's return to the SpaceX IPO now, and the chief executive of aerospace and defense firm Voyager Technologies says SpaceX going public is good news for the industry. Now, he says a lot of capital will flow back into other space companies. Now, I also spoke to Dylan Taylor about the Artemis mission, plans for human life on the moon, as well as the space race.
Exuberance, I think, could be a factor, but I think in general, what I expect is more attention to this sector. Mm-hmm. And then I think within our sector, like a lot of sectors, you have companies that are better the closer you look, and perhaps companies that don't stand up to scrutiny. And so I would see a bifurcation between the high quality names and the names that maybe on second look aren't investable. But I think net, it's good for companies like Voyager, and it's good for the sector.
So what's your vision for the lunar economy?
Well, lunar, we have a 3L strategy. So just to be clear, the first L is low Earth orbit, or LEO. That's where the International Space Station is, and our commercial space station effort, Starlab. Second L is lunar. The third, which we can spend some time on if of interest, is Lagrange. That's really a proxy for deep space. That's where the James Webb Telescope is, for example. But for lunar, look, I think there are a lot of use cases for lunar resources here on Earth, helium-3 being one, data centers in space would be another, rare earth minerals, which are rare here on Earth, but not on the moon. So I think the lunar economy provides a huge opportunity for companies like ours and others. Yeah.
So you believe in the commercial, basically, advantage, right? The commercial use of it. What does it mean in terms of how Voyager will take advantage of that? So what's the first, second, and third step?
Right. So we announced last week our intent to acquire Astrobotic, which is a lunar lander company. They're part of the NASA program to put commercial lunar landers on the moon and bring payloads to the moon. Administrator Isaacman has said that he wants to see lots and lots of additional moon landings, bringing payload. We're going back, the Western world is going back not only for flags and footprints, but to actually deliver infrastructure to the surface of the moon. So for companies like ours, we're building an entire technology stack that allow us to deliver payloads to the surface of the moon, build habitation on the moon, and ultimately deliver, if you will, the picks and shovels that'll make the moon useful to the lunar economy.
I mean, I think it was in March that you made the strategic investment at MaxSpace.
We did.
Which is really, about habitats. It feels very sci-fi.
Yeah.
What kind of time frame are we looking at?
Ideally, we would do a demo mission in the next couple years with that lunar habitation module. That's still being worked out a bit. And, it's a bit like taking your tent camping. This is a technology that allows you to have habitation that expands. So imagine fitting in a fairing or a lander, not taking up much volume, but then when you get to the surface of the moon, you can actually expand that habitation. So it's really interesting technology. Hopefully 2028, 2029, something like that, we can get something to the surface of the moon.
And then commercially viable? I mean, how do you think? Do you think about just the technology and then the commercial comes afterwards, or do you actually have a plan of demand and how people feel comfortable going up there?
Well, there's quite a bit of demand. I mean, NASA alone is talking about something around $30 billion for lunar activities over the next several years. That's, of course, the Artemis program, the CLIPS lander program I mentioned earlier, and other initiatives that would have direct implications for the lunar economy. So I think there's plenty of capital there. And then ultimately, to your point, I think you need to ultimately have a self-sustaining lunar economy. We're probably still a few years out from that. But in the meantime, space agencies around the world are funding a lot of this.
I mean, NASA definitely had success with the Artemis 2 mission around the moon. There are a lot of doubts, I guess, about what happens to the program from here. How does that impact you?
I don't have doubts about the program, to be frank. I think Artemis 2 was fantastic. I think it not only inspired people who are space buffs and aficionados, but I think it inspired the entire world. I mean, we sent humans further out than we've ever sent humans before, over 250,000 miles away from Earth. So I think it was super inspirational. We had the Apollo generation years ago. I think we now have this Artemis generation we're forming. Next mission up is Artemis 3. That crew was just announced yesterday. That's a bit more of a technical mission, demonstrating some technologies in low Earth orbit before actually doing the very difficult mission, which is to land humans on the moon, Artemis 4. And that one's going to be, very challenging. But I think if we pull that off, I think that'll be a huge inspiration, not only for the world, but I think a demonstration of how this technology has matured.
Do you worry about the Chinese getting there first?
I do. I mean, we're in a space race. There's no doubt about it. China's space program is formidable, and they've certainly caught up in many respects. But I think there's still an advantage that the U.S. and the Western democracies have in the space race. I bet on our innovation. I bet on our capital markets. I bet on our entrepreneurs, and I bet on companies like Voyager to ultimately deliver the promises that we've made in terms of what we're going to do on the moon.
Well, that was the Voyager Technologies Chairman and Chief Executive Dylan Taylor speaking to me a little bit earlier. Now, the UK has set out a plan to buy AI chips from British technology companies in an attempt to stop them fleeing to the US. It comes as leaders, founders, and entrepreneurs gather for the annual Founders Forum event to discuss the future of the tech sector. Our Tom McKenzie joins us now from Oxfordshire with a guest for us. Tom, over to you.
Fran, thank you very much indeed. Yes, very pleased to say I am joined by the co-founder of Recursive, Tim Rockteschel. And this is a company that is exploring a new paradigm when it comes to AI. You've raised about $650 million US. You're valued at north of 4.5 billion, Tim. And you're trying to build AI systems that can self-improve without human intervention. Why?
We believe that there's a future in which AI can actually be part of the discovery process. So getting to a point where AI itself can make innovations, and where as you use more compute, this AI is making discoveries, starts to build on these discoveries, and take part in, for example, the way we're developing AI systems. I think for us that's a very exciting future, because if you look at the past, I don't know, hundreds of thousands of years, the reason we got so far as a species is because we were able to attain knowledge that then solves a lot of problems. We've been able to show some first signs of life. This morning we released a blog post where we show that we can reach state of the art in some of the benchmarks for training very small language models. We're also able to get state of the art in NVIDIA's automated kernel engineering benchmark. So these are little software programs that make basically running these AI models faster on hardware.
Yeah. Why this is it fair to describe this as a paradigm shift if you succeed in this, in self-improving AI systems? How significant would that be for the ecosystem? What would that do to the ecosystem if you succeed?
Yeah, so basically we've been through different paradigm shifts in AI, right? We had initially, 15 years ago, used a lot of our energy, like brain power, basically, to build, very specific AI models where we have like linguists, for example, defining specifically the features that are useful to get to certain capabilities with AI. Then deep learning happened, right? We were able as a community to get rid of a lot of this feature engineering and instead have AI models learn autonomously what are the right features to basically capture in order to make good predictions. Then a lot of people spent time, like 10 years ago, in terms of building specific neural network architectures for specific problems. Then the transformer came, and all of that got generalized. So basically, every time we were able to, get AI to learn things by itself instead of having human, strong biases built into the models, the capabilities got better. And we think the logical conclusion of that is to actually try now to automate that kind of scientific loop of ideation, implementation, and validation, and getting AI to autonomously build, very strong AI models.
What timeframes are you working on to get to these points?
2 years.
2 years?
Yeah.
You think you can get self-improving AI within 2 years?
So self-improving AI, we always had versions of that in the sense that, for example, if you do reinforcement learning with an AI model, it learns from its own experience, right? It generates its own data as it's experiencing things in the environment. But I think the paradigm shift is to get AI really to, in language even, come up with ideas and explanations and build upon discoveries that it's made before.
So if you succeed, what happens to the valuations of OpenAI and Anthropic?
I don't know what will happen to their valuations, but I think it's going to be generally, I think, for the community, and I think for the scientific community, broader scientific community, a really exciting moment, because now you have AI really contributing, a lot to the discovery process of inventions in scientific domains.
How do you build guardrails, safety guardrails, around self-improving AI?
So there's multiple things one can do. First of all, we take AI safety very seriously. If you design such a system, this is like it has to be baked into the system. I think to some extent you could argue that already when AI is not just pushing its capabilities into the model weights, but you're actually making it much more transparent in the sense that it has to actually come up with the ideas and explanations and show the empirical evidence. You already get an audit trail, right, that you can look at. And we actually open source a lot of the inventions that our system made this morning, so people can actually check them and build on top of them. But beyond that, we've been in the past already been able to show that you can actually use AI itself to check some of the safety constraints. We use AI, for example, to be able in self-play come up with jailbreaks for AI, but then also train the AI to be more robust against these jailbreaks. And we could show that that actually translates also to robustness against human jailbreak attacks of these systems. So whenever you basically get a capability gain in AI, you can also try to then use that on the defense side.
You have an office in San Francisco, you're a professor as well at UCL, as well as being the co-founder of Recursive. How well placed is the UK right now when it comes to AI? What are you concerned about? What are we not doing well when it comes to supporting the AI ecosystem?
I think the UK is placed really well in the sense that we have fantastic AI talent. So the reason why we started Recursive from day one in the San Francisco and in the London office is because we're able to draw a lot of talent from the ecosystem in UK. DeepMind was funded here. We had Jeff Hinton starting the Gatsby unit like a few decades ago in London, in UK. So the talent density is enormous. Somebody was joking that all the AI talent, for example, in UK, is basically 5-minute walk away from the Shoom in King's Cross. It's now called the Knowledge Quarter. So that's going really well. What I'm concerned about is build out of data centers, energy prices. If we really succeed at Recursive, right, at some point, it's mostly a question of like how much energy compute do you want to spend on solving a certain problem, a scientific problem domain, right? And then if you have very high energy prices, that becomes tricky for, I think, countries to then really take advantage of.
Okay, Tim, thank you very much indeed. Yes, the energy and compute demands will be enormous if you succeed at Recursive. Tim Rocksteffel, thank you very much indeed, co-founder of Recursive. Fran, back to you.
So interesting, Tom. We'll have plenty more, of course, of Tom's great interviews on tech and AI. So for more Tech Outlook also, and London's role really in this AI race, check out the latest episode of Bloomberg Tech Europe. That's at 8:30 a.m. UK time, and that's tomorrow. Up next, the Bloomberg Brief. They look at markets. Of course, they look at what's happening in the Middle East, and they'll talk AI as well. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks bouncing back. U.S. stocks recovering from a 5-week low after the U.S. ends another round of strikes on Iran. Spending concerns. Oracle falls as data center costs overshadow AI growth. And countdown to the SpaceX trading debut. SpaceX is setting to price today after attracting demand worth 4 times the shares on offer. Let's get a check on markets around the world now. Is this bounce universal? Winnie Sue, what's the latest from Asia?
Yeah, good morning, Bonnie. As you can see, it has been a very volatile day in Asia. But yes, we are seeing stocks pairing earlier losses after those headlines that the U.S. has completed its latest strikes on Iran, and also as oil reversing earlier gains. And that's why you can see here that the South Korea's Kospi Index and Japan's Nikkei 225 both reversing earlier losses and closing in the green. Now, you flip the board and take a look at the biggest drag in the region today is in fact in Hong Kong and Chinese shares. You have the MSCI Asia, China here, in fact, down 1.2%, but just around 1% away from entering bear territory. And also the HSI index now hovering around that 11-month low. This is coming a lot from that drag in the Alibaba shares after the government warned of false advertising from these e-commerce platforms, and also some concerns around the AI token pricing. But overall, these Hong Kong and Chinese markets have really been underperforming so far this year on the weak earnings and the lack of AI exposure.
Winnie, thank you so much. Winnie Su there in Hong Kong. Now let's get over to London for a look at Europe with Justina Lee. Justina.
Happy ECB Day, Vani. But before we turn to that all-important rate decision, let's have a look at European markets today. The Stoxx Europe 600 rebounding a little bit, kind of following, a similar kind of optimism also in the U.S. Now, a lot of that is being driven by ASML, also kind of riding that tech recovery that we're expecting to see in U.S. markets. Now, before the ECB decision later today, we're seeing kind of German bond yields come down a little bit, also following, like a slightly lower oil. Now, of course, when it comes to that ECB decision coming later today, now, basically traders have priced in a 25 basis point hike when it comes to the policy rate. And so I think a lot of that attention will be, what is the central bank projecting when it comes to the inflation and economic outlook for the rest of the year? Because what everyone seems to be kind of split on is whether by the end of this year we're going to get 2 or 3 rate hikes. And I think for that, there will be a lot of attention on what, Christine Lagarde says later today.
Exactly. We'll be following it very closely here, the rate path, as it were. Justina, thank you so much. Justina Lee in London. To that end, a lot of positive catalysts back in this market. So we did have a second round of strikes on Iran that appears to be over with not much of a response on the Iranian side. That's injecting some optimism. And of course, the inflation data wasn't as fear-inducing for a rate hike as perhaps it might have been. So we are seeing a rebound. Now, bear in mind, the Nasdaq was up almost 13% year to date, even with the drop that we got before today. So if this continues into the session, we might get even further of a rebound. S&P futures, Russell futures also higher. It does bear mentioning that oil did top $95 a barrel on the Brent prompt month contract earlier when the strikes were happening. It's well below that now at around 92, 93. In terms of yields, we're right back to where we were. Essentially, we haven't come down too much, but then we also didn't go up too much after the inflation data. So the losses that we saw, we recovered from. The 2-year yield for 12.67, that 10-year yield staying around the 4.53.24 mark. So this market definitely sending a message to the Federal Reserve, but not being perhaps overly insistent about it. Just right now, there's a few things to get to before we get to next week's FOMC meeting. All right, let's get to some individual market movers this morning. And for that, we'll get back over to London and Chloe Melly.
Good morning, Bonnie. We're seeing Oracle quite weak this morning, down about 7% after reporting higher expenses than expected because of all of the money that it is spending on data centers. And that actually overshadowed what had otherwise been quite resilient, quite strong results from the company. So we're down quite a bit there. Moving on to Navan, which is a company that manages business travel expenses. And it is up very strongly this morning, almost 20% after lifting its outlook. It seems that its AI-powered platform is gaining traction in that this business travel is actually more resilient than personal travel, so it's benefiting from that. And finally, Supermicro is up this morning, rebounding after the weakness that we saw yesterday off the back of this plan to raise $7 billion in equity. And we're seeing actually across that tech sector really a bit of a rebound there, but in Supermicro in particular up about 9% in pre-market trading this morning.
All right, Chloe, thank you so much. That's Chloe Melly there. And coming up in this hour, we discuss recent market volatility with Marvin Lowe of State Street. And Monty Soroya of Vista joins Bloomberg's Danny Berger from Super Return in Berlin. Let's kick it off with Oracle, though. As Chloe mentioned, shares taking a hit after heavy spending overshadowed fantastic results. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, I'm not quite sure what the problem is. So data centers and the stuff that goes in them is going to cost a little bit more, but why is the market balking at that? It's not as if it's costing Oracle a lot to finance this.
Yeah, I think it's this balance between incremental spend and incremental revenue. And if you see what they reported for the quarter on sales growth, it was pretty much in line with expectations, similar with the forward guide. The forward guide for Q1 was 27 to 29% organic growth. The market's at 27, so in that range. And if you look at the forward guide for the full year to May 2027, they talked about $90 billion of revenue in the markets at about 88, 89. So, I think the revenue side of the equation is very strong, but I think the market was really looking for a bigger upside in that outlook than they got to kind of compensate for the higher spend.
How worried should companies like Oracle be about this Wall Street Journal report that OpenAI thinks there might be a price war for AI tokens and, also that customers might be maxed out on their AI spending?
It's definitely a kind of thorny issue. I think as an infrastructure provider, Oracle should be relatively immune from that, at least in the short term, because it's the likes of OpenAI and Anthropic and Google's Gemini that are maybe going to have to be pitching that cheaper token pricing to protect or gain market share. And to some degree, they'll have to be absorbing the margin hit for that. But at some point, that will maybe kind of feed through to the likes of Oracle that are providing the underlying infrastructure. This to some degree is where the SpaceX story comes in. Obviously, Elon Musk has been saying for some time that putting data centers in space is a way to significantly improve the economics of the infrastructure.
On SpaceX, 4 times oversubscribed. We have a number now. Is that a lot oversubscribed given the size of this offering?
I think if it was a small IPO, you'd be looking at thinking, well, that's kind of what we'd expect. I think to be considered a hot IPO, personally, I think you'd probably be looking for at least 10 times oversubscribed. But it is a really big deal, and so you have to kind of balance that out. But yeah, I think maybe there are some institutional funds out there that put in some big orders that perhaps might end up getting a bit more than they expected in the final allocation that we'll get later today. And I would think probably the retail element of this deal is much more oversubscribed than the institutional side, given what we've been hearing in the market.
Matt, separately, Meta has now completed an operational split from Manus. Beijing didn't want this acquisition, and now it seems that data sharing is not going to happen between the two companies. What does this portend for Meta?
Yeah, I remember us talking about this a little while ago, and that probably this was the path that was going to happen. I think for Meta, the reason they bought this was because of its agentic AI capabilities. That's the way the market is going. And coming back to SpaceX, they've announced a deal to acquire Cursor, a real market leader in agentic AI. So Meta does need to improve, or has signaled that it needs to improve its capabilities in this area. So I think after it's got through the messiness of unwinding this failed deal, I wouldn't be surprised to see them on the hunt for other agentic AI acquisition targets.
All right, Matt, we'll talk to you again later in the program. That is Matt Bloxham of Bloomberg Intelligence. U.S. futures pointing higher now, recovering from that 5-week low. Let's bring in Ven Ram, Bloomberg M-Live strategist. So we had plenty tech selling, Ven, but we also seem to have this enthusiasm and dip buying and all of the other good things back in this market. Have we got some of the potentially negative drivers out of the way now, and are we back to all guns blazing?
Morning, morning. Yeah, I think that this dip buying is a lot of noise. It's not a signal. The signal we really are looking for is what we got from Broadcom last week. They missed the guidance, and that disappointed the markets a lot. And I think that was really an inflection point in the markets. And what you're seeing today with the Oracle that you've just been discussing is also a point in case, is that, Oracle, these were the very reasons tech AI was rallying earlier in the cycle. Remember, outsized capital spending equated a frantic rally. Now that same outside spending means that they are selling off. So it's a turning point in the markets, and we shouldn't miss that. And I think that the markets are going to muddle through from here because we've got the SpaceX big blockbuster IPO coming in stream. And then we've got OpenAI, AI, and Anthropic coming later on in the year. And I think that the markets are going to muddle through all of that. But I think we've already seen the top of this cycle for the markets. And I think that the markets are now beginning to think this is overextended, this is overripe, this fruit has got to fall to the ground.
Then, in terms of treasuries, we got past the CPI data, we got that blockbuster jobs report. We do still have the ceasefire-ish. I mean, it's very fragile at this point, and there's certainly no sign of the Strait opening, but oil doesn't seem to be rallying too much. What are we supposed to make of the Treasury-oil relationship?
Well, I think that the markets are riding high on conviction that, look, neither Trump nor Iran wants a full-scale skirmish all over again. And I think that, this is the summer fast approaching in this region where temperatures are soaring more than 45 degrees Celsius. So you've got to keep that in mind. So which is why the markets are kind of looking through all the bluster from White House regarding restarting of hostilities. And I think that, regardless of how this is playing out for treasuries, I think that it means, as I've been saying, Bonnie, for a long time now, I've been saying on your program that the 2-year yield is unsustainable, was unsustainable below 4%, and we are now doing 4.13. So I think that, this is a market that needs to be higher for longer, given the inflation implications.
All right, Ben, thank you so much. Wonderful, as always, Ben Ram from our Bloomberg M Live team. Let's now turn to the latest on the war in Iran. President Trump saying he'll keep bombing if Iran continues to refuse to sign a peace deal. This follows a second night of clashes between the US and Iran. Bloomberg's Abir Abu Omar joins us now from Dubai. It appears the strikes are over. Abir, how might Iran respond? What's it saying?
Good morning, Vani. Yeah, for the time being, the strikes are over. But as you have mentioned, this is a second day of an uptick in hostilities. Iran has already retaliated against the U.S. attack that happened overnight by attacking countries that it did attack yesterday as well, following the first U.S. attack that was Jordan, the Fifth Fleet of the United States in Bahrain, and also a U.S. base in Kuwait. Jordan reporting some 20 missiles or so in its airspace this morning. And so, look, the Foreign Ministry of Iran came out and said that the ceasefire between the United States and itself is effectively meaningless. Now, I've been getting asked the question of where does the ceasefire stand? And it has been quite fragile since it was reached on April 8th. But this uptick that we saw this week, certainly today and yesterday, with the back and forth between the United States and Iran, brings back this resurgence of dangerous escalations in the Middle East. Now, both sides maintain that broader conversations to reach the MOU that would reopen the Strait of Hormuz and extend the ongoing ceasefire, no matter how fragile it is, to 60 more days. They maintain that those conversations are ongoing. But President Trump did say to Fox News yesterday that he will hit Iran because he was disappointed with them essentially dragging their feet when it comes to getting to concessions to get this MOU underway. Iran, on the other side, saying again that the ceasefire is effectively meaningless because it was effectively broken, as we saw today and yesterday, and then with Israel's also incursion in Lebanon, a sticking point for Iran. And meanwhile, the Strait of Hormuz remains effectively shut. A trickle of shipments are getting through. We're hearing more shipments from countries in the GCC are going through, LNG shipments from the likes of the United Arab Emirates and Qatar. But ultimately, it's a fraction of what it was pre-war times. And the Strait of Hormuz, the reopening of it really is the ultimate concession that both warring sides want to get through the line. So we'll wait and see if more attacks happen. President Trump did say just now that he will attack Iran again if they don't come to the negotiating table.
Well, and in fact, Abir, as you were speaking to us, we had Iran's Persian Gulf Strait Authority commenting on X, repeating that the Strait of Hormuz is closed until further notice and telling ships with permits to cross the strait to await guidance. So effectively closed, as you said. Bloomberg's Abir Abu Omar, thank you. Now to other top stories trending on the terminal this morning. Hong Kong hedge fund managers are said to benefit from a change in the city's tax laws. The bill proposes tax exemptions for a wide range of alternative asset managers on so-called carried interest. The tax break is part of a broad push to attract global firms and executives to Hong Kong. Jim Chanos, bearish on SpaceX. He says the blockbuster IPO is being driven more by investor enthusiasm for Elon Musk rather than financial fundamentals. Speaking at a conference in New York, Chanos called it, quote, a hopes and dreams IPO. And the New York Knicks pulled off a record-breaking 29-point comeback to defeat the San Antonio Spurs in Game 4 of the NBA Finals. The Knicks won 107-106, capped off by a tip-in from OG Anunoby with just over 1 second remaining. The Knicks now lead the Spurs 3-1 the next game, Saturday in San Antonio. Coming up, the European Central Bank is set to raise interest rates for the first time since 2023. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. The European Central Bank is widely expected to raise interest rates today for the first time since 2023. Oliver Crook, Chief Europe Correspondent, is at the ECB in Frankfurt. Ollie, there's obviously consensus the ECB will hike, but is there consensus that it's a good idea that it should hike?
Yeah, that's a very good question, Vonnie. I would say there is certainly consensus. The market is well prepared for this hike, 25 basis point. It's been really sort of well telegraphed by ECB governing council members ahead of the decision, ahead of the quiet period, all basically saying that inflation is now getting to a place where it's really beginning to worry them. They really need to take a sort of an insurance hike in order to make sure that it doesn't get entrenched, and that is effectively very likely what we're going to get today. Now, the question of whether or not the ECB should be doing that is a different one. It is one that has sort of split opinions among some economists. I think overall, people are on board with the ECB raising rates today. That being said, we have heard commentary from certain economists that think it's actually quite a bad idea. We heard from Jeffrey Yu earlier this week telling us that basically if you hike rates this week, you're effectively going to be cutting once again in the fourth quarter. I talked to Carson Bresky of ING a little earlier this morning, who says that basically, yes, it makes sense to raise rates, but this should be a one and done. This should not be a full sort of tightening cycle. So there is some debate out there. And again, when we think about the stagflation concern that the ECB is worried about. Currently, they're sending a pretty strong message that they're less worried about the stag than the inflation side of things. You've seen that represented in the core inflation, which accelerated at a faster pace in May than it did at the headline level. So all of these things are going to be going on into the ECB's assessment. And of course, we're going to be watching very, very closely, Vani, is not just the rate decision, but of course the new economic projections on growth and inflation, and of course that press conference, all important, by Christine Lagarde at 2:45 local time here.
Yeah, exactly. Just on your comment earlier, I was reading Paul Donovan of UBS this morning saying that policy at the ECB is stuck in an unhelpful 2022 mindset. But the ECB is worried about growth, right? Will they revise those projections lower today?
So probably what you will get is revisions to the downside on growth, to the upside on inflation. So really a classic sort of stagflation kind of thing. And I think that what will be very interesting is to try to see how they sort of message this hike. What kind of hike is this? Is this a one and done? Is this a tightening cycle? I think they're going to want to leave themselves sort of maximum flexibility to be adaptive. But I think the theory here from the ECB is that effectively, if you act early, you may have to act less radically. That is the lesson that we learned from 2022 when they were accused of acting too late. But of course, Vani, there are lessons, and there's a real big policy mistake, and that was 2011, and that was hiking too early, cratering growth, and then having to immediately capitulate, and that is also something that they're going to want to avoid.
Absolutely. Well, markets certainly pricing in nearly 3 rate hikes for this year. Ollie, thank you so much. Bloomberg's Oliver Crook there at the ECB. Coming up, a look at what's making headlines in your front page news. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the 3rd floor or the lobby. You actually have to start in the basement.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York, and it's time now for your front page news. First up, the New York Times reporting Republican hopes are dimming for a renewal of a powerful spy law, warrantless surveillance powers. Section 702 of the FISA Act will sunset unless lawmakers act by midnight Friday. The Times says President Trump alienated lawmakers with his choice of Bill Pulte for acting Director of National Intelligence. Next up, the Financial Times is reporting China abruptly cancelled 2 important diplomatic meetings with the EU this month as tensions build over soaring Chinese exports. The FT says Beijing is furiously lobbying against the EU's proposed Industrial Accelerator Act. That act would bar some Chinese products from public procurement contracts and limit takeovers of European companies. And the Wall Street Journal is reporting OpenAI is considering drastically lowering the prices it charges users for tokens, the unit of measurement AI firms use for their products. The Journal says OpenAI is looking to win customers from arch-rival Anthropic in anticipation of similar price cuts at Anthropic. Cuts, of course, could erode profit margins at both companies. Coming up, we're going to look at volatility and risk assets with Marvin Lowe of State Street.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks bouncing back. U.S. stocks recovering from a 5-week low after the U.S. ends another round of strikes on Iran. Spending concerns. Oracle falls as data center costs overshadow AI growth. And countdown to the SpaceX trading debut. SpaceX set to price today after attracting demand worth 4 times the shares on offer. So let's take a look at these markets then. Even as the Strait remains closed and oil remains subdued, we are seeing equities bounce. The risk mood improving once again today. Now, we did see Treasuries drop in particular after the US said it had completed strikes on Iran, but they fully recovered those losses. And you can see that futures are mirroring that as well. So the Nasdaq 100 future is pointing to a gain of 1.1% at the open. Bear in mind that even with the sell-off that we've seen, we're still up almost 13% on that index for the year. So really not a bad showing. It does seem that many of the movers are intact. And then on the Treasury side of things, the two-year yield, as Van Ram said earlier, did have to get above 4%. It's at 4.1246. He thinks it's sustainable around these levels. Of course, we got through the inflation data from yesterday without any panic. We'll get PPI data a little bit later today, which should give us more of a picture of the inflation story. All right, let's get to some individual movers now. Here's Chloe Malley. Chloe.
Good morning, Bonnie. We're seeing Oracle down a fair bit this morning, about 6%, after, as you said, its expenses came in higher than expected because of all of the money being poured into data centers. And so this overshadowed otherwise quite strong results from the company and is, of course, bringing up those questions again about this massive spend on AI infrastructure. So a bit of weakness there. Moving on to Naven, which is a company that manages business travel expenses and has lifted its outlook, and it's up very strongly, about 19% on the back of that. Its AI-powered platform is really gaining traction, and it's also benefiting from the fact that business travel, corporate travel, has been actually much more resilient than the personal leisure side of that travel business. And so we're up very strongly there. And finally, we are seeing space-linked companies up strongly as well this morning, especially Firefly Aerospace, about 6.7% ahead of this much-anticipated SpaceX IPO that we are waiting for.
All right, Chloe, thank you so much. Chloe Malley there in London. Let's get more on these market concerns over Oracle's heavy infrastructure spending. Matt Bloxham of Bloomberg Intelligence joins us now. So we'll acknowledge that the stock has been pretty volatile. We're very much off our highs. We are off our lows as well, however, Matt. But we are seeing a bad reaction. What is the objection of investors? Is it that these data centers are costing too much? I mean, it's not as if Oracle is having trouble financing them or having to pay that much to finance them.
Yeah, I think there's a kind of mixture of things going on here. I think part of it is the kind of disconnect between the increased spend on data centers and the kind of growth in the revenue to support that. And if you look at the guidance for revenue for the fiscal 2027, they're talking about revenues about $90 billion, which is more or less where the market was, and it's no change to what they said before. So there's more spending coming, but there's no more near-term revenue coming in relative to what people were expecting. Now, they did increase the size of the forward order book, but that's a kind of multi-year play out of when that revenue hits them. So I think it's that kind of mismatch between the incremental spending and the lack of an increase in the near-term forward guide that's perhaps kind of causing some of this softness.
Matt, we got a number on the oversubscription rate for SpaceX. It's 4 times. Normally, you know, that's nice, but it's not a whopping amount of oversubscription. But in the case of an offering this size, is it a lot?
Yeah, as you say, you know, I think typically 4 to 5 times oversubscribed would be seen as, you know, a good deal, not an amazing, but good. And I think when investors go into these kind of things, they always over order in the book, knowing that they're going to get paid back because of the oversubscription. I would say, you know, given all the excitement about this IPO, 4 to 5 times is maybe a little bit on the low side of what we might have wanted to see. Perhaps the retail tranche is much more heavily oversubscribed. And, you know, we heard reports that some institutional investors had, you know, put bids in of up to $10 billion. I can't imagine any of them are really thinking that they were going to get 10 billion. So perhaps they might have been wanting a kind of a bigger oversubscription volume to make sure they kind of get an allocation that's more what they were thinking of. So, I mean, let's see what's going to play out. You know, obviously the allocation is going to happen later today and it'll start trading tomorrow. But yeah, you know, I would probably have been thinking they would have been looking for more than 4 times oversubscribed, if I'm honest.
Yeah, well, we'll know tomorrow and into next week how trading goes. Matt Bloxham of Bloomberg Intelligence, thank you so much. State Street's Marvin Lowe, looking at long-term economic growth ahead of today's PPI data, says this. While we expect volatility to continue into the summer, we think the economy continues to show strength, even as the war drags on. Negative real wages cannot continue forever. But for the moment, greater employment levels and capex will support overall growth. Marvin Lowe, Senior Global Macro Strategist for State Street, joins us now. So Marvin, after the jobs report and yesterday's inflation data, are you comfortable with the Fed holding where it's at, or would you want the Fed to make some kind of a different move?
Yeah, I mean, I think that the growth just probably in the camp that the next move should be a hike. But for the moment, I think that I'm comfortable with them seeing how this plays out over the summer, particularly with the new administration, if you will, that's coming into the leadership at the Fed.
So you're biased towards a hike. What about the balance sheet side of things? You seem to be suggesting in your note that it's too late to do something with the balance sheet, that ship has sailed. Do you mean that Kevin Warsh isn't going to be able to downsize it anytime soon?
Yeah, I mean, my view is that the financial markets right now need a great deal of funding and liquidity, particularly as credit has taken on such an important role in the overall activity within the markets, as well as the growth within the economy. And that credit really does start in the banking system. And it's a large Fed balance sheet that ultimately allows that banking system to continue to be engaged in the credit markets the way they are now. I think it's a very fragile type of relationship that exists, especially if the Fed starts talking about reducing that balance sheet significantly.
He's likely to try, at least according to previous comments, if not immediately, very soon. Would that actually cause some kind of market event? Do you think it could cause difficulty in funding markets?
Yeah, I mean, I think it's definitely a risk for me. It's probably an underappreciated risk. Everyone's certainly focused on the policy rate, and that's the a correct, visible view on how the Fed is leaning. There's talk that if they are able to cut, but ultimately tighten through the balance sheet, that maybe that keeps everything in balance. I do think the balance sheet is fragile enough, and really with valuations where they are. So that's really part of it. But it's a little bit more in that the economic growth that we have in this economy is very much driven on this capex, which has a large component with this AI trade, of course, and that is a very credit centric type of relationship that exists right now.
Yes, the other thing that I want to point out that you say investors might punish is what you're saying, what you're calling any sleight of hand in using other measures of inflation to justify loosening financial conditions. So you think a move to, a trimmed mean or a median, that investors would actually punish that?
I mean, if the use of the alternative data, provides better insight into what true inflation is to the economy, it's a warranted discussion. And if the Fed moves towards something like that, and it makes sense, then investors and economists will understand that. But if it is a sleight of hand, a lot of the trim median right now is the lowest readings within the number of inflation readings that we could look at. It does have a downward bias in terms of the fact that it trims more on the downside than it does on the upside. To me, that's sleight of hand. And I think that we would see through that quite quickly. And we've seen how sensitive long yields are to kind of this inflation discussion, to this Fed credibility discussion. We're gonna interpret it the way that is correct in terms of how it's going to affect the economy.
Marvin, you mentioned that some of the growth that we're seeing at least has been built on capex, and obviously we know that. Does it make sense for all of these trillions to be being spent on capex, and inevitably when it has to slow down, and we already saw a little bit of a red flag with Broadcom and with Oracle yesterday, will the market and the economy balk, and might we be in trouble?
Yeah, I mean, it certainly does create a concern at some point. At this point, it really does seem as if the spend is insatiable to a certain degree. Every quarter, companies announce larger and larger spends. The equity raises are to a certain degree the extent of all of this build out, if you will. I would add that once the war is over, and it will end, we're going to have a lot of infrastructure rebuild within the Middle East also. So I think that creates continued demand for capital, which to a certain degree, positively affects the U.S. economy, but also, in my mind, continues to push up rates because that demand for capital remains as aggressive as it is.
Marvin, we actually have to leave it there, unfortunately. Fantastic speaking with you. Do come back soon. Marvin Lowe of State Street. Now to other top stories trending on the terminal this morning. The European Central Bank is set to hike rates for the first time since 2023. Economists expect a quarter-point increase, taking the deposit rate to 2.25%. The move would make it the first major central bank to hike rates in response to the war in Iran. Shares of Alibaba and JD.com sliding after Chinese regulators scolded leading e-commerce players for what it called misleading promotions. Regulators blasted companies for promising subsidies and failing to provide details of actual subsidies granted. And the New York Knicks pull off a record-breaking 29-point comeback to defeat the San Antonio Spurs in Game 4 of the NBA Finals. The Knicks won 107-106, capped off by a tip-in from OG Anunoby with just over 1 second remaining. The Knicks now lead the Spurs 3-1. The next game on Saturday in San Antonio. Coming up, we're live from Berlin's Super Return with Monty Soroya of Vista Equity Partners. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Yeah, probably very fast.
Yeah. This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. The world's top private market players convene in Berlin for this year's Super Return Conference. Bloomberg's Danny Berger is live at the event with Monty Soroya, Vista co-head of the flagship fund. Danny.
Bonnie, thank you so much. That's correct. I am here with Monty of Vista. Monty, thank you so much for joining. Really great to have you. And it is this moment where there's this existential angst happening, not just in private equity, but in your specific sector in software. You know, Vista's made this really large bet on what you all have called the agentic AI factory. Just on a basic level, what is the big bet that you're making?
Yeah, look, 2.5 years ago, we decided that agents were going to be the future of what software is going to be, and actually the future of what the economy is going to be. And as a part of that, we wanted to help our companies transition to becoming agentic. So what we did is we created a factory. We brought in all the big tech partners. We have Microsoft, we have OpenAI, we have Anthropic, we have Google, and they help us actually build and deploy agents into our software companies. So we started with 0 a couple of years ago, and now we have 52 companies that are deploying agents that automate workflows for software.
Robert Smith had recently made this comment, your CEO, basically traditional enterprise needs to become agentic or they fail. There's a lot of people with a lot of software exposure just, you know, in these halls itself. How much of this industry do you think gets that or is falling behind?
I think people don't understand exactly what agentic means and actually how to deploy it. Look, we were early 2.5 years ago. We've now figured out that it's not just building agents, it's the cost of agents. And that's the thing that you're hearing a bunch. There's a lot of angst around, like, what is the cost of these tokens? What is the productivity of those tokens? So we've gone from building these agents in our factory to maximizing value using this thing called VC2. So that's the thing that we announced last week, which is vector core compute with SambaNova and our partner Intel. So first we did the investment in SambaNova, and SambaNova allows us to do really fast inference at very, very cheap cost. And then the second thing we did is we announced vector core compute to have our own access to cheap inference at high speeds. That's the future of where agentic is going.
So does that mean your portcos get that priority access to it? So
That's correct.
there, how much capacity is there at this moment, or is this still very new?
Look, we just launched it last week. We have our first data center already up and running in LA. It's the first big inference center. We're going to have 5 different inference centers by the end of this month. We'll have 50 megawatts up by the end of this year, and the goal is to get to 250 megawatts by next year. So we're going to have a lot more inference and compute accessible to our companies to build more agents.
So it's not only a change in just understanding what agentic is, but it's also just a fundamental change in the business model, because Vista's business model for your portfolio companies, asset light, huge margins, heavy cash flow. How much have you had to rewire your brain as an investor to now be investing in a way that's decidedly asset heavy?
Yeah, so the way to think about it is we service enterprises. At the end of the day, we are the tech provider to an enterprise. And what the enterprises are asking us, number one question 18 months ago, I need to deploy AI. How do I do that? My CEO talks about it on earnings calls. We're like, great, we'll build you agents, and the agents will be built through the agentic factory. And then today, and basically earlier this year, people are like, wait. The CFO is saying we're spending a lot of money on AI. We don't have anything to show for it. How do we measure it? What's the cost? And we said, you know what? Look, we're going to solve it, and we're going to give you one full package. It's going to include the cost of tokens. They're going to be high speed. It's going to come from VC2, from our own factory, and then our own factory agents will use it, and we will rack and stack it and give it to you as one big solution. The truth is, that's what customers want. That's what they want to buy. They don't want to buy generic intelligence. They want to buy specific intelligence that does specific workflows for their businesses.
By the way, how on board have your CEOs been with all of this as you've truly made your companies agentic? Because for them, I'm assuming it's quite a large change too.
Yeah, but look, the reality is we work in tech, right? And so every decade or so, there's a giant wave. The last time I was at the job before I had Cisco, it was a job I had before Vista, it was 20 years ago at Cisco, when we went through this giant infrastructure build out for the internet. Now we're going through another infrastructure build out with compute for GPUs and inference. And I think the reality is our CEOs are used to it. They're tech CEOs, and they're very good at execution. At the end of the day, that's what's going to make the difference for software. And you're seeing it in the public markets. The software companies that are performing well, the Datadogs and Snowflakes, have made the pivot to agentic. They're releasing agents, and they're growing faster. And that's what you're seeing in our portfolio.
But again, the transition for Vista, I think, is really fascinating, because there was maybe rightly or wrongly this perception that in the true uptick in the frenzy of 2021, maybe you missed out versus some of your larger competitors when it comes to software. Do you think that this gives you pole position, the fact that not only are you having access to compute, but compute at a specific cost as everyone else is facing this rising price pressure?
Yeah, look, I think the big unlock for us is historically we've been change management agents. That's how we've actually created deals and created returns. Our entire history over the last 25 years is making companies better in change management. And when we saw AI come out, we addressed it from our lens, which is let's create a factory, let's create best practices, let's help people deploy it, let's create these cheap, fast tokens that are coming from VC2. And we've always approached it from an operational lens, and that does give us an edge, right? All these other folks are now running and trying to use deploy codes and trying to catch up. And the reality is the world is moving fast enough where we're seeing it come towards us.
That's interesting. So those kind of deploy co-models, do you think that's too slow itself, that that's not really a successful one?
Look, the reality is, like, if you start a services company, the services company is going to want to generate revenue, and it generates revenue by charging your companies a lot of money, right? Like, in our business, we're making our businesses successful and our portfolio successful, not by making a third-party company successful, right? Our goal is go in and actually have access to the cheapest, and fast is a keyword here, fastest tokens, fastest inference, so we can go capture market share versus our competitors.
So one of the things Robert has also been really outspoken on is just how much this changes the workforce itself. I believe it was at Super Turn last year that there were audible gasps in the audience when he said 60% of the people in the audience will be looking for a job by this point next year. You see on the ground what happens when you truly agentify a company. He had made the comment, you've already converted 54 of your 93 companies to actively run on AI agents. When that happens, what is the typical percentage of real humans that get taken out of the system?
Look, the reality is like the actual job changes, right? When these agents come into play, either you're using AI, and I would argue half that room doesn't even use AI today. By next year, maybe all of them will, but most of them don't use agents.
You think it's half that room doesn't use AI?
The reality is, I don't know if people, today the use case that people use are chatbots and generic search.
True.
Are they using AI to actually automate a workflow? It's quite complex to actually use it to go do your day job, right? And I think what Robert was saying is half this room is going to be using agents to automate a bunch of what they're doing. Maybe they do something more higher value, and that's the goal. I'm not a big believer that knowledge workers are going away, but I am a believer that the work of knowledge is going to change. You're no longer just going to be an input-output into a machine. You're going to do real value work, and agents are going to work for you.
Do you think, though, so the rest of the world will face these cost pressures, right? It's a second wave of disruption coming as the cost of compute goes out. Do you think companies are going to have to make real decisions? Because of how much I'm spending on compute, I got to let go of people. And that's the only option I face.
There's two things that are going to happen. One, the infrastructure build-out is geopolitical, meaning we have borders to where intelligence is being built out. The first time around, we were able to build the internet, and you could use compute from China, you could use it from wherever. Now it's actually, you have to use it geopolitically where you are. So that's what's driving the cost of compute. But the hack on that is if you're able to access high-speed, fast tokens, you can go win bigger market share. And that's why we did VC2. We're building VC2 inference centers in existing locations, using existing power in existing buildings, where there's no actual rezoning or any of that stuff. So our ability to go capture a bunch of high-speed tokens quickly will give our customers an outsized right to win.
Well, so it's not only private equity and private capital broadly that is trying to figure this out. It's just corporate America.
It's corporate America.
So in that, you've had some interesting exits in an industry that has struggled for exits. One, notably, a couple months ago to United Health.
Yeah.
How much are corporates turning to you and saying, what solutions do you have in your portfolio that will help us make the leap that you're making?
The reality for corporations is that they're waking up to a world in which they now need to be AI native as well, right? The thing that the healthcare providers, insurance companies, banks, what they've figured out is if we don't adopt AI, we may not have a right to win over a 20-year period. So what are they doing? They're acquiring assets that have AI in them and deploying them internally. So actually I think what you're going to see is non-tech companies increasingly buying software, AI, agentic businesses to help them transform. And that's what happened last time around. So last time we went from on-premise to SaaS, and a bunch of these cloud businesses got built. You saw a bunch of strategics jump in and buy cloud businesses so it becomes more cloud.
Just with that, how have valuations changed? Because software as a whole obviously took a hit in the SaaS apocalypse. If it's an agentic AI software company, are we still commanding like 20 plus still?
It's massive. It's a massive difference. The first time you saw it was 2 times revenue for on-prem. It was 6 to 7 for SaaS. What you're seeing on the agentic side is 15, 20, 25 times. It's a massive multiple. The biggest thing is we've uncapped our ability to generate revenue now, right? So historically, people don't realize that all of our revenue was capped by the number of knowledge workers. It was per seat. And now we have all these agents running around automating workflow, and they can be uncapped. So as long as you're doing something that's providing productivity, and that's the key, right? Like you see the messages coming out from the big CEOs. What do the tokens cost? How are you using them? What's the productivity? We can show you the productivity of our software, and we can tell you, hey, we can serve you at VC2 through a higher speed, lower cost token. Businesses are, oh, that's going to help me adopt.
Monty, thank you so much. Really appreciate your time this morning. It's been so interesting. Bonnie, with that, I'll send it back to you. That is Monty Soroya, the co-head of the flagship fund at Vista and a senior managing director.
And Bloomberg's Danny Berger in Berlin. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Here's your picture for your trading day. Futures pointed higher even after the Oracle disappointment. Plenty of voices out there saying all the drivers are still in this market. That's it for Bloomberg Brief.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
There are a lot of non-fundamental factors that are going to interfere with markets and cause volatility.
The market is finite, and we've already seen some volatile days.
It's a little white knuckle moment that we're going through in tech.
Liquidity is the most important factor for these markets to keep on rallying.
I think this year we have the chance that we beat earnings nicely.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, tech stocks bounce. Equities looking for a firmer footing going into the SpaceX IPO. As higher than expected CapEx at Oracle is spooking some investors, OpenAI is reportedly considering drastic price cuts in a renewed push to take on Anthropic.
There are two sides of a similar story. Both of these indicate that the pace of spending is increasing disproportionately, and the story with OpenAI shows who's going to pay for this, because ultimately customers are pushing back. You saw this with Uber cutting back some of their token usage as a result of just really high costs. Is this the death knell, right? I mean, how can a place like OpenAI end up financing the incredible CapEx expenditures that the likes of Oracle just keep accelerating without the revenues from higher fees?
Just frame this moment. It's an important moment. We're questioning both the price of the product and the cost of the build-out simultaneously. That's a tension that we've got to resolve, and pretty quickly. And think about the pushback we've seen so far in just the last week. Meta and the FT considering raising equity capital. Stock market pushes back. Supermicro yesterday looking to raise $7 billion in equity. Stock gets absolutely hammered. Oracle spending higher than expected. Pushback again this morning. That pushback is building.
You've been asking, and we've all been discussing, when would the capital markets start to say, hold on one second, are we seeing the beginning of that? And this is really what people have to start asking ahead of all of these huge IPOs, OpenAI among them, as they cut prices and potentially margins. The key issue is that the spending is accelerating, and Oracle just highlights that. $20 billion more in CapEx that they're expected to do for this foreseeable future. Goldman Sachs coming out with a report saying that CapEx spending probably is going to equal something like $1.4 trillion next year versus less than $1 trillion. All of this coming with markets just reaching this indigestion point, and you just start to wonder how much this will curb some of that AI enthusiasm.
Because it's so big so quickly, what the market needs to digest. But when it comes to OpenAI, it's like they're chasing those enterprise customers that Anthropic already has. So they really almost have no choice if they want to keep up with where Anthropic is. You know what Anthropic is saying? I love this part because I focus on policy. It's saying the U.S. government and Washington need to start regulating better, and we might have to have some more policies in place and guardrails in place. Lisa's shaking her hands. I know, because it's the CEOs talking about what Washington should be doing, and it probably won't.
No, it's because it's saying everybody else, you guys can freeze, we're ahead, let's just stop the clock. At a certain point, if it's self-serving.
I'm always skeptical of companies asking for the regulators to step in, right?
For the others.
Come on. Let's talk about crude as well. Brent and WTI. This is the scene right now in the commodity market. Brent at 92, down 1% on the session. WTI still trading in the 80s. Even though the U.S. and Iran have been traded strikes.
They have these strikes. The president says he's going to continue if Iran refuses to come to this peace deal. Remember, I spoke to the president. He said 2 or 3 days there'd be a peace deal. Well, now we're back to hostilities, kinetic warfare right now. But potentially this could push Iran to the negotiating table. The president also put out a truth yesterday saying more barrels are getting to the market. That's an interesting story, and it'll be good to put some numbers on that.
Let's talk about the morning ahead of us. Later this morning, 8:15 Eastern Time, an ECB interest rate decision. Let me remind you of some dates. July 2008, April 2011, July 2011. Can you add June 2026 to that list of policy mistakes? The ECB hiked into GFC. The ECB hiked into the Eurozone debt crisis not once, but twice.
And ultimately, the market is pricing in something similar this time. The idea not just of a rate hike today by the European Central Bank, but a rate hiking cycle. We now have 2 full rate hikes priced in both today and then again in September, even though the growth outlook is souring, even though you don't see the same momentum in the European region that you do in the United States. Does this require a rethink of the single mandate central bank? Or is this just sort of the destination and the path of travel? How does the currency respond? Do they reward rate hikes, or do they reward the potential growth that comes from perhaps being less restrictive?
I think a lot of people in FX would worry that you'd punish the decision. not rewarded. Equity futures this morning positive by 0.75% on the S&P 500. Coming up this hour, we'll catch up with Julian Emmanuel of Evercore as Wall Street awaits the mega SpaceX IPO. Maher Yahya of the Carnegie Endowment of International Peace as the US carries out another round of strikes on Iran. And Angelo Zeno of CFRA as Oracle falls on plans for a massive capex push. We begin this hour with stocks recovering as SpaceX is putting together its historic public offering. Julian Emmanuel of Evercore suggesting the bull market has room to run, writing the SpaceX IPO is not an endpoint like the AOL Time Warner merger in Y2K. It's a data point on the way to higher prices. Julian joins us now for more. Julian, good morning.
Good morning.
It's hard for people to internalise, given the move we've seen off the low, that maybe the FOMO and the melt-up is ahead of us and not behind us. Do you think it's ahead of us?
It has begun, but actually, if you look at the last 5 days and the sort of buttoning up of sentiment and the caution that we've seen, again, in these last 5 days, I would say that the true FOMO, the wild-eyed, buy at any cost, whatever it is, I'll take it, is still potentially ahead of us. But if you think about it, though, the market is really digesting all of this pretty well. Think about the headlines that we're dealing with this morning. We had strikes overnight. We've got the premier AI company talking about price wars. We've got the marquee software company that is dealing with capex issues. All of that negative, and yet the stock market is incredibly resilient in front of really a landmark moment.
Well, let's sit on the third point, the signs of fragility, the pushback to Oracle, the pushback to Supermicro, the pushback to Meta. That's adding up, is it not?
Look, and I think we've said this in past, it's become a market where it's not actually even billions anymore, it's trillions that we're talking about. And yeah, 85 billion here, 75 billion there. It really does add up, but it also speaks to the incredible liquidity conditions that we're seeing. And in fact, and part of the reason that despite the geopolitical disturbances of the last several months is that the economy came into this incredibly resilient. And what did we find out last Friday? The labor market is a lot stronger than we could have ever imagined it would be.
Do bond and stock investors want to keep paying for something that customers don't even want to pay for? I mean, ultimately, isn't that the message coming from OpenAI? That people don't want to pay the prices that are being charged, even though that's what's being financed essentially in bond and stock markets.
So there's certainly a pushback to there's a pushback to every aspect of inflation in our environment right now, whether it's, token prices or cattle prices or gasoline prices. But I think when we look at how AI has progressed over these last several years, the Jevons paradox seems to continue to be operative. If token prices come down, which there's every indication that they will, you're probably going to get increased usage.
Is it telling to you that we've seen this bout of volatility really come along with yields being the highest relative to the earnings yield in the S&P 500, a relative metric going back to 2003? I mean, essentially, bonds are offering a more attractive proposition as yields go up and as some of the valuations go up, and you see this relationship kind of become a little bit more even.
Well, and actually, it's a rational response, right? If you look at classical finance theory, the point is long duration assets, high value assets, like technology stocks, should be more sensitive to higher yields. And that's what we're seeing. But ultimately, when you look at past episodes of structural bull markets like the one that we're in, compared to, let's say, the internet in the late 1990s, or frankly, Japan in the late 1980s, you had a tolerance for higher yields as long as the economy was continuing to move forward, and confidence, which has been lacking on the consumer side, even though there's been spend, remains stalwart.
Can we talk about the consumer side for a second? The Washington Post has a story out this morning that oil executives are going to the White House and saying they're concerned that gas prices are going to rise. What happens when we hit $5 a gallon?
That for us is white knuckle time. We have made it clear that the work that we did around prior oil price spikes when the war started in March really showed that the window given the strength that we came into at the war in terms of the economy and the strength that's remained, you've got about sort of 4 months and literally $4.50 or triple-digit WTI. The strains will start to show in the economy and likely the stock market, which again is why I think there's such a sense of urgency coming from Washington to figure out how to solve this.
No sense of urgency in the oil market right now, though, right? It's pretty impressive, isn't it? 92 on Brent, 89 on WTI.
It is quite impressive, and you know, I think perhaps speaks to the president's statement yesterday that we're able to get barrels out of the Strait one way or the another.
Crude down this morning, equities higher, up by 0.75%. Julian Emmanuel of Evercore will be sticking with us this morning. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. Thank you. Oracle shares trading lower in the pre-market as its data center costs overshadow its AI growth. The company reporting capital expenses that came in higher than Wall Street estimates. Shares are up nearly 30% over the past 2 months. The European Central Bank set to raise interest rates for the first time since 2023 due to rising inflation caused by the Iran war. Economists are expecting the central bank to hike by 1/4 point. Surveillance will have complete coverage of the ECB rate decision at 8:15 Eastern. Anthropic's CEO showing support for government regulation of AI. Dario Amodei writing in an essay, the government should have the power to block AI developers from deploying new models if they present certain risks. Amodei saying there should be mandatory testing by third parties. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Quick programming note for you. Happening right now, the Bloomberg editor-in-chief, John Micklethwaite, sitting down with the Andros CEO, Brian Schimpf, at the Founders Forum about the role AI plays in defense and military technology. Any headlines we get from that, we'll bring them to you. Up next on the program, we'll be talking about the latest in the Middle East. Escalating pressure on Iran.
We're going to be attacking them very hard. We'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers.
Joining us in just a moment, Maha Yahya of the Carnegie Endowment for International Peace, plus more with Julian Emmanuel of Evercore. Live from New York City with the mug in prime position. From New York City.
And my outfit.
You're watching Bloomberg TV.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Hey, 8:30 Eastern Time, more data for you. We get some jobless claims a little bit later this morning. Heading into this at 8:15, an ECB rate decision. 30 minutes later, a news conference with Christine Lagarde. I mentioned the hawkish policy mistakes that this ECB, this institution, has made previously in 2008 and 2011. Go back to the 08 decision in early July. That hike came on the same day that oil peaked, because believe it or not, back then they were also concerned and freaking out about crude. It was also the same month that inflation peaked. The ECB made a series of mistakes here, never mind that was going into the GFC, and that they repeated the act in 2011, not once but twice. These are the questions being asked in Europe right now about this institution going into this hike that's widely expected.
And it's not just going to likely be a hike, it'll be a rate hiking cycle. People are talking about the potential that oil prices are peaking, even though maybe we haven't gotten a resolution yet, and that inflation will likely come down in the region. Again, how much history can rhyme.
Ollie Crook on the ground in Frankfurt. We'll catch up with Ollie a little bit later this morning. Equity futures on the S&P elevated, bouncing back from 2 days of losses, a two-day losing streak, the longest of the month so far, up by 0.75% on the Nasdaq. We're up by 1.2. In the bond market, we're behaving just a bit. 2's around 412, 10's around 450 still. That runaway move at the back end of the curve has settled down as well.
Yeah, even yesterday we saw a 10-year note auction that went pretty well. It actually performed in the after hours. Today we get more. And do we get the same kind of reception is going to be key, especially for a 20-year auction that typically is a little bit hairy. Ultimately, is this a way of people saying suddenly bonds are looking a little bit better as the proposition for AI is looking maybe a little bit more skeptical under the eyes of all of this CapEx spend?
Might be in the hands of the commodity market, at least for now. Crude, Brent, WTI pulling back just a bit. We're down 1%, even with this taking place in the Middle East. Under surveillance this morning, escalating pressure on Iran.
We're going to be attacking them very hard. We hit them hard yesterday, and we're going to hit them again hard today. We'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers. All they have to do is they have to start signing a paper. It's fully negotiated.
So here's the latest this morning. The president vowing more attacks on Iran if it does not agree to an interim peace deal. The president telling Fox News Iranian officials called him directly last night, asking him to stop the bombing. Bloomberg's Tyler Kendall has the latest. Good morning, Tyler.
Hey, John, good morning. Well, the White House is framing this latest escalation as a way to force Iranian concessions at the negotiating table after President Trump accused Iran of dragging its feet to make a deal. Now, we should say that Iranian state media did deny that Iranian leadership held a direct call with President Trump yesterday after U.S. forces launched strikes against dozens of military targets. We saw Iran retaliate too, launching strikes against multiple U.S. bases across Kuwait, Bahrain, and Jordan in what is now the worst flare-up in fighting since the ceasefire was announced back in April. Iran's foreign ministry is saying that this latest wave of strikes means that the ceasefire is, quote, effectively meaningless. But the message from the U.S. is that President Trump is still committed and thinks that a diplomatic deal can get done. The issue is we know that there are just still so many sticking points that has been fueling this mounting frustration from the White House, mainly including the Strait of Hormuz. As you mentioned earlier on the program, President Trump yesterday said that so far the U.S. has helped to guide 200 ships carrying 100 million barrels of oil, he says, through the strait in recent weeks. As CENTCOM New this morning is denying Iranian state media reporting that the IRGC is trying to tighten its grip over the waterway and has stopped all commercial traffic in the wake of the U.S. strikes. This is definitely, John, raising the alarm, of course, across the region as we start to see some more regional partners enter the conversation. Iran has confirmed that a Qatari delegation landed there yesterday in a bid to help the peace process get back on track.
Tyler Kendall in Washington. More from Tyler in the next hour. Tyler, thank you. Let's build on this conversation. Maha Yaha of the Carnegie Endowment for International Peace writing the following. Neither threats nor an escalating military confrontation will sway Iran at this point. The regime has adjusted and is doubling down even further. Maha joins us now for more. Maha, welcome to the program. We're losing trust by the day. How can we negotiate and find a deal with a lack of trust?
Very difficult. Good morning first. Thank you for having me. But it's very difficult to find a diplomatic outcome that is satisfying to everyone with the ongoing military confrontation. I think the ongoing military confrontation, the escalation in military targeting is going to make a diplomatic outcome less likely rather than more likely. The lack of trust between the two parties was very much there even prior to the US-Israeli attacks against Iran earlier this year. And now they've deepened much further. Iran views the US as an unreliable partner and one that has pulled out of a previous agreement, the JCPOA, that they cannot trust what the United States is saying. And the United States seems to be unwilling to negotiate or to acquiesce to some of Iran's if you want, non-negotiable from its end demands. So it makes it very difficult. Basically, the bottom line of what the US is offering is still not meeting, or the best of what the US is offering is still not meeting the bare minimum of what Iran wants. And that makes the gap only grow wider in many cases.
Maha, Iran's economy is, though, facing a severe crisis. At one point, will that hit the top layer of the regime and the individuals that are in charge with making decisions?
It's not clear, to be honest. It's very clear that people have adjusted. The regime has found ways. I mean, they were already preparing for this since the last round, which was I think it was April 2025, when Israel and Iran had the 12-day war. So Iran was already preparing for the eventuality of a conflict, a direct conflict that would involve the United States. It's not clear at what moment this will hit and whether it will begin impacting them. At this point, with the direct attacks by the US and Israel on Iranian infrastructure, we heard this morning that water facilities have been targeted with precision missiles, which actually could constitute also a war crime. The Iranian people are rallying around their country. I wouldn't say their regime, but their country. They see it as an external attack, and therefore the potential of people taking to the streets, I mean, that's the way it would start hitting. If people start protesting, taking to the streets, etc., is not going to happen.
Maha, do you think this goes through the midterms? Does the regime hold on until through November?
They most likely can hold on through till November, whereas President Trump wants this over sooner rather than later. Everything we've been hearing is they were on a cusp, apparently, of a very viable deal prior to the launch of this war. I'm speaking the first round, not this current round. With the assassination of Khamenei, with the assassination of Laranjani and other key members, the regime has shifted. It's reshuffled the decision-making processes. All indications are that Mujtaba Khamenei is holding the levers of power, and they've become a lot more hawkish than the previous regime, if you like. So they can hold on till November. I think they're counting on their ability to hold on till November and making it very difficult for President Trump, but also for ordinary Americans as inflation mounts, as the price of the barrel of oil increases, etc.
November. Maha, thank you. No one's thinking about November here right now. Not in this oil market. Maha Yaha there of the Carnegie Endowment for International Peace. November. Check this out from the Washington Post. Anne-Marie was talking about it moments ago. Oil and gas executives have warned the White House that gasoline prices could surge in the coming months as fuel inventories fall to critical lows. Julian Emanuel of Evercore is still with us. Julian, that's the tension right now. Oil market's telling you one thing, not much is happening because we're drawing down inventories so quickly and the executives are still on edge. And if you're in the equity market, you've heard it a million times over the last 3 months, you've started ignoring it. When do you have to start paying attention again?
I think really, again, we have sort of targeted the 4th of July as kind of a seminal date in things that are happening. If we are taking the same approach that we're talking about right now, in an unmoving, hardening regime in Iran, and Washington, who really doesn't see how the end game evolves, that's likely going to further send the price of oil higher. And in our mind, that's the biggest threat, frankly, to the entirety of this bull market. It isn't the capital raising. It isn't the questions around CapEx. It's whether the economy can weather a persistent oil price shock. So far, it has, but...
There are two ways to look at this. On one hand, that more barrels are getting through the Strait of Hormuz than people realize, and that actually there is a leakage here that is easing some of the supply constraints. The second is that no one wants to trade oil because you're just going to get blown out. It is a very difficult move. Which is it?
It's both. It's absolutely
not happened, Bramo, this morning.
Well, no. Think about it. A couple, when the president first said that there were going to be further attacks, the price of oil went from down $3 to down $2.50, and I mean, it was like there was no pulse whatsoever.
There is some energy getting through. We've seen some of the headlines coming through. In fact, the president addressed that just yesterday.
The president spoke about it, but then you look at what ADNOC is getting through. Kuwait is starting to send some more barrels to China. I saw some work being done in Iraq as well, trying to get oil through. But it's not where we were pre-crisis. And the issue, of course, is going to be this race against time where inventories are, because they are very low right now.
Gillian, it's good to see you. It's great to catch up. This story in the Middle East right now is ratings death. Like, if you want ratings right now, it's just surround yourself with rockets and sit down at the NASDAQ.
New York Knicks.
Right?
New York Knicks. That's the rating.
Then put on a Knicks jersey, right?
What do you say about Iran? Headline on, headline off. Let's just talk about the Knicks.
It's a political story. The president went.
It's a lucky charm around the studio.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Futures bounced this morning following 2 days of losses, up by 0.75% on the S&P, on the Nasdaq up by 1%, on the Russell up by 1.3%. Plenty of reasons out there right now for this stock market to still be down, but here's your bounce going into that mega IPO tomorrow. In the bond market, we look like this: 2s, 10s and 30s. The focus on the ECB this week, on the Fed next week. It is crazy to think that this ECB, with the economy they have in the Eurozone right now, is hiking interest rates because of an energy shock and inflation, when we've seen that act not once but twice in 2008 and 2011, and it didn't end well at all.
And right now I'm looking at the economic projections for the Euro region, and we're looking at 1.2% growth in GDP so far for this year, 1.5% next year, 1.6% the following year, with CPI expected to come down to 2% by 2028, and they are going to be hiking into that. And this is the reason why people are saying, wait a second, hold on. This is going to be a policy error. And yet, if you are a single mandate central bank, how do they get ahead of inflation that is creeping higher without taking a move? And that is part of the issue of being a single mandate central bank.
That decision at 8:15 Eastern Time. 30 minutes later, news conference with Christine Lagarde, the ECB president. Let's finish on crude. Brent and WTI. On Monday, session high, 98. Since Monday, things have got worse, not better. And yet Brent crude is at 92. And WTI is still in the 80s, and we're down 1% on the session.
It's kind of crazy to look at this board and see WTI below $90 a barrel. As you see in the Washington Post, oil executives are going to the White House and saying we are concerned. There is reason to be concerned given where we are in inventory levels. I think the market is just saying maybe we can live with this. Even if the strait is closed longer, the president says more crude's getting out. And we are also seeing Kuwait, ADNOC, Iraq, they're able to get more barrels out. The issue is, of course, peak driving season. This can get tenuous if these strikes continue.
No one believes the headlines. I mean, say whatever you want. This is happening. That's happening. People are like, la, la, la. Tell me when it's over, or tell me when it accelerates. Then I can trade it. Otherwise, I'm going to get blown out if I try to take any side in this.
I believe in price, particularly in commodity markets, and particularly in the physical market, because you have to clear demand and supply at spot. And clearly, we're getting the supply. Now, we're getting it from certain places like inventories, and it's coming down really, really quickly. So you can stabilize price for now. And this is what the energy executives are worried about. Once you get to critical levels, you get this non-linear move in the other direction. It's really dramatic and fast. It's like the pandemic in reverse. That's the story here. So don't get too comfortable with where things are at right now, because things can change really quickly.
I would agree with you. This is a point that Jeff Curry has been making. Halima Croft put out a great note yesterday talking about how the price corrective mechanism just isn't working because people aren't worried enough, and you are getting about 2 weeks, 3 weeks away from tank bottoms, and at that point you will have that non-linear move. But the music's still going. So keep on dancing, and the Knicks just, ended up winning.
Keep winning, right?
Yeah.
In 5?
Yeah, I think so.
Right, okay, good.
I hope so.
Then we're moving
over
on.
there. We got to wrap
Then we
it
sort of
up.
like focus on the World Cup. Have you done your bracket?
You've not done a bracket yet.
I've done my World Cup
really?
bracket. Yeah, I might make some tweaks, but I've done it.
AC Milan at the Cup. I know they're not even in.
Not in the World Cup.
I know.
Not a country. Not a country,
okay.
Bramo.
But you know what she meant. And it's a sore subject that Italy is not in this World Cup. And it's sad. It's like pathetic.
BRKT on the Bloomberg Terminal, if you'd like to do your bracket, Bramo.
Who do you have winning?
I have a Brazilian at home, so I have Brazil winning.
Right.
Whether I believe Brazil wins or not.
Happy wife, happy life.
Precisely. So they need to win.
This is a real passionate bracket.
3 hours away from the cash open. Some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Despite another quarter of blistering AI growth, we are seeing Oracle shares falling 7.3% in the pre-market after the company said it will spend more than projected to build out AI data centers. And that came as Oracle left its sales outlook largely unchanged, leaving investors wondering where the payoff is from all that additional spending. Moving on to the chip stocks, they are staging a comeback today with NVIDIA up 1.2%. Some of that having to do with Oracle's spending plans helping to reinforce the demand story. But you also had a note out from Morgan Stanley on the memory names, so Micron and SanDisk, saying that a correction was necessary after a massive run and that they do not see the memory cycle over for now. And we end on JD.com and Alibaba, the Chinese e-commerce giants, both are weaker in the pre-market after CCTV reported that Chinese regulators scolded the companies publicly for what they're calling misleading promotions ahead of a big holiday shopping day next week. This is just the latest move by Chinese regulators to crack down on race to the bottom discounting in the sector. John.
Yahara, thank you. Thanks for the update. On our radar this morning, Oracle. Falling in the pre-market, the company reporting larger than expected capex driven by increased spending on data centers. Those costs overshadowing Oracle's AI growth. That stock is down by 7%. Elsewhere, Democratic Senator Elizabeth Warren asking the SEC to delay the SpaceX IPO. Warren citing concerns over the company's historic $1.8 trillion valuation and Elon Musk's, quote, uniquely unchecked power in the company. And finally, OpenAI considering drastic price cuts in an effort to win customers from rival Anthropic. The Wall Street Journal reporting this morning the company could reduce the cost of so-called tokens in anticipation of a similar move from Anthropic.
This is getting a lot of attention because it's raising the ultimate question of, is AI getting to be too expensive, at least the most extreme and cutting edge models for rank and file companies? In other words, is the target audience maybe not as big, the addressable market not as big as some people have been projecting as they increase their capex dramatically? Citadel put out a great note talking about this. Are we going to see a bifurcation in the AI sphere where suddenly the frontier AI models are going to go to a couple of well-heeled customers, and the rest of the universe is going to look for commoditized, cheaper versions to execute basic things like picking your bracket for you? So ultimately, we're going to see how this shakes out, but it's a warning shot at a time where some people are getting worried about costs.
That's good. I should maybe use Claude to pick my bracket. Also in this Wall Street Journal story, they said the move would be in anticipation of similar cuts the company expects at Anthropic. So at the same time these companies are going to market, they're going to be having to cut prices.
We're cutting prices, and at the same time, we are pushing back against the price of the build-out. Something doesn't work there, Lisa. Something doesn't work.
Which is why Oracle shares are down more than 10% this morning, or now they're down 7%. They were down more than 10% earlier this morning. At the same time, overall, the Nasdaq's rallying. Overall, people are flooding back to this market. There's just a break in the narrative. Is this an OpenAI story, or is this a broader story for AI? And that, I think, is really the key question.
Let's spend some time on that. Oracle shares this morning sliding as high spending is spooking investors. As I say, that stock is down by more than 7% this morning. Angela Zeno of CFRA maintaining a hold rating on the stock and a 12-month price target of 194, writing, we expect capex to remain aggressive in the foreseeable future, which is more burdensome to Oracle investors compared to better capitalized hyperscalers. Angela joins us now for more. Angela, good morning and good to see you. Is this pushback going to change the strategy of the company?
Yeah, John, thanks for having me. You know, I think when you look at the Oracle strategy here and you kind of look at the metrics overall, I mean, there were a lot of good things that happened, right? I mean, most importantly, I'd say that RPO number did increase. It does appear like that increase in RPO is a bit of a diversification also away from OpenAI. That's a good thing to see. But also importantly, they didn't necessarily boost their forward expectations in terms of revenue, right? Which to me might also tell me that maybe some of those OpenAI commitments might be being pushed out further down the line. But that being said, I mean, you look at what's happening right now, you look at the GPU utilization rates within Oracle's data centers, they continue to be high 90s. Those metrics are extremely, they're important in the sense that, hey, listen, everybody's buying their capacity, so they need to continue to spend aggressively. So I think that it justifies the higher spending. But that being said, I mean, and you look at the revenue run rate right now, you're looking 20% plus, this quarter. Expectations in the following year north of 30%, and we think north of 40% the following year thereafter. But maybe to the point you guys had just referenced, one is the demand going to be there as we kind of look ahead. But right now, everything is telling you that it is going to be there.
Well, Angelo, to that point, there are exponential increases in capex. At the same time that customers are starting to push back on the margins. And maybe these are anecdotal stories, but do you think that it's a warning shot that OpenAI is thinking of cutting prices at a time when capex bills are just going to the moon?
It's a warning sign in the sense that, hey, listen, I mean, if demand was as strong as it was, right? I mean, you wouldn't necessarily need to cut prices. But in the same respect, I mean, you kind of think about the longevity of AI and how this kind of works out over time. I mean, prices do need to come down. Adoption rates need to continue to increase, and you kind of get this this circular pattern in many respects, where over time the greater adoption rates will continue to fill those data centers, and as a result, you need to continue to aggressively spend. And as you get that volume continuing to tick up, that hopefully does justify the investments. So a lot of moving parts, but as long, again, I think right now the place you want to be is on the chip side of things, because it doesn't seem like there's any end as far as some of these, some of the spending goes. And when you kind of look at some of these IPOs that are going to come out here over the next couple of months, I mean, clearly all of those proceeds are going to be reinvested right into that AI infrastructure build, right? So again, the place to be continues to be semis.
Angelo, it's not whether AI is real and whether it is truly transformative. It's what price investors are willing to pay for it and how much money they're willing to fork over, and frankly, how much cash is still, quote, on the sidelines, as people have been saying for the past 30 years. And they keep saying, do you think we're reaching the limits in terms of just valuations, given the fact that people believe in the story, yes, but they're getting a little skeptical of how much they're going to be on the hook for ultimately what could be something not only of a commodity, but just utility?
Yeah, I mean, I think you've got a point there. I mean, when we think about, you kind of look at just the token generation that we've seen here over the last couple of months, right? I mean, clearly, to your point, AI is real. Demand is exploding. Enterprise companies are, blowing out their budgets, in a short period of time, and they continue to increase their AI budgets. So, from that trajectory, everything continues to be good, and as a result, you continue to justify that higher spend as we kind of look ahead. To the extent of how this all plays out, I think in many respects, I mean, if you're a hyperscaler and you're generating the tens of billions of dollars that you are in cash flow, you're going to continue to blow out, your cash flow to continue to invest in AI in many respects, because you've got all these new emerging entrants out there that is really kind of taking business that in some respects should be yours, whether they're neoclouds, whether they're new IPOs that are coming out. That's business that's potentially yours. So big tech in many respects does have a big problem in the sense that they need to continue to aggressively spend no matter the circumstance, as well as the fact that you've got new competitive pressures that are entering the market. So you've got a number of kind of moving parts there as well.
Angelo, how far behind is OpenAI from Anthropic when it comes to the enterprise customer base?
I mean, it's tough, right? It's tough to really say. I mean, we'll see, I guess, in the coming weeks, hopefully when we see some of these S1 filings out there. I would say, listen, when you look at OpenAI, clearly they've been full throttle in terms of on the enterprise side of things. So they're clearly a step ahead. Based on anyone you'll kind of talk to, I mean, clearly most enterprises will continue to favor some of the applications that OpenAI has rolled out, and not to mention what they've done across the stack, going from those LLMs to the enterprise applications that they've rolled out, I think is significantly superior to what we've seen from OpenAI thus far. OpenAI realizes they do need to catch up in many respects. Again, to what magnitude they can cut that down, we'll see. But clearly the focus on OpenAI up until a couple of months ago has been equally or maybe a little bit more tilted towards the consumer side of things. We're now realizing as far as monetization of AI, maybe they should have tilted a little bit more to the extent that Anthropic has.
So, Angelo, what do you make of their push, their openness, if you will, to have a conversation about giving up equity to the US government? Is that out of the goodness of their heart to share the profit, or is this about sharing the burden?
It's probably sharing the burden a little bit, right? I also think, potentially there is an opportunity here for OpenAI to get a little bit more entrenched and connected with the U.S. government. I mean, we'll see what the opportunities are going to be out there as far as sovereign AI initiatives goes, right? But as far as OpenAI is concerned, I think kind of developing, a stronger connection with the U.S. government is probably a good thing for them on a number of fronts, whether it be kind of sharing some of the obligations out there, or whether it be potentially finding new revenue opportunities that maybe the U.S. government can help them with.
Angelo, appreciate it. Thank you, sir. Angelo Zeno there of CFRA. Might be good for OpenAI. Is it good for the US government?
It's good for us, right? I mean, ultimately, if they're going to be sharing the burden at a certain point, great, it would be good for them. Is that really what we want to see?
Yeah, NASDAQ futures this morning up by more than 1%. No one really wants to say it, do they? They're kind of hesitant. They know what they think, but they don't want to say it right now.
Nobody wants to come out and say that OpenAI is overvalued and perhaps is the story that is a bit of the Trojan horse. And people have been saying that anecdotally for about a year now. Suddenly, are we seeing the beginnings of the cracking in that
Speak
story?
your mind. Let's get you an update on news elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The U.S. carrying out a second straight day of strikes on Iran. The attack coming after President Donald Trump accused the country of dragging out peace talks. Trump telling Fox News the U.S. will hit Iran again today if it doesn't sign a deal. Oil and gas executives telling the Trump administration gas prices could spike in the coming months. The Washington Post reporting industry officials are cautioning the White House inventories could be gone within weeks as summer travel season is in full swing. In sports, the Knicks are one win away from their first NBA championship in more than 50 years. New York making an historic comeback to beat the San Antonio Spurs 107-106 with 1.2 seconds left in the game. Game 5 is on Saturday in Texas. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. I know we spent tons of time talking about the price of entry, the get-in price to go to some of these games. What about the value of sports content? In this world of AI that we're all talking about, the value of this kind of content that's only going up after things like this.
People want to be part of that excitement.
Right.
Also, you see all the celebrity roles of all the people who are there, and you see the sort of
Mike
situation.
Bloomberg got to sit next to Timothy.
Timothy? Is that?
I noticed the same thing. And Kylie.
And Kylie. Pretty cool.
The point being that this kind of raw joy and excitement and uncertainty and humanity is going to be in premium.
How many mornings have I sat here and said, bad product?
100%. I was going to say, like,
bad
all of a sudden.
Product.
Yeah, really? You still think so?
And this is the dream final, right? To turn around what otherwise has been bad product.
Is that your line now?
I think they want to extend it. Let's just put it that way.
Stop.
I think they'd like it to go beyond Game 5.
No. You think that this is rigged?
Not what I'm suggesting.
But you think that who's they?
The NBA. I'm suggesting they would like it to go further. By what means? That is up to you. You used the word rigged. I didn't use the word rigged.
All right. Let's hope they win.
That's not what I said.
That's what you implied.
It's not what I said.
Good juju only. Knicks in 5.
Up next on the program, central banks in a balancing act.
We're seeing distinct upside pressures on inflation. And central banks around the world are debating about what to do about it.
Ian Steely of JP Morgan joins us next.
Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Got a message from a Bloomberg subscriber. The absolute worst nightmare for brides getting married on Saturday in the New York area with the Knicks game taking place.
Maybe it's on purpose and they will wear exactly what Anne-Marie is wearing.
Maybe the brides will be watching a game too.
You think so? Yeah.
They could do orange and blue flowers. And also, as Trump would say, that's life.
Wedding planners everywhere rushing to buy orange and blue flowers.
Yeah, lean into the theme.
Yeah, it's true. Just change the date.
Swift to MSG, getting married there. You seen that rumour?
Yeah.
That's crazy. Don't think much of that.
A private wedding.
All that money, and that's pretty tacky, right?
What's by MSG?
Above Penn Station.
Above
how
a
you
train
need to think
station.
about
There you
it.
go.
And then you're kind
wedding
of like,
above a train
it's
station.
fine for the Knicks to win an MSG, but to get married above a
just
and
don't
New
get
Jersey
this.
Transit, no.
The stadium above a train station doesn't sit well with me either. But anyway, futures on the S&P, positive by 0.75%. We're bouncing back this morning by 1.2%. In the bond market, focused on the ECB this morning. An ECB rate decision just around the corner. Under surveillance this morning, central banks in a balancing act.
We're seeing distinct upside pressures on inflation. And central banks around the world are debating about what to do about it. Central banks are likely to be more aggressive, and you're not going to hear that transitory word uttered by a single central bank.
So here's the latest this morning. Global central banks walking a tightrope ahead of a pivotal rate decision, starting with the ECB this morning. Expected a hike for the first time since 23. In study of JP Morgan Asset Management writing, in line with market pricing, we expect a 25 basis point hike with further increases in September and next March already priced. Ian joins us now for more. Ian, good morning. Good to see you.
Morning.
Let's talk about these hikes. What are you expecting from Lagarde later this morning?
I think in a perfect situation, she's going to want to come out of this meeting with effectively the market where it is today. So they're going to hike rates, we know that. I think what the market's going to be focusing on very much so is the forecasts, because we're going to expect growth to be coming down, we expect inflation to be coming up. How much do they, how much do they move? And then, of course, the press conference. And does she try to steer away from effectively forward guidance? Does she say, look, we're data dependent, we're going to be continuing to watch the data? They don't know what's happening with the Strait in the next few weeks or so. So they're going to sit on their hands, say, we're done today, let's see what happens going forward. I think that's what she wants to come out with.
July 08, April 2011, July 2011, 3 bad decisions from this ECB. Does June 2026 get added to that list? Why is this different?
I think, so the ECB is a different situation to, say, the Fed or the Bank of England, because they've taken rates down to 2%. They've taken rates down to what they perceive to be neutral. You talk to the Fed, you talk to the Bank of England, they will tell you we're still mildly restrictive. You may or may not believe that, but that's what they'll say. The ECB, they're stuck neutral. So they have the ability to just effectively lever the rates up a little bit, because Lagarde said it at the end of March, the public needs to know what the reaction function is and needs to know that they're going to be able to react to it. Inflation's going up. They're a single mandate central bank that effectively fights inflation. I think 25 basis points isn't going to effectively be the end of the Eurozone as a whole. I think they just want to have that credibility in the system.
At this point, they've got the credibility. If you take a look at what the expectation is for inflation, it's expected to come down to 2% in the next 2 years, and then potentially below that for the European region. You're also looking at GDP that's decelerating, not accelerating. They have a very thin margin to work with. Why do you think that ultimately inflation could get embedded coming from a supply shock, given the way that the Euro region is set up?
I think they're going to come out of this, and I'm not sure inflation is going to come embedded. I think ultimately there will be more of an impact on growth later down the line. But what they're wanting to do is, to your point exactly, is to have that credibility, is to have the market continue to believe that they are an inflation-fighting central bank. You just look at what's gone on in Asia over the last few weeks or so. Central banks that were pausing or delaying what was effectively inevitable, they've had to effectively now play catch-up. And I think the ECB do not want to be in that position. So let's go early and hopefully not have to do too much, and then let's see what happens.
Would you rather be in European bonds right now than the U.S.?
Definitely.
Right now, do you think that the U.S. is losing that credibility?
No, I think actually the US has got a different situation going on, where actually you're seeing what looks like a re-acceleration in the labour market. You've got the AI trade over here, you've got the tech trade over here. We don't have that in Europe. I think
we
actually
don't have rate hikes either.
You don't, but you've got, well, you've got close to 50 basis points price versus Europe has got, 70 basis points price. There's not a huge difference now. There's been a big catch-up in the front end of the US relative to Europe over the last few weeks or so. I just think the US is a much better story. I think actually European front-end rates, I do think there's value to be had there. I don't think they're going to be hiking 3 times over the next year or so.
The US is a much better story. Does that make the US bond market a much worse story? How bearish are you on treasuries right now?
I think you're looking at the Treasury market where actually you'd argue more around fair value. And I think the starting point is so important. I was just looking this morning. So we're 35 basis points higher in the 10-year yield year to date. If you look at the US Ag, it's effectively flat. That yield cushion is so much different. For all the people that are concerned about fixed income, remembering 2022, it's just the starting point. It's so much different. The yield you've got, the carry you've got, the steepness of curves, the roll down, it all helps. So yes, you can have rates move a little bit higher, but actually you still have returns. And I say we're 35 basis points higher. We're kind of 4.5% or so on the 10-year. I could build you a global portfolio of bonds that yield you 6%. I think that's pretty attractive in this environment.
Quick yes or no, have you got the Fed hiking this year?
I think the Fed will do what they can to be on hold over the course of this year.
OK, Ian, good to see you. Thank you, sir. Ian Steady there of JP Morgan Asset Management. 450 on 10s, around 5% on 30s.
The idea that the U.S. doesn't have to hike rates, even though it has a much better economic projection, and yet is maintaining credibility, is the reason why people's heads, like mine, are tied up in knots.
Yeah. Kevin Walsh next week. Over to you. The new Fed chair in his first Fed meeting. Up next, we'll catch up with Francis Donald of RBC, Ed Mills of Raymond James, Ted Mortensen of Baird, Mike Park of BlackRock. The second hour of Bloomberg Surveillance just around the corner.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed, quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The safest thing the Federal Reserve can do politically and also economically, I think, is just to do nothing.
You do have this higher resting heart rate for inflation.
Now, most Fed officials, of course, are going to be fine leaving rates as they are.
Core inflation in the U.S. still looks like, it's on a trajectory that eventually should be okay for the Fed.
We need to see the Fed remove the easing bias and ultimately remove the insurance cut from last year.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action scores look like this. Bouncing back from a 2-day losing streak on the S&P. We're higher by 0.7%. On the Nasdaq, up by 1 full percentage point and change. In the bond market right now, check it out. Treasuries, 2s, 10s, and 30s. Yields lower by 2 basis points on 2s, down 3 on 10s. Still around 450 on a 10-year, with crude still depressed, even with fresh strikes in the Middle East. We're down by 1% on Brent. WTI with an 89 handle. Later this morning, data at 8:30 Eastern Time. Jobless claims. Before we get there, an ECB interest rate decision at 8:15, and 30 minutes later, a news conference with Christine Lagarde.
She has quite the job to do, given the fact that right now the market is baking in 70 basis points of rate hikes by the ECB for the rest of this year. This is a rate hiking cycle that's getting priced in, not just one and done. And it comes as inflation, yes, is elevated in the region, but growth is not. And they don't have the drivers, including the NICs, that the United States has to potentially generate some of the hopes and dreams that we see coming out of the stock market. Is this going to be a mistake? And ultimately, everyone in the U.S., I'm getting messages all morning, huge mistake. Idiotic. People in Europe, no, this is right to anchor inflation. So it's just, It's two different universes this morning.
PPI in America later this morning is expected to have a 6 handle. Jobless claims is expected to come at around 220. And we're having these fun and games in America talking about removing an easing bias. Now, I know I've talked about this a million times and sound like a broken record, but it's kind of crazy, isn't it? We're talking about removing an easing bias in America with data like that. And the ECB is talking about hiking not once, and everyone's waiting for the guidance to go twice and go 3 times.
Yeah, this is a reason why it's like two different markets that we're talking about on one hand. In Europe, they've got to anchor inflation expectations that, by the way, are fully anchored. If you take a look at the inflation expectation for 2028, it's 2%. It's not 2% in the United States, at least not by market expectations. Over the next 10 years, you're still looking at north of 2%. We just had the first 4 handle on CPI going back to 2023 when the Fed was engaging in a rate hiking cycle. Somehow people think that the Fed can get away with it. Look through this because of productivity, because of potentially the idea that growth is going to slow. Potentially there's fragility in the labor market. There are a lot of postulates that people are putting out there, but not necessarily facts to show how it's going to come into place.
Well, an argument they're going to make, too, or individuals that don't think they should hike is going to make that's just going to hurt the people that actually need interest rates to come down. It's not going to stop the massive AI spend, and maybe the Fed does need to look through this oil shock, because you look at the oil price board, it is pretty insane that we have fresh strikes between Washington and Tehran, and we have WTI under $90 a barrel.
Down just 1%. on a session right now. Crazy. Let's bring up a single name, Oracle in the pre-market. Check out the pushback to higher spending from Oracle. That name is down by close to 9%. Yesterday, we were talking about Supermicro. That name finished lower by 28%. One session, 28%, because they're looking to raise equity capital. What did we see from Meta last week? Report from the FT, looking to raise equity capital, considering that pushback in the stock market. This is my focus right now. It's our focus, the pushback you're seeing in capital markets.
We've been asking when would that happen, and maybe that moment is starting to come to the fore, because it's not like Oracle delivered bad earnings. They actually increased their earning expectation. A lot of this money, the financing of some of their capex, is coming from forward orders, so it's not necessarily even going to be raised in the debt market. However, their capex spend came at $55 billion versus the expected $50 billion. Going forward, they're going to have to raise an additional $20 billion on top of what they had previously expected. Oh, and by the way, Oracle has $117 billion of debt in the investment grade index. That is the most for any non-financial issuer, and it has all come in the past couple of years. It is going to the moon in terms of capex expenditures at the same time that companies are pulling back on some of their AI budgets.
All of that ahead of the biggest IPO we have ever seen. Coming up on the programme, we'll catch up with Francis Donald of RBC as tech stocks find a firmer footing, Ed Mills of Raymond James on what artificial intelligence could mean for the midterms, and Mike Powell of BlackRock as investors gear up for a record-breaking year of IPOs. We begin this hour with stocks recovering after hitting a 5-week low. Francis Donald of RBC writing, for the past 6 years, US consumers have borne the brunt of accumulating inflationary shocks. That chapter may now be ending. Francis joins us now for more. Francis, welcome to the programme. What's changing?
Well, the consumer is losing the capacity to absorb any additional shocks. That savings rate is down, real wages are now negative, and the capacity to absorb that has existed in the entire post-pandemic experience, we believe, is now fading. Now, that doesn't necessarily mean the consumer is going to collapse. There's a very strong top 10% consumer. It just means that you're going to get more resistance going forward on passing through these additional price shocks to the consumer. Businesses are going to face harder choices, because if they continue to rely on the consumer to absorb these price shocks, they're either going to see the consumer say, no, thank you, some demand destruction, or you're going to see consumers that say, that's fine, but we're going to need higher wages. And that's why this tipping point is so critical and isn't necessarily reliant on your inflation forecast. It simply means that the psychology that has existed for over half a decade now in the macro environment may need to pivot, and we could see it as early as 3 to 4 months from now.
The backdrop you described, Francis, to me at least, listening to it, would make it difficult for any central bank to hike interest rates. Where does it leave Kevin Walsh and his committee?
Well, certainly very challenging. We're hearing a lot from central banks like the Bank of Canada yesterday about the policy dilemma of what happens when you have higher prices that weigh on growth. But to me, the real policy dilemma is that monetary policy is just not as functional and way more complicated when you have a substantial K economy. You have a top-end consumer that could withstand and probably needs higher interest rates, and then you have a bottom-end consumer that is going to go through some cyclical weakness and maybe even some structural weakness here. So how this central bank and what we hear from Kevin Walsh and how he thinks about this and this policy dilemma is going to be very important moving forward. Not just what action they take, but the philosophy around a growing divide within American consumers and how does monetary policy best serve them. I think an underappreciated question we should be asking Kevin Walsh.
Francis, do you think that the ECB could potentially hike rates even if the U.S. doesn't, because of the K-shaped economy, that there isn't such a market divide in the euro region as there is in the United States?
Well, this is the differentiator between the United States, and there's a few of them. One is that big divide between that top 10% that has accumulated massive savings, massive amounts of benefits from financial markets doing well that we don't see in the rest of the developed world. That's true. But there's also a different growth dynamic that's happening here, which is the United States growth dynamic has been upheld by structural guardrails. The AI story, big government spending, that top 10% very wealthy consumer. But now we're starting to see a broadening of that growth dynamic in the United States. Now, some of it might be FIFA. Some of it might be some movement around tariffs, that IEEPA ruling coming down, some distortions. But there's enough happening in the U.S. economy right now that suggests that their economy is actually becoming stronger, while DM economies outside of the United States are suffering under the weight of this energy shock. So certainly how central banks choose to respond to that will be interesting. But the divergence occurring between U.S. growth, which is being allowed to run hot, and the rest of the world that is challenged with more of stagflationary dynamics is interesting, and also also a new dynamic than what we've seen over the past 1 to 2 years.
Francis, you talk about the tipping point where either potentially you're going to start to see people pulling back because their savings are out, or they're going to demand higher wages and get them, is a really interesting one, especially as we get PPI later today. And you have heard about profit margins expanding at a number of companies. Why won't workers go to their bosses and say the number of tokens you would need to pay to do what I do is actually more than I'm getting paid, so pay me the amount that my tokens would be worth? I mean, why is this a value proposition not going to necessarily lead to higher wages?
Well, it's actually interesting. My team this week has all been talking about token use, the cost of tokens. Are we going to reach that moment where we say, actually, there is a cost of labor and there's a cost of actually substituting out of labor as well? This is critical. And the most important data that we're watching right now is what are companies planning to do with pass-through? So numbers like PPI are more important, small businesses' intentions to pass through, but also consumers' ability to absorb that. So the relationship between business costs, how they're using those very large corporate margins, and the choices around them are going to be critical. From transcripts to survey data, this is a moment to really zero in on, do businesses see the capacity to reduce costs in other areas, and do they have the capacity? Are they seeing any signs that they're going to have to slow through the pass-through? To me, that's the biggest Q3 question.
You talk about in your note how businesses choose to carry this will define the next chapter of the cycle when it comes to higher prices. Mohamed Al-Erna has talked about this in the past. Listen to what the C-suite says. What are they telling you right now?
They're still talking about pass-through. They're talking about a slightly more fragile consumer, but particularly at the lower end of the sphere. So this is an early development. We're not quite there yet, but in our view, we only have a couple more months of savings with the consumer before you start to see that consumer start to break down. So as I said, Q3, Q4, watch for this transitional moment coming through. So far, surveys are saying, well, we're getting a little bit more cautious, but not quite there yet. Again, we really try to downplay soft surveys typically, but we're going to have to watch for some dynamic on that front more than we have in the past. It'll show up a little bit more before the hard data.
Francis, where's the savings coming from? I remember during Christmas, people were saying that the consumers are going out and they're spending their savings right now on and also their higher tax refunds. And then it was early in this year, they're spending that on higher electricity bills. Now everyone's saying they're spending that on higher gas prices. Hasn't this dried up?
It has. So we have near record low savings rate right now. That's a flow type of story. And this is exactly why it doesn't matter whether you believe inflation has peaked or not. The stock of available consumption now is now beginning to decline. If you go back several years, consumers had government transfers coming through from the pandemic. They had wages that were real in positive terms. They were accruing some benefits from that stronger stock market, but mostly to the top end. Those have now depleted. So again, we're not talking about a very bearish consumer outlook. There are still elements of strength. We are not talking about a complete collapse. What we're talking about is that the baton has to be passed on price pass-through from the consumer to businesses, because businesses are going to see it in real time that the consumer says, I do not have the capacity to continue purchasing. And there's been such a psychological focus. We've become so accustomed to this idea that as inflation and prices rise, from tariffs to geopolitical shocks, that they roll through to consumers with a lag. This is the point that we're trying to make, is that 6-year paradigm may be on the edge of shifting in the other direction.
Something we all need to watch. Francis, appreciate your time. As always, Francis Donald there of RBC with the latest. I was listening to you talking about the cost of AI, the price of it, the actual price of it, what it should be. And I was thinking back to that very clumsy line from Standard Chartered, which they've since apologised for, low-value human capital, and replacing so-called low-value human capital. Never mind the wording. Let's focus on the strategy. Maybe you have to dedicate really the compute to the high-value tasks. And with that in mind, are you really going to dedicate it to replacing what they consider to be the very clumsy line, low-value human capital?
The concept of value is going to shift, right? I mean, if you're essentially able to do the highly technical structural calculations and programming that highly paid individuals used to do, does that lead to that being where a lot of the cuts come from? Increasingly, people are talking about how much tokens cost, and that's the reason why OpenAI is cutting prices, because they want to become deployed more widely. And if that's the case, maybe these advanced AI models aren't going to come for our jobs, because guess what? Maybe we're worth it.
That's kind of what I'm getting at.
Yeah, maybe we're worth the money, because
sounds like a makeup commercial.
The amount. So buy your
You are worth
mascara.
It, You're so worth it.
You're worth it.
She's born with it.
Versus the token cost, which, energy costs something, water costs something. I mean, I need to be fed as well. But, ultimately, my food might be cheaper.
Possibly. Let's get you an update on stories elsewhere this morning. So worth it. With your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. The US carrying out a second straight day of strikes on Iran after President Donald Trump accused the country of dragging out peace talks. Trump telling Fox News the US will hit Iran again today if it doesn't sign a deal. Before the attacks, Tehran warning it would target new US assets if Washington took action. Anthropic CEO showing support for government regulation of AI. Dario Amodei writing in an essay, the government should have the power to block AI developers from deploying new models if they present certain risks. Amodei saying there should be mandatory testing by third parties. The New York Knicks pulling off a record comeback against the San Antonio Spurs to win Game 4 of the NBA Finals. New York coming back from a 29-point deficit to win by a single point. The Knicks are now one win away from their first NBA title in more than 50 years. Game 5 is on Saturday night in San Antonio. That's your Bloomberg brief. John.
Hey, Vonnie, thank you. Appreciate it. You trying to go?
Yes.
Trying to get over there? Okay.
Well, I'm going to be in Houston tomorrow, so, I mean, it's very close.
Perfect timing, right?
Very convenient.
You guys have been travelling over the last week or so.
I just happened to be.
What am I getting wrong here?
Well, you can
You're
come.
going to use the increased margins go to something, John.
Okay. And your travel budgets, apparently. All right. Up next on the programme, cozying up to AI.
I'm going to have meetings with the top 12 or 15 executives very shortly. And we're talking about giving back something to the public. And if we do that, the public will become very rich.
Ed Mills of Raymond James joins us next, live from New York City this morning. Good morning.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
So here's the bounce this morning, up by 0.6 on the S&P, on the Nasdaq higher by 1 full percentage point. Just a touch of outperformance on the Russell, up by 1.2. The focus on tech continues under surveillance this morning, cozying up to AI.
I'm going to have meetings with the top 12 or 15 executives very shortly. And we're talking about giving back something to the public. And if we do that, the public will become very rich, the people in our country, because that's the kind of money we're talking about. And I think they'll do that, and I think it'll make it very popular.
So here's the latest this morning. The president continuing to tease unconfirmed meetings with AI executives. Artificial intelligence weighing on voters ahead of this year's midterm elections. A new poll by Reuters and Ipsos finding 53% of Americans worry the technology could cost them or someone at home their job. Joining us now is Bloomberg's Tyler Kendall from Washington. Hey, Tyler.
Hey, John, good morning. Well, how to balance the potentially massive gains from the AI boom with the potential risks is increasingly becoming a focus here in Washington. Yesterday marked the second time in less than a week that President Trump expressed an interest in the U.S. government taking equity stakes in AI firms. He seemed to suggest that he's already had some of these conversations, though declined to give specifics or how exactly this would work, though a person familiar with the matter does confirm to Bloomberg News that OpenAI CEO Sam Altman did float the idea of government stakes in AI companies to the Trump administration back in early 2025. But more recently, Altman was just on Capitol Hill last week meeting with lawmakers on both sides of the aisle after Senator Bernie Sanders reignited the idea on Capitol Hill, floating a new proposal that would see the federal government levy a one-time 50% tax on AI companies paid for in stock and kept in what he called a sovereign wealth fund that would seek to redistribute the gains to the public. It's all taking on this new urgency as we get closer to November. And you mentioned the jobs market, but John, we also saw this Reuters Ipsos poll go on to cite concerns Americans have when it comes to rising energy costs. The survey found that 77% of Americans feel that AI will make their electricity bills go up. Last week, I met with 10 of the U.S.'s top electricity CEOs, all of whom told me that energy and affordability is the #1 issue that they hear from the public.
Heading into the midterms, heading into the general, only a few years away. Tyler, thank you. Tyler Kendall with the latest in Washington. Ed Mills of Raymond James writing the following. If Democrats win a House and or Senate majority, expect calls for federal laws limiting data centers to be near the top of the agenda. Ed joins us now for more. Ed, welcome to the show. It's good to see you once again. Let's focus on this. How are things changing heading into the midterms?
Well, we've argued at Raymond James that AI policy is probably the biggest market event from the midterm elections. You go back to last November, John, Democrats did really well in Virginia and New Jersey, arguing that energy costs are too high, arguing against data centers. You're seeing Bernie Sanders against it. You see Hakeem Jeffries, the Democratic leader in the House, saying this will be a priority. They're trying to make those data centers the Death Star to the American public and say that's the problem, and then build upon that, trying to have new hawkishness on China and a whole bunch of new AI policies, trying to kind of wrap this against Trump and against Republicans, especially if they win a majority. That's going to be the market concern.
Ed, what's actually going to be the policy when it comes to what some conservatives and free market individuals are saying that this government is trying to nationalize some of these companies?
Yeah, well, this has been a weird push-pull, Anne-Marie, because there has been a general angst about kind of government stakes in U.S. companies. But with President Trump, he's had the support of Republicans in Congress because they generally support him. I do look at the AI export program that should have some of their first announcements this month, which is going to get some government financing to back AI programs around the world. Maybe we take some of that financing that we're promoting and supporting some of these hyperscalers and using that as the hook to get that equity stake. I don't think we have that proposal that Bernie Sanders talks about. That would require congressional action. That's not going to happen. I do think that because Donald Trump has created this precedent, Anne-Marie, it is more accepted than it otherwise would have ever been.
Absolutely. He's also talking about a meeting that is unconfirmed, hasn't taken place yet. Why is he doing this? I mean, the AI companies are saying there's no meeting right now. Why is he just putting this out there?
Well, Anne-Marie, he loves to be at the center of the most important debates to the extent that he can be on the world stage with Putin or Xi or with the leaders of AI, especially as we're seeing some of these major IPOs in the pipeline. Inserting himself into that policy is really important. Secondly, recently we got an AI executive order, and we're seeing a massive policy shift with President Trump, where at the beginning of his term, he did away with the Biden executive order that looked at things through a national security lens. He's starting to do that as well, and he's starting to engage here because he's not quite sure if the free release of these models is the right policy, or should we have a government review. The more that he gets concerned with that, the more he's going to want to meet with these AI executives, the more this becomes a political problem, the more he's going to want to insert himself into that, trying to neutralize that policy.
Ed, to that point, is President Trump leading the charge for Republicans in terms of supporting AI development, or is he offsides with some of his Republican colleagues who are very concerned about this, hearing from their constituents and looking for more regulation?
Lisa, it might be both. We've seen kind of a huge push at the beginning of this administration to change some of the policy towards China, making an argument that unless we get these leading edge chips to China, China will develop their own. We had the DeepSeek moment. Then he started to say, all right, we could allow China to get more chips, the H200. Those haven't been developed, or they haven't been sold to China at the levels he thought they would. And then on Capitol Hill, that's where you've gotten the pushback. We've had introduction of legislation, the Match Act, that has already cleared committee on a pretty decent vote that would restrict some of the semiconductors going to China, would restrict some of the semi-cap equipment going to China. And Republicans are telling him, you have gone too far in easing up some of these restrictions. We don't like the fact that you've merged the national security and economic lanes. We understand that we need to win this AI race, but giving it to China, being too fast and loose on some of the national security issues, that is a concern for us, especially if this is kind of getting deployed in the way in which we hear a lot of folks in the market talk about it.
Ed, there's also a concern about the personnel and the brain trust close to the White House right now. There have been a number of departures, Thomas Lind, the most recent one. Is that concerning given how quickly this is moving and the need for expertise to understand how it's working and what exactly the potential applications, potential danger, potential benefits could be?
Yeah, we have a lot of turnover in government as a general source. It has been a uptick lately on some of the AI policy individuals. I've talked to a number of them after they have left or kind of when they've been doing these things. I've actually been relatively impressed with the AI policy infrastructure that he had put into place. And I do think the fact that we had an AI action plan that came out pretty early in the administration, now we have an AI executive order. It's been an area that they've been focused on. Let's see what that staff gets replaced with. But so far, it's been pretty robust. And when I've talked to that staff, one of the things that they've told me is, A, they want to flood the zone. They want to make U.S. technology the default technology for the world. And just as the dollar is the reserve currency of the world, they want that U.S.-based token to be the reserve token of the world. And that's why they're trying to export this globally. If they win that, they tell me that's the most important national security issue that they can actually achieve in this administration. So I'm hoping they're right.
Ed, thank you, sir. Appreciate it. Ed Mills there of Raymond James. It's not a great message, is it? We're going to take your job and push up the price of your bills. Public's not going to be happy with that.
They aren't happy with it, which is why Ed said it's going to be the key issue heading into the midterms. A lot of people agree with him.
Coming up on the programme, we'll catch up with Ted Mortensen of Baird as Wall Street awaits the SpaceX IPO. Plus, Shahira has your morning movers. Check out Intel this morning. Shares rising on a double upgrade from Bank of America. The stock is up by more than 4%.
astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Two-day losing streak on the S&P 500. Your bounce looks like this. Up by 0.6 on the S&P, up by 1 full percentage point on the Nasdaq. Some wild swings once again for chip stocks. 10 percentage point range on Tuesday. On Wednesday, something like a 5 percentage point plus range for chip names once again. Volatility starting to creep into this equity market heading into these IPOs.
It is volatility. It isn't a wholesale sell-off, and that's the point, is that people are still bullish. They still think that chip makers are going to do well. So if you see a dip, it's buyable, and that's essentially what we see every single time. Whether the same story can be told about hyperscalers increasingly will be the question, as those CapEx budgets, the wealth transfer from one to the other, chips being on one side and hyperscalers on the paying side, continues.
A major wealth transfer funded by you and I in this bond market, this equity market too. Not so much me, but you at home, of course.
Us too. I mean, if you have a 401k, you're paying for this.
Yes, without a doubt. In the bond market right now, you're gaining on the chip side too if you hold them. Anyway, fixed income, go. Bonds, 2s, 10s, 30s.
Focus.
Let's get into this. Inflation data coming in line with expectations, helping to stop the rot in the bond market just for now. We're down 4 basis points on 10s, 451. The next stop for this market, there's a mix of things in the next hour. ECB rate decision in the mix. Remember, what can move the European bond market can move global bond markets. PPI data. Jobless claims, 2 big data points, 8:30 Eastern time.
Yeah, and we heard from Frances Donald at the start of the hour. We could see PPI come in. You were mentioning 6.4% is the median estimate, which is a shocking number. She said this is going to get more and more important. Can some of the companies continue to pass along the costs given the savings rate? Do companies either start to pay their employees more, wage price spiral, or do consumers start pushing back and say, we will not buy it if the prices go up that much? Margin compression, that's going to be a problem for the stock market and growth. We're at that tipping point.
We are, and it's a big call that needs to be made over at the Federal Reserve with Kevin Walsh and that new leadership. Is this labour market tight enough? Does it have strong enough momentum to worry about the prospect of wages picking up? Which sounds crazy to say out loud. As I've said a few times, the only people that worry about high wages, economists. But anyway, park that conversation for now. Run with me. Distracted this morning.
We all are. I mean, it's a Dix
Reserve.
effect, yeah.
The market should have been closed today. I'm sorry.
All right.
Did they have to worry about the labour market in the same way they used to? Back when we had unemployment around 3.5% and inflation picking up. The last time we were at 4 on headline inflation, we had unemployment in the mid-3s. That was why rates were so much higher in the 5s compared to the 3.75 we're at right now.
It's hard to get a real read on the labor market, and this is why initial jobless claims will be interesting, although they haven't been very interesting for the past couple of months because they've been basically flatlining. At the same time, people are looking at the labor market data and painting completely diametrically opposed ideas. On one hand, you could say you are starting to see slack in certain areas. Take a look at wages earned and the fact that they're not keeping pace with inflation. On the other hand, look at JOLTS data. Look at the job openings data. Look at the anecdotal commentary coming from headhunters saying that actually you're seeing a reacceleration and a broadening out in some of the labor market gains. Pick your poison. Right now it's really uncertain.
Lisa talking to headhunters. Do you notice that?
Yeah.
Yeah, crept into conversation. Just slip that out.
Just slip that in. Just
letting
you know.
What they're saying,
letting you know. Becky Frankowitz. We all talk to her.
Okay.
I mean, we all talk to these people.
Sure. Right there with you. Yeah. All right. 2 hours away from the opening bell. Let's get some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Despite another quarter of massive AI growth, we are seeing Oracle shares now down nearly 8% in the pre-market after the company said that it will spend more to build AI data centers. But that came as Oracle left its revenue outlook largely unchanged, just leaving investors wondering where the payoff is amid all that additional spending. Meanwhile, as you mentioned, we are seeing the chip stocks bounce back today, but Intel is getting a major boost from B of A. They double upgraded the stock, arguing that investors may be underestimating its growth in its chip server business as well as its foundry. They also say that Intel remains under-owned compared to its peers, leaving room for investors potentially to pile in. And we end on the space stocks. They are rebounding after a recent pullback. So you're seeing names like Rocket Lab up 4% in the pre-market as we count down to tomorrow's historic SpaceX IPO, set to be the biggest ever with a $75 billion raise. As for what comes next in the IPO process, we're waiting to see how shares are allocated, with reports, including from us, that demand is far exceeding the number of shares available. John.
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, Oracle shares falling. The tech giant reporting capital spending plans well over estimates. Oracle expecting capex for the fiscal year to total $70 billion, fueling fresh concerns on AI profitability and the amount of money being spent. Oracle is down by 8% in the pre-market. Elsewhere, SpaceX playing hardball with Wall Street ahead of its $75 billion IPO. People familiar with the matter telling us here at Bloomberg that firms including Mizuho and SocGen have been handed minor roles with fewer fees and bragging rights. And finally, Anthropic CEO Dario Amodei calling for stronger government oversight over AI. Amodei arguing regulators should be able to block developers from deploying new AI models if they pose risks to the public.
Especially if those risks stem from OpenAI, say, or XAI, or some of these other AI developers that potentially could have problematic models versus the Anthropic models, which are probably on the up and up. Look, on one hand, we mock. There are two ways to understand this. There are many more than that, probably. But the way that I'm trying to understand this is there truly a risk that somehow some of these models are going to go full Star Wars and start upgrading themselves and then taking over the world, which is the fear that some people have? Or is this a competitive edge that they're hoping to keep, the moat around their particular software, their particular large language models that could potentially give them a edge with the likes of OpenAI?
Or is the writing already on the wall? So you put out a letter like this because you want Washington to come and deal with you as opposed to everyone else as you try to write this regulation. In this letter, he says the best analogy in the current stage is comparing it to cars, airplanes, drugs, powerful technologies essential to the modern economy, but capable of killing large numbers of people if designed or operated poorly. Maybe they just want to get in on the ground level as the government begins. The government's going to have to regulate this. They're going to have to.
Okay guys, natural gas देखो पूरा ही फॉल कर गया है, अपने गोल्डन रेशियो पर भी नहीं रुका. एक्सपेक्टेड था गोल्डन रेशियो के आसपास कहीं रुकेगा, बाइंग तो नहीं थी खैर, बट गोल्डन रेशियो पर भी बिल्कुल नहीं रुका है. डाउन 0.786 का एक लेवल है, मुझे लग रहा है वहां तक जाएगा. नीचे तो सपोर्ट ही है. फॉरेक्स में देखोगे तो ये ऑलरेडी सपोर्ट पे तो आ ही गया है ऑलमोस्ट. सो ये गोल्डन रेशियो रहेगा. गोल्डन रेशियो के नीचे 0.786 का लेवल है एमसीएक्स में. वहां से मुझे लग रहा है शायद एक बाइंग प्राइस में ट्राई. ठीक है, बट उसके नीचे ऑलरेडी सपोर्ट ही है. सेलिंग में थे, मॉर्निंग से निकल जाना. नाउ ये रेंज काफी स्ट्रांग बना दी है मार्केट ने. ऊपर का रेजिस्टेंस अभी भी इंटैक्ट ही है. अब देखना पड़ेगा मार्केट इस लेवल के नीचे ब्रेक करता है या नहीं करता. अगर ये लेवल ब्रेक हुआ तो थोड़ी सी मार्केट कह सकते हैं प्रॉब्लम है मार्केट के लिए उस केस में. तो न्यूयॉर्क मर्सल्टाइज एक्सचेंज में $3.060 का लेवल है. उसके नीचे अगर ये जाता है तो ब्रेकडाउन मानेंगे. इस लेवल पे देखोगे एग्जैक्टली तो वैसे फर्स्ट टाइम ही आया था कल जब बाइंग करी थी. अभी आ रहा है सेकंड टाइम लॉजिकली देखा जाए. बट अगर वैसे देखा जाए तो ये ऑलरेडी फोर्थ टाइम होगा, बिकॉज 2 बार उससे पहले भी आ चुकी है. एग्जैक्ट टच नहीं किया था, अलग बात है. ऊपर कोई और रेजिस्टेंस भी नहीं बना है, तो दिस इज द ओनली सपोर्ट एरिया. वी कैन एक्सपेक्ट सम बाइंग. फॉल करना होगा और नीचे ब्रेक करके 290 के नीचे अगर जाना है इसको, देन मार्केट डेफिनेटली मेक सम रेजिस्टेंस ओवर हियर और हियर, समथिंग लाइक दैट. जहाँ से रेजिस्टेंस, फ्रेश रेजिस्टेंस लेके मार्केट गिरेगा और फिर ये सपोर्ट से आप बाइंग आएगी, देन फाइनली क्रैश. अभी के लिए ऐसा कुछ है नहीं यहाँ पे। क्रूड ऑयल में भी कुछ नहीं है। मॉर्निंग पे हल्का सा गैप अप, कंटिन्यूसली सेलिंग आई, फिर साइडवेज ही है ऑलमोस्ट इंट्राडे कंप्लीटली। नीचे आएगा तो इसका भी सेम ही सिनेरियो, नीचे सपोर्ट मल्टीपल टाइम टेस्ट हो गया, लेट्स सी ऊपर जाता है नीचे या फिर रेंज बाउंड ही रहता है आज के दिन। एक्सपायरी है, पीपीआई का डेटा है, नेचुरल गैस इन्वेंट्री। बाकी आज एक्सपायरी थी सेंसेक्स की। जो वॉलेटिलिटी हुई है सेंसेक्स में मॉर्निंग पे गैप डाउन के बाद ऑलमोस्ट 600 टू 700 पॉइंट की रैली, देन कंप्लीटली सेल ऑफ फ्रॉम डे हाई लेवल। डेली टाइम फ्रेम पे देखोगे इन्वर्टेड हैमर बना दिया कंप्लीटली। और कोई न्यूज़ है नहीं रिगार्डिंग द यूएस ईरान। ठीक है, ऊपर नेचुरल गैस में कोई रेजिस्टेंस है नहीं, कल का ही रेजिस्टेंस है जहाँ कल सेल प्लान किया था उस एरिया के आसपास। ज़्यादा ही वॉलेटाइल था आज, कंप्लीटली सेलिंग में है नेचुरल गैस। कल याद होगा मार्केट ने काफ़ी वॉलेटिलिटी शो करी थी दोनों साइड का मोमेंटम दिखा के। नाउ अगेन ऑन सेलिंग साइड कंटिन्यू। इसके नीचे जाएगा इसके भी चांसेस तो अभी कम ही है, क्योंकि सेकंड टाइम में आया है तो कोई एक्स्ट्रा ऑर्डिनरी इवेंट नहीं होता तब तक मुझे नहीं लगता ये डायरेक्टली फॉल करेगा ओवर हेयर। Chances will take the support natural gas again from this area. नेचुरल गैस की इन्वेंट्री का फोरकास्ट देखें, लास्ट टाइम 95 था, इस बार 101 बुलियन है। लास्ट टाइम से ज़्यादा फोरकास्ट है, मींस अगर डेटा ज़्यादा ही आता है तो इट विल बी बेरिश फॉर द प्राइस, प्राइस के लिए बेरिश होना चाहिए उस केस में। बाकी आज देखते हैं क्रूड फाइनली ब्रेक करता है इस लेवल को या फिर नहीं। ये भी इम्पोर्टेंट लेवल है। कल तो थोड़ा बहुत यूएस और ईरान के बीच में इशू हुआ था, उसकी वजह से प्राइस ऊपर चला गया था। विल होल्ड और नॉट, विल नीड टू सी। As expected, natural gas. आई थिंक टेस्ला की लिस्टिंग भी है. नहीं, 29th ऑफ जून को है टेस्ला की लिस्टिंग. 29, नॉट टेस्ला. SpaceX आई थिंक कल रहेगी. आई थिंक यस. June 12, 2026. SpaceX. लास्ट डेट है आज.
Elon Musk-led SpaceX is preparing for what could be one of the biggest initial public offerings
लास्ट कैंडल देखोगे ओपन इक्वल टू लो बनी है नेचुरल गैस में 5:30 होने वाला है न्यूयॉर्क सेशन इज जस्ट गोइंग टू ओपन नेचुरल गैस मोस्ट प्रोबेबली कंटिन्यूएशन कर सकता है सेलिंग प्राइस एक्शन देखोगे बड़ा स्लो मूव हुआ है कल से प्राइस आज भी सेलिंग आई है बहुत स्लो आई जरूर है एंड देन एक शार्प मोमेंटम इसका मतलब ये जो सेलिंग आई है दैट इज काइंड ऑफ अ ट्रैपिंग यू कैन से इट
watch. I think what's interesting is there still is a lot of cash sitting on the sidelines. So I think that's what gives me some solace that it's not like prior cycles where everybody was all in all equities and there was not a lot of dry powder on the sidelines. That said, what we've seen in the market is really just a very strong speculative bid. So a couple of things to note. Long-term growth expectations for earnings are the highest we've seen in a couple of years, and they're approaching all-time highs, higher than what we saw during the tech bubble. So speculation is alive and well. Expectations are very high, and this really sets up the stage for disappointment. The second thing I would look at is just the performance. So high PE stocks with lofty expectations have massively outperformed low PE stocks, and this is generally not what you see in the market, and also signals a little bit more of a speculative bid that's taking place. Other things that we've talked about on the program already, I think the consumer is in an odd spot. We're seeing higher paying jobs on pause in terms of demand because of AI. We are seeing a bit of an uptick in wage growth for that lower income cohort. So I think that's the other bright spot, and one of the reasons that we still like consumer staples over consumer discretionary. But I think we're in a tricky market environment, and you really got to pick your spots.
One headwind I want to talk about with you, because I think you've been out front on this particular issue, talking about this earlier in the year when it wasn't really on the horizon for many, the tidal wave of equity supply.
Oh, yeah. Supply.
How much space do we have with it? That's a question we've repeated throughout this week.
Yeah. I mean, I think what's unnerving is that in one sector, the biggest sector in the S&P, the hyperscalers and tech, you're seeing buybacks slowing, you're seeing issuance increasing, and you're seeing new money coming to market. So that's all great in terms of, kind of new, exciting, shiny issues. But I think that what that means is this shrinkage story that we've enjoyed for public equities for such a long time is starting to ebb rather than flow. I don't think it's the end of the world, but I do think it's something to watch when we think about the drivers that have created this wonderful bull market that we've enjoyed over the last, 10, 15 years now.
So people would argue that the reason why shrinkage worked was because we were in a period of secular stagnation. And some people are arguing, PIMCO in particular, that we're emerging from that into a stickier inflation environment with higher growth and higher inflation. And in that scenario, some of these valuations can continue climbing, especially when overlaid with a technological revolution. How do you rebut that?
I mean, I think that might be true over the long haul, but I think in the near term, it could be a little bit complicated. So let's think about what works in a high GDP growth, high inflation environment. It's usually cyclical companies. And when you look at the weight of cyclical companies in the S&P 500, pretty small. So I'm bullish on manufacturing, cyclicals, that whole cohort, but I don't know if they're big enough to kind of drive this market meaningfully higher over the next 12 to 24 months. And then when I look at technology, I think what's getting a little bit trickier is there's a lot of competition now for, what's the best AI play. And we still don't know exactly how this will be monetized, how it will affect consumption. So I think those are some of the questions we need to answer along the way in order to say these multiples can stick. I also think, just real quick, the leverage and the issuance that we're seeing is moving in the opposite direction than what we want to see. So, the one selling point of the S&P 500 after the global financial crisis was all these companies paid down debt, they had solid balance sheets, and that's starting to reverse, especially for technology and some of these growth areas.
Can you see a broadening out? So it might be an underperformance of tech, an outperformance of some of these other areas that have lagged behind.
Yeah.
Can you see that without rate cuts? Can you see that with even potentially a rate hike?
Sure. I think we could see a broadening out with a rate hike. I think that it would be in areas that benefit from higher nominal GDP growth and higher inflation. So we love energy. We love materials. Real estate, I think, could do okay in that environment. I think the worst place to be in this scenario is cash. Cash real yields are terrible right now. If we get a hike, it means that they're still going to be terrible because we're hiking because of inflation. So I do see money, the opportunity to deploy cash in areas like large cap value, dividend income plays where you're protected against inflation but also have, this growing cash return component. I think that those are the areas that we really want to focus on going forward. And if you look at what worked during the 70s and 80s, large cap value crushed it. We had a market environment where high dividend yielding cyclical companies like energy, materials, inflation protection really worked. And I think that might be where we go. I think energy is seen as just a hedge against geopolitical risk, but I think it's a lot more than that. We're in an environment where power is the bottleneck for AI, and that means we're going to be doing a lot of moving things around. We're going to be doing a lot of building. That is bullish for commodities writ large, and I think that's where we really want to think about angling our exposure.
Savita, good to see you.
Great to see you.
Just fantastic read. Appreciate your time. Thank you very much. Savita Subramanian there of Bank of America on the red flags in this market and a reason to take profits. Equity futures right now up by 0.7% on the S&P with an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Oracle falling in the pre-market after reporting about $70 billion in net capex over the next fiscal year. The software company also announcing plans to raise another $40 billion in equity and debt next year, 2027. Senator Elizabeth Warren calling for the SEC to delay the SpaceX IPO. In a letter to SEC Chair Paul Atkins, Warren saying she's worried about the company's stock valuation, governance structure, and the potential impact on millions of Americans who will be forced to own shares in their retirement accounts. An historic moment in sports, the New York Knicks making the largest comeback in NBA Finals history, overcoming a 29-point deficit to beat the San Antonio Spurs in Game 4. The Knicks looking to win their first championship in more than 50 years on Saturday in Texas. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you for the update. Up next on the programme is the rate hiking cycle about to begin at the ECB. We'll catch up with James Athey of Marlborough.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
The place you want to be is on the chip side of things because it doesn't seem like there's any end as far as some of the spending goes. And when you kind of look at some of these IPOs that are going to come out here over the next couple of months, I mean, clearly all of those proceeds are going to be reinvested right into that AI infrastructure build. Again, the place to be continues to be semis.
That was Angelo Zeno of CFRA. On the latest equity market moves, stocks positive this morning, up by 0.75% on the S&P 500. On the Nasdaq 100, up by 1.2%. And the Russell this morning up by 1.3. That's the equity market story. In the bond market, going into this ECB rate decision just around the corner, yields are lower by 2 basis points on two stateside, on 10s 450, 165. Big focus will be on euro dollar going into this one, Bramo, looking for a 25 basis point hike from the ECB.
Yeah, key question will be how is message going forward? Is this going to be part of a rate hiking cycle, or is this going to be a one and done with a let's wait and see and be data dependent? Ultimately, we heard from Ian Steely that he thinks that if the Fed is more dovish, a one and done, that it would actually be really punitive for the euro. Other people think potentially it could torpedo growth with a rate hiking cycle, and that could be a problem.
Well, there's that rate hike, 225 on the deposit facility at the Eurozone. At the European Central Bank, the ECB deposit rate at 225. Could do that breaking whoosh now. Breaking news. No, not breaking news. All right. We were looking for 225. There we go. Let's catch up, guys. It's happening. Euro dollar 115.35. Widely anticipated. Maybe not breaking news for many people out there. It's the next move in the guidance that we're looking for.
Yeah, and right now the ECB is saying that they're not pre-committing to a particular rate path. So over to you, to Christine Lagarde, to get a sense of whether there is any kind of signaling the ECB to consider incoming data, core inflation transmission, and committed to ensuring a 2% inflation rate. Do they take some of the rate hikes that are being baked into the market off the table right now? Not seeing much of a response from markets because they don't know what to make of this.
Ollie Crook in Frankfurt, Germany, tracking the decision. Ollie, widely anticipated. We got the first move. The focus today is about the second move and maybe a third. Are we going to get a second and third?
That's absolutely right, Jonathan. There's a lot of consensus going into this, that this is what it's going to be. And there you have it, the ECB, the first major central bank to hike rates in the wake of the Iran war to deal with that inflationary shock coming out of it. The 25-point basis point increase in rates is as anticipated. The question, as you say, Jonathan, is the forward guidance. What kind of tone are we going to get from Christine Lagarde in about 30 minutes' time? I'd like to also take your attention to some of the other things that we're also seeing here now, because the other thing that the ECB is putting out right now is also their forecast on inflation for the year going forward. This is absolutely crucial. The prior forecast for inflation in 2026 was for 2.6%. It is now for 3%. So you're getting that inflation readjustment higher and higher and higher. And as we've been talking about, it's not just the headline number. It's not just the sort of energy inflation figure that the ECB is looking at. We've seen core rise substantially. We actually saw it, accelerate at a faster pace, in a faster acceleration in the month of May than the headline number. So these are all the issues that are going to be confronting the ECB. The question is this the beginning of a rate hiking cycle? Depending on who you ask, it's even a mistake that they're raising rates today. We spoke to Jeffrey Yu a little bit earlier in the week. He said that if you raise rates this week, you're going to be cutting by Q4.
They clearly don't want to be articulating the beginning of a rate hiking cycle. Lisa, just looking at the language and going through the statement and the headlines from it and listening to Ollie, it's a central bank that wants to take it meeting by meeting. Based on that, that's what you'd expect to hear from Christine Lagarde in about 20 minutes' time.
Which is why they increased their inflation expectation over the next couple of years, because potentially you could interpret this as them not wanting to curtail growth too quickly and raise hikes too significantly. It's really going to be up to her in terms of how she messages this, because right now you can read this in different ways. Data dependency, not committing to pre-committing to any kind of path, could be taken as a more dovish take. At the same time, if she comes out and says, we're looking squarely at CPI at X level and we're going to hike again if it stays there, well, that's going to be viewed as hawkish.
Ollie, how haunted is this institution, this committee, by 2008 and 2011 and the hikes they made in those years?
Yeah, what's interesting, John, is they seem currently more haunted by 2022, right, which was acting too slowly on the inflation side of things. And when you think about the stagflationary dynamic, the message that the ECB is sending right now is that they're less worried about stag, they're more worried about inflation. And that is really the message that you're getting from the ECB. And just another line crossing here, looking at the 2026 GDP forecast, the stagflation side of that, the sort of growth side, that they see growth at 0.8%. The prior forecast was 0.9%. So that's just a reduction of growth forecast by about 10 basis points. That is not something terribly dramatic. So I do think that for the ECB, yes, they're haunted by 2011. That is the big question. They hiked too early. They had to cut rates immediately. But the other question is 2022, and I think that's probably more present in their minds right now.
It's good to see you, Ollie. As always, thank you, sir. Ollie Crook there in Frankfurt, Germany, on the ECB. These are the kind of headlines that no central bank wants to be reading or writing right now, when you have to cut the outlook for growth and you have to raise the outlook for inflation, not just for this year, but the next year out as well. And that's the position the ECB's in. this morning.
Yeah, and if they were a dual mandate central bank, their calculus would be completely different. Right now, in the face of stagflation, do they continue to raise rates? They said that the decision to raise rates was robust across a range of scenarios, that the risk to inflation still remains to the upside. How much of this is dependent on the situation with the Strait of Hormuz? I mean, how much is this completely out of Christine Lagarde's hands altogether, and how much is she watching the headlines and being like, pick one, guys.
Right.
We need to come up with some sort of formula for what we do.
Close to a deal or not. James Athey of Marlborough writing the following: I suspect that Lagarde will want to keep all options open, and so I don't expect a massively hawkish communication. I expect her to attend balance and neutrality. James joins us now for more. James, welcome to the programme. We've got the hike, 25 basis points. It's not the news. We were looking for that. It's about the guidance for the next move and the one after that. How neutral do you think this central bank president will be in the news conference 15 minutes away?
Hi, John. Good to see you again. I think she'll try. I think we've learned from prior experience that sometimes Madame Lagarde does struggle with the nuance of the communication. Sometimes I think she tries to use too many words when fewer will do. So I think there's definitely a chance that there's a misinterpretation. Generally, what we see in those instances is that somebody else from the executive, probably somebody like Philip Lane, will come out and sort of moderate the message as needed. But certainly, this is a really difficult, fluid situation. Uncertainty around the Middle East today, let alone the forecast horizon, is incredibly high. So clearly, no central bank, including the ECB, wants to box themselves in.
James, if you could channel Christine Lagarde with just a few words, what would she say if she were actually going to be pithy?
I try and say as little as possible. I got to be honest. I'm sort of in Kevin Walsh's camp in the sense that I think central bank communication has just become a cacophony of noise, and it doesn't help anyone. It doesn't help markets because it's an incredibly difficult macro situation that we're living through, and it's very easy to get forecasts wrong very quickly. And so communication based on, let's be honest, roughly a sort of guess as to what happens 2 years hence is very likely to be very wrong very quickly. So I think she should say very little, explain that options are open and they stand ready to do what's needed. And I think that's broadly what she will do.
Does it make sense to you, James, that you have an ECB that's facing both a growth shock and a price shock more significantly than the United States, that they'd be hiking rates at a time where the U.S., with robust growth and less of a price shock, but still a significant one, wouldn't even consider a rate hike in the near future?
Oh, wow. How long have you got, Lisa? The answer to that question, I could be here for absolutely hours. I'm going to slightly push back on something you said just a few minutes ago when you sort of explained that this might be to do with the ECB's single mandate. I think potentially, if that is the case, that's ECB really misinterpreting their own mandate to a significant degree, because if you believe any of the sort of theories and models that these central banks use, then inflation over the long term, over the forecast horizon, is going to be a function of these sort of growth, potential growth, natural rate, neutral rate, unemployment.
Okay, crude oil को देखोगे sudden spike आया है. मोस्टली तो मुझे लग रहा है रीजन दो न्यूज़ का ही है, उसके अलावा तो मुझे और कोई न्यूज़ यहाँ पर शो नहीं हो रही है. नंबर 1, ECB holds interest rate at 2.40 in June. We can say, it cuts interest rate. दूसरा, ओपेक ने 2026 में ऑयल डिमांड ग्रोथ का जो फोरकास्ट किया है उसके अकॉर्डिंग डाउनवर्ड 9,70,000 बैरल पर डे एक्सपेक्टेड है, जो उनका अर्लियर फोरकास्ट था 1.17 मिलियन बैरल पर डे. मुझे लग रहा है शायद उसी की वजह से क्रूड ऑयल एक सडन मूव किया है. ट्रम्प की ओर से भी एक न्यूज आई है.
Tonight, he goes on to say, at some point in the not too distant future, we will be taking Carg Island and other oil infrastructure points and assume total control of their oil and gas markets, much like we have with Venezuela, which is working out brilliantly for both Venezuela and the United States of America. So, they're the words of the president this morning, and this is the move. Brent crude was a little bit lower, now it's a little bit higher. It's not a major move. We're close to 94, WTI's around 91. But they are pretty big headlines from the president this morning about taking Carg Island, talking about that in a way that we haven't heard him talk about in quite a while.
No, these are very bold statements, and it's a U-turn from the president saying we could see a peace agreement in 2 to 3 days, potentially, and off the heels of the United States already having fresh strikes when it comes to going after IRGC targets. The president saying that they are willing to take Karg Island. Obviously, this is something we discussed months ago when the conflict first began, and the president is now saying that not only that is going to happen, they're going to be hitting them very hard. Potentially, oil's not moving that much higher, though, for the fact that, you know what, Jonathan? We have been here a few times with threats from the president, but at some point, you can't be the boy that cry wolf all the time.
James Athey is still with us. James, how much weight do you put on those headlines this morning?
Again, this is like, Lee's fans just covered it there. This is really, really difficult because we hear so much from the president. He confuses and contradicts himself. But what I will say, and I think your own Javier Blas wrote an interesting piece on this, and it's a dynamic which is being increasingly talked about, is that actually it looks like the supply response and the demand response are much closer. So we've had this massive negative supply shock, of course, but it seems that the world economy has been able to dial down that demand picture significantly. Some oil is getting through the straits in a way that we don't yet understand, but particularly China, the extent to which their imports of oil and oil products has plummeted has really helped to balance the market, and I think that's what Trump is responding to.
This adds an extra wrinkle to a news conference with the ECB president in the next 20 minutes or so. James Athey, thank you, sir. James Athey of Marlborough. The ECB hiking interest rates 25 basis points. The president claiming he'll hit Iran hard and very hard, and at some point in the not too distant future, take Karg Island. We'll get into the details in just a moment. From New York City, you're watching Bloomberg TV.
Okay, so there is a tweet by the US President Donald Trump. He says the United States will be hitting Iran, whose Navy, Air Force, radar, anti-aircraft and all other forms of defense together with most its offensive capability are gone very hard tonight. At some point in the not too distant future, we will be taking Karg Island and other oil infrastructures points and assume total control of their oil and gas markets, much like we have with Venezuela, which is working out brilliantly for both Venezuela and the US. Thank you for your attention to this matter, President Donald J. Trump. Huge statement. Now, we don't know it is just a statement or कुछ ऐसा करने वाले हैं यूएस प्रेसिडेंट, बट अगर ऐसा कुछ होता है तो बहुत बड़ा मूव हो सकता है. क्रूड ऑयल देखोगे सडनली स्पाइक किया, न्यूज़ जैसे ही ट्वीट आया ऑलमोस्ट 2.5% अप है. देखना पड़ेगा क्या करता है. मॉर्निंग पे जितना स्लो आया था उतना ही बड़ा मूव करके चला गया ऊपर. नेचुरल गैस स्टिल कंटिन्यू अपसाइड. देखते हैं अभी ऊपर जाता है, क्योंकि देखो यहाँ कोई रेजिस्टेंस सपोर्ट इस बीच में है नहीं, तो अननेसेसरी बाइंग सेलिंग कर नहीं सकते. We need to wait for the exact level price will reach there for fresh new entry. दो पॉसिबिलिटी है. अगर मार्केट न्यूज़ को बहुत पॉजिटिवली लेता है तो क्रूड ऑयल कैन गो टुवर्ड्स अगेन 9800. आया नहीं है प्राइस वहाँ तक अभी. वैसे फॉरेक्स में भी देखना पड़ेगा, लेवल थोड़ा सा मुझे लग रहा है शायद पहले भी आ सकता है. एंड अगर नहीं आता है नीचे, वापस सेलिंग आती है तो नीचे सपोर्ट है ही. तो बीच में प्राइस जस्ट हिटिंग दोज न्यूज़. ठीक है, मार्केट नो एवरीथिंग इन एडवांस, यू कैन से इट. ऑल ट्रैप्ड, ऑल सेलर्स ट्रैप्ड ओवर हियर. जितने लोगों ने सेल किया सब ट्रैप्ड है. देखोगे ओपन इक्वल टू लो बनी है डायरेक्टली. Tweet by US president and everything goes apart. Definitely someone made a huge fortune on this candle. अगर देखना पड़ेगा because जो statement पे कहा है, what he said, if I read his tweet on Truth Social, he says the United States will be hitting Iran very hard tonight. These 3 to 4 words are very important. ठीक है, बाकी तो बहुत कुछ लिखा हुआ है, but this line is very important. The United States will be hitting Iran very hard tonight. आज फिर से not looks like there will be any peace deal between those two nations. Crude oil will just dance between this. That's why I think the range is too widen. कोई और सपोर्ट रेजिस्टेंस बना नहीं है इसके बीच में, मोस्टली बिकॉज ऑफ द सेम रीजन. कल ऑलरेडी बॉटम से मार्केट बाइंग करके जा चुका है, उसके बाद सब या न्यूज आ रही है या फिर मार्केट बस वॉलेटिलिटी क्रिएट कर रहा है. टैपिंग रेंज कह सकते हो, बड़ी रेंज है बट दिस इज ट्रैपिंग रेंज. एग्जैक्ट रेजिस्टेंस में भी नहीं आ रहा, अदरवाइज वहां आता तो सेल भी करते, विच इज वन ऑलरेडी टेस्टेड. अगर बहुत स्ट्रांगली न्यूज हुई तो हो सकता है ये लेवल भी ब्रेक हो जाए. सपोर्ट ब्रेक होने का तो नाम नहीं ले रहा है बिल्कुल भी. एंड जिस तरह का ट्वीट किया है, मुझे लगता नहीं अब ये नीचे आने के ज़्यादा मूड में रहेगा. इफ दिस ट्वीट ठीक है, अगर आज ही अटैक होने वाला है तो यू कैन एक्सपेक्ट व्हाट प्राइस कैन गो, कहाँ तक जा सकता है प्राइस केस में. ट्रम्प promises to hit Iran very hard tonight. Not good news for the equity market. Trump warns of strong action against Iran. Donald Trump has announced that the US will take strong action against Iran tonight, signaling a significant escalation in tension between the two nations. Also, उसके आगे जो लिखा हुआ है, that is more concerning. Donald Trump has announced plans to fully take over Iran oil and gas industries, a move that could have significant implication for global energy market and geopolitical dynamics. देखना पड़ेगा ईरान किस तरह से रिएक्शन देता है इस पे. But currently, the tweet and market just suit up. कॉइन को देखोगे, बिटकॉइन सडनली फॉल किया है after this news, just fall approximately 1%. And gold and silver not reacting that much. Silver थोड़ा सा fall किया approximately 0.71%, but gold में कुछ खास नहीं है. Still continuously bearish on bearish territory right now. सिल्वर देखोगे ऑलरेडी 50% डाउन है अपने ऑल टाइम हाई से वापस. मैक्स में लास्ट 1980 का हाई, उसके बाद रिसेंट जो 2011 का हाई बना था, तो 1980 के हाई से तो नीचे ट्रेड कर रहा है करंटली मंथली में। कॉमेक्स का चार्ट अगर चेकआउट करोगे एंड 2011 के हाई के आसपास ऐसा लग रहा है आ ही जाएगा अप्रॉक्सीमेटली। बाकी अदर फॉरेक्स चार्ट देखोगे वहाँ पर अभी नहीं दिखेगा प्राइस आपको। That I think those levels are around $48, but those are not the real charts like on EDA and other charts. सिल्वर का रियल चार्ट्स अगर देखें तो that is price still waiting for I think $45-50 to reach. If it came down approximately 70% sell off already, 50% as I said earlier, 60 to 70% लग रहा है ये भी गिरेगा पक्का। हो गया अपने ऑल टाइम हाई से प्राइस।
Look around.
John was talking about Mark Wall from Deutsche Bank. He went on to say the question is how far can the tightening cycle go? And he's talking about the European Central Bank. He said not far, because while there is upside risk to inflation, there's downside risk to growth. Is it the same here in the United States, or right now, based on what you're seeing in the labor market, is there potentially upside to growth that people are not pricing in?
You know, the starting point here in the United States is exceptional, and it has been for years. There's something about this economy that keeps wanting to grow. Despite uncertainty, despite geopolitical conflict, it keeps growing. And that's certainly true in the labor market. When you look at all phases of the labor market, whether it's, well, let's just focus on pay. The pay rate has been very stable. There's no sense of any kind of inflationary cycle going on in wages. And firms are hiring. We saw 2 months of back-to-back solid prints. So it's hard to say that the labor market is feeling the tension that we're seeing geopolitically, but there is some signs that consumers are withdrawing a bit. They are responding to higher gas prices, and how they look through gas prices is really the question. Not what the Fed can look through, but what can Main Street look through when it comes to summer travel.
Well, to that point, it's connected to the jobs picture. We've been hearing all morning that ultimately we're at a tipping point where either wages go up or spending comes in significantly. Which is it?
Well, if you look at wages, they are going up. They are going up year over year at a really steady clip. And in fact, if you look at base and gross, they continue to grow. But where they're really surging, ironically, or maybe relatedly, is in the goods sector. When I look at wages for job changes in construction, natural resources, and manufacturing, they're all double digits, and they're all higher in terms of their acceleration rate than they were last year. When I look at services, flat to declining. So we are seeing a little bit of an impulse tied to labor shortages in the goods sector, and you match that with wholesale prices today, you're starting to see these things come together in a way that you'd rather they stay apart, which is an acceleration in price points.
Are wages going up or bonuses going up?
Right now, just wages. And, well, sorry, right now, bonuses. Firms are really reluctant to cut wages, and so they'd rather, to keep their talent, especially in labor shortages, they'd rather just give a bonus. But the more sustained that shortage is, they're going to have to respond with a more permanent lure, and that's going to be an increase in the base pay. And that, you know, once that's permanent, and every other bonus is based on base. So that increases labor costs broadly. Firms are reluctant to do that. That's kind of the last resort, but you might start seeing that over the summer if these labor shortages in the goods sector continue.
Nila, always good to see you. Nila Richardson there of ADP off the back of this hotter than expected PPI data. If you looked at the market's not really blinking in the face of some of these risks right now. Still positive on the session, erasing some of the gains, but still up by a third of 1% on the S&P 500. If you check out the bond market, front end of the yield curve, yields are up by a single basis point, Lisa, just 4.15. And as for crude, WTI and Brent up by not even 1% off the back of those headlines from the president.
There are so many different things being thrown at this market. It almost feels like, you know, when you have all the pistons firing like this and everything just goes straight. It's sort of like the paddling duck, right? And at what point are people just sort of unable to price in one direction because there's so many narratives that are competing with one another? What Nila was just saying about the inflationary impulse is important, and it suggests that maybe the Fed should be the one not looking through this, not necessarily the ECB, that it's looking at a lot of downside risks to growth.
Mike McKee still standing by, going through the data. Mike, have you got more? What do you see on a second look?
Well, I think the thing that really stands out to me is not so much the energy price increases, although we saw a lot, including a very big increase in diesel prices. That's to be expected. But it looks like we're starting to see some of these war-related costs spread beyond the energy sector. In final demand goods, we're seeing it in plastics, we're seeing it in materials, industrial chemicals, and natural gas. Liquids also rose. So this is the kind of thing that the Fed has been more afraid of, that it's not just a passing energy thing, that it starts to get into other parts of the economy. We also saw a big rise, 4.8% in the portfolio management services area, which does feed into the PCE. So good news for Jamie Dimon and his friends on Wall Street. Bad news, though, for the folks who are tracking inflation from the PCE target side.
Mike McKee, thank you, sir. Jamie Dimon and his friends on Wall Street making lots of money from a certain IPO. I've got some headlines to share with you. The SpaceX IPO is said to draw more than $70 billion in retail orders alone, said to allocate at least 20% of the IPO to retail investors. The orders for institutional investors closed just after the close yesterday. Today is about pricing the IPO. We've already picked the price before the roadshow even started. Quite a bizarre process here with SpaceX. It starts to trade tomorrow.
Yeah, the idea of retail investor participation goes to the cult of Elon Musk and how much it's really cultivated this entire Reddit crowd of people who are enthusiasts in space and robots and artificial intelligence. And ultimately, it highlights the different composition of some of the investor base of this particular issuance, whether it comes to retail investors or whether it comes to just the general float in passive funds. And that is what people are looking at when they say, maybe we should get ahead of that.
What a moment for financial markets worldwide. We're going to see one of the biggest IPOs we've ever seen, if not the biggest IPO we've ever seen in the next 24 hours. We're pushing a lot of equity down the throat of this equity market at a time where prices are starting to rise off the back of an inflation shock that might be exacerbated further by presidential action, and central banks are starting to respond. The first major central bank, the ECB, hiking rates by 25 basis points. Ira Jersey of Bloomberg Intelligence is with us for more. Ira, do we have the space for all of this? Are these central banks just going to sit by and watch, or will they follow what the ECB has just done?
Well, I think the Federal Reserve is going to sort of push and pull here because there's a lot of doves who are looking at some underlying information and data in the labor market, as well as some of this inflation data, and suggesting that, hey, this is the peak, right? So we have to keep in mind that they're going to be thinking about what happens over the next 3-6 months, a year. And when you even look at the inflation markets right now, and you look at what the market's pricing, this is supposed to be the high this month and in May, and then it will moderate over the course of time. So I think that the Federal Reserve in particular will probably sit on its hands for most, if not all, of this year. But I think there is the increasing risk that if the economy does remain good and wages continue to climb at a reasonably decent pace, that the Fed's next move might be a hike. Now, it might not be till 2027, but the market's going to price that well in advance.
Ira, what's your reaction to the ECB this morning? You've been around for a while. We all remember the hikes from 2011, 2008. Do you think they should be conditioned by that, the mistake they made all those years ago, or conditioned by how slow they were coming out of the pandemic?
Well, I think for the ECB, it's a little bit different, right? Because keep in mind, they have a single mandate, right? So their mandate is price stability. So so they have to take that into account. I think that they are not going to be overly aggressive, however, because they also realize that if they go too fast, that could actually, harm the economy much more. But this was well telegraphed, right? We all knew that they were going to increase rates this month. Hugh Worthington, my colleague in London, who covers the ECB, one of the things that he's noted is, their inflationary environment is actually much worse than it is here in the U.S. in many respects, because energy is actually a larger part of their basket, and they don't have as much domestic production as we do here in the United States. So there actually are shortages in some places and in some industries. So it is much different, and they need to crimp demand a little bit there in order to make sure that they meet their mandate.
Ira, good to see you, buddy. As always, Ira Jersey of Bloomberg Intelligence. Lisa, you've talked about that repeatedly, endlessly. The difference between the central banks, a very different mandate.
Well, yeah, and I appreciate that James Athey pushed back on that, saying that if you have a single mandate, the idea that slower growth is going to lead to lower inflation could be actually offsetting and creating a dual mandate. Okay. But moving forward, there is a real key question here, which is this the appropriate response to curtail demand, especially at a time, remember, a lot of these governments are borrowing more money to finance the gaps in terms of helping people pay for more gasoline. So in other words, it's not going to necessarily create more of a price response or slow demand. It's just going to increase the bill for all of the governments that are going to try to plug this by borrowing money and then giving handouts. I mean, this is a really interesting moment.
What a crazy 30 minutes for financial markets, right? Right now, just ignoring it all.
Yeah.
Future's still just about positive. Let's get you an update on news worldwide in just the last 30 minutes or so with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, exactly. We'll start with recapping the data we just got. So May producer prices coming in just slightly hotter than expected, 6.5% year over year compared to estimates for 6.4%. Jobless claims came in at 229,000 last week, and that was above the estimate for 220,000. Then President Trump posting that the U.S. will be taking control of Karg Island, quote, at some point in a Truth Social post, adding that he is also planning to assume control of the island's oil and gas markets and vowing to strike Iran, quote, very hard tonight. The European Central Bank also hiking interest rates for the first time since 2023. The central bank raising inflation expectations while lowering growth projections in the years ahead. The ECB President Christine Lagarde is set to speak in just a few minutes. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you for that. In just a moment, we'll take that news conference with the ECB President, Christine Lagarde. We can take pictures of that right now. You can see the photos have just started. You'll get the introductory remarks. When it begins, we'll actually go to it. In the meantime, we've got to track the latest developments coming from the President, threatening to strike Iran once again and going one step further in the last 20 minutes.
One step further, saying potentially very soon we could be taking Karg Island. You know, a viewer messaged me and said, well, which is it, Anne-Marie? Is it we're very close to a deal, which the president continues to repeat, or are we imminently about to take Karg Island? Thank you for your attention to this matter, according to this viewer. Well, we don't know right now with the president because he is doubling down on wanting to go after Iran today after his messaging yesterday, as well as kinetic activity yesterday. It's a very bold statement. At this point, you have to watch what he does, not what he says.
Brent crude, just bring up the prices right now. For Brent, for WTI in the commodity market, we're up by just 0.5% off the back of a major threat from the president to really escalate things in the Middle East. We have barely blinked in the commodity market. I've talked about this level repeatedly. 98's the high of the week. It was on Monday, and things have got worse, not better since then, and we're trading at 93 on Brent.
Verbal intervention isn't working anymore. That's the takeaway. In either direction, either up or down, verbal intervention is not being bought by the market because it's been deployed enough times where it hasn't come to fruition that people have learned to ignore it. At a certain point, there is this feeling that it is to escalate to de-escalate, and that it seems to be what people are banking on right now.
How far can these tightening cycles go at central banks? It's quite a moment. It's the first rate hike from a major central bank, 25 basis points. To your point from Deutsche Bank this morning, not far is their answer.
They only think that one more rate hike can get into the pipeline. That is in September. And then after that, not so much, as people look to the deceleration in growth in the region.
How vulnerable are they to events taking place elsewhere right now? These headlines crossing. The president on the phone to Fox News at the moment saying that my preference has always been to take Karg Island. The ECB is facing down this dilemma just like everybody else. The news conference started with Christine Lagarde. Let's take a listen.
In line with this commitment, we today decided to raise the 3 key ECB interest rates by 25 basis points. The war in the Middle East is generating inflation pressures, and the decision to raise rates is robust across a range of scenarios, mapping out how the shock might evolve and affect the medium-term outlook for the euro area. In the baseline of the new Eurosystem staff projections, headline inflation is expected to average 3% in 26, 2.3% in 27, and 2% in 28. For inflation excluding energy and food, the baseline foresees an average of 2.5% in 26 and 27, and 2.2% in 28. Compared with March, staff have revised up their baseline projection for inflation in 26 and 27, owing to a higher path for energy prices, which to some extent is expected to feed into food, goods and services inflation. The baseline sees economic growth at an average of 0.8% in 26, 1.2% in 27, and 1.5% in 28. This is a downward revision for 26 and 27, reflecting a more pronounced impact of the war on commodity markets, real incomes, and also confidence. The outlook remains uncertain, with upside risks for inflation and downside risks for economic growth. The full implication of the war for medium-term inflation and growth will depend on the intensity and duration of the energy price shock, as well as the scale of its indirect and second-round effects. This uncertainty is also reflected in the broad range of outcomes for inflation and growth in the updated illustrative scenarios put together by Eurosystem staff. These will be published with the staff projections on our website. With today's decision, we remain well positioned to navigate the uncertainty caused by the war. We will closely monitor the situation and follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. In particular, our interest rate decisions will be based on our assessment of inflation outlook and the risks surrounding it, in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release available on our website. So I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Let me first look at the economic activity. Adjusting for a temporary factor in Ireland, the euro area economy grew in the first quarter, supported by domestic demand and exports. Yet the war in the Middle East is weighing on activity, and surveys are pointing to a slowdown, especially in services. Manufacturing has held up so far. In part, this is because firms have been building up stocks to cope with supply chain pressures. It also reflects higher defense spending. The labor market remains resilient. Unemployment at 6.3% in April remains close to historical lows. The first quarter saw additional jobs being created, although at a slower pace than in the last quarter in 2025. Labor demand has cooled further, and firms and households expect the labor market to weaken. Looking ahead, staff now expect domestic demand to be weaker than they projected in March, as the war weighs on confidence and higher energy costs erode real incomes. At the same time, Household balance sheets are solid overall, and consumption should remain the main driver of growth. Higher energy costs and lower confidence will dent private investment in the short run, but it should be underpinned by firms investing in new digital technologies. Government spending more on defense and infrastructure should continue to support public investments. These factors are expected to provide some cushioning against the fallout from the war. The Governing Council highlights the urgent need to strengthen the euro area economy while maintaining sound public finances. Fiscal sustainability is a crucial anchor for broader economic stability. Fiscal responses to the energy price shock should be temporary, targeted and tailored, as emphasized in the European Commission 2026 European Semester Spring Package. Reforms to enhance the euro area's growth potential and accelerate the energy transition to reduce reliance on fossil fuels are more vital than ever. Completing the savings and investment union is key to funding innovation, supporting the green and digital transition, and improving productivity. The digital euro and tokenized wholesale central bank money will enhance Europe's strategic autonomy, competitiveness and financial integration, and will boost innovation in payments. It is thus essential to swiftly adopt the regulation on the establishment of the digital euro. Simplifying and harmonizing rules across the EU single market will help European firms grow faster. Let me now look at inflation. Inflation rose to 3.2% in May from 3% in April. Energy price inflation ticked up to 10.9% in April, while food price inflation fell from 2.4% to 2%. Inflation excluding energy and food picked up to 2.5% from 2.2% in April, as goods inflation edged up to 0.9%, and services inflation increased from 3% to 3.5%. Domestic cost pressures eased in the first quarter, supported by slower growth in wages and profits. The ECB's wage tracker and surveys on wage expectations continue to indicate that wage growth should ease over the year. However, it is becoming more expensive for firms to source other inputs, and they therefore expect to put up their selling prices. Moreover, some indicators of underlying inflation have already been driven higher by the energy shock. Inflation expectations over shorter horizons remain well above levels before the outbreak of the war in the Middle East. At the same time, most measures of longer-term inflation expectations stand at around 2%, supporting the stabilization of inflation around target in the medium term. The increase in energy prices will lift inflation further over the summer and keep it well above target into the first half of 2027. It will also have an impact on food, goods, and services inflation. Inflation should then return to target in the second half of 2027, supported by falling energy prices and slower increases in other prices. However, the war in the Middle East remains a major source of uncertainty, and the longer energy prices stay high, the more likely they are to drive up broader inflation through indirect and second-round effects. We will therefore closely monitor the size and persistence of the energy price increase and how it feeds through to price and wage setting, inflation expectations, and overall economic dynamics. Turning now to the risk assessment. The risks to the growth outlook are to the downside, mainly owing to the war in the Middle East, which has added to the volatile global policy environment. Prolonged disruption of energy supplies could increase energy prices further and for longer than currently expected. These factors would erode real incomes even more and make firms and households more reluctant to invest and spend. The drag on growth would intensify if the closure of major shipping routes were to cause acute shortages of key inputs that forced euro area firms to curtail output. A worsening of global financial market sentiment or a tighter supply of credit could dampen demand. Additional frictions in international trade could also further disrupt supply chain, reduce exports, and weaken consumption and investment. Other geopolitical tensions, in particular Russia's unjustified war against Ukraine, remain a major source of uncertainty. By contrast, growth could turn out to be higher if the economy and energy markets were to adapt more quickly than expected to the disruption caused by the war in the Middle East, or if the war was resolved promptly and sustainably. Moreover, planned defense and infrastructure spending reforms to enhance productivity and the euro area firms adopting new technologies may drive up growth by more than expected. A deeper integration of the single market would also boost growth beyond current expectations. The risks now to the inflation outlook are to the upside. If energy prices were to rise by more and for longer than currently expected, euro area inflation would increase further. This could be reinforced and become more persistent if higher energy prices were to spill over by more than expected to other prices and to wages, if longer-term inflation expectations were to rise in response, or if global supply chains were disrupted more broadly. Ongoing trade tensions could also give rise to more fragmented global supply chains, curtail the supply of critical raw materials, and worsen capacity constraints in the euro area economy. Extreme weather events and the unfolding climate and nature crisis more broadly could drive up food prices by more than expected. By contrast, inflation could turn out to be somewhat lower if the economic effects of the war in the Middle East proved to be more short-lived than currently expected, or if indirect or second-round effects prove less pronounced than anticipated. More volatile and risk-averse financial markets could weigh on demand and thereby lower inflation as well. So looking now at the financial and monetary conditions. Financial conditions are broadly unchanged since our last meeting, but remain tighter than before the war. The cost of issuing market-based debt rose to 4% in April from 3.9% in March. Bank lending rates for firms remained at 3.6% in April, and mortgage rates at 3.4%. The annual growth rate of bank lending to firms increased to 3.4% in April from 3.2% in March, while the growth rate of corporate bond issuance rose to 4.6%. Mortgage lending in April again grew by 3%. In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. Euro area banks are resilient, supported by strong capital and liquidity ratios, solid asset quality, and robust profitability. However, a sudden, sharp drop in asset prices, potentially amplified by the non-bank financial sector and deteriorating asset quality, particularly in energy and trade-sensitive sectors, would pose risks to financial stability. These risks increase the longer the current geopolitical conflict lasts. Macroprudential policy remains the first line of defense against the buildup of financial vulnerabilities, enhancing resilience and preserving macroprudential space. So in conclusion, the Governing Council today decided to raise the 3 key ECB interest rates by 25 basis points. We are committed to setting monetary policy to ensure that inflation stabilizes at our 2% target in the medium term. We will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook and the risks surrounding it in light of the incoming economic and financial data, as well as the dynamics of underlying inflation and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. And we now stand ready to take your questions.
The first question today goes to Balazs Korani of Reuters. Balazs, please.
Good afternoon. First off, allow me to say a big hello to the newest member of the trio on stage. Welcome, Boris. President Lagarde, could you give us a flavor of the debate today? Were other options discussed, perhaps a hold, perhaps a larger increase? What were the arguments put forth in the discussion? The second question is about your reaction function. I'm curious how many more rate increases are embedded into the staff projections. What do you need to see to deliver on those? And will you have that sort of volume and quality of data available to you by July to make an informed decision?
Thank you very much for your question, and thank you for greeting the three of us, and particularly Boris, our new Vice President. So, the decision that we took today to raise by 25 basis points our 3 interest rates was a unanimous decision, without reservation. We did not discuss or debate any other alternative proposal, and the one that was predicated on the Eurosystem staff projections and the recommendations of our chief economist was unanimously endorsed. No discussion of others. Our reaction function has been very steady, repeated over the course of time, and I hope I will not offend you by repeating yet again that given the level of uncertainty that we are facing, we will decide on a meeting-by-meeting basis. We will be data-dependent. There will be no preset rate path in our considerations. And as a result of that, it will be what it will be. Now, this is not much by way of forward guidance, but as you know, under the present circumstances, there is no such justification for the decision that we are making and that we will make in the future. I think I would add one thing. Because I've read here and there that, the ECB will make an insurance decision. It will be an insurance matter. It will be a preemptive rate decision. It's not at all the way we had our discussion, really. Our discussion were predicated on, obviously, the major energy shock that we have observed since the beginning of March, that is enduring longer than what was expected by geopolitical experts, and which we're beginning to see broadening throughout the economy, with direct cost being obvious, with indirect cost also showing up. And as I said, we will be monitoring attentively any further consequences of this major energy shock. Second response in relation to this insurance allegation of ours, which it was not. We have updated our scenarios, but if you remember from last time around, we had 2 scenarios which we published. We will be publishing a third scenario that will be available on our website, which we have decided to call the milder scenario. So, staff from the Eurosystem has worked on the update of the adverse and the severe scenarios, but they have also worked on a milder scenario in order to be on both sides of the baseline. And the decision that we took today to increase by 25 basis points all our interest rates is robust across the 3 scenarios. The 2 updated adverse and severe, but also the milder scenario, which obviously is more positive and something that we should not neglect, but which is at this point in time unlikely to materialize. But we still thought that it was our duty to look at both sides. And on all accounts, our decision stands. And if we were not taking that very obvious monetary policy decision, then at the end of the medium term that we look out for projection purposes, we would be north of our target. So I hope I have covered your question.
Next question to Annette Weisbach of CNBC. Annette, please.
Thank you very much. Madame Lagarde, I have 2 questions, obviously. I would like to ask you about the recent uptick in core inflation. We've seen that service prices are on the rise. So is that, in your opinion, already a sign that we're seeing first signs of second-round effects? And then my second question would be, where are we in between all these scenarios? Are we closer in the adverse camp? Are we approaching the severe camp? What's the opinion of the ECB? Thank you very much.
Well, on the services inflation, as you will have seen, it has moved from 3% to 3.5%, which is a significant increase. Now, obviously, what we need to understand better is what is under the skin of that increase and how we can distinguish between what is, the direct and indirect consequence of the energy prices' significant increase, or whether there is something else. At this point in time, we cannot yet say whether this service prices significant increase is attributable exclusively to direct and indirect. What we are confident in, though, is that we are not seeing yet second round effect, which would be largely attributable to wages, which play a significant contribution in the production of services. But I'm saying again that we will be monitoring closely all that in the months to come. Now, you ask me where we stand, and I just want to take you back to a speech that I gave back in March, which I know you've been following. It was my speech to the ECB watchers. And in March at the ECB watchers conference, I distinguished between 3 different situations, which are an analytical frame in and of itself, if you will. So I'm not going to consider that one is exactly scenario X, Y, or Z. But I said, first of all, if the shock is limited, and short-lived, it's a case where we see through. Now, obviously, we do not find ourselves in this situation because we have decided, and we think that it's a monetary policy that stands firmly on its own and that is robust across all scenarios, but we are not in that sort of let's see through, is going to be short-lived and small. The second situation that I referred to is the situation where the shock produces a large, though not too persistent, overshoot, in which case a measured adjustment of policy is needed. Okay? The third case that I referred to in that ECB Watcher's speech is the situation where we expect inflation to deviate significantly and durably from target, in which case the response must be appropriately forceful. So I leave it to you to decide which of the three. I've already eliminated case number one, which is clearly not a situation where it's short-lived and rather small. This is not the case. The decision we've made is not a forceful decision either, right? 25 basis points is a decision which clearly is a signal and is necessary given the economic situation that we have, given the uncertainty that we are navigating, given the inflation outlook that we have and the projections that have been produced by the Eurosystem staff.
Next question, Alex Weber of Bloomberg News. Alex, please.
Good afternoon. Thanks very much. On the sort of measured adjustment that you might be doing, does the neutral range?
What I said, you concluded that.
Yeah. But does the neutral range play a role in your thinking in that regard? Is 2.5% for the deposit rate an important threshold, or could a measured adjustment also mean a slight step into restrictive territory? And then secondly, so before today, there were quite a few economists who've warned that a rate hike in the current environment would be a mistake. Did you reflect on these comments, and what's your response to this?
So, to the risk of disappointing you, we have not discussed the neutral rate, nor the range of neutral rate. As you know, there is a lot of work that has been done by staff in that respect, which have given a range within which the neutral rate would be located. Philip Lane has discussed that extensively in a speech recently, but we have not debated that our positioning with reference to the neutral rate, which I'll remind you is a bit difficult to actually assess precisely because we are not in a situation where there are no shocks, which is typically what you need to have as sort of a environment within which you determine where you are neutral, because you don't stimulate, you don't restrict. So this was not debated at all by the Governing Council. So, you know, everybody has to do what they have to do. Our job is price stability. And our job is to apply the strategic review principles that we have agreed. Our job is to follow carefully the reaction function that you are all familiar with and that we try to be as transparent about as possible so that we are predictable. And in the face of that, frankly, given the numbers we have, given the inflation outlook, given the risk to the upside on inflation, given the robustness of the decision against and across all scenarios, the bad one, the very bad one, and the not so bad one, and the fact that it holds in all circumstances. And if you add to that the fact that our growth forecast as revised is 0.8%, you know, minus 0.1 relative to March, and 1.2 next year, and 1.5 the following year. It's not as if we are in an environment where growth is absent or under significant threat. A lot more can be done by structural reforms, by encouraging a European market that has no obstacles to trade, a saving and investment union, and so on and so forth. And we encourage that very strongly in our monetary policy statement. Thank you.
Now, Aude Kersulek of BFM Business. Aude, please.
Thank you for taking my questions. In the last meeting's minutes, some members mentioned the need for the ECB to avoid being perceived as complacent. Could you elaborate on this? I wonder if today's decision is driven by communication or credibility purpose rather than by inflation expectation becoming unanchored. And secondly, your press release states that today's decision is robust across a range of scenarios. Why use this word today? And does it mean that you have a clearer view of where rates are heading? Thank you.
Thank you very much for your two questions. One is, of course, we should not be complacent. I think that's a recurrent principle that we should always apply. As we should apply the principles of being data dependent, being analytical and rigorous about the analysis that we do of all the numbers that we receive. And this is what the Eurosystem staff has done, and this is what will be done going forward by the ECB staff when they produce the next projections. So it's not an issue of complacency. And honestly, you know, I don't like to brag, and I'm not full of vanity, but I would hasten to add that having maintained inflation pretty much at target over the last 12 months, we have not been complacent. We have done our job, and we will continue doing so. So on your second question, the characterization of robustness of the decision is obviously helpful when you do scenarios across the board. So if we had done, you know, severe and adverse scenario, adverse and severe scenario, and then decided it was robust, yeah, of course it is robust. But we decided on purpose to do scenarios on both sides of the baseline. And even in the milder scenario, the 25 basis points cuts is completely warranted and justified. So this is what we've done.
And now Olaf Storbeck of the Financial Times. Olaf, please.
Hi, I have one question on the inflation forecast. What struck my eye when I compared the current baseline with a March adverse scenario, the headline inflation is lower than in the adverse scenario, but the core inflation is higher for 26. Does this mean that kind of spillover effects are already bigger than you anticipated in March, and what are driving them? And my second question is, you clearly said the rate hike isn't an insurance hike. What is it then? Is it the start of a new hiking cycle, or what else? Thanks.
Well, thank you very much for your two questions. So with reference to the baseline, first of all, I have not compared, and we have not gone into the exercise of comparing the baseline with the adverse or the severe scenario at this point in time. We have updated our baseline both on the account of inflation and on the account of growth as well. With the caveat of Ireland, which is a case in point of international companies organizing their business in such a way that it impacts in an interesting way the Irish numbers. But so what we have done is that we've updated the baseline, and I think the best thing that can be done is to compare the adverse scenario prepared in March with the adverse scenario compared with June. I think that is more relevant than baseline versus last time around adverse. And as I told you in the earlier phase of our discussions today, we are beginning to see a broadening of inflation throughout the economy. And that is obviously in terms of direct effect, but also in terms of indirect effect. Not yet at this point in the front of the second round effects. But we are going to be extremely attentive. And when we see, for instance, that the delivery dates, that the smoothness of supply is beginning to be impaired, obviously we will be attentive to those sort of ancillary indicators that would help us understand where it is heading. One more point, because I did speak about wages earlier. We do include a level of second round effect in our projections, obviously. And the projections that we have for the 3 years, actually 26, 27, 28, all anticipate compensation per employee at 3.2%, which in and of itself, if you compare that with the projection that we have on inflation, justifies the fact that the net income of workers will actually be positive and would lead to assume that consumption will continue, not only will continue to be the main driver of growth as it is, but will continue to grow probably more than other factors. We see other factors to fuel growth going forward. Now, yes, I did say that it's not an insurance policy interest rates decision, simply because it's a good monetary policy interest rate decision. When you have, the latest reading at 3.2, when you have the inflation outlook over our target, peaking in the end of 26, continuing to be over target throughout most of 27, returning to 2% in the autumn of 27, and being at target in 28, on the basis of, market curves and all the rest of it, it is pretty obvious that we have to make a decision, that it is a sensible monetary policy decision. So I don't need to characterize it as credibility, insurance, or anything else, for that matter. It's a monetary policy decision that stands, and that is, as we say in the monetary policy statement, robust across all scenarios, including the mild one.
Moving to the other side of the room, Marina Ninkovic of the Croatian broadcaster.
Welcome.
Thank you. Hello, I have a question for Madame Lagarde. Croatia is one of the newest members of the Eurozone, yet for many months it continues to experience rather high inflation rate, way above the EU average. What do you have to say to the citizens that are concerned about this? Thank you.
Well, thank you very much to your question. We are, of course, delighted that Croatia is a member of the euro area, and I and all governing council members and members of the executive board are delighted to have the Croatia National Bank, I was going to say former governor, being now a member of the executive board and the new vice president of the ECB. It's a great representation, and it brings, diversity amongst the group, and it's really a blessing that Boris has joined us. But turning to inflation, of course we're concerned about inflation, but we are not just concerned about inflation in one member state or the other, because our job at the ECB is to look at the whole of the euro area. And our concern, as I said earlier on, is that we see the energy price inflation, 10.9% at the moment, broadening throughout the economy, which is why we are making this decision today. Broadening inflation outlook, underlying inflation, all of that point in the direction of having to make a decision of increasing interest rates. So, because our mission, our mandate is to restore price stability, we make those decisions. And we are driven by that objective, price stability. Thank you.
Next question goes to Klaus-Rainer Jackisch of the German broadcaster HR.
Good afternoon. Mrs. President, given some of the statements of members of the Governing Council previous to this meeting, one could have expected that the projections for the inflation is much higher. Can you give us a little bit of a flavor how serious this inflation crisis is actually, perhaps compared to previous ones? And the second question, as you know, there's already a lot of criticism despite this very moderate rate hike, especially by the unions who fear that growth could be dampened even further. What do you say to them? Thank you very much.
Well, thank you very much. As I said, our mission, our mandate is price stability. We have defined price stability for our strategy review and our purpose of making decisions at 2% in the medium term. When you see inflation picking up in the way it does, broadening throughout the economy, when you see inflation outlook north of that 2% target and only returning to 2% at the end of our projection horizon, when you see risk to the upside, to us, this is inflation that needs to be taken into account and that needs to be addressed. So I don't know, what other governors in whatever publication or interviews you refer to alleged that it would be higher inflation. But we do have inflation that is too high for our citizens, that is too high for the purpose of price stability as well. And we will address that because our commitment is price stability. Your second question was about the risk resulting from this decision. First of all, I would observe that the main risk would be not to take that kind of decision. Because if you let inflation start running out without control, then it becomes a much more difficult situation to bring it back to the level of price stability that we have defined. So the good decision was actually to raise interest rates, to commit and to deliver on price stability so that people will make their investment decision, their employment decision, their wage negotiations decisions in the light of that commitment to restore price stability as we will.
And now Elisa Piazza of Class CNBC Italian broadcaster.
Thank you for taking my question. Well, you do not say anymore in your statement that longer-term inflation expectations remain well anchored. So if you could tell us a little bit more about this change. And then I have another question on another topic, because we know that the ECB has convened banks to discuss the risks associated with the new AI models, such as Mythos. So what actions is the ECB taking on this issue? And do you consider these models to pose a potential systemic risk to the European banking sector? Thank you.
Thank you so much for your two questions. So in terms of inflation expectations, we look at three categories of expectations. We look at market-based measures, we look at survey-based measures, and we look at consumers' expectations. And we try to understand exactly where those expectations stand between the short term and the medium term that is relevant for our monetary policy decisions. And what we see at the moment is short-term inflation expectations that have risen on, in all three categories, more so from the consumers, because that is typically the case. But when you look at the longer-term expectations, they are broadly anchored at our 2%. And whether you look at, 1 in 1, 5 in 5, 1 in 5, you have the whole category of intervals to look at. And on all those accounts, inflation expectations are broadly anchored. So you asked me about the, I will call it artificial intelligence at large, but it's clearly the most recent development of artificial intelligence, whether it's by Anthropic or by OpenAI or by, other major developers and investors in artificial intelligence, or whether it's from other countries, we are seeing significantly new, faster, more intrusive developments. That is a fact. We also know that these developments are here to stay, and that there will continue to be more in the coming months and probably on an ongoing basis. So that calls for, two categories of responses. One that addresses our own central bank. Are we at the ECB and other national central banks around in the Eurosystem well equipped to actually resist potential intrusion, potential hacking, potential negative intrusion that would be using those tools. And this is work that is underway, and this is one that we take very seriously, because obviously we are a central part of the financial world. The second, which is more under the remit of the SSM, has to do with how we help, flag, call the attention of all the banks that we supervise to make sure that they too, and I know that they do, but that they too pay particular attention in order to protect themselves and make sure that possible intrusion that operate at a fast pace are not going to hurt them. So I think everybody is looking at this very carefully. We do not all have access to the latest the latest tools of some of those developers that I have mentioned, but there are ways, not necessarily using the ultimate state-of-the-art and latest version, but there are ways to actually protect ourselves, do the necessary patching, and make sure that we are as secure as possible. So this is all of that is taking place. So that's one category. I think there is another category that is, worth discussing, which has to do with how governments, how sovereigns actually respond to these risks, of which I think we are seeing maybe the top of the iceberg, and for which more significant risk should be anticipated, and possibly joint framework, joint governance should be discussed at a higher level. But for the moment, at our limited level as a central bank, we do what we can in response to these developments that are here to stay. Thank you.
Last question today goes to Arturo Lopo of the Spanish broadcaster RTVE. Arturo, please.
Thank you for taking my question. Mrs. Lagarde, what would you need to happen to make today's rate hike decision to reverse? What if under these current circumstances of massive uncertainty, how much time do the ECB or the Governing Council would need to discuss or to consider reversing this rate hike? And as a second question, in this case, you have talked about this is not an insurance rate hike. This is not a cycle. This is not the beginning of a cycle. But at the same time, which are the other components that could play a bigger role on pushing up the floor of the interest rates in the Eurozone? Which is the future good place to be that you have been talking about in the future? The previous 2%, which is the new, under these circumstances, which is the new 2% in the interest rates here in the Eurozone? Thank you.
If you look at our monetary policy statement, we say very specifically that with this 25 basis point increase of interest rates, we are well positioned to navigate the uncertainty and the developments going forward. So that stands very clearly in the MPS. As to the rest, we will be deciding meeting by meeting. We will be data dependent. We will have no preset, predetermined rate path going forward. And that's the way we will be operating. Thank you.
Thank you very much. That closes our press conference. We will be back here on the 23rd of July. And until then, all the best and have a good afternoon.
All right, that was ECB President Christine Lagarde in Frankfurt. This is Bloomberg Open Interest. I'm Matt Miller in New York. Let's get a check on markets on an important day for the U.S. We have gains on the S&P futures, gains on NASDAQ futures, the Dow Jones Industrial Average adding some as well as we get ready to add the world's largest IPO. Stocks to watch today as big tech rebounds. President Trump vows more attacks on Iran, and investors gear up for the SpaceX IPO. We have Intel jumping on a double upgrade from Bank America. Oracle is one of the few tech stocks in the red after reporting a boost in AI spending for the year, so higher costs. And you can see NVIDIA, the biggest company in the world, holding it up a little bit, gaining 0.6% in the pre-market. Let's discuss all of this with Bloomberg Intelligence Head of Global Tech Research, Mandeep Singh. Mandeep, I mean, there is so much going on in your universe right now. This feels like the culmination, right? Is the SpaceX IPO going to mark a top?
Well, I mean, the way I look at it is right now you've got technologies that are building on top of one another. The reason why orbital data centers are being discussed is because we need a lot of compute. You know, there are estimates around 250 gigawatts of compute, almost $10 trillion in spending. So that's where, you know, the constraints is what's really causing excitement around space data centers. And that's where, you know, this is a big computing shift. When you think about, you know, the 3-4 big shifts that we have already seen in the past 50 years, this could be even bigger than that. So from that perspective, it's hard to wrap around your head around how big that opportunity would be and who are the companies that are exposed to that trend and what kind of growth runway they may have. I mean,
well, and how much it's going to cost to finance that opportunity, right? I mean, we see Oracle shares down because it's costing more than investors are expecting. And I noticed that their cloud revenue grew by 93%, so it almost doubled, but only to $5.8 billion. I mean, if they keep that up next year, they're only going to have 25, maybe 30 billion in cloud revenue, and they're spending how much to build it out?
Well, all these companies are raising their capex. In fact, you know, we are already talking about $1 trillion plus in capex from the hyperscalers alone. And now, you know, with SpaceX, look at what they have done with their terrestrial data center capacity. They've rented it out to Anthropic and Google, and now they have added $25 billion in annual revenue run rate just by renting out the compute. That just goes to show what kind of shortage and environment we are in when it comes to computing capacity, just raw compute.
But they lose, Mandeep, they lose as much money as they make in revenue. I mean, it's not like they have a little margin or no margin at all. It's 100% negative, and their loss is going to continue to grow.
Well, after you add this $25 billion run rate from these two deals, it will be margin accretive. So I think margins will improve. They were losing money. And look, that's where you have to kind of say they got it right in terms of investing first in the terrestrial data centers, because if they didn't have Colossus 1 and 2, this $25 billion line would have not shown. And yes, they want to spend more on orbital data center capacity. And that is where you could ask that monetization question, where they may have to invest more upfront before the dollars show up. But at the same time, I still think, you know, the margin profile is going to improve. And it's investors like to see growth. That's what they want to see when it comes to this build out and, you know, the new technology shift that we are talking about. And SpaceX has pivoted quite nicely in terms of saying, oh, our revenues are 5-7 years out versus, okay, next year we'll be doing $50 billion in revenue now compared to what is in the prospectus, which is $18 billion. All
right, just quickly, what year will it be when they have an annual net profit?
Well, what we saw with Uber or, you know, some of these IPOs which were very negative when they IPO'd, it took them 3 to 4 years. So I would say within the next 3 to 4 years, they should be able to have some sort of profitable metric around non-GAAP numbers that they have given.
But actually make money, like bottom line, like are they going to bring home the cash?
You want them to buy stock and, you know,
Mandeep, we're going to continue to talk to you. Obviously, it's going to be a very busy day for you. SpaceX obviously going to price the IPO this afternoon and start trading tomorrow. Bloomberg Intelligence head of global tech coverage, Mandeep Singh, will be along for the ride. Now, this IPO has attracted more than $70 billion in orders from retail investors alone, according to people familiar. Let's discuss discuss with Bloomberg IPO reporter Bailey Lipschultz. And Bailey, you've been on the IPO beat for many years, including during the meme stock era when, you know, Wall Street bets would buy anything that went public. And have you ever seen a number like that, $70 billion in orders?
No. And it's never been to the scale of potential allocation. We were talking, even if they come in at 20, 30% of this IPO, you're still talking potentially more money going to retail in this IPO than almost every other IPO has raised in totality. So these are staggering numbers. The interesting thing to keep an eye on, though, retail not only is not price setters, they are price takers. The big question has been, what happens when the stock opens tomorrow? Will retail have the capacity to keep buying? And is that something that can bridge the gap from IPO to NASDAQ 100 entry? That's 15 trading days that we don't know what'll play out.
So that's a 3-week gap until we get, how much guaranteed buying power is that? Like $10 billion coming in with the NASDAQ 100 and the FTSE Russell indexes?
Yeah, it's pretty strong. It's obviously not what could have been at play if the S&P 500 had a fast track.
That would have been 40 to 50 billion.
And that would have been big. Granted, that would have taken 6 months to play out. But this is going to be some pretty big passive money flowing. And the interesting thing to also keep an eye on is we're going to have levered ETFs around SpaceX, single stock levered ETFs trading shortly after the IPO. So that's going to be something that'll create flow into the stock, as well as kind of that net buying from the NASDAQ 100. Buying the Qs are also buying some of those levered ETFs.
Bloomberg 500 going to include SpaceX right away? Does the B500 get that in the index?
You asked me this last time, man. I honestly don't.
I thought you would have looked it up since last time.
I did Google it. They're different. It's different than the S&P 500.
You don't have to Google it. You work at this company.
You work here too.
All right, Bloomberg's Bailey Lipschultz talking to us about the SpaceX IPO. We're going to continue. Obviously, this day and really this era is all about two things: tech stocks and the war in Iran. We're going to cover that all with Bruce Richards, the CEO of Marathon Asset Management. He's going to join us in the next hour. He says SpaceX is the biggest rising star of all time, the GOAT. We're going to talk to him about SpaceX from a credit perspective. But back to the war in Iran, President Trump threatening more attacks in a Truth Social post. He said the U.S. will hit Iran, quote, very hard tonight and take control of a key Iranian oil hub, much like we have with Venezuela. The president spoke at the White House yesterday.
We hit them hard yesterday, and we're going to hit them again hard today, in case you miss it, in case you don't turn on your television set. And we'll see what happens with the deal. We were really close to a deal, but they keep tapping us along. They keep playing us for suckers because, you know what? They dealt with some very stupid presidents.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. And Tyler, what sense do you get listening to the president that he wants to achieve with these attacks? Does he still want some kind of deal?
Well, Matt, at this point, what we're hearing from the administration is that the escalation in both the strikes and now these renewed threats that we got this morning are geared towards trying to force Iran to make concessions when it comes to the negotiating table. Though in an interview with Fox News moments ago, President Trump said that his patience is ultimately wearing thin. And that's part of why we're starting to see some of this rhetoric come out from the White House, including saying that we could take Island. Now, of course, that in and of itself is raising its own political risks and stakes, as it has these major questions here about whether or not that would involve putting U.S. forces on the ground. President Trump did say that he doesn't want to have, quote, boots on the ground, and we've heard U.S. officials previously float that maintaining air superiority could mitigate that risk. But he went on to add, in part, quote, if I wanted to, we could put a small group of soldiers and take over the whole place. Keep in mind, the U.S. did strike Karg Island back in March, but ultimately opted against hitting Iranian energy infrastructure on Karg Island and instead geared it towards those military assets. So as we watch for what will happen later tonight, as President Trump vows that it will be more powerful than we saw overnight, we are going to have to see what those targets include and whether the U.S. sticks with the path of military targets or chooses what could be some serious escalation.
It doesn't seem, Tyler, as though the oil markets are terribly concerned about a resumption of all-out war. We see NYMEX crude down to under $90, $89.24. Brent is off about $1 right now to $92.21. What did we learn yesterday from the president in terms of how much oil is flowing through the Strait of Hormuz?
Well, according to President Trump, the U.S. has so far helped to escort nearly 200 ships since the ceasefire began, which he says had more than 100 million barrels of oil on board. We're still waiting for some more formal verification on that. We do know that more flows have been going through as we see some Middle East exporters start to open up their exports to Asian markets, which we hadn't seen since the start of the conflict in the last week. But with that said, there are still significant risks here, of course, to commercial shipping, as we heard from the IRGC overnight, that they are going to tighten their grip and close it off to all commercial vessels. CENTCOM did come out with a statement saying that that is not true and that the U.S. is still helping to ensure there is some sort of freedom of navigation. But, Matt, I would also put on your radar that as the U.S. threatens to hit energy in terms of Karg Island, we could see Iran really respond by retaliating and hitting maybe Gulf state energy sites as we've seen before, but also renew the risk that maybe we could see Iran proxies utilize their power when it comes to the Red Sea. Earlier this week, the Iranian-backed militant group, the Houthis in Yemen, said that they were banning all Israeli cargo ships from going through that corridor. They didn't extend that threat to all commercial shipping, but it does, of course, just raise the risk even more when it comes to the Strait.
Tyler, thanks very much. Bloomberg's Tyler Kendall reporting from Washington. Now, quick check of what's going on in the markets. 20 minutes after the opening bell, you have the S&P 500. This is the cash trade, obviously. The ECB kind of threw me off a little bit. Up 0.5%, 73.05. NASDAQ 100 gaining more than 1%, 28,827. And Brent crude down 1% or 89 cents to 92.22. Joining me now here in the studio, Franklin Templeton, Senior Investment Strategist, Katrina Dudley. Katrina, thanks so much for coming on. Let me just get your take on what we've seen happen over the past few days, because Friday we had a massive sell-off in tech stocks, right? 4.8% on the NASDAQ, and this week has been choppy.
This week's been choppy because people are talking about the returns on AI. And I think that's really been the narrative. If we look at the narrative earlier, it was where are people spending and what is the CapEx spending? And now we've got this focus on where can we actually generate money and where can we actually start to earn profits? And I think you were asking about, on the SpaceX IPO, when are we going to see profitability? I think that it will be longer tailed because a number of these capital investments are by their very nature long-term investments. So the returns will be in the future. And I'm just not sure we're kind of used to that yet as a market.
Well, certainly not for a company that's valued at $2 trillion, right? I mean, it's odd or unusual to have a company that's losing, more money than it makes in revenue get an investment-grade credit rating.
I think we were talking about that just earlier, the fact that it's raised, the $20 billion of debt, and it's got it at 4% interest rates, which is phenomenal. I think that there's two things that really differentiate this, and I'd love to think it through, is that, number one, they're deploying tangible, real assets. If we look at some of the other, people have been talking and likening things to the internet. When we were looking at the internet, they were creating intangible assets. They were creating networks, and those things were, harder to touch, harder to feel. SpaceX is putting real things up into space, and so people really like that backing aspect of it, which is what I think is driving that investment grade, the investment grade rating. And then the second thing, if I go back time and time again, and probably we have to go way back in history, look at the railroad boom, for example. These companies were not making money for long periods of time, but they were putting infrastructure in the ground, and that infrastructure continues to serve us today.
It makes sense, and Halo investments are all the rage right now, right? Hard assets, low obsolescence. I wonder about, though, the costs, the CapEx, especially if these are depreciating assets. How do you feel about investor reaction to Oracle, for example, is negative after they find out it spent more money than it was supposed to?
I think when you look at the spending more money, people are just making sure that the investments are rational. Because the fact is there's such long tail in the returns, people are actually challenging the upfront numbers a lot more today than I think in their past. And I do actually think that's a healthy sign of the market, that it's, we'd had this idea that, probably a year ago, if you just said I'm spending on AI and I'm spending CapEx on AI, the stock would go up. Now, the narrative is if you're spending please give us the return criteria. Talk to us why you're spending this money and how we as investors should look at the KPIs and judge the returns on that. Because as investors, we're a little unsure, and we're asking to be kind of, let under the hood and give us a couple of those metrics so that we can get comfortable as investors that you're making a right decision. I think, though, we also need to balance this out. In all of history, you have had situations, and I don't think this will be different, where people do make capital investments that don't make the returns. We just have to be prepared for that and make sure that you're invested in the companies that are not doing those type of uneconomic investments, or at least have buffered them or kind of sandboxed them in some ways.
How much do rates matter? I mean, we just had the ECB, and obviously that's a totally different ballgame than the Fed. But we do see the 10-year at 4.5%, the long bond at 5%, at a time when inflation, the PPI number came out at 6.5% today.
I know, and I think it is the kind of combination of what is inflation expectations versus what is short-term print. And I think expectations are significantly lower. People are talking about this as being kind of a temporary blip. Now, I would say I was, probably a couple of months ago, I thought that this was going to be much more of a temporary blip on the, inflation side and on the oil price side attached to the war in Iraq. That has obviously extended longer than expected, but interestingly, oil prices have come down off those highs. So the inflation that's coming out of energy prices is starting to taper. We still do have the housing price inflation, but that market started to slow down. You've seen a little bit of stability there. So we've not necessarily got as much of an inflation tailwind there on the consumer. But I do think we are continuing to be very cautious on the inflation narrative. And I think that is going to hamstring the Fed. But don't forget, our Fed is a dual mandate, so they need to ensure full employment. And with AI and people talking about AI being a jobs replacement technology, I think that they're also...
But that hasn't shown up in the jobs market. Look at the last non-farm payrolls number. It was a blockbuster.
Exactly, because the fact is that what's happening is that people who are seeing parts of their jobs replaced by AI are actually repurposing themselves and actually making themselves even more valuable using AI to help senior executives. That's what we just saw with a whole lot of our administrative assistants. That some of the work that they're doing, which was no joy work, as I call it, they're taking that time and actually making themselves more productive. And I think that that's the surprise that we've seen on the jobs narrative.
Katrina, great having you in today. Thanks very much for joining us. Katrina Dudley there, Senior Investment Strategist over at Franklin Templeton. Coming up in the next hour, Marathon's Bruce Richards on SpaceX and opportunity in credit markets. Plus, we'll talk data center real estate with Digital Bridge CEO Mark Ganzi. They have leaned heavily into data center real estate and now are one of the biggest owners in the country. In terms of what's going on in the markets right now, just about a half hour into the session, we're seeing gains on the S&P 500, 73.25 right now. The NASDAQ at 28,960, up 1.6% as we await the SpaceX IPO pricing. This is Bloomberg Open Interest.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From ABC News, I'm Sherry Preston. Another threat from President Trump on social media this morning. He's saying that the U.S. will be hitting Iran very hard, taking control of Karg Island and other oil infrastructure points. The president also calling into Fox and Friends this morning, saying of Iran.
And they're really in submission. They just don't know it yet. Okay, to be honest with you. They just don't know it yet.
He says Iran is dying to make a deal. The war driving up prices worldwide. Here in the United States, the Labor Department's out with a May Producer Price Index, which captures inflation before it reaches consumers. It shows prices rising a lot this year compared to last.
The Producer Price Index rose just over 1% between April and May, but 6.5% in the previous year, the largest 12-month increase since November of 2022. The numbers suggest that inflationary pressures faced by consumers are beginning to percolate up through the supply chain. Analysts say that, as with the Consumer Price Index, surging fuel and food prices are behind the increase in the PPI.
That's ABC's Jim Ryan. A man stabbed in Belfast, allegedly by a Sudanese immigrant recently, and now Belfast has exploded in protest. ABC's James Longman is there.
There's been a second night of violent protests in Belfast in Northern Ireland. Crowds of young men clashed with police, throwing rocks and bottles. Police say protesters have been trying to reach a hotel they believe was housing immigrants, and disturbingly earlier this week, some went door to door in a local street looking for foreigners and torching homes. And Elon Musk has been accused of trying to whip up violence by sharing lists on X of locations where protests could take place and retweeting a message from a far-right politician with the message, "Millions must go."
Look for even more heat waves, floods, droughts and tornadoes, as well as wildfires. Federal weather experts say El Nino, a natural warming cycle, is formed in the Pacific and is expected to grow to historic strength. You're listening to ABC News. Another night of rough weather in the middle part of the country. Here's ABC's Ginger Z.
Chicago, Davenport, Kirksville, up to Milwaukee, Grand Rapids, Michigan, and even Midlands. All chances for damaging wind is the main hazard, but a tornado could spin up in there. But Chicago has a little chance early afternoon. It's really this later afternoon, evening, where we stop the clock at 8 p.m. up to Milwaukee, down through central Illinois. That's the line that has the power from the actual cold front.
Millions have been told to keep a lookout later today as well. High school lacrosse players from a school in Massachusetts have been told they have to forfeit a state playoff game after the players were photographed with cigars in their mouths. ABC's Hannah Battah has parents' reaction.
On police body camera video, an angry parent confronting the school principal about the suspensions.
I stink as a parent that I would let Luke go smoke a stogie and risk everything he's been doing. Your conscience is good with doing this.
I'm very disappointed to have to do this, but I'm doing my job. How do we enforce the rules? I can't just look the other way. We've got more evidence that says they did it than not.
You do. You honestly believe that?
Yeah, the photograph, you can't lie with the photograph.
Parents tell our Boston station, WCVB, the principal initially cleared the team until the superintendent intervened.
The players say the cigars were not tobacco. They only contained chamomile and green tea leaves. And NFL superstar Patrick Mahomes is the league's first $500 million man thanks to the new contract he signed. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube. We are streaming live on Bloomberg.com as well. We got stocks moving higher today. Coming up, we're going to check in with Ira Jersey, Bloomberg Intelligence Chief Interest Rate Strategist. We got some economic news. PPI higher. What's that mean for the bond market? What's it mean for the Federal Reserve going forward? Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, get his thoughts on oil here. We got some strong rhetoric coming out of President Trump earlier this morning, yet I know oil is just kind of looking through it here. No real change for oil. We got WTI just below $90 per barrel. Megan Horniman, CIO of Verdance Capital Advisors, will get her thoughts on these markets. Elisa Nee, managing partner, head of the real estate biz at Eisner Amper, discuss the latest on the commercial real estate business. And we're going to talk some technology, too. I think that we're getting an IPO pricing after the close today. Is that right?
Not a big one.
Not a big one. All right, we'll try to pay attention to that. So we got SpaceX pricing after the close today. All right, right now let's kick this whole thing off with Matt Piper with a Bloomberg Business Flash.
Hey, Paul, thank you. This Bloomberg Business Flash is brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Just in, the Supreme Court has shielded investment funds from shareholder suits. We will have more on that in a moment. A bunch of numbers to get to this morning. First, jobless claims. They jumped to 229,000. That's the highest since February, potentially reflecting the usual volatility around school summer breaks and holidays. We also learned this morning that U.S. producer prices rose in May at the fastest pace in more than 3 years, increasing 6.5% from a year earlier and 1.1% from April. Meantime, Oracle earnings are highlighting the massive costs of the AI boom. Oracle shares right now are down 10% right now. Oracle shares after the software and cloud computing company reported larger than forecast data center spending. Elsewhere on Wall Street, the S&P is up 0.7%. The Dow is up 0.7 as well. The Nasdaq up 1% or 260 points. The Bloomberg Dollar Spot Index 0.1% at 1212. We're also looking at OpenAI this morning. It's considering drastically lowering the prices it charges users as it seeks to win customers from its arch rival Anthropic. Drastic price cuts could potentially erode the profit margins of both companies. Angelo Zeno of CFRA on if this is a warning sign.
It's a warning sign in the sense that, hey, listen, I mean, if demand was as strong as it was, right? I mean, you wouldn't necessarily need to cut prices. But in the same respect, I mean, you kind of think about the longevity of AI and how this kind of works out over time. I mean, prices do need to come down. Adoption rates need to continue to increase, and you kind of get this circular pattern in many respects.
And Los Angeles Mayor Karen Bass's brother is suing Los Angeles. It's over him losing his home in the Palisades fire. Court filings show Kenneth D. Bass is part of the sweeping legal action that also targets the state of California, the LA Department of Water and Power, and multiple other entities. The lawsuit says Kenneth Bass suffered smoke inhalation and emotional distress. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Matt, thanks so much. Appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We are streaming live on YouTube. We're streaming live at Bloomberg.com/video as well. We were looking for some, Supreme Court rulings today. We did get one. The Supreme Court shields investment funds from shareholder suits.
Yeah, so this looks like it's a loss for some activist investors who had sued 11 closed-end funds, including some affiliated with the FS Credit Opportunities Corp and BlackRock. Boaz Weinstein's Saba Capital Master Fund. They were looking for more control over the fund, so it looks like the Supreme Court falling on the side of investment funds as opposed to these activist investors.
Activist investors. Okay, very good there. We got green on the screen here today. Let's take a look at some of the stocks on the move today. We can do that with Judy LaGrue. She's a reporter for Bloomberg News, joining us here in studio. Judy, what are you looking at?
Good morning. I'm looking at Oracle first and foremost. Certainly, biggest news on the market today. Oracle is down on today's trading as much as 13%, and it is on track for the largest percentage drop since January 2025. The stock itself is up 3% year to date as of yesterday's close. And as sort of a lot of us know, Oracle, of course, reported, and then their quarterly capital expenses were higher than estimates. But what really is sticking out to the market is that while the revenue is growing great, it's really not growing as fast as the market is expecting, and that stock movement is reflective of that sentiment.
Sounds good. What's the second stock you're looking at?
Sure. On the heels of the upcoming SpaceX IPO, a lot of really satellite space-oriented companies are on our eyes today. So we're looking at Redwire in particular. Redwire is up as much as 11% on today's trading. And this is really in a basket of other, again, rocket, satellite, and space names. So Firefly, AST Space Mobile, Black Sky Technology, Rocket Lab. But Redwire in particular is a focus because they filed for a possible $500 million offering of shares on Tuesday. So again, a lot of action happening in the space, and that's what we're looking at for sure in that area.
Riding the coattails of SpaceX.
Yes,
absolutely.
Why not? AMC.
Absolutely. I love a good meme stock story. I will always perk my ear up when I hear AMC. And AMC is up 8.7, as much as 8.7% on the day. It's on track for the highest intraday price since December. The stock itself, I think, is really impacted by summer blockbuster movies that are coming up. So The Odyssey, Toy Story 5, Scary Movie. And AMC also themselves raised $150 million through a market equity offering, selling 105 million shares. So definitely a lot of action there, both in the movie theaters themselves and in the market for AMC today.
All right. Thank you so much, Judy. Thanks for bringing us stocks on the move. Judy LaGrue is our Bloomberg News reporter. And for more conversations like what you just heard, subscribe to Stock Movers. It's a 5-minute audio report on the biggest winners and losers in the stock market. And it's available on Apple Podcasts, Spotify, and anywhere you listen. Paul, we have a big week this week in terms of inflation data. CPI, consumer prices, came in as expected, although that 4.2% year-over-year increase does get your attention.
It does.
Wholesale inflation, which is what we got this morning, the headline number was hotter than expected, but when you back out energy and food prices, which is what the Federal Reserve looks at, it was actually cooler. So let's bring in Ira Jersey. He's our chief U.S. interest rate strategist to kind of interpret what all this means. Ira, how's the market interpreting this, and how is the Fed going to interpret this?
Yeah, I think you're exactly right there, Scarlett. You know, I think the Fed is going to look through some of the energy price increases, particularly in today's producer price report, and be like, okay, look, underlying inflation trends are kind of moderating just a little bit, but it's still too high. So that's where I think that the Fed is ultimately going to come down, where you're going to see the dots kind of consolidate a little bit toward unchanged and maybe an interest rate increase as the next move. But you know, I still think that the median dot will probably suggest unchanged rates this year, but but you'll have some more dispersion for 2027.
But I don't know. I kind of feel like the inflation's out there, and boy, if I'm Fed Chairman Kevin Warsh, I got my first meeting next week, and presumably I've got some pressure, either realized or unrealized, to kind of lower rates here. But I'm not sure that the data's just not there.
Well, I think, Paul, the challenge that the Fed has is they're worried that if they were to increase interest rates, certainly if they were to increase interest rates quickly, that they'd wind up causing a recession and wind up doing more harm than good to the overall economy. And when you look at what the market's pricing for inflation, the market thinks that the May prints that we just received just now this week are going to be the high for the year, and that things are going to moderate. Now, that doesn't mean we're getting to 2% by the end of the year. The market's saying we're going to go from 4.2% down to 3% on a year-on-year basis, which means that that on a forward-looking basis, right? So where are we in 2027? That they actually reach their target next year. Of course, all of this is predicated on oil prices remaining 90-ish for the next 6 to 12 months. There's no guarantee of that whatsoever.
Yep.
But you don't see inflation expectations really increasing very significantly where the Fed is going to be concerned.
So the ECB, the European Central Bank, hiked rates today. It was the first major central bank to do so, basically concluding that it can't afford to wait out the Iran war. What is the cost for the U.S. to wait out the Iran war?
Yeah, well, I mean, that's really the risk case scenario, and it's that if the war continues for a long period of time, and oil prices don't remain stable, right? It's all about oil price, I think, Scarlett. Like, if oil prices end up going back to 110, 120 and continue to climb, that's when I think inflation expectations can become unanchored. The Federal Reserve winds up worrying more about that, and you could probably see some interest rate hike. But I think right now you will have some hawks on the committee, no doubt about it. You'll see 4 or 5 members of the committee sounding somewhat hawkish, and their dot plot will probably suggest that the Fed should be hiking before the end of the year. But it's really the other members of the committee that will counterbalance that and say, okay, look, we're not as worried. We have a dual mandate. Remember, the ECB only has a single mandate. They only have to worry about inflation and prices, whereas the Federal Reserve has to worry, how will their actions affect the labor market? And if they were to hike interest rates 100 basis points or more this year, you'd have to imagine that hiring would slow down substantially. You'd probably see wages decline, and wages have been growing at a reasonable pace. But if they were to start to fall, that's when you get into this, more or less either stagflationary or recessionary type environment.
All right, Ira, you're also our de facto World Cup correspondent here. Give us a scouting report of the U.S. team. What should our expectations be?
Yeah, well, they have to first get out of the group, and they don't have that easy of a group. Australia is probably the weakest team in that group, but Turkey, which actually only qualified very late out of Europe, out of UEFA, they're actually quite a strong team, and I think that it's going to be between Turkey and the U.S. for who tops the group. And then who do we get in the round of 32 if we come in second place can matter quite a lot, because we could get a strong first place team in a group, and hopefully we don't get knocked out there, but that is a distinct possibility.
Ira, who are you looking at? Which team are you looking at to potentially go all the way?
Well, there's so many great teams, it's so hard to know. I put in my bracket an outlier. I put actually England, and
really?
A lot of people are going to say, like, that's crazy, blah blah blah. But I do think that they're one of the better teams. France is I think the odds-on. France and Spain are probably odds-on favorites, and the Spanish team plays together so nicely, and they're actually very pretty to watch play. And France has some superstars that, like Kylian Mbappe, who are always a goal threat, and they're also a fun team to watch. But I think England can kind of muddle through if they can actually get their act together and play as a team.
I'm rooting for the U.S., but my sleeper team is the Netherlands.
Ooh,
yep.
I like their jersey.
I like their jersey, and that's kind of how it goes.
But we all love orange, by the way, now.
Yes, exactly. Ira Jersey, thanks so much. Appreciate it. Ira Jersey, he's a global chief interest rate strategist for Bloomberg Intelligence. He actually is an owner of a minor league soccer team in New Jersey, Real.
He's a magnate.
Something like that. So he's down there, Real Central, New Jersey. So there you go. S&P up 21 points, Dow up 200. This is good.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Matt Piper. U.S. producer prices rose in May at the fastest pace in more than 3 years as the fallout from the Iran war continues to fan inflation pressures. The producer price index increased 6.5% from a year earlier. Stocks right now, everything is up. The Dow is up 0.5% or 250 points. The S&P is up 0.3%, 22 points. Nasdaq's up by about 100 points at 0.4%. The Bloomberg Dollar Spot Index is up 0.2% at 1212. The 2-year yield is down 1.5 basis points. The 10-year is down 3. Brent crude holding steady at $92 a barrel. WTI is just above $90 a barrel. As for stocks we are watching, Hugo Boss shares of the German apparel company are climbing after Mike Ashley's Frasers Group said it would launch a cash offer of around $2.3 billion to take full control of the 100-year-old company. Boss right now is up 10%. Frasers Group, meantime, is up 2.2%. McGraw-Hill shares are down 2.5% right now. This as those results are out. Total revenue increased 0.1% year over year, driven by strong higher education execution. We're also looking at Oracle. It's reporting a larger than expected CapEx, driven by increased spending on data centers, overshadowing its AI growth. Oracle right now is down about 11%. You can buy SpaceX shares as the IPO readies for liftoff. I know we're going to be talking about this a lot, especially tomorrow, guys, right? So as much as 30% of the shares of the rocket and AI company will go to individual investors, 3 times the usual allocation. SpaceX said in a recent regulatory filing, we've been talking about this, it expects its price shares at $135 each. You do need a brokerage account or a digital investing app, and SpaceX is offering shares to retail investors through places like Charles Schwab, E-Trade, Morgan Stanley. You got to act fast, of course. It's happening tomorrow. Shares are slated to start trading under the ticker symbol SPCX. It'll be on the minds of a lot of people over the next 24 hours. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Back to you.
All right, Matt, thanks so much. Appreciate that. Scarlett Fu and Paul Sweeney were live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. We had some pretty strong rhetoric out of President Trump this morning. He was speaking on another network and talking about stepping up attacks tonight on Iran, including saying some rhetoric about taking Karg Island. I would have expected crude oil to shoot up pretty materially, but it's pretty much unched on the day. We got WTI crude oil flat at $90 a share. Mike McGlone joins us, senior commodity strategist for Bloomberg Intelligence. Mike, I'm kind of surprised that oil's kind of looking through some of President Trump's rhetoric today. What's that tell you?
It's funny, Paul. It seems like I'm the only one not surprised because my colleague Javier Blas put out a column today, 10 reasons why crude oil is not going higher. The bottom line is it's one of the most elastic commodities on the planet, and the most significant demand pull importer in the last 5-10 years has been China. And China's actually cut back their imports almost in half, partly because they loaded up really a lot last year on their strategic petroleum reserve when crude oil was around 60. Now it's around 100, or was. They're starting to sell. They're the best commodity traders on the planet. The bottom line also is the massive supply coming out of the U.S., the demand destruction, and it's what crude oil always does. It goes up too high and it makes it go back down. But to me, the macro, bigger picture is what does Mr. Trump need for midterms? So I'm still focusing on that December crude oil contract. Right now it's around $80 a barrel. We're starting to migrate the front contracts towards there. And then by the midterms, you know my bias, I think it's going to be closer to 50 than 100.
And one reason that Javier cites for why oil will stay below 100 is because oil is still moving despite the Strait of Hormuz being basically blocked. You've got pipelines, for instance, that circumvent the waterway. What do people misunderstand about the pipelines and how critical a role they play?
Well, Scarlett's the macro I really enjoyed writing about in 2022 and 23. It's Adam Smith's invisible hand. Let's not underestimate the most elastic commodity on the planet, of which the U.S. is the largest producer and exporter, for a necessity invention for people to find ways to get supply out of the Gulf. And they're doing that through pipelines and through other measures. But this measure that people have been using, 20%, it's really maybe 10% that's not kind of stocked. stuck there, and I focus on what's the other 80% in the world where there's actually incremental increasing supply versus demand. It's led by the US and Canada. There's just a massive surplus. So to me, that's still the main focus, but it's not just crude oil. U.S. natural gas had a big pump and then dump. It did the same thing 2023. Corn, soybeans, and wheat have all pumped and dumped. And another thing is precious metals have all pumped and dumped. It's the trend. They're gaining contagion. I think by the end of the year, the big issue is crude oil might actually be down on the year if these trends continue.
Hey, Mike, let's just switch gears before we let you go to Bitcoin. It seemed like we were testing a $60,000, $61,000 floor, kind of a little bit of a bounce today here. What do you make of Bitcoin these days?
Best leading indicator is the pump and dump leader. It's a dead asset class. It has no earnings. It's facing 5% on the U.S. 30-year. Tremendous earnings in the stock market, and it's just the beginning. I think part of a purge. It's way overdue. The key thing is there was one in 2009. It's Bitcoin. Now there's millions. I think we're purging all those, and I don't think there's going to be a bottom until around 10,000 in the whole thing. But for now, the next good support is probably around 50,000.
There you go, 10,000 on that.
All right. Well, I mean, Mike's been very consistent in calling for Bitcoin to go down, 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 and it's certainly moving that direction, although in fits and starts.
Yep, and had that support at 60.
Mike McGlone, thank you so much. He is, of course, our senior commodity strategist joining us from Miami, that commodities hub. All right, let's talk about the markets overall, because with oil prices almost unchanged despite the increased rhetoric, you wonder what kind of direction that provides for the markets, if it even matters at all. Megan Horniman is our next guest. She is CIO of Verdance Capital Advisors. And Megan, the market doesn't seem to care at all about the war in Iran, oil prices at this point, especially with oil barely changed right now. It is about inflation, however. So I'm curious to get your take on how the market is interpreting the inflation data, the CPI numbers from earlier this week and the PPI, which came in a bit hotter than expected.
Mm-hmm. Well, I think the past couple of days it has been reacting a bit to the inflation concern. And then today, this is just a little bit of a bounce back from the past few days that we've had some weakness. But I still think the market is too complacent on the inflation risk in general for the economy. If you look at those numbers that we got today, the numbers yesterday, a lot of people focused on the fact that, hey, it met expectations. It didn't come in hotter than expected, but it's still hot. It doesn't mean that just because it isn't exactly or isn't higher than expected that it isn't a problem. And yesterday that showed that it is a problem. You're looking at certain food categories up 6% on a year-over-year basis. Today in the PPI, you're seeing some of the things that'll go directly in PCE, like airline fares, healthcare, financial services. But those PPI numbers are showing that there is a lot of cost pressures in that upstream. Now, what businesses do with that? Will they be able to pass that on to consumers, or will they have to eat that? We're showing that there is some pushback.
Okay guys, इन्वेंट्री आ गई है नेचुरल गैस की गैप डाउन ओपन हुआ है काफ़ी बड़ा गैप डाउन ओपन हुआ है सीधा 296 पहुंच गया प्राइस ओपन इक्वल टू हाई विद गैप डाउन सपोर्ट पर ही है देखते हैं एग्जैक्टली होल्ड करता है नहीं करता है बेरिस है यस जितना फोरकास्ट किया था उससे ज़्यादा आई है इन्वेंट्री इज बेरिस फॉर द प्राइस नीचे सपोर्ट है देखना पड़ेगा होल्ड करता है नहीं करता है सपोर्ट है ध्यान रखना This is a support area, price hitting the support area. Inventory is bearish, gap down is there, but price is now recovering. Let's see how much it will recover now. Exactly support पर ही पहुंच गया है. Natural gas, crude oil तो कुछ नहीं है, sideways ही रह गया लग रहा है आज पूरा दिन, volatility के साथ. इन्वेंट्री बेरिस आई थी बट नीचे सपोर्ट है तो ब्रेक नहीं कर रहा है, स्टिल होल्डिंग. और कोई न्यूज़ नहीं है फिलहाल के लिए. देयर इज नो न्यूज़ रिगार्डिंग द यूएस ईरान. लेट्स सी आज कुछ अटैक वगैरह करता है अगर यूएस. वैसे मुझे लग रहा है शायद वो कल ही करेगा जब मार्केट क्लोज होगा सैटरडे संडे को, ताकि मंडे को कुछ बड़ा गैप डाउन हो जाए. नेचुरल गैस इन्वेंट्री आ गई है. इन्वेंट्री फोरकास्ट जितना था उससे ज़्यादा आई है. सो इट इज़ बेयरिश फॉर द प्राइस. गैप डाउन ओपन हुआ, ओपन इक्वल टू हाई भी बनी थी पहली कैंडल, बट नीचे सपोर्ट है तो रिकवर कर गया है. अननेसेसरी रिस्क मत लेना अब सेलिंग का जब तक सपोर्ट ब्रेक नहीं होता. ऊपर कोई रेजिस्टेंस ऐसा है नहीं सच.
It could be the greatest deal in history. They could wave the white flag of surrender. They could say, we surrender, we're finished, we've had it. The United States is the greatest power. Praise be to Allah. And they could do all of this. They could say it loud and clear, and the fake news would say it was a great victory for Iran. I mean, it's the craziest thing I've ever seen. It could be the greatest deal in history. They could wave the white flag of surrender. They could say, we surrender, we're finished, we've had it. The United States is the greatest power. Praise be to Allah.
Will it be more bombing tonight?
Yeah, there will be more bombing tonight. It'll be bigger, more powerful. Don't forget, we've knocked out all of their anti-aircraft. They don't have any they have nothing. I mean, they may get lucky with a shoulder weapon or something, but for the most part, you know, they have no defense.
What did the representative say in your phone call with them?
They're finished. Excuse me. They're finished. But the papers, the media refuses to write it. They're finished. We can walk in there tomorrow. We could take soldiers. I don't want to have boots on the ground, but if I wanted to, we could put a small group of soldiers and take over the whole place. They're finished. And the media is crooked. They're just like our elections. The media is crooked.
Will it be more bombing tonight?
Yeah, there will be more. You know, look, my preference has always been take Carg Island. That's been, Brian knows that. I spoke to him a long time ago. Lawrence knows it. I spoke to him a long time ago. I said my preference would be that. I don't know that America has the stomach for it, to be honest with you. You know, make a fortune. But I don't know that America has the stomach. I think they'd like to see us come home. But we did it with Venezuela. Venezuela's worked out great for everybody. We've taken millions and millions of barrels of oil out of Venezuela. We brought them to Houston and various other places, Louisiana, where refineries that we have that are incredible. They're going 24 hours a day, making a fortune. And, I like that in this case, too. But I'm not sure that America has a long time. It's a little longer process, something that's a guarantee if I want to do it.
Mr. President,
but I'm not sure the country has the appetite for it. Does that make sense to you?
I understand where
as good as it is. By the way, as good as it is, that's always been my number one thing. But as good as it is, I'm not more.
क्रूड ऑयल मुझे लग रहा है इस रेंज के अंदर ही रहेगा. नेचुरल गैस देखो थोड़ा ऊपर जाता है अब लेवल के ऊपर, तो वी विल सी क्या प्लान करेंगे इसमें. अब सपोर्ट ही है, तो बाइंग ही प्लान है यहाँ पर. अब सेलिंग प्लान नहीं है फॉर एटलीस्ट फॉर दिस लेवल.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Matt Piper. U.S. initial jobless claims unexpectedly rose to the highest level since February, potentially reflecting the usual volatility around school summer breaks and holidays. Initial claims increased by 4,000 to 229,000. Let's look at stocks. Everything is up right now. The S&P is up 0.5 percentage point. The Dow is up 0.7 or 345 points. The Nasdaq is up 0.7 as well. The Bloomberg Dollar Spot Index up 0.2% at 1212.75. Brent right now at $93 a barrel almost. WTI at $90 a barrel. As for stocks we are watching, Super Micro Computer shares are rebounding following a 28% drop yesterday. Right now they are up 0.3%. Investors dumped shares of the server maker after the company said it would raise $7 billion in a series of equity offerings to help satisfy growing demand for its AI servers. Well, following a slide in companies tied to AI over the last couple days, we're also looking at Micron Technology. That is up 2.7%. Nearly 3 percentage points, I should say. Broadcom is up 1.5%. Advanced Micro Devices and Marvell Technology both up about 5% right now. Julian Emanuel of Evercore says despite the recent sell-offs in tech, the market is doing well overall.
It's become a market where it's not actually even billions anymore. It's trillions that we're talking about. 85 billion here, 75 billion there. It really does add up, but it also speaks to the incredible liquidity conditions that we're seeing. And what did we find out last Friday? The labor market is a lot stronger than we could have ever imagined it would be.
And if you have a Honda, this one's for you. Recall 1 million vehicles they are because the rear suspension components could fail. They could corrode, potentially leading to suspension component failures. It affects Honda Pilots, Ridgelines, Passports, and Acura MDXs. Letters will go out to owners in about a month. There have been no injuries reported so far. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much. We want to take a look at commercial real estate because obviously inflation is in focus. The Federal Reserve meeting next week is in focus. And commercial real estate has been once upon a time one of those things where it was a shoe that was going to drop. It was a real big source of concern for a lot of investors. There was going to be a lot of refinancing that needed to happen in a short amount of time. And people were worried that this would be the next crisis. It hasn't exactly panned out that way. Let's bring in Lisa Nee. She is managing partner, head of real estate at Eisner Amper, and she joins us in studio. Hi, Lisa.
Hi, thank you for having me.
How would you describe the state of commercial real estate right now? I mean, where are we in this cycle?
Yeah, so when we look at commercial real estate, we're not in 2021 where capital was flooding into the markets. And then we hit 2022 to 24 where people were really concerned and they were really taking a sitting back on the sidelines. So then we're trying to figure out where the recovery is. Is it going to be a broad recovery? And it looks like it's a little bit more of a selective recovery where people are they were looking back and doing a wait and see. But now I think we're headed to the pick your spots kind of moment where people are looking at that select asset. They're looking to see, does it make sense? And really, really being a little bit more disciplined. So I don't think you're going to get the broad recovery. It's going to be more of a selective recovery, which actually makes sense when you think about it, is to people really, really being more thoughtful with their capital and really looking to see where that investment opportunity is.
If I want to develop a piece of property or buy an asset, where do I get the capital for that these days?
Great question. So there is a lot of capital out there. It's how we go to tell our story to get the capital. Are we going to the lending institutions or are we headed to the private capital market, which is the debt funds, the family offices, and those types of places? And so really trying to understand where the interest rates are going to fit within your project. And so when we're looking out there, the banks are willing to lend. And is it in that trophy asset or is it in a smaller type of market? So it really has to match what type of asset you're looking to develop. Are you developing it or are you purchasing an asset that's already out there and you're going to be redeveloping it? And that's really the question, is those development numbers that we've talked about before, do the numbers work? And so when we talk about inflation and construction costs, development is much harder to get the financing for than for the reacquisitions.
Okay, that makes a lot of sense. I mentioned this maturity wall in commercial real estate when I introduced you. Where are we with that? How much is that still a threat?
So it is, I mean, there are a lot of loans that are out there to mature, and we've been living in that pretend and extend or lend and extend environment for a very, very long time. And we really need to get to the environment where we're ready to do the refinancings. We have to be comfortable with where interest rates are going to be. And I think when you're looking at interest rates right now, I think everyone's sort of anticipating that they're going to go up, I think, towards the end of the year. And I think prices are getting people are already pricing that increase in interest rates in there. And so when we're looking at that big wall looming over us, really got to get to the point where we're able to refinance some of those and not just pretending and extending.
Here at the Bloomberg HQ, this is an A building, A+ building. How about the B and C? What's happening to the B and C inventory out there?
Again, it depends on the market. It depends on the sector within the B and C. So if you're talking about office versus, apartment or multifamily, in the office space, we were all just in San Francisco today, or 3 weeks ago, I think it was. And office was booming there regardless. It was the A+, and then which is going to trickle down into the B and C as well. You're going to see a need for that. But again, those Bs and Cs need capital. So where are they going to get the capital? And they need to go out to the banks or those lending institutions to really put money back in there so that people want to go to those Bs and Cs. We want to come here. It's an A+ property. It's fun. There's a lot going on here. Getting the workers back to those B and C properties takes a little bit more of a capital infusion to get those back into those office spaces.
Everyone wants grade A office space, A+ office space. How much of that comes out of new construction versus conversions from existing property that might not be ideally outfitted but are in a great location?
So construction costs are going to be a big part of that, and zoning and local legislation to get to the rezonings to be able to convert from the office back into residential or whatever needs to be done. And so where we're seeing that is in cities where they're having those legislative enforcements for it. So a lot of the capital that's coming into it, I think we read the headlines that there's a lot more conversions that are really happening because you're going to read the ones that are really exciting. But I think a lot of those buildings, the B and Cs that are getting refit for that, it's going to be remains to be seen. You've got to understand who your sponsor is. And so really seeing who the developer is. Have they been doing it before? Have they been successful in those locations?
Their track record.
Correct. And so people are really being careful as to where's the asset, what type of asset's being built, and who is that sponsor of that construction.
Do we have enough data centers? I mean, these things are going crazy. What's going on there? Yeah, do we have enough of them, or are we just going to continue building?
So the funny thing about data center is, we're looking at things before we used to look at square footage, and now we're talking about megawatts, right? As a real line item. And you're looking at data centers as an investment, but there's a couple of things, and again, we're going to go back to the same thing. Is there enough energy there, and do you have the political support there as to build those data centers? And then it's about a 3 to 7 year, 4 year lead time as to make sure that the centers are being built and you get enough energy. So that is sort of, we're not sure yet as to where we are in that data center cycle. When you look at industrial as a class, we still have some more room for the storage and in the infrastructure sector. But you look at it, do we have enough? Who knows? I mean, the AI is in every single conversation that we're having right now. And it's that same thing. Is there enough energy source that's going to be able to drive that center, and is somebody going to allow it in their town and be able to have that support to live near the data center and have the workers be there?
Yeah, I really think that last point is important, the political support and the rhetoric that goes around with it. I mean, how much of that is something that people can really bank on? Because it can change very quickly on a dime.
Correct. And it's a new interesting line item that we've never seen. We used to think energy was an operational expense. Now it's really a fundamental driver as to the income of those areas. And so it's a whole new concept for people to have to understand. And again, the bigger players that are entering the market, they're going to fare very, very well because they really do understand that underwriting and that discipline. But it's still an unknown as to what's going to happen in 4 years, 5 years from now with those centers.
All right. Well, when you leave our building today, you walk out onto Lexington Avenue and you'll see a lot of vacant retail still there.
Especially across the street from us.
Across the street. I mean, so I don't know.
It's been vacant since the pandemic.
I don't know what's going on out there. Lisa Nee, thank you so much for joining us. Appreciate it. Lisa Nee, managing partner and head of real estate for Eisner Amper, joining us live here in our Bloomberg Interactive Brokers studios. S&P 500 holding on to the gains here today, up 30 points. That's 0.4%. The NASDAQ up about 0.5%. The Dow's up 340 points. That's about 0.7%. So there you go there. The Tom Keene VIX, 21 and change here. So a little bit extended here. We'll keep an eye on that. 10-year Treasury yields coming in about 3 basis points, 4.52%. We're going to have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. All right, I thought the story for tech companies, if you spend CapEx, that's a good thing.
Once upon a time it was.
Yeah, I don't know, but I guess things have changed a little bit. Oracle Corp shares declined in pre-market trading after the company reported quarterly capital expenses that were higher than estimates, and it's boom. It's trading down 10.9% here today. I mean, this is a big company. It's got a $500 billion market cap. So, I mean, we're talking some real money here. Anurag Rana, he can explain this to us. He's a technology analyst for Bloomberg Intelligence. Anurag, what's going on with Oracle today? What did the market not like?
I think one of the things you have to think about it is there isn't unlimited capital in the world, frankly. I know everybody is funding data centers, but one of the things Oracle is also doing is when it's going to raise capital next year or even this year, it's going to do some equity offering and it's going to do some debt offering. So it looks like next year there's going to be more equity dilution by them raising at least $20 billion. It's going to be most likely more than that. And I think that is something that everybody needs to grapple with because we understand there is infinite demand, but we don't know if there's infinite demand for capital also at this point.
You know, that kind of goes to what I was thinking. When we hired Rob Schiffman years ago, who's one of the top tech credit analysts, I'm like, what are we hiring a tech credit analyst? They don't issue any debt. Boy, was I wrong, because now they're in the market going crazy.
Yeah, and now in many ways, even credit investors are overexposed to tech debt. So when it comes to Oracle needing more capital, how are these, I don't know, how is the fundamental performance going to affect how it and when it seeks that capital, whether it's equity, whether it's debt?
So they have raised debt this year. They're saying they're not going to do any more debt raise in 2026. So it's going to be most likely a next year affair. But, you know, remember one thing in this case, they have said that they will maintain good credit quality out there. So they have to be very cautious about that. So Oracle is a name, it has backing of, you know, obviously not just Larry Ellison, but also a very strong, fundamentally cash-rich software business. And I think that helps out. But to be very frank, the numbers we are talking about is no longer, you know, 10, 15 billion in CapEx. We are talking about 70 billion and north of that. So this is you know, the CapEx numbers just keep on getting bigger and bigger.
And, you know, your industry, technology, software in particular, Anurag, has historically been characterized by tremendous amounts of free cash flow. That's no longer the case here. How long is that going to be the case for your world?
So the fun part is this has been bifurcated into two different groups within software. One is that's dedicated to AI infrastructure. So that's Oracle Cloud Infrastructure, CoreWeave, and Nebius, and those guys. The other companies, which are Salesforce and Adobe and those, they are still pure software. Their CapEx is not going at that same rate, but they have a different risk, which is getting disrupted by AI. On one hand, the other group is benefiting from AI buildup. The other one is under threat. So there are 3 or 4 dimensions that you have to play with right now. It's no longer an easy case that just buy the software names and, you know, it's going to go up.
I'm just going to interrupt because we have a headline that crossed. Ken Griffin, the hedge fund magnate, also owner of Citadel Securities, is supercharging his Miami bet. He's expanding plans for his Miami footprint after he had that big argument with New York City Mayor Zohran Mamdani. Ken Griffin has revealed a proposal to construct a 300-unit apartment building and a 1,420 space parking garage alongside another office building that he owns. So he's building out his presence in Miami. Wall Street South continues, Paul.
It does. It's a thing. And there's also Y'all Street in Texas.
Northern Dallas, yep.
So there you go. All right, so Anurag, talk to us about Adobe, another one of your names, another big tech name. I think they've got some earnings coming out soon.
Yeah, I think over there, if they can announce a new CEO, that would be a big weight off the shoulders because stock's been held back because of those, transitions at the top level. The old CEO stepped down, and they were looking for a new person. So that's I think the bigger thing for us to look at. I don't anticipate any material difference in terms of their growth rates or profit profile right now. Remember, this is the poster child of a software company that has been marked as, for destruction from AI-related tools. So far, we haven't seen. We should see some slowdown, but that's more macro-related. But I think the CEO transition is far more important at this point.
Really well said. I guess, and Judy LeGroux, by the way, wrote the preview. She was on earlier giving us some stocks to watch here. When it comes to Adobe, the question here is whether they're going to give much of an outlook at all. If we're looking for the CEO transition, won't they just wait for the new CEO to come in and kind of reset the table, reset the terms?
So one of the things is that it depends on whether it's an outside person or an inside person, because this is a company that is absolutely going through a transition right now by adding their own AI tools, talking a lot about trust in terms of using their internal pictures to create these images, to create the videos. I think the limbo will be clear once a new CEO comes in and talks about what the strategy is going to be.
Anurag, thanks so much for joining us. Appreciate it. As always, Anurag Rana, technology analyst, Bloomberg Intelligence, joining us there on some Oracle news. Adobe stocks also under pressure here. Again, software really under pressure from concerns about AI and competitive threats from AI. Are going to need some of those software products. We had the market kind of giving up some steam here today. The S&P, which was up higher, close to 1%, is now flat on the day. The NASDAQ is now negative 16 points. Had been higher again today, almost 1%. The Dow still holding on to a gain of 200 points. That's 0.4%.
All right, and for our listeners in the U.S., a reminder that you can listen to us via satellite radio on SiriusXM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research, because the next hour of Bloomberg Intelligence starts now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning. This is Bloomberg Intelligence. We are coming to you live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Paul Sweeney, Scarlett Fu, and Matt Piper here with you. Coming up in this second hour of Bloomberg Intelligence, we're going to talk about the business of sports. Randall Williams, our business of sports reporter on the Knicks, stealing a win last night. They were up 3-1 versus the Spurs. It all comes down to the game on Saturday night. And also, oh yeah, the World Cup begins too.
Yep.
Lily Meyer, she is our Bloomberg retail reporter, will join us on the Bloomberg Big Take about how Nike's Savior CEO is struggling, grappling with this 45% stock slump. We'll get into all of that with, on Elliott Hill, the Nike CEO. Stephen Carroll is host of Bloomberg Daybreak Europe. We already saw the European Central Bank hike interest rates today, so perhaps that gives us some indication of what's to come, especially as the Fed gets ready to meet next week. The Fed seems a little farther away from that, but how does it change the tone? And Chuck Lieberman, co-founder and CIO at Advisors Capital Management, will join us to give us his outlook for the markets. But first, let's go over to Matt Piper for a check on our Bloomberg Business Flash.
Thank you, Scarlett. Live from the Bloomberg Interactive Broker Studio, I'm Matt Piper. Wall Street traders are pacing a cautious rebound in stocks as beaten down chip makers are rallying. And we are still talking tech. A drop in Oracle shares after the software and cloud computing company reported larger than forecast data center spending. Right now, Oracle is down 12%. Earnings in this morning, McGraw-Hill showing revenue of more than $2 billion, an increase of 0.1% year over year. Shares of McGraw-Hill right now are down 2%. Earnings coming later today, Adobe and Lennar. Adobe right now is down 5.6%. Lennar is up 1.5%. Elsewhere on Wall Street, as Paul was saying earlier, the S&P and NASDAQ are now both down after being up earlier. The S&P is down just slightly, 4 points. The NASDAQ is down 28 points. The Dow is up 0.3% or 180 points. Stocks did fall yesterday on inflation being up, While no single inflation report will completely alter the Federal Reserve's stance on interest rates, higher prices and recent jobs numbers may prompt rate setters to hold off while they assess the economic impacts. Francis Donald of RBC says the consumer is losing the ability to absorb any additional shocks.
Businesses are going to face harder choices because if they continue to rely on the consumer to absorb these price shocks, they're either going to see the consumer say, no, thank you, some demand destruction, or you're going to see consumers that say, that's fine, but we're going to need higher wages.
And Paul and Scarlett, there is an ice cream fight going on. It's not between us.
Okay.
Ben & Jerry's. Have you heard about this?
Oh.
The co-founder says his brand is being destroyed by the owner, Magnum. Ben Cohen spoke with Bloomberg Zero podcast, and he says Magnum is stopping the brand from criticizing the president. He has criticized the president a lot in the last few years, right? So he says muzzling a brand like his for its progressive stance on social justice issues is hypocritical, and he says it will cause damage down the line.
It's hitting at the heart of his brand, right? The brand is...
Probably, yeah. Yeah.
Paul just basically rolled his eyes at me.
But Republicans buy ice cream too, right? That's right.
I don't think he cares about that part.
Oh, okay.
That's true. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that is a Bloomberg Business Flash. Paul and Scarlett.
All right, thanks very much. We appreciate that, Matt. It is Scarlett, Phil, and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Matt was reporting, we got kind of red and green on the screen here, now kind of a little bit positive. Let's take a look at some of these stocks on the move today. We can do that with Christine Aquino, managing editor for Markets Live. Christine, what do you got for us?
All right, Paul, let's take a look at Oracle because we did get their earnings yesterday after the bell. Shares down now almost 12%, so extending some of those earlier declines here. A lot of disappointment over how much they are spending. CapEx was about $16.5 billion in the period ended May 31st. That brings the annual total to more than $55 billion, which is higher than Oracle's projection for about $50 billion in spending. Now, remember, there was a lot of concern about the amount of debt that Oracle has. It does not have as good of a debt rating as some of the bigger hyperscalers and bigger tech companies out there. And that was a big focal point in some of the AI-related worries last year. But Bloomberg Intelligence's Robert Schiffman saying that, they don't have any additional debt issuance expected this year. And they have $40 billion needed in fiscal 2027. But their high-grade rating should hold for now.
All right, good stuff. We'll continue to keep an eye on that one. Next up on your list is another tech name.
Absolutely, Scarlett. We're talking about Intel, of course. That is very much in the green at the moment. Shares are up more than 4%, so ticker INTC. Make sure you check it out. It did get a double upgrade from Bank of America. They are raising it to buy from underperform previously, also raising their price target to 135 from 96. Currently, Intel is trading around 112, so a bit of a premium still on the current share price. And specifically, Bank of America citing server CPU sales reaching over 40 billion and EPS reaching $6 by 2030. That's their expectation. And, more good news from Intel last week, of course, because we did see their shares rising after the information reported that Google will rely on it for more than 3 million specialized AI chips in 2028.
All right, Christine, thanks so much. Oh, there we go. Christine Aquino, thank you so much. We appreciate that. Managing editor for Markets Live for Bloomberg. For more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Well, in New York and in San Antonio, it's all about the hoops. And the Knicks they've taken over this city. Question I have is, how big of a national story is this? Maybe our next guest can help us out there. Randall Williams, Bloomberg Business and Sports reporter, joins us live here in our Bloomberg Interactive Broker Studio, sporting some Knicks swag as he should.
I don't know about that. This is Spurs and Knicks and NBA Finals. There's
partial.
no bias.
All right,
no bias.
Very good.
But anyways,
how is this out playing nationally? Because it's just taken over New York here.
it's a huge story. I woke up this morning and was on my YouTube TV and flipped over channels just to see how big of a deal it was. And outside of President Trump, this is what people are talking about because of the fact that it was the largest comeback in NBA Finals history, and being there in person, it was insane.
Oh, you were there?
I was there.
Cool.
I was.
Where did you sit?
Concourse 4 in the 400 levels
Okay.
of Madison Square Garden, but I had an amazing view. I was happy to be there. I'm exhausted, but
how was the energy in the building?
It was the loudest arena that I have ever been in. It topped
and it's your business to be in arenas.
For the most part. The arenas that I choose, I'd say. But like in 2024, it was Celtics Mavericks, and that was one of the loudest arenas. Yesterday was by far topped that. I mean, the concourse was shaking so much, like the glass in front of me, the seats, you could feel it. And then just the roaring inside of Madison Square Garden was unlike anything I'd ever heard.
Talk about the security around the arena, because I know that for Game 3, when the president attended, there was all kinds of like barricades put up and people had to get there 2 hours early. He didn't attend this game.
No, he did not. But you want to know something crazy? The security for Game 4 was actually tighter than Game 3 when President Trump was there.
Really?
The barriers were outside of Madison Square Garden were tall. But people were able to walk up and down Madison Square Garden for the most part. They weren't letting you into the arena, but there was people in the surrounding concourse. Yesterday, there was no one. I mean, there's a Los Tacos #1 that's right outside of Madison Square Garden. Nobody's in there. I mean, and they are one of the most popular taco spots in the city because of that location. There was probably 12, 15 people in there. Outside of the office of Madison Square Garden, not that many people. So yesterday's security was in large part greater than it was in Game 3, and that was because, of course, the ongoing war of words between New York City Mayor Zohran Mamdani and Knicks owner James Dolan.
Yeah, because I saw him on another radio station yesterday, Mr. Dolan, just slamming the mayor. So that's not getting any better.
It could have gotten very, very dark for James Dolan if the Knicks had lost, because he guaranteed a victory yesterday. He's going on this tirade and saying, you know, that Mamdani is not a Knicks fan and that he's this and that he's that. And then they go down 29. And it's going to look like, okay, you've cursed the Knicks by bringing President Trump in. He doesn't have a track record of teams winning when he's in the building. And then now you're talking junk, and it could have been 2-2, but fortunately for him, it's 3-1.
All right. I mean, we also got this thing called the World Cup. What's the narrative around the World Cup these days? Because in New York City, again, it's all Knicks all the time, but
I think the
there
narrative.
are some soccer fans around.
There's definitely some. I would say that because the Knicks are in the finals, the talk has been a lot quieter. But the narrative around the World Cup is going to be for here in the U.S. How well does Team USA do, and then B, the Titan teams: Argentina, Portugal, Spain, France. That's really the 4 big Titans. But could any of them be upset long term? And where do they play? Like, I think that really, really matters for the moment of the World Cup. Is it going to be at MetLife? Is it going to be at the Link in Philly? Is it going to be at Hard Rock Stadium? So we're going to see, but of course there's the chaos of tickets prices being high, of the commute, and I'll be there on Saturday, and I'll be
sure you will.
And next Friday I'll be there to tell you all about it.
In terms of the stars that are playing for some of those national teams, I mean, this could be the last go-round for people like Messi and Ronaldo, right?
Yes.
I mean, they're not. We kind of thought that was the case last time around.
We did. And it would have been a nice thing for Messi to ride off into the sunset, but I think that if he has an opportunity to get one more, why don't you? And Portugal, for Cristiano Ronaldo, is in a similar position where this team is very, very good and very respected. And so if he has an opportunity to get one, and now it's Messi's World Cup versus Ronaldo's World Cup, why not?
What do tickets look like? If someone wanted to go to a World Cup, if Paul wanted to go to a World Cup game in MetLife, could he buy a ticket still?
He could, but it's going to cost him. It's going to cost him. He might not be here. He might be trying to work a second job trying to pay for a ticket. Tickets are going for, I would say, there have been free tickets given. If you're lucky enough to get one, great for you. But for the most part, you're going to be looking at anywhere between $800 and $1,500 just for an entryway. That doesn't include near the field or the pitch.
And that's
or
for any
like
game.
that.
That's not necessarily for the big ones.
Absolutely.
How is the U.S. team? Are we going to be competitive here?
Listen, I don't think we want to go that dark today.
Oh, is that right?
Let's keep it light. Let's keep it light.
The expectations are for Team USA to make it to round of 16. If they don't, it's going to be there's going to be a larger conversation about what's wrong here. And what does the sport of soccer look like in the U.S. long term if the best stars for U.S. don't excel in the world's greatest tournament?
I mean, that's always been the question, right? The U.S. has an incredible soccer culture, especially at the youth level.
At the youth level, yes.
But somehow by the time it gets to the professional level, it kind of dissipates?
Well, I think when you think about Christian Pulisic, he does not play here. When you think about Weston McKennie, he does not play in the MLS. All of our biggest stars go overseas because the money is greater there. So the MLS definitely has some catching up to do. But the MLS is also sitting in a back seat to the World Cup. This is FIFA's tournament. And this is FIFA's doing, and they're playing in NFL stadiums that they've negotiated individual contracts with. So you're right in saying that the players here do go overseas. And it's the MLS's job to incentivize people to stay. And it's also FIFA's job at the end of the day. If they want to be back in this market, you need players and Americans to dominate.
Right.
All right, the next time they do come back, we control it, not FIFA. I'm going to be in charge of that. Randall Williams, thank you so much. U.S. sports business reporter joining us here. We got some Knicks, we got some World Cup, we got a lot of stuff going on here, which is a good thing. Go Knicks, absolutely. Oh, then we got the U.S. Open coming to Shinnecock. Then you got the U.S. Open tennis, which I got my ticket for. It just
There's a whole summer of sports.
A whole summer of sports here. Speaking of sports, Nike. Tough times there. I mean, you think about Nike as the trailblazer for athleisure type in this country, and of course the shoes and the Jordans and all that. But the stock's having a problem. The company's having a problem. So let's break it down with Lily Meyer, Bloomberg retail reporter. Talk to us about Nike. I know a new CEO came in, but he's not been able to work magic yet. What's going on with Nike?
Yeah, so when the new CEO, Elliot Hill, came in, everyone was ecstatic. You know, the stock shot up, and then internally, people were popping bottles of Prosecco. They made a mocked up meme of the Obama Hope poster with Hill's face on it. But while he's been in the role, the stock is down now 45%, and he's really focused on getting the company back to sport, and that's been a big struggle.
What is his bigger challenge? Getting Nike back on track in North America or getting Nike back on track in China? Because both of these are huge. I mean, the U.S. is the home market, but China was where the growth was really happening.
Yeah, so in North America, things are getting better. But I would say Greater China still remains one of the bigger challenges. And I think, you know, more broadly, showing up at big sports moments has been a challenge for Hill, which is what the story gets into.
Explain what you mean by that.
Yeah, so for example, the World Cup, you know, is about to kick off, and first, Nike's World Cup jerseys had this design flaw. So if you look at them, the shoulder puckers up, and that's for both players and in fan jerseys, and people, you know, immediately saw that. And then the jerseys, there's also been struggles to get them to retailers on time as well.
You know, how important is having the player endorsement as a strategy, as a marketing strategy, as product launch strategy? I mean, nobody did it better. They pioneered it. They perfected it with Michael Jordan. But now we see other athletes, they're going different places. What did they say about that? How important is that?
Yeah, I don't know if they've spoken to that explicitly recently, but I think, you know, it remains one of the ways that Nike can get in front of shoppers. I think with basketball and signature shoes, I'm not sure that market is exactly the same as it was years ago, but I do think getting athlete endorsement and having people on the court or on the field wearing your shoes remains a big deal. The London Marathon recently, Adidas won with their shoe, their new running shoe, that's $500. Two of their athletes beat the sub 2-hour marathon record. Yep. And so that was a huge moment for them as a brand, and still kind of shows the way that shoes show up.
I saw Steph Curry. He left Under Armour's now for a Chinese brand.
Li Ning, yes, exactly. Of course, the brand that was formed by the Chinese gold Olympic medal gymnast, who's a big star in the 1984 Olympics in LA. Cool. Yeah, I remember watching that with my parents and it being a really big deal. And I just gave away my age. Let's go back to Nike for a moment here, because what is Elliot Hill's strategy? I mean, is he thinking outside the box? Because he's someone who, if I remember correctly, he was an intern at Nike, and he's kind of a Nike lifer. He retired and he's come back. Is he capable of bringing in like a new idea, a new way of thinking?
Yeah, that's a great question. So I think a lot of his strategy has been restoring Nike to what it was prior to its last CEO. So under John Donahoe, who was the CEO before Elliot, Nike went really into lifestyle shoes. It went really into its direct-to-consumer channels. That's when it cut ties with retailers like Macy's and Amazon. And so I would say Elliot Hill so far has been trying to get Nike to what it was in the past.
All right, Lily, thank you so much. Appreciate that. Lily Meyer, retail reporter for Bloomberg News. I'm a Nike consumer. I wear their sneakers.
I don't remember the last time I wore Nike sneakers. I wear...
Really?
Yes, I wear Onitsuka Tiger sneakers that I got in Japan. Onitsuka Tiger.
Okay.
That, you know what Uma Thurman wears in Kill Bill?
Yes.
And Bruce Lee wore in Enter the Dragon with the yellow jumpsuit? Those sneakers. Super comfortable, super light.
Really?
Yes. Look it up. Yeah, you couldn't get it in the U.S. for a while, so I got it when I went to Japan because the dollar was so strong there. It was fantastic.
All right, there you go.
Lily's looking at me. She knows.
I'm sticking with my Nikes. They've been good to me over the years, so we'll see how that plays out. But again, the stock's down 30% year to date. Shareholders are not buying the turnaround as of yet. We did get a turnaround in the market here, bouncing back higher as we were earlier today. S&P's up 23 points. That's a third of 1%. The Nasdaq's up 115 points. And the Dow's up 290 points. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers studio, I'm Matt Piper. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA and 401k, tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We have some earnings to talk about today. McGraw-Hill showing revenue of more than $2 billion, an increase of 0.1% year over year. Its shares right now are down 3.8%. Earnings later today, Adobe and Lennar. The Labor Department says jobless claims jumped to 229,000. That's the most since February. To the big board we go. Everything is up right now. The S&P up 0.3% at 27 points up. The Dow is up 0.7. The Nasdaq up 0.5% or 128 points. The Bloomberg Dollar Spot Index is up 0.1%. The 2-year yield is down 2 basis points. The 10-year yield is down about 3. Brent is almost at $93 a barrel. WTI at $90. As for stocks we are watching, Super Microcomputer shares are rebounding following a 28% drop Wednesday. Right now, they are at 0.4% higher. Following a slide in companies tied to AI over the last couple of days, we're also looking at Micron Technology, Broadcom, Advanced Micro Devices, and Marvell Technology. They are all up anywhere from 1 to 4% right now. And anyone going to the movies lately? Michael, the Michael Jackson movie, is nearing the $1 billion mark, guys.
Really?
Lots of people going there. Have you guys seen it yet?
No.
Okay.
I have not.
So all three of us are not part of that $1 billion mark. But once it passes Bohemian Rhapsody, it will be the highest grossing musical biopic ever.
You would think that they would cater to this would be attractive to our age group, Paul, given that we were around when he was performing.
Yeah, I mean, I was a Michael Jackson fan too as well on the, all the songs. More and more people are going to the movies, though. The first reactions from this Toy Story 5 premiere are in. They're very strong. Those who saw the film say it's a tearjerker. Taylor Swift, who performed a song at the premiere this week, asked Tom Hanks to sign her VHS copy, speaking of old school, of the OG Toy Story. She was a fan when she was younger, so it was a big thing for her.
Love that.
For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
I'm Matt Piper. Thank you so much. We appreciate that. Scarlett Field and Paul Sweeney live here in our Bloomberg Interactive Broker studio. Some news crossing the Bloomberg terminal. Multiple Pentagon floors locked down, evacuated due to, quote, hazardous materials incident. That's according to CNN. We'll have more reporting on that as it comes up. Well, Europe is being squeezed between the superpowers of the U.S. and China, but there are signs that the EU is taking steps to address its declining economic influence. Ahead of next week's G7 Leaders Summit, Bloomberg has been speaking to policymakers and investors around the continent about the path ahead for Europe, as new Bloomberg economics analysis underlines why major change is needed. Here's EU's former competition chief, Margrethe Vestager. Let's take a listen.
So I think it's really important for Europe to realize this is not a race to be more Chinese or more American. This is a race for Europe to be a much better version of herself, and being that, also being more competitive, more focused.
All right, that was former EU competition chief Margrethe Vestager. Right now, we're joined by Bloomberg Daybreak anchor Stephen Carroll. He is in Brussels. Stephen, talk to us about the economic outlook for Europe here. Again, there's been lots of challenges here. What's the current status?
Well, look, I should mention the ECB's latest growth forecast that have been slightly downgraded in the decision when they increased interest rates today. So they're down 10 basis points for this year. 0.8% growth is what they're looking at next year. 1.2% growth, but a rebound then in 2028. But the forecast that we've been looking at with our help of our colleagues at Bloomberg Economics has been more of the challenges over the long run, because the gap between the EU and the US has been widening, and that is on track, if the EU doesn't take dramatic action, according to Bloomberg Economics, to almost double by 2040. So there'll be a €7 trillion, $8 trillion gap between the US and the EU if they don't act now. There is a blueprint for action to be taken. Mario Draghi set it out almost 2 years ago, but we know decisions can be very slow to be taken at a European Union level. So if those reforms were to be implemented, Bloomberg Economics says it would reverse the trend. We would see a big improvement in the EU's growth outlook, and it would start to close that gap with the United States as well, or at least certainly not get worse for now. But the question really is, I suppose, the political will behind this.
Is there a mechanism for countries to act independently on their own, or it must be done through EU, through Brussels, which means that everything kind of grinds to a halt because all these countries need to get on the same page?
Well, look, that's Mario Draghi's point, essentially, in the report, is that he's saying that countries need to work together. The solution for Europe is more Europe. They need to have more cross-border investment, bigger banks, bigger investors, bigger companies that will invest across borders, because individually those European economies can't succeed without acting collectively and actually pushing them to work together. And that's what our reporting has revealed, is that there is now a sense of momentum. Changes are starting to be felt. The EU is doing things like revising its competition rules, which growth means that more cross-border mergers are being thought about. Even within markets, we've had two big merger announcements, one in the telecom sector in France and one in the banking sector in Italy. Those are the sorts of deals that used to draw the ire of regulators. This looks like businesses are reacting to movement from Brussels, that they say they're going to allow more of these mergers to take place. There's things like the biggest six European economies are moving closer together on the Capital Markets Union. That's going to allow for more cross-border investment, more financing for companies to be able to grow as well. And what Margrethe Vestager was hinting at when we heard from her there was the idea that companies aren't necessarily, or countries aren't going to take on a necessarily US or Chinese economic model, but they are going to work together to try and use that collective power. It's still a market of 450 million people. They have great power together. And the answer, certainly from what Mario Draghi says, is they simply can't do these things alone. They need further integration to be able to succeed, along with massive investment. He says 1.2 trillion euros is what's needed. And that, of course, opens the door to how do you pay for it?
You know, one of the amazing things from my perspective is how technology, how Europe completely missed just the technological revolution. It would save a handful of companies, but I'm afraid that it's going to be AI. It's going to be it's going to be repeated that.
Yeah, you look at the stock 600 index, and then you try to look at the tech sector, and it's minute compared to what it looks like in the US and in Asia.
That would be something I would focus on. Stephen Carroll, thank you so much. We appreciate it. Stephen Carroll, Daybreak Europe anchor for Bloomberg News, joining us from Brussels here. Let's get back to these markets. We do have some green on the screen here today with the S&P up about 0.3%. Chuck Lieberman joins us, co-founder and chief investment officer at Advisors Capital Management. Chuck, what's your view? I just want to start out with kind of this new issue market that we're seeing. We've got SpaceX pricing tonight, a gajillion-dollar deal. We got Anthropic filed for an IPO, ChatGPT, OpenAI, all that kind of stuff. What's that tell you about this market and maybe the phase of this market?
Well, it tells me that a lot of people are going to argue that the market's overpriced because we've got so many highly valued companies. But I don't see it that way. Those companies are growing very rapidly. They have enormous potential. The rest of the market trades at a much more reasonable valuation, in fact, quite attractive. The S&P 500 equal weight is 18 times or less. So I see the market as attractive, and I see some of these companies, which are huge, becoming the dominant subject of conversation, which is a distraction from the rest of the economy and the rest of the markets.
So if folks are overexposed to technology, and you can make the argument that they've been that way for a while now, where can they hide out, or where can they hedge against the possibility of, some retrenchment in those high-flying tech names? What are good sectors that offer that opportunity right now?
It's a great question, Scarlett, and I'm not sure they can completely hide from those companies because those companies now dominate the S&P 500. And if they were to go down, chances are good that everything else would follow suit, although to a lesser degree. So I think there's tremendous value, for example, in the financials. The money center banks, the regional banks have a lot of tailwinds behind them. The companies will do well, but in a general downturn in the market because of the tech stocks, they'll probably go down too. They're just attractive longer term.
Chuck, one of the economic challenges out there for investors is inflation here. And we got CPI yesterday, PPI today. How do you think about inflation as you talk to clients?
Well, I think there's a real inflation issue here. Most importantly, the economy is growing a bit faster than potential, and the unemployment rate's already pretty low at 4.3%. So I see the labor market is getting tighter. The supply of labor is growing slowly because we've shut off immigration and because of the baby boomers retiring. So there isn't a lot of growth in the labor force. So any kind of strong economic growth is going to tighten the labor market. And that'll create some upward pressure on wage inflation. There's some offset because productivity is very strong. So it's not going to translate into significantly higher inflation anytime soon. But at the same time, it's a real headwind for the Fed's objective of bringing inflation down. So inflation is a problem, and that's a dilemma for the Fed because Warsh would like to lower rates, but of course, as we all know, much of the rest of the FOMC is now worried that they may have to raise rates. So I think that leads to a standoff in the immediate term, but longer term, I suspect rates are going to go up.
Inflation is a problem, and of course, the key to inflation right now is where oil prices go. Even as the Fed looks past the volatility in oil and food prices, it's all about oil. So I wonder how much you monitor what's happening in Iran. If things turn really south, does that matter to the markets? Because so far, it hasn't seemed to really.
Well, it absolutely matters in the very, very short run. We don't see any development in the Middle East, or specifically with respect to Iran, that doesn't move the market. It moves every single time. But in my mind, that's to some extent a short-term distraction. Longer term, the economy is in good shape. Valuations, in my judgment, for most of the market are attractive. And therefore, that's an ultimate underlying support for the market. So in the short run, we get distracted by it, and it absolutely moves the market, no question about it. But the market also sees through it. The market's been more optimistic than I've been that this situation with Iran is going to get resolved. I think it's going to linger. The Iranians have no interest in making concessions. They still have a religious belief driving them towards what they're doing, towards a nuclear weapon, towards controlling the Strait of Hormuz. There are a lot of things that are there that really are antithetical to any kind of a compromise. So I think this is going to linger, and I think that's a problem for the market in the short run. But the market also sees through that and ultimately sees the strength of the U.S. economy, and that's a positive.
Chuck, thanks so much for joining us. Really appreciate it. Chuck Lieberman, he's a co-founder and chief investment officer at Advisors Capital Management from lovely Ridgewood, New Jersey. Seeing a Bloomberg story here on SpaceX. SpaceX IPO said to draw more than $70 billion in retail orders. And about 20% of the deal, I think they wanted to allocate to retail. So that suggests there's a lot of demand out there.
There's a lot of demand, and this was always part of the proposition from Elon Musk to reward the faithful for believing in him and essentially buying his story, his narrative that he tells about whether it was Tesla or XAI and now SpaceX.
Yep. All right.